So very good morning, my dear students. I hope you guys are all doing good. I hope you guys are all perfectly fine. I do wish and hope that your preparation is going on well for your upcoming examination. So here comes one more value addition for all of you, which is going to be in the form of this CA Inter GST marathon. And before I go into the technical discussion and all, I would like to share a few points with you, a few instructions you can take, a few important info I wanted to give. Thereafter, I will go into the conceptual discussion. So a few things which I would like to share it with you. Sir, for whom this marathon is going to be for? This marathon is going to be for those students, those who are appearing for May 2026 examination, or even it could be later attempts also. If you're planning for September 26 or Jan 27, for you also this marathon is going to become applicable. And this marathon is not just suitable only for CA Inter students, even CMA Inter students also can use it. Yeah, this is going to be a marathon which is going to be helpful for both CA Inter students as well as CMA Inter students. Both of you can comfortably take the help of this marathon, take the support of this marathon in order to clear your examination. Okay, then throughout this marathon I will be using multiple resources. All these resources where you can download it, that I will let you know first, because these resources will make this marathon complete. Without these resources you will not be able to connect the things. So what and all resources I will be using here? So as you could see here, I have in concept notes here. Our principal source, our primary source is going to be this concept notes, and this is one such concept notes which we have worked on it a lot. And if you have already attended our lectures, our normal EOB lectures or regular lectures, you might have already experienced the quality of this concept notes here. So it is going to run around hardly some 185 pages around. So we have 185 pages of the material of GST, covering everything from the study material, and also we have taken all the care to make sure that nothing has been taken out, nothing has been omitted from the study material, nothing has been missed out. We have taken all that care and very carefully, with a lot of caution, with a lot of precision, we have drafted this material. So this is going to be our primary source, from which we are going to cover all the concepts from. And just I have one more thing to do here. I want you to supplement this concept notes with one small supplementary material. Recently we have released the supplementary material. Even I have made a video talking about the GST amendments which are applicable for May 2026. So we have hardly normal 5 pages of supplementary material which contains the amendment part for May 2026. So even somewhere around 1 hour 20 minutes of video also I have uploaded on the YouTube covering these amendments. So now don't worry, even if you haven't referred to that amendments also, you need not worry about it, because what we are trying to do is we will try to integrate that amendments as a part of our marathon. We are going to integrate all those amendments as a part of our marathon. Wherever these amendments are there, that I will try to touch on them even as a part of this marathon as well. Even if you haven't watched that amendments video also, it is fine, but I would suggest you better go through the amendments video once, and this will make even more sense. So like this, we are going to primarily use this resource which is a concept notes, and also we are going to make use of this supplementary notes. So hardly 5 pages of supplementary material we have. Sir, where you can download this, where we can get these materials? Yes, where you can get these materials is just you have to visit our website. Link of the website has been given in the description of this video. Just visit that website, and in that website go to the free resources section. In the free resources section, go to CA Inter paper 3B GST. There you will be able to find all the resources, concept notes you will be able to find, supplementary material you will be able to find, even this question bank you will be able to find. So all these resources are available for free for download on our platforms. So just just go through the description of this video once. You will be able to find the link to access the website. Just visit the website, go to the free resources section. There are there are plenty of resources which are waiting for you. You can download them and you can definitely use them for your preparation. Not just that, even if you want to get the hard copies of the material on the same website, even you can place the order, you can get the hard copies of the materials also get delivered to your addresses. And throughout this marathon I will be writing, I will be scribbling multiple things here and there. I will be taking the help of the chats. See, one distinguishing feature, as you all are aware if you have attended my regular sessions or EOB sessions, I try to summarize in a very conceptual manner. I try to make use of the charts, I try to make use of some pictorial representation to make the flow of the concept very seamless. So even the same thing which I'm going to do as a part of this marathon as well. I'm going to present various complex topics in the form of some charts. I will try to give various summaries. I will scribble a lot of things. I will try to draw various diagrams. I'm going to show you all my artistic skills. So that class notes, that running notes will be there for this marathon. Even this running notes also will be uploaded because I have to finish it, right? So once I finish this marathon, even this running notes also will be uploaded on the same free resources section, which you can have the access for. So these are the important resources and where you can download them, right? And one more distinguishing feature as a part of this marathon, one thing I'm trying to assure you from my side, the most important thing which I'm going to assure you all is I'm going to give you all the conceptual clarity whatever you require. So this is complementary to your preparation. So 100% we will try to give you conceptual clarity. All the concepts I will try to make it clear through this marathon. I will try to revise basically all the concepts which are associated in your material, which are relevant for your exam. All the concepts will be thoroughly revised to the extent possible. We'll try to cover everything, and there will be certain topics which might not be suitable for revision, leaving out a few very handful topics. Remaining all we will try to do a comprehensive revision. Okay. And see, the usually what I used to do is I used to do the recording and I used to upload it on the YouTube. But this time I wanted to do it in a much more different manner. I wanted these sessions to be very interactive, where I also need your commitment from your side. So some people will be there who might have, some students might be of such a notion that, sir, if you could, I have got this feedback from the students where they say that, sir, if you could conduct a live, we will reserve our time. We'll reserve our time. Let us say, for example, on a daily basis, you are coming at 9 to 1. Let us say this time I have announced for that 9 to 1. So if you are coming live, we also will block our time, sir. We will also block our schedule, sir. 9 to 1 will stick our time. We'll stick to this. And it will be very much fun to watch you live. So that's why this time I'm trying this out. I do wish and hope that there will be no technical glitches. In case if you face any trouble during this live and all, if there is any technical glitch or something, you can immediately bring it to my attention. I will be having a look on a continuous basis at the chat box as well. Please let me know, because I might be in a flow when I am discussing this. So let me know in the comment section if in case if you are facing any technical glitches. I will try to resolve it immediately. And let us wish and hope for a very seamless, a very glitch-free session going forward. Okay, right. So, having said that, now let me go into the conceptual discussion. Now we are jumping into the marathon related discussion. So, as you could see the index here, we have a very good number of chapters which we are required to cover here. As you could see, this is what the index for GST. So, we have a very good number of chapters which we are supposed to cover as a part of this marathon. Right. So, people are asking me, sir, will this live recorded sessions will be available on the YouTube? Yes, it will be available. You need not worry about it. You need not worry about it. So even these live recorded sessions also will be available on the YouTube. It is not going to go anywhere. It will still be available. Even if you miss somewhat in between, you can come back and rewatch it. And will you solve questions? I might not be able to solve the questions in the marathon because this is a marathon series. I will not be solving questions here, but the key points, technical points which they test in the questions, that I will try to link it. I will not be solving any kind of question here, but I know since we have solved many number of questions, I know how different points will be twisted and asked a question, that I will definitely try to bring it here. Okay, right. So now I'm going into the session now. So as you could see here, a very good number of chapters we have. So we will pick chapter one by one and we will try to revise it. Okay, then. So today my target will be on this day one. I am planning to cover the chapters of introduction to audit. Let me try to give you my agenda, what I have in my mind to cover. So we'll try to cover number one, introduction to GST. We'll try to cover it. Thereafter, supply under GST will try to cover it. Thereafter, registration we will try to cover it. So this is what the agenda for today. So we'll try to mainly cover three chapters. One is introduction to GST. Thereafter, we have supply under GST. Thereafter, registration we'll try to do if the time permits. If more time is available, even after completion of these chapters also, if any excess time is left out, I will try to take up the charge of GST chapter. So we will have we will see how long we'll be able to cover, how much content we'll be able to cover. I don't want to rush through the things to the extent of possible. I want to make it, I want to take this session in a calm and composed manner. So primarily, I have the target to complete three chapters: introduction, supply, registration. Very interesting chapters, very good amount of weightage will be there from these chapters. So we'll try to start with that. Next. So, first, let us come to the introduction part, introduction to the GST. Let us try to have a quick look at this chapter. See, this chapter, let me give you one small caution here before I take up this revision of the chapter. See, from this chapter, there will be no significant questions. Hardly some 3 to 5 marks will be tested. If at all, they have to test it. So, 3 to 5 marks, they might test it from this chapter, Introduction to GST. So, but in this chapter, there will be some fundamental things, there will be some important things which will establish the foundation for the remaining chapters. So that's why, even though not that important from the examination perspective, but to have that flow in the discussion, but to have that conceptual clarity in the discussion, we need to have a quick revision of some important concepts as a part of this chapter. So having said that, let me try to go into the discussion now. See, as we all are aware, GST is nothing but it is a part of indirect tax. Yes or no? So let us try to have a quick look at the entire taxation system in India. So basically, government is there. Government is required to do many activities. They are required to look after public safety. They are required to look after public security. They are required to look after infrastructure requirements. For all that, they are going to need the money. And we all know the primary source of revenue for the government is going to be in the form of taxes. First of all, what is the meaning of the taxes, sir? Tax means it is a compulsory payment. When I say tax, it is going to be a compulsory payment. You are not paying it voluntarily. I know a very handful of people who come and pay voluntarily their taxes. People are paying the taxes because it has been made compulsory on them. It is a mandatory charge. If you don't pay it, you have to face the legal consequences. You will be liable to face legal consequences since it has been made mandatory on you, since it has been made compulsory on you under some law. That is what we are going to call it as tax. So tax is something which is a compulsory payment, and it is not voluntary, it is an enforced payment. They are making you forcefully pay the amount of tax. It is not something you are paying it out of your own choice. It is enforced on you, and it is definitely not voluntary. And as we all are aware, in India we have a taxation system. We have three levels of government. One, we have union government, then we have central government, then we have local level government. So in India, mainly we have two kinds of taxation system. One is direct tax and the other one is indirect taxes. So if I have to put it in very simple terms, what are the differences between direct taxes and indirect taxes? So when it comes to direct taxes, these are those kind of taxes where incidents cannot be shifted onto another person. Can you shift the incidence of income tax onto another person? No. What do you mean by not able to shift the burden, not able to shift the incidences? If you take the case of a income tax, you are paying the tax, you are the person who is paying the tax, and you're also the person who is bearing the heat of the taxes. So that means whoever is paying the tax, the same person is also having the incidence of the tax, burden of the taxes. That kind of tax we call it as direct taxes, where incidence of tax or burden of tax cannot be shifted. Then we have this thing called indirect taxes. Sir, what is indirect taxes? In case of indirect taxes, incidence will be shifted to the another person. The burden will be shifted to another person. So in case of indirect taxes, I might be the person who is collecting, who is paying the GST to the government. Let us say two major indirect taxes which we have in India is, one is GST and a little bit of customs also we have. And one of the major direct taxation system which we have in India is income tax. So if you take an example of GST, since GST is one of the major indirect taxes which we are currently having in India. So let us say if I'm a shopkeeper, if you come to my shop, if you purchase some item from me, I will collect amount of GST from you. Let us say, for example, I'm selling a product, 100 rupees of product I'm selling. On that 18% of GST, 100 plus 18, 118 rupees I will collect it from you. After collecting that 118 rupees from you, 100 rupees I will keep it in my pocket. 18 rupees I have to pay it to the government. I'm a shopkeeper. I collected the amount of GST from you and I have to pay it to the government. So I have paid. I'm the person, I'm the shopkeeper. I paid 18 rupees of GST to the government, but that 18 rupees, whatever I have paid, that is not going from my pocket. I'm just a mediator. I'm collecting from you, customer, and that I'm depositing with the government. So I might be the payer, but I'm not the person who is bearing the burden of the taxes. I might be the payer of GST to the government, but I'm not having the incidence of taxes. So that is what the distinguishing feature between direct taxes and indirect taxes. And few more differences if I have to tell it here. Direct taxes are progressive in nature. Direct taxes are progressive in nature. Indirect taxes are regressive in nature. Sir, what do you mean by progressive? In case of income tax, if you take, the more you earn, the more income tax you will pay. But when it comes to GST, it is not related with your earnings. It is not related with your earnings. Everybody will be required to pay the same amount of GST. Like today, if I go and purchase one product, if say on that GST is 18 rupees, if I purchase a product, I will also pay the same amount of GST. If some businessman, if some top businessman comes and if some celebrity comes and purchases the product, he will also pay the same amount of GST. If Ambani purchases the product, he will also pay the same amount of GST. So that is what the meaning of regressive in nature. So when it comes to this indirect taxes and especially GST, here it is not at the time of collecting the GST, the government will not see what is your income levels. Irrespective of your income levels, everybody is required to pay the same amount of GST. So that's what we call it as regressive in nature. So whatever it is, we have understood the meaning of the tax and we have understood the two major kinds of taxation system. One is direct taxation system and the other one is indirect taxation system. Now, so this GST coming about talking about little background here. GST is not something which was there from our independence or something like that. Indirect taxation system is there. Indirect taxes are there. But these indirect taxation system has undergone a significant change in the year 2017. So 2017 is the year where a numerous amount of indirect taxes have been scrapped altogether, and to replace this numerous amount of indirect taxes, a single indirect taxation system has been brought into picture. And what is that single indirect taxation system which has been brought into picture, which has scrapped all the existing indirect tax laws, is GST, which is goods and services tax. Goods and services tax. And if you look at the history of GST in India, the stepping stone has happened somewhere in year 2000. In the year 2000 itself, the discussion regarding the GST and all has started. And starting from 2017, starting from early discussion in the year 2000, we have actually implemented it on 1st of July 2017. So it took almost 17 years from the time the discussion first came in the parliament regarding GST till the time of its effective implementation. It has taken almost 17 years and 3-4 terms of the government it has taken to bring that GST into India. And GST is not such an innovative concept which India has introduced it for the first time. No, this concept of GST has already been there in various other countries. Many other countries are following this concept of GST from a very long period of time, and might be a little bit of important point for MCQCO. France was the first country to implement the VAT or GST in 1954. So France is the first country which has this system of VAT or GST, and they have first implemented it in the year 1954 itself. Okay, right. Next. Sir, you are telling earlier there were so many indirect tax laws. Now all that indirect tax laws are replaced by one single one single thing called GST. No, sir, what are all that taxes which have been taken into GST? So earlier there were numerous number of indirect tax laws were there. As I was saying, all those indirect tax laws were not gone, were not existing. So GST has replaced many number of existing indirect tax laws. This is what we call it as subsuming. So there are so many indirect tax laws. All that indirect tax laws were absorbed or subsumed into GST. So what do you mean by subsuming, sir? That means once GST has come into picture, these indirect tax laws were no longer there. So what are those indirect tax laws which are subsumed into GST, which are absorbed by GST, which are no longer there after introduction of GST? So this is what is the list. So central taxes, state taxes. So central government has given up some taxes and state governments have also given up some taxes. So when they have lost their right, both central government and state government, when both of these governments have given up their rights to taxes of certain nature, those indirect taxes were subsumed, and to replace them, one single GST has come into picture. Sir, what are the taxes which are subsumed into GST? If you look from the taxes which are used to be imposed by the central government, this is the list which has been subsumed into GST. Like what is it? Central excise duty, additional excise duty. So previously, before this GST came into picture, one of the most common indirect tax which we used to have is excise duty. Excise duty used to be imposed on manufacture. Whenever you manufacture, central government used to come and impose something called excise duty. But once GST has come into picture, this excise duty is no longer there. Service tax, especially on services and all, we used to have this service tax whenever services are provided, but now no longer we have service tax. It has been subsumed into GST. And then we used to have something called excise duty under Medicinal and Toilet Preparation Act. So like this, one separate excise duty used to be there on medicinal and toilet preparation items. That is also gone now. CVD and special CVD. That is also gone up. Thereafter, we have something called central sales tax, and also we used to have something called central surcharges and cesses. In so far as they relate to supply of goods and services, all these things are gone. So these are the central level taxes which are subsumed into GST. Then there are some state level taxes also. Those taxes which used to be imposed by the state governments, even state level taxes are also subsumed into GST. Sir, what are that state level taxes which are subsumed into GST? So if you see here, state surcharges and cesses, in so far as they relate to supply of goods and services, state governments used to impose many kinds of surcharges, many kinds of cesses in relation to supply of goods or services. So all that have been gone now. Thereafter, entertainment tax. State governments used to levy something called entertainment tax, that is also subsumed into GST. One important point here, except those levied by local bodies. See, local bodies also levy something called entertainment tax, that is not yet gone, that is still there. Only entertainment tax which is imposed by the state governments have been subsumed into GST. Even today also we still have entertainment tax if it is getting imposed by the local bodies like municipal corporations, panchayats. If these people are imposing entertainment tax, that is still there. Only entertainment tax which used to be levied by the state governments, that is gone now, but entertainment tax levied by local bodies is still there. Next, tax on lottery, betting and gambling. This is also gone now because they have also come under GST purview. There used to be something called entry tax, purchase tax and all, gone now. VAT or sales tax, gone. Luxury tax is also gone. Taxes on the advertisements. So like this, state governments used to impose multiple indirect taxes before introduction of GST. All these are gone now. So these are the various taxes which are subsumed into GST. One is this is a list of central taxes, and these are the list of state level taxes. Able to understand? Clear and comfortable, everybody? Right. So now, sir, you are saying GST and all. What exactly is the meaning of GST, sir? What exactly is the meaning of GST? So can you define the term GST? Yes, I could define that for you. So they say that GST means GST is a tax. They have defined GST something like this. GST means it is a tax. So tax on what, sir? Tax on supply. Supply of what, sir? Goods or services. GST is a tax on supply of goods or services. So GST is a tax which will be imposed only when there is a taxable event called supply. So first, even before that supply, there must be something called goods or services or both. We will try to talk about what is the meaning of the goods, what is the meaning of the services, what will get covered in the goods, what will get covered in the services. This will try to have a discussion in our subsequent chapter, which is supply. But just I want you to understand what and all things must be present for this GST to be imposed. So in the constitution itself, where they have defined this, in the constitution of India itself, they have defined the term GST. And how they have defined the term GST is a tax on supply of goods or services or both. That means for GST to be imposed, there must be goods, there must be services, or there must be both. But just having the goods or services or both will not make the government to come and impose GST. There must be one taxable event called supply. There must be a taxable event called supply. Let us say, for example, I'm a dealer in electronic goods. I wanted to trade in the electronic goods. So what I have done is, one day I have opened a shop. So I have taken a shop on rent. In my shop, I have placed my all electronic items. I did not sell it. Just I have loaded all my shop with all the stock. Just because in my shop there are goods, will government come and impose GST? No. Just having the goods will not trigger the government to come and impose GST. There must be a taxable event. Sir, what is a taxable event, sir? Supply. Supply should have taken place. Just because goods are there, government will not impose GST. Just because you have the ability to provide the services, government will not impose GST. When the government will try to impose a GST, government will try to impose a GST only when you have supplied that services. Let us say I'm a chartered accountant. Let us say I have taken certificate of practice. I have taken one office on rent. In my office, outside my office, I have kept a banner. So and so person, chartered accountant, I am ready to provide audit services. I am having the ability to provide services. Just having the ability to provide the services, or you are ready to provide the services, government will not come and impose GST. Once if a client walks inside my office, I provide some services to them. That means I have made a supply of services. Then only government will come and trigger. Then only the government will be triggered to come and impose the GST. So this is how the term GST has been defined. GST is a tax on what? On supply of goods or services or both. So there are some prerequisites here. First, we need to understand what is the meaning of the goods, what is the meaning of the services. Then we need to understand what do you mean by supply. Sir, you are telling supply must be there, but what do you mean by supply? All this discussion, just keep this points on hold. We'll try to have it in our subsequent chapter. Okay, right. But the definition did not end here. The act says GST is a tax on supply of goods or services or both, except what they say here, except alcoholic liquor for human consumption. What they have told, except alcoholic liquor for human consumption. So that means alcoholic liquor for human consumption will never come under GST purview. They have kept alcoholic liquor for human consumption outside of the GST purview. The logic is very simple. The on alcoholic liquor for human consumption, state government will impose excise duty. State governments were ready to give their right to tax every kind of indirect taxes, but state governments told, boss, we are not ready to give our right to impose excise duty on alcoholic liquor for human consumption. We are not ready to give it. If you want to bring the GST, you have to agree to this condition. If you don't agree to this condition, even if you are snatching from us the right to tax that alcoholic liquor for human consumption, we are not going to give our approval for bringing GST. Huge opposition was there from the state governments. So that's why even they have reserved their right by way of including that in the definition of the GST in the constitution. So that's why alcoholic liquor for human consumption is outside of the GST purview. GST is a tax on supply of goods or services or both, except alcoholic liquor for human consumption. That means on alcoholic liquor for human consumption, there will be no GST. GST will not come there. Sir, what about other than alcoholic liquor, other than human consumption? What do you mean by other than human consumption? When I say other than human consumption, I'm not talking about animal consumption. So what do you mean by alcoholic liquor for other than human consumption is, let us say there will be some kind of alcohol which will be used in the perfumes. So there will be some kind of alcohol which will be used in the medicines. So like that, except these things might be coming under GST purview. So only thing which has been excluded from the GST purview is alcoholic liquor exclusively for human consumption. Like today we have this beer, wine, or whatever other names we have, which humans will consume, that is kept outside of the GST purview. Okay, right. So this is how the term GST has been defined in the constitution, and whatever definition I have told you, this is the definition given under constitution. Now, going ahead, there are a few features which we need to understand. When GST has been brought into India, the GST system in India is having three essential characteristics. There are three essential characteristics of GST system in India. Number one, in case of GST has been structured in such a manner that the ultimate burden, final consumer will face the ultimate burden. Final consumer is the person who has to bear the taxes. So ultimate burden of taxes is going to be on the final consumer, not the people who are associated in the supply chain. So when I say until the time the product reaches the final consumer, there is one supply chain. Like there will be a manufacturer, there will be a wholesaler, there will be retailer, then the final consumer will come. And this supply chain has been designed in such a manner that in GST, that tax has to be borne by the ultimate consumer. Final end user like you and me, we are the ultimate sufferers of the GST. So that is the first principle. So GST is such a taxation where final consumer is a person who will bear the taxes. Number two, in India, we have something called dual GST model. In India, the model of GST which has been implemented is dual GST model. Sir, what is dual GST model? Dual GST model means such a GST model where both the central government and state government collectively will have a right to tax a transaction. Where both central government, state government collectively will have the power to impose a tax on a transaction. So that kind of GST model we have, which is a dual GST model. Both central government, state government will have the collective power to impose GST. And in order to understand the dual GST model, in order to understand how the central government and state government will collectively impose the amount of GST, first we need to understand the type of transactions. In GST, we are going to broadly divide the transactions into two categories. One is intra-state transaction and the other one is interstate transaction. In order to understand this dual GST system, we need to understand two kinds of transactions. The transactions under GST I can broadly divide into two categories. One is intrastate, other one is interstate. Sir, what is an intrastate supply? So simply, if I have to put it, if the location of the supplier and the place of supply are in same state, are in same union territory. When what do you mean by intrastate supply? When the location of the supplier and the place of supply, if they are falling within the same state or union territory, then we call them as intrastate supply. Let us say, for example, if the location of supplier is in Tamil Nadu and place of supply is also in Tamil Nadu. The location of the supplier is in Tamil Nadu and place of supply is also in Tamil Nadu, then that transaction we call it as intrastate supply. Or if both are falling in the same union territory, like let us say, for example, if the location of the supplier is in Andaman and Nicobar Islands and place of supply is also in Andaman and Nicobar Islands, then also we call it as intrastate supply. So when the location of the supplier and when the place of supply both are falling in the same state or union territory, then what will happen? It will be treated as intrastate supply. And whenever a transaction has been classified as intrastate supply, what will be imposed is there will be something called CGST, which will be imposed by the central government, equal amount of SGST or UTGST. Equal amount of SGST or UTGST. Okay, so anyone will come, either SGST will come or UTGST will come. Let us say, for example, if the location of the supplier, place of supply both are falling within same state, then SGST will come. Tamil Nadu state GST will come. In case if they are both are falling in the same union territory, there will be one UTGST will come. So either SGST or UTGST, any one will be there, both will not be there. So whenever an activity has been classified as intrastate supply, then both central government and state government will have the power to impose GST. So let us say a transaction has been taken place for 1 lakh rupees and it is an intrastate supply. Let us say applicable rate of GST is 9%. Central government will come and impose GST at the rate of 9% on it, which will come to 9,000. Equal amount of GST will be imposed by the state governments also. Let us say we have Tamil Nadu here. Even Tamil Nadu government also will come and impose the same 9% of GST, which will come to total 9,000. So total 1,18,000 rupees of GST will be imposed here. And out of this 1,18,000, this CGST component will be taken up by central government, SGST component will be taken up by state government, respective state government. If it is UTGST, once again it will go to central government only, because union territories are also under administration of central government only, no? If it is a union territory, so that will also go to central government. But that money, the central government have to use it only for these specific union territory. But if it is an SGST, that will go to the respective state government. So this is what regarding intrastate supply. Sir, now what about interstate supply? Sir, what is an interstate supply? If the location of the supplier and the place of supply, if both are falling in two different states, or if both are falling in two different union territories, or if both are falling in one state and one union territory, or if I go one more step ahead, even if they are falling between two different countries, even if it is falling between two different countries, then also I call it as interstate supply only. So what is an interstate supply? When the location of the supplier and the place of supply are falling in two different states, two different union territory, one state and one union territory, or between two different countries, then I call it as interstate supply. And let us say, for example, if the location of supplier is in Andhra Pradesh and he's making the supply of goods to a person who is located in Tamil Nadu. So the place of supply is becoming Tamil Nadu. See, let us don't go by the what is actual meaning of place of supply, location of supplier and all. This is what something which we are about to cover in our subsequent discussion. We have just scratched at the surface now. We are at introduction chapter only. There is so much way to go ahead in the subsequent chapter. We will get to know how to determine this place of supply, what exactly is the place of supply. We have a dedicated chapter talking about it. There we will get to know. Just here I am saying place of supply is Tamil Nadu. But a moment the doubt might come to you, sir, how to determine this place of supply? That I can't tell you now itself, because we have a long way to go. We have something called place of supply chapter. There we will all get to know how to determine the place of supply. So, but whatever it is, let us say if the location of the supplier is in Andhra Pradesh and if the place of supply is in Tamil Nadu, both are falling in two different states, no? Or let us say if a location of the supplier is in Andaman and Nicobar Islands and place of supply is in Daman Dayu and Dadra Nagar Haveli. Both are falling in two different union territories. Or let us say, for example, the person is located in one state. Location of the supplier is in Andhra Pradesh, whereas place of supply is in Andaman and Nicobar Islands. This is also a between one location of the supplier and place of supply is between one state and one union territory. Or even there could be international transaction, like let us say for example location of the supplier is in US, place of supply is in India. So like that, if the location of the supplier and the place of supply falls in two different states or falls in two different union territories or between one state and one union territory or between different countries, then we are going to call them as interstate supply. International transactions, you keep it on hold now. International transactions, you keep it on hold now. That is something which we need to discuss it as a part of our CA final. At CA inter level, we need not go into the details. We'll restrict our discussion to the domestic transactions only. So in case of interstate supply, let us take this transaction only. Location of the supply is in Andhra Pradesh. Place of supply is in Tamil Nadu. Now what will happen? So once an activity has been classified as interstate supply, now there is no CGST, SGST. What will happen is there will be one single tax called IGST will be imposed. What will be imposed? IGST will be imposed at the rate which is equal to the collective rate of CGST and SGST, which is equal to the collective rate of CGST and SGST. So for the same transaction, if it is interstate, we have 9% CGST, 9% SGST. Both put together, the rate is 18%. No, a single tax called IGST at the rate which is equivalent to the combined rate of CGST and SGST put together, that rate of tax called IGST will be levied. So if you look at this transaction, let us say for example, here the transaction has taken place for 1 lakh rupees and it is classified as an interstate supply. Now what will happen? The supplier will collect from you something called IGST at the rate of 18%, 18,000 rupees they will try to collect it. Now total 1,18,000. Now this 18,000 rupees can't be kept by the shopkeeper. This 18,000 rupees of IGST has to be paid to the government. To which government they will pay, sir? To which government they will pay, sir? This IGST will directly go to central government. Central government they will pay. How much? 18,000 they will pay. Sir, can the central government enjoy with that entire 18,000 rupees of money? No, they can't do it. Sir, what they have to do? 50% you keep it. 50% central government will retain it. Sir, how much it is? 9,000 rupees central government will retain it. Sir, what about the balance 50%, sir? Balance 9,000, what they will try to do, sir? Balance 9,000 rupees, they have to remit it to the state governments. They have to remit the balance 50% to the state governments. Sir, which is state government, sir? Now, here I told that location of the supplier is in Andhra Pradesh, place of supply is in Tamil Nadu. So, to which state government they have to retain it? They have to retain it to which state government? So, it is a destination based taxation. It is a what? Now I bring another feature of the GST, which is the one more characteristics of the GST is it is a destination based tax. It is a destination based tax. It is not an origin based tax. It is a destination based tax. Sir, what is destination based tax? The GST has to go to that respective state wherever the destination is, sir, wherever the transaction chain is ending. So wherever is the destination, to that destination government, the GST has to, that balance 50% has to go. So what is the destination state government here? The place of supply is falling in Tamil Nadu. That is the final consumption. The final destination of the transaction is routed to Tamil Nadu. So this balance of 50% will go to the Tamil Nadu state government. Able to understand? Clear and comfortable, everybody? So in case of interstate supply, so total collective rate, applying the collective rate, a tax called IGST will be imposed. That IGST initially will go to the central government, and central government will keep only 50%. The balance 50% has to be remitted to the destination based state. Now one doubt I have here, let us say for example, if the place of supply is not falling in Tamil Nadu, if the place of supply is falling in Union Territory, in Andaman and Nicobar Islands, this is the place, that is the place of supply. Then what central government will do, sir? So here what central government will do is 50% they will keep it. Balance 50% as per logic, what they should do? Balance 50% they have to remit it to the administration of Andaman and Nicobar Islands. But Andaman and Nicobar Islands is under union government's control only. It is a union territory. No. Who will manage it? Central government only will manage. No. So that balance of 50% also will be retained by the central government only. That 50% they will keep. Balance of 50% also, that amount also will be kept by the central government only, but in a separate account, separate union territory account. And that amount they have to use it only for this union territory. That amount they have to use it only for this union territory. So this how the settlement will happen between the governments, that is altogether different governments headache. So that I'm not going to go into the detail, but I'm telling you where the revenue should go. Clear? Able to understand? Clear and comfortable, everybody? Right. And see, one more thing I would like to say it here. See, whenever I am saying states and all, So we have state governments. In India, we have state governments, right? So whenever I'm saying state, in from the GST perspective, it will not just include the states. That 28 states, not it will not just include those 28 states. So we have 28 states, right? So we have 28 states. When I say state government for the purpose of GST, I don't just mean 28 states. There are three union territories with their own legislature. There are three union territories which are having their own legislature. Sir, what do you mean by own legislature? They will have their own CM, they will have their own government and all. So that three union territories with legislature are, so one is Delhi, number two we have Puducherry, and Jammu Kashmir. Delhi, Puducherry, Jammu Kashmir. So these are the three union territories which have their own legislature. Whenever, for the purpose of GST, whenever I am saying states, even these three also will be considered equal to the states only. So that's why, for the purpose of GST, whenever I'm saying state governments, I'm referring to not just 28, I'm referring to a total of 31 state governments. Sir, we have 28 only. No, yes, we have 28 only. But the three union territories which have their own legislature, Delhi, Puducherry, Jammu Kashmir, even that also we will consider it equivalent to the states only. So for GST, whenever I am saying state government, I am referring to total 31 states, normal 28 states, along with these three union territories with legislature. That also I will consider them at par with the state governments because they are having their own administration. Understood? Clear and comfortable? Right. So this puts an end to the discussion regarding what and all are the characteristics of the GST system in India. Number one, tax has to be borne by the final consumer. Number two, in India, we are following something called a dual GST model. And number three, GST is a what kind of taxation? It is a destination based taxation. Clear? Right. So let us try to proceed further now. So having said that, now we'll try to proceed with one concept called, so this dual GST model and all I have covered. Next. So what is the need for G? And one more important quality, one more important characteristic also I have forgot to mention here. So one more important quality of GST in India is it is a value added tax. It is a what kind of tax? It is a value added tax. Only whenever there is a value addition at each stage, if there is value addition, only on that value added component only GST will be imposed. If there is no value addition, there is no GST. Sir, how this value addition concept will be ensured? I will tell you. I will tell you one simple structure here. See, if you look at the supply chain here, there will be manufacturer, there will be wholesaler, there will be retailer, then there will be final consumer. No. So as I have told, one of the essential characteristic, one of the main characteristics of the GST system in India is the tax has to be borne by the final consumer. Whoever is the final consumer, he has to bear the taxes. So now how it will be ensured? How it will be ensured is, let us say for example, the manufacturer is selling the product at 1 lakh rupees. The manufacturer will procure the raw materials from scratch. He will create a final product. No. So that means from scratch, from zero, he's creating a product of value of 1 lakh. He's creating a product of a value of 1 lakh. How much value addition he has done? How much value addition he has done? 1 lakh rupees of value addition he has done. So on that, GST he will be imposed. Whenever he's selling it to the manufacturer, he will charge GST. Let us say for ease in calculation, we'll take the GST rate as 10%. There is no rate of 10% in GST. We have 18%, 5% we have. But for simplicity in calculation, I'm taking it as 10%. So he will charge 10,000 rupees of GST. Total 1,10,000 worth of bill he will give. Now manufacturer will pay, wholesaler will pay to the manufacturer how much amount? 1,10,000. Now he will cry. No, the manufacturer, the wholesaler will start crying. Why wholesaler will start crying? Because he paid 10,000 rupees of tax. But I told the fundamental thumb rule of GST is tax has to be borne by final consumer. Tax has to be borne by final consumer. Is wholesaler is a final consumer? No. But he paid 10,000 rupees of GST. No. He will start crying. No. Yes, he's crying. But the government will say one thing, boss, don't worry. You are not the final consumer. No, we will do one thing. You paid how much GST to us? 10,000 rupees of GST you have paid. No, that we will give it to you as credit. We will maintain one wallet in your name. You are not a final consumer. So that's why what we will do is we'll maintain one wallet. Today, like the way we have digital wallets, right? We have PhonePe wallet, we have Paytm wallets and all we have. No, like that government also told, dear wholesaler, you don't worry. You don't cry. You stop crying. We will maintain one wallet in your name. So that we call it as electronic credit ledger, which we will talk about it in the chapter payment of taxes. So we will create one wallet in your name. So in that wallet, we will give it to you as credit. We will load your wallet with this amount of tax you have paid. Like we will top up our wallets. No, that's why government also saying, since are you a final consumer? No, you are not final consumer. No, you have paid 10,000 rupees of GST. No, that GST we will add it to your wallet. That GST amount, whatever you have paid on your inputs, that we will load it into your wallet, and you can take credit of it. That I call it as input tax credit. That I call it as what? Input tax credit. Sir, what is this input tax credit? When I can avail it? How to avail it? All together, we are going to have a separate discussion in the chapter input tax credit. Just I am telling you, I am making you aware of the entire GST structure so that we can have seamless discussion going forward. Okay, right. So government told, dear manufacturer, don't worry, since you are not the final consumer, whatever GST that you have paid on your inputs, we will add it to your wallet called electronic credit ledger, which you can take the credit of it. Okay. So now what will happen? This manufacturer will sell the product to the retailer, no, because he did not purchase it for his final consumption. So now what is the cost to him? What is the cost to the manufacturer? So what is the cost to the manufacturer? You should not say 1,10,000. The cost to the manufacturer is only 1 lakh rupees, because 10,000 rupees is getting as credit. No. Now he will add his margin. No. He will add his margin. Let us say 20% margin he has added. 20,000 rupees margin he will add. Now he has converted that 1 lakh worth of product into 1,20,000. He's selling it at 1,20,000. 1 lakh rupees is his cost. No person will do business on cost to cost basis. They will add their margin. So that 1 lakh worth of product which has purchased from the manufacturer, he has added the margin and he converted that product into 1,20,000. So what is the value addition he has done here? Wholesaler has done the value addition of 20,000 rupees. Now he will charge GST from the retailer. So GST, let us say 10% GST he will charge. How much he will charge? 10% GST he will charge. Just give me 1 minute. So he will charge GST at the rate of 10%. How much? 1,20,000 into 10%, which will come to 12,000 rupees. Total 1,32,000. That is the amount of bill which will be given to the retailer. Now, how much retailer will pay to the manufacturer, to the wholesaler? 1,32,000 he will pay. Now, can the manufacturer enjoy with that money? No. What he should do? What he should do is, in the previous case also, wholesaler would have paid. In the previous case also, manufacturer would have paid 10,000 rupees of GST to the government. Okay. Here also, the manufacturer can't enjoy with total 1,32,000. What he will do, sir? 1,20,000 he will keep it in the pocket and he has to pay that 12,000 rupees of money to the government. No. So that I will call it as output tax liability. That I will call it as what? Output tax liability. You collected total 1,32,000, but 1,20,000 is only your sale consideration. Balance at 12,000 you have collected in the name of GST. That money you can't enjoy. That money you have to deposit it with the government. So that I will call it as output tax liability. So here your output tax liability is going to be total 12,000 rupees. But I'm not a fool, no, because I will not pay the amount. I have a wallet. In my wallet already 10,000 rupees money government has loaded, right? So now what I will do is, so that output tax liability, I will adjust it against my input tax credit and balance 2,000 rupees only I will pay to the government. So how much money has gone from from wholesaler to the government? 2,000 rupees has gone to the government. So from manufacturer, 10,000 rupees has gone to the government. From wholesaler, another 2,000 rupees have gone to the government. Now, retailer, what he will do? Now he will make a final supply to the consumer. No, right? When the final consumer will walk into the retailer like you and me, to that final consumer he will sell. Sir, what is the cost to the retailer, sir? Don't say 1,32,000 because 12,000 rupees. Once again, here what will happen is, retailer has paid 12,000 rupees of GST to the government. No. Now retailer will cry once again, sir, I am not the final consumer, but I have paid 12,000 rupees of GST. Government told, okay, stop crying. I will do one thing. You paid GST. No, that I will give it to you as credit. Since you are not the final consumer, 12,000 rupees of GST you have paid, that I will give it to you as credit. I will also maintain wallet in your name. In that wallet, I will load this money. Okay, ITC, I have got it here. So now, once again, if you look from the retailer perspective, what is the cost? 1,20,000. To that, he will also add margin. Definitely, margin he has to add. Let us say 20% margin he is adding. So 20% margin if he adds, 24,000, 20% margin means how much here it will be? 1,20,000 into 20%. 14,400. No. How much? 24,000, I guess. Yeah. So 24,000 rupees of margin he has added. So total 1,44,000 rupees is the selling price. On that he will collect a GST. No. How much? 10%. 14,400. total 1,58,400 rupees is the value. Now this final consumer will pay this entire amount, 1,58,400 he will pay. Now this retailer can't enjoy with the entire money. He is having a GST payment. No, how much? 14,400 is he is required to pay to the government. So what is his output tax liability? So his output tax liability is going to be 14,400. In that, once again, like any prudent businessman, he will not make the cash payment because he's having already a wallet with the government. In that wallet, already money is loaded amounting to 12,000 rupees, which he will take the credit of it. The balance of 2,400 rupees he will pay to the government. This amount has gone to the government. Sir, now what about final consumer, sir? Can he also go and cry before the government? Boss, I have paid 14,400 rupees of GST. Give me also credit. No, he can't go and cry before the government. Why he can't go and cry before the government? I already told you the first fundamental principle of GST. The GST has to be borne by the final consumer. Are you the final consumer? Yes, suffer GST. Suffer with the amount of GST. So this final consumer can't go and cry now. This entire 14,400 of GST that he has to pay. Now, if you look at this example carefully, how much amount of GST final consumer has paid? Totally 14,400. How much government has got? If you pay close attention, from manufacturer, they got 10,000. From wholesaler, they got 2,000. From retailer, they got 2,400. And even if you pay close attention, government has also got only 14,400, and that amount has been ultimately paid by the final consumer. And one more point, if I have to pay, if you pay close attention here, at every stage, if you see, the net amount which is going to the government is only on value addition. Like if you take the manufacturer from zero, he has created a product of value of 1 lakh rupees. So value addition, how much he has done? 1 lakh value addition he has done. That's why he's paying on 1 lakh 10% rate of GST, 10,000 he has paid to the government. Now, this wholesaler has converted that product of 1 lakh into 1 lakh 20,000. So what is the value addition he has done? 20,000 rupees. So if I multiply the rate of GST on that value addition, it will come to 2,000. And if you pay close attention here, from the manufacturer, net 2,000 rupees only has gone to the government. Now, retailer has converted that 1 lakh 20,000 product into 1 lakh 44,000. So what value addition retailer has done? 24,000. If I multiply the rate of GST on that value addition, amount will come to 2,400. And as you could see here from the retailer, the amount which has gone to the government is once again 2,400 only. This is what the meaning of value addition, value added tax. So GST is such a taxation mechanism which is a value added tax. Only if there is value addition, there will be GST. If there is no value addition, there is no concept of GST at all. Let us say, for example, if the retailer is selling on cost to cost basis without adding any profit margin, at 1,20,000 rupees only he is selling. If you take a typical scenario, let us say here the situation is something like this: 1,20,000, no margin, selling price is also 1,20,000. He will collect GST at the rate of 10% amounting to 12,000, total 1,32,000. Now his output tax liability will become 12,000. And anyhow, he is having an input tax credit of 12,000. Will he pay any amount of extra GST to the government? No. So if you pay close attention here, there is no value addition. Since there is no value addition, there is no amount of GST also which is going to be get paid to the government. Understood? Right. So these are all some essential characteristics of the GST. All this discussion is very important because if you have clarity on these fundamental aspects, then only the future discussion is going to be very smooth. So these are the essential characteristics of GST. What are they? The tax is the final burden of the GST is on the final consumer. And in India, we have dual GST model. And GST is a destination based taxation and GST is a value added tax. Right. So this is what regarding characteristics of the GST. Then there is one more thing. Sir, what is the need for GST in India? So you are telling that GST has come into picture in the year 2017. Before 2017, is there no indirect taxation system in India? No, I did not say it. Even before 2017 also, we have an indirect taxation system in India. But that is very complex. We used to have multiple indirect taxation laws, because of which administration has become very difficult. There was no ease of business. So that's why the existing indirect taxation system was suffering from so many deficiencies, from so many weaknesses, which made the government to think about a new GST system, a new indirect taxation system called GST, which will overcome the problems of the existing indirect tax regime. So even before GST also we have an indirect tax regime, but that indirect taxation regime was suffering from so many problems. So that's why the GST has come. So that is what the need for GST in India, because existing taxation system is suffering from some weaknesses. To overrule that deficiencies, GST has come. And what are all that problems which are there in earlier taxation regime is there used to be something called double taxation. So let us say, for example, there used to be some issues regarding certain products. If you take pre-packaged software, traditionally what used to happen is before GST, we used to have two kinds of indirect taxes. On goods, we used to have something called VAT. On services, we used to have something called service tax. And on these kind of products like packaged software, like today you can go and buy something called a packaged software. So there used to be confusion. So state governments used to treat that as goods because you used to get a pen drive or a CD in which the software will be loaded. So state governments used to treat it as goods because you are getting that pen drive or CD, and they used to impose VAT. Service tax department used to say, see, this good, this CD or pen drive, whatever you are getting is just a carrier. Actually, there is a supply of software is happening, which is a service. They used to impose service tax. Product is one, but taxes are two. They used to impose VAT also. They used to impose service tax also. So like that, there used to be double taxation, which is one of the major problem. Then there will be cascading of taxes. There used to be something called cascading of taxes. There used to be tax on tax. See, all this is not important because all these weaknesses are there. To overcome that weaknesses only, GST has come. GST has anyhow come now. What are the problems in the old indirect taxation system? Those are no longer relevant today. But since as they have given in the material, sometimes they ask a question from here. So that's why I'm taking up some time, a few minutes. So main problem with the existing taxation system was double taxation. Number two, there used to be something called cascading of taxes. There used to be something called tax on tax. So here the example, if you refer, let us say we used to have excise law. No, in excise law, let us say I have done the manufacture. The assessable value is 1000. Now central government used to come and impose something called 12.5% of excise duty. They used to impose 125 excise duty. Now my total value will become 1125. 1000 rupees is the assessable value. Thereafter 125 rupees is excise duty. On manufacture, they used to impose excise duty. Now after manufacture, I will go and sell it. No, once I go and sell it, now the state government will come and impose something called VAT on me. Let us say VAT rate is 14.3%. And this 14.3%, they don't just levy on 1000 rupees. They used to levy that 14.3% on 1000 rupees plus 125. On total 1125, they used to impose that 14.3%. Now in this 1125, only 1000 rupees is value. 125 rupees is tax, which is excise duty. But you are imposing that 14.3% even on excise duty also. There is a tax on tax. So this used to be the major problem. There used to be cascading of taxes. And also, this setup was not possible. You might have excise duty credit that you can't use it for VAT. Like the way I told you the example, I'm adjusting my output tax liability with the input tax credit. No, today since we have only one GST, one taxation, we can easily adjust it. But previously, let us say you have a output tax liability under VAT, but I might have paid service tax on my inputs. Sir, can I adjust my service tax against my VAT? Not possible. Can I adjust my excise duty under VAT? Not possible. Can I adjust my CST under VAT? Not possible. So like that, set off was not possible. Next, there used to be multiple level of taxes which are not subsumed into VAT. Previously, we used to have VAT. Even along with VAT also, we used to have multiple kinds of state level taxes. And it was not integrated with tax on services. And one more point, service tax used to be levied only by government, central government. Central government used to levy only service tax. Sorry, if I put it in other way around, service tax used to be levied only by the central government. But service sector was very much booming in our country. So that is a very rapidly growing industry, and central government told on services we will only collect service tax. So that means state government has lost the revenue, has lost the right to tax services completely, and service sector was rapidly growing. So here also state government suffered a lot because they are not getting revenue, because service sector is booming. All the revenue is taken by the central government on that. And also CST caused distortion. Like as I have told, CST credit, there used to be something called CST. CST also you can't use it for VAT payment. That set off was not possible. So like that, multiple problems are there in the existing indirect taxation system, which led to the introduction of GST into India. Next, yeah. Now we have some legislative framework. In that legislative framework, a few things which we are required to understand is, see, as per constitution, if government has to impose GST, that has to be compulsorily imposed under some law. There should be some law under which GST has to be imposed. I told CGST, no, CGST is getting imposed under CGST Act. We have a CGST Act. Under that CGST Act, they will impose the CGST. So we have IGST, no. IGST is getting imposed under IGST Act. Even SGST is there, no? For imposing SGST also, we have state level acts. We have state level acts. Every state will have a SGST Act. Like AP will have a AP SGST Act, and also Tamil Nadu will have Tamil Nadu GST Act. So they have, those states have made their respective state GST Acts under which they are imposing the GST. And for collecting UT GST, we have one UT GST Act. We have one UT GST Act under which UT GST is getting collected. So as per the constitution, if you have to collect any tax, there must be some law, there must be some governing law. And even for imposing GST also, they have brought various governing laws. CGST is getting imposed under CGST Act, IGST is getting imposed under IGST Act, SGST is getting imposed under SGST Act, UTGST is getting imposed under UTGST Act. So if you pay close attention here the most important thing which we have to pay attention here is, if you look at the CGST Act, it is applicable for whole of India. It is applicable for whole of India. Now, one thing which we have to remember here, sir, what is the meaning of the term India? What is the meaning of the term India? What will be covered in India definition? What will not be covered under India definition? So let us see here. What will be covered in India definition? So it includes entire territory of India. We have an India map, no? So that entire landmass of India, that will fall under India definition. Not just that, it also includes the territorial waters. It also includes what? Territorial waters. Sir, what is territorial waters? See, if you take India map, all this land mass will fall under India definition. Now, not just land mass, territorial waters. Sir, what do you mean by territorial waters? From the coastal line, if you go up to 12 nautical miles. How many nautical miles? If you go up to 12 nautical miles, that I call it as territorial waters. Even that territorial waters also will be included in India definition. Not just the territorial waters, under the territorial waters, there will be seabed, no? There will be seabed, subsoil will be there. That will also fall under India definition. Okay, so if you look at it here, it will contain territorial waters, seabed, and subsoil underlying such waters. Not just that, my dear students, it also includes something called continental shelf and exclusive economic zone. Sir, what is continental shelf or what is exclusive economic zone? From the coastal line, if you go up to 200 nautical miles, how many nautical miles? 200 nautical miles. Up to 12 nautical miles, territorial waters. After that, up to 200 nautical miles, this we call it as exclusive economic zone. This we call it as what? Exclusive economic zone. Sir, why this is also included? Why? Because up to this 200 nautical miles, this is where oil exploration will happen. Oil rigs and all will happen. Oil rigs will be placed, like Reliance will have oil rigs and all installed there. So government wants to even impose GST on that. So that's why what they have told is this from beyond the territorial waters up to 200 nautical miles, we have this area called, we call that area as exclusive economic zone. That will also form part of India definition. And below that water, we will have that soil. We'll have that landmass, right? That I call it as continental shelf. That I call it as what? Continental shelf. That continental shelf also will form part of India definition. So what? Tell me, what and all will get included in India definition? It includes entire territory of India. It includes territorial waters up to 12 nautical miles. It includes a seabed and subsoil behind it. And it also includes something called exclusive economic zone, which can extend up to 200 nautical miles from the coastal line. And below that, whatever landmass we have, which we call it as continental shelf, that will also fall under India definition. Next, thereafter, it also includes any other maritime zone. There is something called maritime zone. Let us say, for example, below India, we have Sri Lanka, right? Here also, I can't say I will go up to 200 nautical miles. That is my territory. Why? Because even Sri Lanka also should have water access. So that's why with Sri Lanka we have an agreement, maritime zone agreement we have. So with the Sri Lanka we have an agreement. Let us say, if I'm not wrong, the distance is somewhere around 18 nautical miles between India and Sri Lanka. We have a maritime agreement with Sri Lanka where we have divided 9 nautical miles will be with India, 9 nautical miles will be with Sri Lanka. So this I call it as maritime zone. Even this maritime zone also will fall under India definition. Okay, right. And not just that, my dear students, even airspace above its territory and territorial waters, above the landmass, above the territorial waters, whatever airspace is there, that will also fall under India definition. Let us say you're traveling on a plane and in the aircraft you have purchased some food and ate it. That is also supply. So it is not happening on landmass. No, who told India is only landmass? So that's why they are extending the definition. And even they're saying airspace above the territory of India and territorial waters, that will also fall under India definition. Understood? So this is one of the important definition which you have to pay attention. So CGST Act, IGST Act extends to whole of India, And what is the meaning of the term India? We have understood. SGST Act will become applicable only for the respective state. Let us say, for example, AP government is having a GST Act that will become applicable only for the AP territory. Tamil Nadu state government will have their own CGST Act, the own SGST Act that will become applicable only for the state of Tamil Nadu. Kerala government will have their Kerala SGST Act that will become applicable only for the Kerala government. So like that, state level they have their own acts. And we have Union Territory Act, UTGST Act. We have this UTGST Act extends to only those union territories without legislature. I already told you 3 union territories are there with the legislature. They also will be treated equal to states. They will have their state level SGST acts. But whatever remaining union territories are there without any legislature, for all of them we have one single act, UTGST Act, that will become applicable. And what are that union territories without legislature? Andaman and Nicobar Islands, Lakshadweep, Dadra and Nagar Haveli, and Daman Dayu, Ladakh, Chandigarh, and other territory. So these all will fall under union territories. For all these union territories without legislature, we have one single act called UTGST Act 2017, which will become applicable. Now, so the next important part, there is a special treatment. There are certain products for which there is a special treatment under GST. So what are that products and what is that concerned special treatment for that products? Very important for MCQs and very important from descriptive question perspective also. Listen carefully. Right. So what is that first product? Alcoholic liquor for human consumption. Alcoholic liquor for human consumption. As I've already told you, in the definition which they have kept it in the constitution, from the definition of the GST itself, they have excluded alcoholic liquor for human consumption. So on alcoholic liquor for human consumption, it is outside of the GST purview. Now in future, always alcoholic liquor for human consumption will be outside of the GST purview. The government will not impose GST on alcoholic liquor for human consumption. Sir, if no GST, there will be no other taxes? No. What other taxes will be imposed on alcoholic liquor for human consumption? State level excise duty will be imposed. Whenever it is getting manufactured, state government will impose excise duty. And whenever it is getting sold, if it is getting sold within state, VAT will be imposed by the state government. And if it is getting sold, sorry, if it is getting sold interstate, then CST will be imposed. That means old indirect tax laws will become applicable. So when it comes to alcoholic liquor for human consumption, number one, it is outside of the GST purview. Number two, what will be imposed, sir? State level excise duties, and whenever it is getting manufactured, state government will impose excise duty, and whenever it is getting sold, depending on whether it is interstate or intrastate, CST or VAT will be imposed. And one more point I would like to add it here. Not just alcoholic liquor for human consumption, there are two more products which are outside of the GST purview, which is undenatured extra neutral alcohol, undenatured extra neutral alcohol, and rectified spirit, which is used in the manufacture of alcoholic liquor for human consumption. That is also outside of the GST purview. Not just alcoholic liquor for human consumption, even undenatured extra neutral alcohol and rectified spirit. Basically, these are raw material. These are raw materials for the purpose of manufacturing alcoholic liquor for human consumption. That is also kept outside of the GST purview. So alcoholic liquor for human consumption, not just that, undenatured extra neutral alcohol and rectified spirit, which is getting used in the manufacture of alcoholic liquor for human consumption, that has also been kept outside of the GST purview. So this is one special product. Then we have 5 petroleum products. 5 petroleum products today. The hot topic today, this petroleum, diesel, petrol. So this is what hot topic now because of the ongoing war between US, Iran, Israel. So this is what the current situation today. And recently also you might have seen the news on petrol, diesel. Government has cut down excise duty and all. Have you heard the news? In the recent times, in the last 2-3 days only, the news has come in the social media saying that the government has cut the excise duty. You have not heard the news. Government has cut down the GST on the petroleum. No. Why? Because even on that petroleum products also GST is not there. So how many petroleum products? 5 petroleum products. Petroleum crude, diesel, petrol, ATF, aviation turbine fuel, and natural gas. These 5 you have to mug up. These 5 products you have to remember. Petroleum crude, petrol, diesel, aviation turbine fuel, and natural gas. So on these 5 petroleum products, They are currently not under GST purview. I am not saying permanently they will be kept outside of the GST purview, but for the time being now, currently they are outside of the GST purview. The government will notify a date in the future. From the date notified, these 5 petroleum products also will come under GST purview. See, I hope you're able to understand the difference. Alcoholic liquor for human consumption now, never, now, even in the future also, now, whenever it will not come under GST purview. Whereas these 5 petroleum products, currently they are not under GST purview. In future, the government will notify a date. From the date notified, these products will be brought under GST purview. But currently, they are outside of the GST purview. Okay, sir. Currently, they are outside of GST purview. That means, will there be no tax on these 5 petroleum products? No. Who said that? No one said that. Then what will be imposed, sir? Central excise duty. Central government will come and impose something called central excise duty whenever these 5 petroleum products are getting manufactured, and whenever it is getting sold, CST or VAT also will get imposed. Next one. Tobacco. On tobacco products also, tobacco is something which is subjected to double taxation. So what is a double taxation is, whenever tobacco is getting sold, GST will be imposed. Not just a GST, even central excise duty. Whenever it is getting manufactured, even central excise duty also will be there. Double taxation. Sir, why double taxation? Because it is a sin product, it is a harmful product. Government want to discourage it. So that's why they will impose both GST and also central excise duty. Then, when it comes to opium, Indian hemp, and other narcotic drugs and narcotics, for these products, GST will be there. Along with that, state level excise duties also will be there. State government is also going to impose something called an excise duty. So these are various products for which there is a special treatment under GST. Some products are outside of the GST purview, and 2 products are subjected to double taxation. One is tobacco and opium, Indian hemp, and other narcotic drugs and narcotics. Right? So this is something which you have to remember. So this is what the important discussion, guys, from this chapter, whatever discussion we had till now, this is going to be the important discussion. Hereafter, we have some other small things, like there is something called GST Common Portal. Nothing but GST Common Portal is a website, www.gst.gov.in, where all this GST compliances will happen. If you want to take registration, if you want to file your returns, if you want to make the payment of taxes, if the department want to conduct audit, if the department want to do any proceedings, everything is taken electronically with the help of this one single common portal, www.gst.gov.in. So that we call it as Common Portal. This website we are going to come across in our subsequent chapters also. So like this, we have one common website through which we can handle all our GST compliances. Then for e-way bills, we have separate portal called www.ewaybill.gst.gov.in. And for e-invoices, we have separate portal. This we will anyhow have a separate discussion in our subsequent chapters. And in addition to that, we have something called GST compensation cess. Sir, what is this GST compensation cess? If I have to put it in very simple terms, because of introduction of GST, some state governments are losing revenue. Some state governments are losing revenue. To compensate the state governments for loss of revenue, central government told, dear state governments, you don't cry. You are suffering some loss, no, because of introduction of GST. What we will do is we will try to compensate you. Central government made a promise to compensate the states who are losing revenue because of introduction of GST. But how central government will compensate, sir? They don't have their own deep pockets, no, from which they can compensate. What they will do? Okay, we will compensate state governments, but how we will compensate? We will collect a separate tax from the customer. We customers only. So we are going to collect a separate tax from the citizens in the name of GST compensation cess, that we will collect it and compensate it to you. So like that, we have one more extra tax called GST compensation cess, which government will impose on specified luxury and demerit goods. Not on every good. Whenever you are buying luxury goods and demerit goods, on that they will impose something called compensation cess, and that will be used for compensating the revenue loss to the state governments. So it was still actual applicability is till 31st of March 2026. Tomorrow only. Tomorrow is only the last day for imposition of GST compensation cess. Anyhow, this GST compensation cess has become ineffective. So starting from 22nd of September itself, what the government has done is they are not imposing GST compensation cess, but instead what they have done is they have increased the GST rate only. Previously, what used to happen is on motor vehicles, on cars and all, there used to be 28% GST and 22% compensation cess used to be there. But recently, government has made a move. What they have done is, okay, no longer we are going to collect GST compensation cess, but what we will do is we will increase the rate of GST itself from 28% to 40%. Not important from the examination, just I'm letting you know what are the recent changes which are happening in the industry. So tomorrow is the last day for levy of GST composition cess. After that, there will be nothing called GST compensation cess. Don't think that government is sparing us, but instead what they have done is they are eliminating the GST compensation cess, but wherever they want, they are increasing the GST rate directly to 40%. They are bringing it here, like on tobacco products directly 40%, on motor vehicles, on cars and all directly 40% they are bringing it. But GST compensation cess is going to go away. Okay, right. Then we have one small concept called GSPs or ASPs. Sir, what is this GSP or ASP? Very simple. See, we have this GST portal. No, we have this GST portal. So this GST portal is getting managed by one entity called GSTN, GST network. Like that, one GSTN is there, which is managing the GST portal. Now, there are some big clients and all. Like, let us say, for example, if you take the listed companies and all, they are also required to file the returns and all. But it will be very difficult for them to follow this usual tools which are available on the portal. There is a network called GSTN which is maintaining this portal. They will provide basic facilities. They will not provide you advanced features and all. But if you take the so-called big companies, they are required to file returns. If you take the example of DMart, on a daily basis, DMart will make thousands of sales. Monthly, they might be required to upload the details of crores of transactions. They can't appoint a person who will do the manual feeding of all the data on the common portal. And even we can't expect this GST network also, we can't expect to develop some tools for us. So that's why what the government has done is, what this GSTN has told us, they have identified some fintech companies. And to these fintech companies, they have given access to the GST portal, with whom they are going to call it as GSPs, GST Suvidha providers. So now what these GSPs will do is, they will build some tools for this people. They will build the tools for the citizens to interact with the GST portal in an effective manner. Okay, so if I put it in very simple term, like Infosys, TCS, these people have been identified as GSPs. They try to help this big entities develop some advanced tools and easy tools which they can use it for filing the returns and handling their compliances. So that is what the role of GSP. GSP act as a connection between the taxpayer and the GST network. Now, all the apps they can't develop by themselves. These fintech companies like Infosys, TCS, they can't develop the apps on their own. So that's why they are taking help of one more mediator called ASPs, application service providers, like Tally. They're taking the help of Tally and all. So that we call them as application service providers. If I have to end the entire discussion in one single line, GSPs will act as a connection between the taxpayer and GST network, whereas ASPs will act as a connection between taxpayers and GSPs. That's all. This much, if you remember it, it will be enough. Next, sir, what are the benefits of GST system? This you can have a quick look at it. So it will, what are the benefits to the economy? It will lead to a unified national market. It will also it will also boost up the Make in India initiative. It will also boost investment and employment. More investment will start flowing into India. More employment will get generated. All this is not happening anyhow. Simplified tax structure. The tax structure has become very easy than when compared with the earlier indirect taxation system. Ease of doing business not happening. Certainty in tax administration. That means earlier you used to be subjected to multiple authorities. If any issue goes on against you, multiple people will come and sit in your office. Excise department will come, VAT department will come, service tax department will come. But now we don't have that uncertainty. Only one department will come. If we do any mistake, which is department? GST department will come. So certainty in tax administration. Easy tax compliances. Everything is technology driven. IT processes are there. Everything we are doing today in GST with the help of technology. No manual going to the offices and also submitting any manual forms. Nothing is there. Everything is technology driven. We have one single common portal. Through that common portal, we are taking, that through single common portal, we are getting all our compliances done. And easier tax compliances. Even the trade and industry also will get benefited by way of lower tax burden and mitigation of cascading of the taxes. Even industry and trade is also going to get benefited. And then we have constitutional provisions. So what is this constitutional provisions is? To bring that GST system into India, we altogether needed a constitutional amendment. Constitution was required to be amended to bring the GST into India. So if you see here I have told you. So the constitution will contain different parts and all. At various parts, they have made the amendment. So I will tell you only those amendments which are necessary here, not so relevant here. Right. So one thing which we have to remember is there are some definitions. So Article 366, there are a few definitions. So what is the meaning of GST? Any tax on supply of goods or services or both. except non-supply of alcoholic liquor for human consumption. This I've already told you. This I've already explained. In Article 366, they have defined the term GST. It is a tax on supply of goods or services or both, except non-supply of alcoholic liquor for human consumption. Then they have created something called a GST Council. This is one more thing which is important. Remaining are all just some references where and all constitution, which and all articles have been amended. I'm telling you, I'm trying to revise only important things here. So Article 279A, GST Council. So in order to, since this GST system is going to be new in India, new issues will come up and all these issues are required to be resolved. One expert assistance is needed. So that's why to look after this effective implementation of GST in our country, a GST Council was created under Article 279A. So what is that GST Council? Let us see who and all will be there in the GST Council. So the President of India has constituted a joint forum which will contain representatives from both central governments and state governments, and they have given that forum a name called GST Council. Sir, who will be there in the GST Council, sir? There will be Union Finance Minister, R. Nirmala Sitharaman, currently Finance Minister. She will be the chairperson. And Union Minister of State, in charge of Revenue or Finance, is member. Once again, Union Minister only. Another Union Minister who is in charge of Revenue or Finance, he will also be a member. Not just that, Minister in charge of Finance, Taxation or any other minister nominated by state government. Even state government will nominate from their respective state either minister who is in charge of finance or tax minister or any other minister will be nominated by state government. He will also become member. So that means there will be 2 people representing central government and there will be altogether 31 people who will be representing state governments. I told 31 states, no, for the purpose of GST, whenever I say states, there are 31 states. So we have 2 people representing central government and we have altogether 31 people who are representing state governments, and they collectively created a forum and gave them a name called GST Council. Now this GST Council will look after this practical issues in the implementation of the GST. Periodically we get notifications, circulars and all we are getting, no, so all that will be under the supervision of the GST Council. So what are the different matters which GST Council will make recommendations? So this GST Council will suggest various recommendations regarding the implementation of GST, and what and all are the different matters which a GST Council will make recommendations is like taxes, surcharges which are required to be subsumed. What and all taxes have to go away. I showed you the list which taxes are subsumed into GST. Who decided it? GST Council has decided it. And exemptions, which goods are exempted, which services are exempted. They will also give the recommendation on this matter. And they will draft GST laws. They will decide principles of levy, how to apportion, how to govern place of supply. All this also they will decide. They will decide turnover limits. So when the person is liable for registration, when the person is not liable for registration, how to calculate, what will be the applicable threshold limit for registration, all that will be decided by them. And rates of GST, any special rates for certain duration during natural calamity, disaster and all. And also we have special category states. For that special category states, they will decide on special provisions. Like what are special category states? Arunachal Pradesh, Assam, Jammu Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh and Uttarakhand. For these special category states, we have special provisions also, which we are about to see in our subsequent chapters. Who will decide it? GST Council will decide it, or any other matter relating to GST as the council may decide. And it will, the main objective is to develop a harmonized, a uniform national market. And even for this GST Council meetings also there should be quorum. What is the minimum quorum? 1/2 of the total members. 1/2 of the total number of members must be there in the quorum. And even there should be decision should be taken by majority. How much majority you want? Not just simple majority of not less than 3/4 of the weighted votes. So in order to take a decision, you need 3/4 of majority, and this will be calculated. Weights also will be given to the votes. This you need not worry about it. Just you have to remember this majority. How much majority is required? Not less than 3/4 of the weighted average votes. You need to be there in favor in order to take any decision. I have told you in our regular class, we have spent a lot of time in understanding how to determine the weightage for the votes and all, how to calculate the majority and all. We have seen that is all not important. In regular class we have explained it, but now that itself will take some 20-30 minutes of the time, so I'm not doing that. Once again, not important from the examination perspective. Yeah, and these are all some procedural formalities. So this is what one constitutional amendment which we have to worry about it. Remaining and all, just you can give a quick look and ignore it. So with this, we are done with introduction to the GST chapter. We have successfully revised introduction to the GST chapter. Clear, everyone? So now we have to proceed ahead with supply under GST. The next chapter which we have to take up for revision is going to be supply under GST. Okay, guys, welcome back. So now we'll be trying to do the next chapter, the very important chapter from the examination perspective, which is supply under GST. Very, very important. So if you are not having an understanding of this particular chapter, let me give you a caution well in advance. If you are not having an understanding of this particular chapter, if you are not well versed with the contents of this chapter, I am telling you, rest of your GST preparation is going to be not worth at all. So this is such a chapter. If you don't understand this chapter, there is no purpose of learning the remaining chapters at all. So first, let me give you overall structure, what and all we are going to cover as a part of this chapter. Right. So what and all we'll be covering as a part of this chapter. Let me give you one overall structure. Thereafter, we'll go into the technical discussion. So guys, if you remember, just in the introduction to the GST, I have told you one simple point. I have told you the meaning of the term GST, how the term GST has been defined in the constitution. So we have seen that they have defined GST like GST is a tax on what? On supply of goods or services or both. So in the definition of the GST which has been given in the constitution, they are very specific. They told that GST will be imposed only when there is an activity called supply. Only when there is an activity called supply. So supply is a taxable event under GST. If there is no supply, then there is no GST at all. First, for the government to come and impose GST, there must be an activity called supply. If there is no activity called supply, there is no question of imposing GST only. So if I have to put it in other way around, the prerequisite for imposing the GST is supply. But before we talk about supply, even one more thing, the definition says GST is a tax on supply, it is there, but on supply of goods or services or both. So that means before we can see whether supply is there or not, first we should see whether the subject matter is goods or services or not. So if I put it in other way around, first there must be goods or there must be services or there must be both. And just having the goods or services or both alone will not be enough. There must be supply. That is the triggering point for the government to come and impose GST. I hope you're all clear on it. So what I will say here is, before we could go ahead and understand the meaning of the term supply, it will be wise enough for us to understand what is the meaning of the goods, what is the meaning of the services. So first we'll try to spend some time in revising what is the meaning of the term goods, what is the meaning of the term services. Because first goods or services must be there, then only we should check whether there is a supply or not. So what is the meaning of the term goods, sir? What is the meaning of the term services, sir? Let us try to understand it. So first I will talk about what is the meaning of the term goods. So what is the meaning of the goods? The term goods has been defined something like this. Goods means every kind of movable property. One by one, step by step, we will try to revise it. So they are saying that goods means every kind of movable property. Sir, now what is the meaning of the movable property? You told goods means every kind of movable property. What is movable property? The property which can be moved from one place to another place. Like for example, if you take this mic, movable property. If you take this pencil, movable property. If you take a car, movable property. So like that, any kind of movable property will fall under goods. But what is the exact meaning of the term movable properties? They say that movable property means other than immobile property. They say what is a movable property which is other than immobile property. Sir, then what is immobile property? Immobile property means land. Land will come under immobile property. And benefits arising out of land. Whatever benefits are there which are arising out of land, like construction rights, development rights on the land, that will also fall under immobile property definition. Not just that, things which are permanently attached or things which are permanently fastened to the earth, that also will fall under immobile property. Things which are permanently attached or permanently fastened to the earth, that also will fall under immobile property. Like let us say for example, building. Building is something which is permanently fastened to the earth. Or you take trees. Tree is also something which is naturally attached to the earth permanently. So like this, land, benefits arising out of land, or things which are attached to or forming part of the earth, that we call it as immobile property. If something is immobile property, then it is not goods. If something is falling under immobile property definition, then it is not goods. Why? Because goods means only every kind of mobile property, and mobile property means something other than immobile property. So land will not become goods, buildings will not become goods, things which are permanently attached or forming part of the earth will not become goods, benefits arising out of land also will not become goods. This point everybody clear? Right. So goods means every kind of mobile property. However, they did not stop it here. They say that other than goods does not include other than money and securities. Goods does not include money and securities. Money and security will not be considered as goods definition. Sir, what is the meaning of the term money? They're saying that money is movable, but they're saying money will not fall under goods definition. Even securities also will not fall under goods definition. But before that, first we should understand what is the meaning of the term money, what is the meaning of the term securities. Securities means, if I have to put it simply, as per SEBI and all, we have this shares, bonds, debentures we have, right? So all that will form part of securities definition. If I am buying shares or if I am selling shares, they told that these securities are not considered as goods. Shares, bonds, debentures, all these kinds of activities or mutual fund units, whatever it is, they are not considered as goods. Now you should get a doubt. Sir, if not goods, no GST? No, we have to check one more line, one more step. If something is not falling under goods, we need to check whether it is falling under services. Why? Because for imposing GST, just having goods is not the condition. It could be either goods or it could be services also, no? So first we are at the first step. If something is not falling under goods, don't automatically conclude that there will be no GST. There is one more step. If it is not goods, we have to check whether it will fall under services. Okay. But currently they are telling that securities are not goods. Then money is not goods. Sir, what is the meaning of the term money? We'll generally get a doubt. No. What is the meaning of the term money? So money means, they have defined it. Money means Indian legal tender money. Indian legal tender money, Indian currency, which is currently in circulation. So that Indian legal tender money will be falling under money definition. Not just that, foreign currency will also fall under money definition. Check, promissory note, bill of exchange, letter of credit, draft, pay order, traveling check, money order, postal or electronic remittances, or any other instrument recognized by RBI when used as a consideration to settle an obligation or exchange with the legal tender money. So what they're trying to say here, any instrument, if I have to put it in one simple line, Indian currency, foreign currency, or any other instrument like check, bank draft, demand order. So any other instrument which is recognized by the RBI which can be used as a settlement for consideration, all that will fall under money definition. And however, they say one point here at the end of that money definition, but shall not include any currency that is held for its numismatic value. If you are holding any currency, not for the purpose of circulation, but if you are holding that currency for the purpose of its numismatic value, sir, what is numismatic value? For its intrinsic value, if you are keeping it, not for circulation, not for settling it, but if you are keeping some currency for its numismatic value, that will not fall under money definition. Sir, what exactly is the meaning of currency held for its numismatic value? Let us say, for example, I'm a coin collector. I am having one coin, one old coin, which used to be in circulation during British rule in India. When the British are ruling, at that point of time also, they used to use some kind of currency, right, for the purpose of settlement and all. I have one such coin which used to be in circulation during the British rule. So that I am holding it because I am a coin collector. I am not holding it so that I can use it for consideration. I can use it for settlement. No. Why I am keeping that value? Because it is having some numismatic value. It is having some intrinsic value. Sometimes these old coins and all will fetch lakhs and lakhs of rupees for persons. So that currency which is belonging to British rule, which I'm holding for its numismatic value, will it fall under money definition? No. Why? Because they have specifically told money shall not include any currency that is held for its numismatic value. That will not fall under money definition. So this currency, this British rule related currency which I am holding it, that is not falling under money definition. If it is not falling under money definition, can it fall under goods? Yes. Able to understand the logic here. They told that goods means other than money. If something is not money, that will fall under goods. No. So they are saying currency held for its numismatic value is not money. If currency held for its numismatic value is not money, that means that could fall under goods definition. Agreed with it? Right. So what we are seeing now, goods, we are understanding what is the meaning of the term goods. Goods means what? Every kind of mobile property. other than money and securities. Money and securities will never be considered as goods. Now, let me tell you well in advance, even money and securities will not be considered as services also. Even money and securities will not be considered as services also. So if you read this point in the services definition, anything other than goods, money and securities. So now the point here is money and securities are neither goods nor services. Money and securities are neither goods nor services. So if they are neither goods nor services, they will be kept outside of the GST purview. Because for imposing the GST, first there must be goods or services. If I am eliminating something from the goods or services definition only, that means government doesn't want to impose a GST on it. So money and securities are neither goods nor services. They are outside of the GST purview. Okay, so let us come back to the goods definition here once again. So goods means every kind of mobile property other than money and securities, but it includes actionable claims. It includes what? Specifically, they are including in the goods definition actionable claim. Actionable claims also will form part of goods definition. Sir, what is an actionable claim? Basically, if I have to put it in very simple terms, if you have any unsecured debt, let us say for example, I have arrears of rent which I am required to collect. I have a property, I have given that property on rent, I have arrears of rent which I am required to collect. So you have a right to recover that rent, no? That I call it as actionable claim. So a right to an unsecured debt or a right to an beneficial interest or a beneficial interest in a movable property which is currently not in your possession. I don't want to go into the technical details. Just I want you to remember that even actionable claims also will fall under goods definition. Like for example, if I put actionable, if I give you more examples of actionable claim, lottery, betting, gambling. So all this also will fall under actionable claims only. Whatever it is, they have defined the term goods in such a manner that, and in the definition of goods, they have specifically made us include actionable claims. So that's why actionable claims also will fall under goods definition. So this unsecured debts, lottery, betting, gambling, all this will fall under actionable claims and they will be considered as goods. Next, they did not stop it here. Even they're specifically including certain extra items in the goods. Growing crops, grass, and things attached to or forming part of the land, which are agreed to be severed, which are agreed to be cut before supply or under a contract of supply. So now they are specifically including it in the goods definition. Growing grass, crops, which are attached to the earth. So just now you told that is an immobile property. Things which are permanently attached to or fastened to the earth, that is an immobile property. If it is an immobile property, it will not fall under goods definition. But here what they are saying is even growing grass, crops will also be considered as goods if they are agreed to be severed. Severed means what? If they are agreed to be cut either before making supply or under a contract of supply. Before making supply or under a contract of supply, if they are agreed to be cut before making supply or under a contract of supply, then we will treat them as goods. Let us take for example this Pushpa. I am going to sell this red sandalwood. I have to sell the red sandalwood. See, this red sandalwood is a tree which is permanently attached to the earth. That is actually an immobile property. But Pushpa, how he will sell that red sandalwood? He will agree to cut that red sandalwood trunk from the land and then he will agree to supply it. Now it will become goods because it is agreed to be severed, agreed to be cut either before supply or under a contract of supply. Able to understand? So this is what the goods definition which you have to remember it. So tell me, what is the meaning of the goods? Goods means every kind of movable property other than money, other than securities. That means money and securities will not fall under goods definition. What is specifically included in the goods definition? It includes actionable claims, growing grass, crops, or things which are attached to or forming part of the land, which are agreed to be severed, which are agreed to be separated, which are agreed to be cut before making supply, that or under a contract of supply, that will fall under goods definition. And one important point to note here, currency which is held for its numismatic value, it is not money. If it is not money, then it will fall under goods definition. Okay, right. So this is what regarding goods. So we have understood what is the meaning of the goods. Now we have to understand what is the meaning of the term services. Services have been defined in a very simple manner. What they have told us, anything other than goods, money and securities. Money and securities will not be considered as services. It will not be considered as goods also. But here the most interesting part of the definition is they have told anything other than goods. If something is not falling under goods definition, then they can come and fall under services. If something is not falling under goods definition, then it can come and fall under services other than money and securities. Let us say, for example, I am teaching you this class. Let us say I am taking some money from you and I am teaching the class. Is it a mobile property? No. Anyhow, it is not money and securities also. Is it an actionable claim? No. It is something, is it something attached to the earth which is agreed to be severed? No. So the activity which I am doing to you, the teaching by way of for which I am receiving consideration from you, it is not falling under goods definition. Sir, if it is not falling under goods definition, am I not required to pay the GST? No, if it is not falling under goods definition, it can come under services. Why? Because they have defined services in a very comprehensive manner. They added one simple line: anything which is not goods, all of that will fall under services. Very broader term, my dear students. It is having serious consequences. So if something is not falling under goods definition, it can come and fall under services, and government can come and impose GST provided if they are getting supplied. So whatever it is, something other than or anything other than goods, money and securities. So money and securities, once again on this money and securities, we have to elaborate it. They have told that money and securities is not goods. Now they are saying that money and securities is not even services also. But specifically, they have included certain activities relating to money. They have included certain activities relating to securities under the services definition. Sir, what are you trying to say? See, what I'm trying to say here is, let us say, for example, there is a person, Mr. A, and there is his friend B. A gave Mr. B 10,000 rupees. A gave Mr. B 10,000 rupees. This person, Mr. B, is in need of funds. He approached his friend and asked, boss, I want money for use. Now A, out of kind heart, what he has done is, no issue, I have excess money, please do use it. Now this person used the money, and thereafter, once he got back the money, he returned that 10,000 rupees money back to Mr. A. Now you tell me, on that will GST come? No. First of all, it is not goods only. What is happening here? What is the thing which is getting exchanged between the two parties is money. So money is neither goods nor services. No. So this is outside of the GST purview. But let us say, for example, A gave 10,000 rupees of money for use to another person, Mr. B. Now, with the agreement that this Mr. B, after his use is over, is required to return back that money along with that 10,000 rupees. Along with that, he is also required to pay some interest of 1,000 rupees. Along with that, he is required to pay some interest of 1,000 rupees. Now they say that this 1,000 rupees will be considered as supply of service. This 1,000 rupees will be considered as supply of service, which means activities relating to use of money for which a separate consideration, if you are charging, that separate consideration component will be considered as supply of services. If you are giving money for use to another person, and if you are getting that money back after that use is over without charging any separate consideration, just you are giving some amount, you are getting back the same amount. You are not charging anything extra for the purpose of giving that money for use. It was not at all a supply. But in case if you are giving money for use and for which you are getting separate consideration in the form of interest or discount, that separate consideration component will be considered as supply of service. Supply of service. Not just that, if you are providing any activity in which money is getting converted in one form to another form, or money is getting converted from one currency to another currency, or if it is getting converted from one denomination to another denomination, for which you are charging a separate consideration, that separate consideration also will be considered as supply of services. If money is getting converted from one form to another form, one currency to another currency, one denomination to another denomination, for which important rule here is there must be a separate consideration for that conversion, then it will be considered as supply of services. Let me put it like this. Let us say I have 1 lakh rupees. I needed DD for this amount. I went to the bank. I gave that 1 lakh rupees of cash. In return, bank gave me DD. Both are money only. Just now, as I have told, Indian currency is also money. This demand draft is also money. So I am converting my money, my physical cash, into DD, for which bank will charge a separate consideration. Bank will collect some charges. No, let us say bank told, okay, we will give you DD. They took 1 lakh rupees, gave me 1 lakh rupees of DD. For conversion of this DD, for conversion of the money into DD, they are collecting from me 200 rupees. So now this 200 rupees separate consideration for conversion of money from one form to another form, this 200 rupees will be considered as supply of service. Not just that. If I'm converting my money from one currency to another currency, let us say, for example, I went to authorized money dealer, forex dealer. I have 1 lakh rupees of INR. I took that INR, gave it to the dealer, and in return, I got US dollars. So he is taking my Indian currency and giving foreign currency, converting money from one currency to another currency. But he will not do it for free of cost. He will charge some little extra consideration for me in the form of commission. No. So that will be considered as supply of service. Similarly, if I'm changing the currency from one denomination to another denomination, let us say, for example, I have 500 rupee notes. I took it to another person and I'm converting that 500 rupee notes into 10 rupee notes of equal amount, for which he is charging me separate conversion charges. That separate conversion charges will become supply of service. Able to understand? So money in itself is neither goods nor services, but activities relating to use of money, but activities relating to conversion of money from one form to another form, from one currency to another currency, from one denomination to another denomination, for which a separate consideration is getting charged. That separate consideration amount will be considered as supply of service. Understood? Clear and comfortable? Next. Coming to the next point regarding securities. Let us say I'm a person who wants to buy shares. There is another person, I'm a buyer of shares, another person is seller of shares. We wanted to deal in Reliance Industries Limited shares. So I purchased 1,000 quantity of Reliance Industries shares. I purchased 1,000 quantity of Reliance Industries shares from another person, for which I paid him some consideration. Let us say 1,000 shares I have purchased, each share 100 rupees, 1 lakh rupees I have paid, and I have purchased 1,000 quantity of Reliance shares. Now this is a transaction securities. This is a transaction securities. I told securities is neither goods, not even services. On this GST should not come 100%. On this 1 lakh rupees GST will not come. But you all are aware, like this the share market transaction will not happen. In between there will be someone called intermediary. Who is that intermediary, sir? There will be a stockbroker. Let us say that stockbroker is Zerodha here. Zerodha is a stockbroker. Through the stockbroker, this purchase and sale of securities will happen, no? So now the transaction in securities amounting to 1 lakh has happened. For facilitating this transaction, for arranging this transaction, for connecting this buyer and seller, Zerodha will charge from you some commission. Brokerage commission, you say, brokerage, you say, something this Zerodha will collect from you. For what purpose? For facilitating this transaction, for arranging this transaction in securities, for which they are charging the commission in the form of commission, brokerage, etc. So that will be subjected to GST. Let us say on this transaction, Zerodha is charging some 100 rupees of brokerage or commission. Now this 100 rupees will be considered as supply of services. Clear? So this is very important point here. So if you see, services means anything other than goods, money and securities, but specifically they are including certain activities in the services definition. What is that? It includes activities relating to use of money or conversion from one form, conversion by cash or any other mode from one form, currency or denomination to another form, currency or denomination, for which you are charging a separate consideration. Similarly, they have added one explanation. Services includes facilitating or arranging transactions in securities. If someone is providing the services of facilitating or arranging the transactions in securities, generally who will do this? Who will do this is stockbrokers will do it. Their services will become taxable. Their services will be treated as supply of services. Understood? So we have covered various definitions. We have understood what is the meaning of the term goods, what is the meaning of the term services, and various connected provisions with that. Okay, right. So if you come back to the context, if I provide you the context once again, so what we are discussing, we are actually supposed to discuss supply. Why we are supposed to discuss supply? Because if we look at the definition of the GST as per constitution, they are saying that GST is a tax. Tax on what? Tax on supply. Of what? Goods or services or both. So we got the clarity now. What is good? What is service? We got the clarity now. So first, the subject matter of the transaction should either fall under goods or services. Then only there will be GST. But just having the goods or services alone will not be enough. There should be a taxable event called supply should have taken place. Just having the goods and services will not trigger the GST. Something should have taken place regarding that goods or services. Some taxable event should have taken place regarding that goods or services. And that taxable event is none other than supply. Supply of the goods or services should have taken place. Then only GST will be imposed. But now comes a $1 million question. Sir, when an activity will be considered as supply? When an activity will be considered as supply. Okay, sir, understood. There must be goods, there must be services. We got the clarity. But you are saying just having the goods or services alone will not be enough. There must be a taxable event called supply should have taken place. So how to determine when an activity will fall under supply definition? So to know that, we have to cover the provisions of section number 7. So section number 7 has clearly told us different circumstances when an activity will be considered as supply. when an activity will be considered as supply, when an activity will not be considered as supply. So that comprehensive discussion has been given under section number 7. So if we have to know when an activity is supply, when it is not a supply, we have to go through the provisions of section number 7. First, I will tell you structure of section number 7. So if you see here, we have section 7, subsection 1. So in section 7, subsection 1, we have various clauses. Clause A, clause AA, clause B, clause C. Like that, we have various activities. So under section 7, subsection 1, they have clarified us when an activity will be classified as supply. So there are certain activities which will qualify as supply under section 7, subsection 1, clause A. There are some activities which will qualify as supply under section 7, subsection 1, clause AA. There are certain activities which will qualify as supply under section 7, subsection 1, clause B. There are certain activities which will qualify as supply under section 7, subsection 1, clause C. So whatever it is, section 7, subsection 1 will tell us when an activity will qualify as supply. Then we have section 7, subsection 1A, which says that once an activity has been classified as supply, the next question will come, will it be treated as supply of goods or will it be treated as supply of services? Once an activity has been classified as supply, whether it will fall under supply of goods or will it fall under supply of services, that question will come. That has been clarified by 7.1a. It has been clarified by 7.1a. So once an activity has been classified as supply, whether it will be falling under supply of goods or supply of services. Thereafter, we have something called section 7, subsection 2, which will say it is something I call it as negative list. It is something I call it as what? Negative list. That means even though in some circumstances all the conditions are getting fulfilled, but in under section 7 subsection 2 they have told us that there are certain activities which will neither be considered as supply of goods, not even it will be considered as supply of services. Which means government wants to keep some activities outside of the GST purview. Government wants to keep some activities outside of the GST purview. So that's why what they have told is they have identified a few activities and they told that these activities will not treat them as either supply of goods or supply of services. We don't want GST on it. So that is what mentioned under 7 subsection 2. So if we could complete the 7 subsection 1, 7 subsection 1a, 7 subsection 2, we would have completed the supply activity. Okay, so let us try to understand one by one. First, I will start with section 7, subsection 1, which is talking about when an activity will be considered as supply. Okay, so when what is included in the supply definition, what is included in the supply definition, we'll try to understand. One by one, we'll try to do. So first, section 7, subsection 1, clause A. It says that in order to qualify a supply under section 7, subsection 1, clause A, there must be either goods or services or both. And some form of supply should have taken place. Some form of supply should have taken place. And there must be consideration. What must be there? There must be consideration. And it must be in the course or furtherance of business. It must be in the course or furtherance of business. Then an activity will qualify as supply. So under section 7, subsection 1, clause A, you have to mug it up, my dear students. You have to apply the concept here and you have to learn it. So under section 7, subsection 1, clause A, when an activity will be qualified as supply, 4 things. There must be goods, there must be services or both. And some form of supply should have taken place. There must be a consideration and it must be in the course or furtherance of the business. When all these 4 conditions are there, when all these 4 essential requirements are there, then it will qualify as supply under section 7, subsection 1, clause A. Repeat everyone, what and all are essential in order to qualify as supply under section 7, subsection 1, clause A. There must be goods or services or both, and some form of supply should have taken place. There must be a consideration. It must be in the course or furtherance of the business. Now let us try to elaborate it. So what is goods? What is services? We have already understood. The subject matter of the transaction must be either goods or services. And just having the goods or services alone will not be enough. Some form of supply should have taken place. Sir, what could be different forms of supply? What could be different forms of supply, sir? Supply could happen in different forms. There could be different forms of supply. Sir, what and all are the different forms of supply? The list is there here. It could be sale. It could be sale. Like if I'm a shopkeeper, one day a customer came to my shop and he asked me to sell one product. So I took the money and sold him. What do you mean by sale? Transfer of property. I have transferred the ownership to the another person. So sale could be a form of supply, or it could be a transfer. I'm not doing a sale, but instead I'm doing a transfer. Transfer also could be a form of supply. Sir, what do you mean by transfer? Let us say, for example, from the factory, the goods are getting transported to sales depot. From the sales depot, they are getting transported to another branch. So that I call it as transfer. Transfer also could be a form of supply. Or it could be a barter transaction. Sir, what is barter transaction? So I am supplying some goods, in return I am getting some goods. So goods for goods or goods for services, services for services. So it could be a barter transaction. Or even it could be an exchange transaction. Sir, what is an exchange? Exchange is such a transaction where some monetary consideration is involved, some non-monetary consideration is involved. Let us say, for example, I'm buying a brand new iPhone. In return, I'm paying some 10,000 rupees along with my older version of the iPhone. It is an exchange. See, the difference between barter and exchange is, in case of barter, there is no monetary consideration. It is simply exchange of the goods and services. But in case of exchange, it involves monetary as well as non-monetary consideration, like sale of these mobile phones and all, where I buy a new phone. In return, I will give my old mobile phone and also I will pay some monetary consideration. So it could be an exchange, or even it could be a license. Like government will give you license. Let us say I want to carry out the mining business. If I want to carry out the mining business, just like that, I can't find a mountain and I start digging it. First, I have to apply for license to the government. Government will ask me to pay some amount and they will grant me license. A license is also a form of supply. It could be a rental. Let us say, for example, immobile property is there. I want to use it. I want to take it on rent. That could be a form of supply. Or it could be lease, or even it could be a disposal. So some form of supply should have taken place. Any of this form is accepted. And it is not a full and final list. It is not a conclusive list. It is just an illustrative list. So these kind of any form of supply should have taken place. So once again, if you come back to section 7 subsection 1 clause A, in order to qualify a supply under section 7 subsection 1 clause A, there must be first goods or services or both. Some form of supply should have taken place. Just now, as we have seen, what could be different forms of supply. But just having the goods or services or both and having some form of supply alone will not be enough. The third most important essential element in order to qualify as supply is there must be a consideration. What must be there? Consideration must be there. Sir, what is consideration? Something in return must be there. Something in return. Sir, there must be a consideration, sir. If there is no consideration, if I am not getting anything in return, then it cannot be qualified as supply. If it can't qualify as supply under section 7 subsection 1 clause A, it might get qualified as supply under other clauses. But for clause 1, section 7 subsection 1 clause A, in order to qualify as supply, there must be a consideration. Sir, what do you mean by consideration? Consideration means only money? No. Consideration need not be only in terms of money. Consideration could be a non-monetary consideration also. Let us say I am teaching you. I am required to get some consideration. You are paying me some 5,000 rupees for teaching. Consideration is there. You are not teaching me. Let us say, for example, you are not paying me. Let us say you are saying, sir, you teach me. This premises you want know for teaching. I own this premises. You use this premises and you teach me. I want to conduct a class here. I am looking for premises. One student came and told, sir, I will do one thing. I have one premises. This premises you use it and you teach. In return, I will not pay you fees for your class. This is also a consideration. Sir, I did not get money. No. But you are getting a non-monetary consideration. No. Acceptable. And even monetary value of doing an act or forbearing from an act is also a consideration. If I am doing some activity, in return, the person has agreed to do something for me, or in return, the person has agreed not to do something, that also can fall under consideration. So don't be of a wrong notion that when I say consideration, I am talking about monetary consideration. Not necessary. Consideration could be monetary consideration. It could be non-monetary consideration. It could be doing an act. It could be not doing an act also. And one more thing you have to remember it here. Consideration need not always flow only from recipient. Consideration can come from other person also. Consideration can come from another person also. Let us say I am teaching you the class. You are the recipient. I am teaching you the class. You might be listening to the class. I might not get the consideration from you. Your parent is paying me the consideration. Sir, will that also be a consideration? Yes. Consideration need not get from the recipient. We can get it from other people also on behalf of the recipient. Understood? So there must be consideration. If there is no consideration, sir, if there is no consideration, it will not qualify as supply under section 7 subsection 1 clause A. There must be consideration. Now, let us try to observe from the consideration perspective. Let me give you a few circulars here. See, there will be charitable institutions, no? There will be charitable institution. Let us say, for example, one temple is there. Charitable and religious institute. There is one donor. There is one donor. He gave some 10,000 rupees of donation. He gave some 10,000 rupees of donation to that temple. So, temple is receiving 10,000 rupees of donation. You tell me, will it qualify as supply? You tell me, will it qualify as supply? Or let me put it this way. Is there a consideration here? Is there a quid pro quo here? No, there is no quid pro quo here. Why? Because if you see, temple is getting 10,000 rupees. Temple is getting 10,000 rupees, agreed. But what this person is getting in return? What this donor is getting in return is nothing. He's getting nothing in return. You might say, sir, he's getting punyam. No, sir. How can you say a person is giving a donation to a charitable place or religious place? Is he not getting anything? Sir, you are very wrong, sir. So if I give donation to a temple, church, or a mosque, I'm getting so much in return, sir. You can't say my money is waste. No, boss. I'm not saying your money is waste. Don't take me wrong. But you might say, sir, I'm giving donation. I will get punyam. Show that punyam, yaar. How you can show that punyam? Is it tangible? It is something which you will get it after you have left this world. See, all this we can't prove it. No. So that's why this temple is getting 10,000. But what this person is getting in return? Nothing he is getting in return. So you tell me, on that 10,000 rupees of consideration which a temple has collected, are they required to collect GST also? Not required. There is no consideration here. It will not qualify as supply under section 7 subsection 1 clause A. One more, let me extend. See, this person has given donation of 10,000 rupees. This, using that 10,000 rupees, let us say this temple has purchased one equipment. Let us say they have installed one water purifier. They have installed one water purifier in the temple on the basis of donation given by that person. On that water purifier, they have written donated by so and so person, Mr. A. So like that they have written as a kind gesture. They have recorded, they have mentioned that name, they have engraved that name. This water purifier is donated by so and so person. Now, can the department say, hey, temple is getting 10,000 and as a kind gesture, they are mentioning your name on the water purifier. So every devotee will read it and they will get to know about this person. So they are providing advertisement. This person is getting advertisement in return. Is it a valid argument? Once again, no. Once again, no. This is also not a quid pro quo. Just mentioning the name of the person on the donated item is not considered as quid pro quo. That also will not qualify as supply. Let me tell you one more thing. This person has given 10,000 rupees of donation because this donation is going to be used for one festival. This temple is conducting an event. For that event, they are going to use that 10,000 rupees of money. So now in return, what the temple has done is, throughout that event, at various places, they have placed some big banners. On that banners, it was written, donated by so and so person, Mr. A, who is the owner of so and so furniture store, which is the largest furniture store in this locality. Like that, they have kept big banners. In the banners, they have not just mentioned the name, donated by so and so person. They did not mention just his name. They are mentioning his business name also. Will it lead to advertisement? Yes, it will lead to advertisement. Here he is getting something in return. Here there is a quid pro quo. Temple is getting donation and this person is getting an advertisement service in return. Then the temple will be required to collect on this 10,000 rupees along with the GST also. They are required to collect it. Understood? Clear and comfortable, everybody? So in case of donations, whether there is a consideration or not, it depends on in return what the other person is getting. So one thumb rule you have to remember here: if the other person, if the donor is just getting one small acknowledgement by way of mentioning his name on the donated items, that will not be considered as quid pro quo. It will not fall under supply definition. Okay, so this is one circular. Okay, I have explained that circular. Now there is one more circular there. Right. So the second point, this also I will try to tell you. Artworks sent by artist to galleries. Sir, what is it? Let us say I'm a very famous artist. I drew one excellent painting. I took a canvas. I took one paint brush. I just like that splashed some colors on that canvas. It became an excellent painting. So now what I have done is, this painting I have to sell. Just like that, if I keep that painting in my home, no one will come and buy it. I'm not some Picasso or someone. So what I have done, I draw one painting. Now I have to sell this. What I have to do, if I have to sell, what I have to do is, there will be an art gallery. So these art galleries will conduct an exhibition. So where these artists will send their paintings and those paintings will be displayed at the exhibition. So there will be an exhibition. So on that exhibition, I will send my painting. Now this painting will be displayed at that art gallery. For this, I will not get anything in return. So I sent my artwork to the art gallery where they will display it. Will I get anything just for sending my exhibition, just for sending my painting to the art gallery? No. Just for sending that painting to the art gallery for exhibition, you are not going to get any consideration. This activity is not supply. If I am sending my artwork to the gallery for exhibition, that is not supply. But let us say, for example, at the art gallery, my painting was exhibited. Now people started walking in. The visitors will be there who will come and watch that artwork. Now one visitor has liked my artwork and he purchased that. One visitor came to that art exhibition. He liked my painting. He paid me some 1 lakh rupees and he purchased it. Now did the supply take place? Yes. Here is the place where supply has taken place. Here is the supply. Here is the place where supply has taken place. Just sending the artwork to the art galleries for exhibition, it is not supply. But at that art galleries, if a customer walks in and he likes a painting, paid the consideration and purchased it, at that point of time, supply will take place. Understood? So this is what one more circular here. We have one more circular regarding no claim bonus. I will come back to that later. But two circulars are associated with the consideration. Those two circulars we have covered. Okay, right. So once again, to provide you the context, what we are actually discussing, section number 7, subsection 1. We are listing out various activities where an activity will be considered as supply. So first we are at section 7, subsection 1, clause A, which says that in order to qualify as supply, there are some essential requirements which must be there under section 7, subsection 1, clause A. What are they? First, there must be goods or services or both. There must be some form of supply. There must be consideration. Last one more essential requirement in order to qualify as supply under section 7, subsection 1, clause A is it must be in the course or furtherance of business. It must be in the course or furtherance of business. Whatever activity you are doing, whatever supply you are doing, that too for a consideration, it must be in the course or furtherance of business. Now you will get a doubt, sir, what is the meaning of the term business? The term business is very much wider. The term business has been defined in a very much wider manner. It includes so many activities. Like what, sir? It includes any trade, commerce, manufacture, profession, vocation, adventure, wager. Everything will get covered here. Any activity in connection with or incidental to A above. So any trade you are doing, any commerce you are doing, any manufacture you are doing, that is business. In relation to that, if you are doing any supplementary activity, any incidental activity, any ancillary activity, that will also fall under business definition. Then any activity similar to, irrespective of volume, frequency and continuity, whether you are doing it only once in a year, doesn't matter, irrespective of volume, frequency, continuity, that will be considered as business. Supply or acquisition of goods, including capital assets and services, in connection with commencement or closure of the business. You are about to start business, but for that business you want to procure assets. You did not start the business yet. To start the business, you are procuring the asset. It will be treated as business. You have closed down your business. Your business is closed. Now you are selling all your assets. Business. That will also be considered as business activity. Provision of a club, association, society or any such body, like clubs we have, these clubhouses we have, where you become a member, you pay them the consideration, they will give you access to the club, you can go and enjoy the recreational activities. Business. Admission for a consideration of a person to any premises, amusement park, movie theater, you pay the money, they allow you to enter inside that premises. Business. Services supplied by a person holding an office in the course or furtherance of a trade, profession or vacation. I am a chartered accountant. I am holding a position of a director. I am holding a position as a director of a company. It is also a business. Activities of a race club, including by way of a totalizer, licensee to bookmaker, or activities of a licensed bookmaker in such a club. Even this horse racing activities and all, it is also an business. Any activity, transaction undertaken by central government, state government or even local authorities, even whatever services which are provided by central government, like I have told, giving telecom license, giving spectrum license, state governments giving mining license, state governments giving alcoholic liquor license, local authorities granting you some licenses, granting you trade license, even the activities performed by central government, state government, local authority as public authorities, they will also fall under business definition. So for any trade, commerce or any other similar activity to qualify as business, frequency, volume, continuity or regularity of such a transaction is not a prerequisite. Like let's say, for example, I'm an artist. I draw once in 3 years one painting. I will draw a painting once in 3 years and that I will sell it. Sir, will that be considered as business? Yes. Sir, I'm not doing it regularly. No. Once in a while you are doing, no, business only. That will fall under business definition. So it must be in the course or furtherance of the business. Let us say, for example, there is one old lady. So that old lady, she is unable to meet her expenses. Her kids are not taking care of her. So what she has done is she is having some old jewelry. She took that jewelry and sold it because she has to take care of her needs. No. So that old lady took the jewelry, sold it for some 1 lakh rupees. She sold her old jewelry and took that 1 lakh rupees. She sold the jewelry. Goods, the jewelry is a good. Some form of supply has taken place. Supply is there. Consideration is also there. She sold the jewelry, got 1 lakh rupees. Is it in the course or furtherance of the business? Is it her course or furtherance of the business? No. No, that is not in the course or furtherance of the business. On that, GST will not come. That activity will not qualify as supply under section 7 subsection 1 clause A. That activity will not qualify as supply. Okay. Number 2. Let us say if Joy Lucas is doing it. If Joy Lucas is selling the jewelry and for which they are receiving consideration. Can it be called as supply? Yes, because it is in the course or furtherance of business. Let us say you are a salaried employee. You purchased one car. You purchased a car for your daily commute and all. You purchased a car. After some number of years, your car has become worn out. That car you are selling. So will that be considered as in the course or furtherance of business? No. No, it is not in the course or furtherance of the business because it is not your business activity. No. Right. So if second-hand car dealer sells it, if there is a second-hand car dealer who will buy the used cars and sell it to another person, will that be in the course or furtherance of the business? Yes, that will be in the course or furtherance of the business. So like that, an activity in order to qualify as supply under section 7 subsection 1 clause A, it must be in the course or furtherance of the business. Sir, I am a business person. I have purchased all the assets. My business has been closed out. I am selling all my assets, sir. Whatever pending assets, whatever left out assets are there that I am selling, sir. Is that also in the course or furtherance of business? Yes, that will also be in the course or furtherance of the business. Understood? So this you have to understand it. So in order to qualify as supply under section 7 subsection 1 clause A, it must be in the course or furtherance of the business. Understood? That's all here. This is what regarding section 7 subsection 1 clause A. What does that say? In order to qualify as supply under section 7 subsection 1 clause A, there must be goods or services or both. There should be some form of supply. There must be consideration and it must be in the course or furtherance of the business. When all these conditions are fulfilled, it will get qualified as supply under section 7 subsection 1 clause A. If it is getting qualified as supply, then the question of GST will come into picture. Okay, right. So this is what regarding section 7 subsection 1 clause A. See, this is not the only activity which will qualify as supply. There are even various other activities also which will get qualified as supply. Sir, what are other activities? Now we have section 7 subsection 1 clause AA. It says that a person other than individual, if they are performing any activities, or transactions to its members or constituents, either a person other than individual is providing the services to members or its constituents, or members or constituents are providing the services to the person. So whatever it is, anyway, either a person other than individual doing any activities or transactions to its members or constituents, or members or constituents doing some activities or transactions for the person, in return for which there is a consideration. In return for consideration, this activity will qualify as supply, notwithstanding any order of the court, decree or judgment of any court. So it is an amendment actually. Section 7 subsection 1 clause, not recent amendment. It was introduced after the act has come into picture. So services provided by a person other than individual to its members or constituents, or vice versa, for which there is a consideration, it will automatically qualify as supply under section 7 subsection 1 clause AA. See, the logic behind is very simple. There was one court judgment. Previously, there used to be one court judgment. What is that court judgment is? If there is a club is created by a group of members. Now, what is the business of the club? These persons who become the members of the club, they will pay annual fees or monthly fees they will pay. In return, in the name of the club, they will get the services. Let us say 100 people came forward, created a club. Everybody is contributing 10,000 rupees per month. In return, in that club, they go and enjoy. So now, previously under service tax, the government told the service tax department issued a notice that club is providing the services to its members, for which there is a consideration, you have to pay GST. Now, what this club has argued is, boss, we are not providing service to any outsider. As a club, I am providing services. To whom I am providing services? To the people who have created me. Group of people have created the club. For them only they are receiving consideration. To them only they are providing services. So this club argued that we both are one and the same. Club and members are one and the same. We are like two hands of the same person. If I am taking some 10 rupees and keeping that in my another hand, both hands belong to me only, no. So that's what this club has argued. Club and members are both one and the same. We are not different. And even they have went to the court, and in the court they have got the judgment in their favor. Court even have given the judgment that club and its constituents are both one and the same. When club is providing the services to its members, that service is not getting provided to any outsider. They both are one and the same. No service tax should be imposed on this. Like that, a court judgment was there, favoring the client there, favoring the taxpayer there. But under GST, they don't want to have this headache. They don't want to lose GST on that club related activities and all. So that's why what they have told, they have introduced this section 7 subsection 1 clause AA. They started this clause with non-obstante clause. They told notwithstanding anything contained in any court judgment or order. That means they want to override the judgment of the court. That club related judgment, whatever is there, they want to override it. And what they have told, notwithstanding anything contained in any other order of the court, decree or judgment of any court. So these two people will be treated as distinct person, a person other than individual. In our example, a club, and the people who have created it, both we will treat them as different persons only. And if any transaction is happening between them for which there is a consideration, we will treat them as two different persons, and that activity we will always treat it as supply. Whether any other court judgment is there or not, we are least bothered. These transactions will treat as supply, and on that we will impose GST, will be subjected to GST. So this is what section 7 subsection 1 clause AA. Understood? Right. Then now comes the next part. Section 7 subsection 1 clause B. There is one more activity which will get qualified as supply. So what is that is, if you are importing services, if you are importing the services for which there is a consideration, if you are importing the services for which there is a consideration, whether or not in the course or furtherance of the business. Here business condition will not become applicable. Whether or not in the course or furtherance of the business, this will get qualified as supply. This will get qualified as what? Supply. If you are importing the services and there is a consideration for that import. Sir, what is an import? First of all, what is an import is? Let me put it this way. Let us say I'm a person residing in India. From abroad, let us say I'm receiving some services. I'm receiving some, let us say, advertisement services, digital advertising services I'm getting from a foreign company. A company is located in US. From them, I'm getting digital marketing services. I'm importing the services for which I'm paying consideration. Let us say I'm paying some 1 lakh rupees of consideration for importing that services. I'm importing the services for the consideration. Whether I am importing that services for my personal purposes or for my business purposes doesn't matter. It will always get qualified as supply. So if you are importing the services for a consideration, whether or not in the course or furtherance of the business, that activity will become supply, and on that GST is payable. But here you will get a doubt. Sir, here supplier is located outside India, no? Supplier of service is located outside of India. Recipient is in India. Generally what will happen? Supplier should collect along with this 1 lakh rupees, 18,000 rupees of GST also supplier should collect. And this supplier should pay the amount of GST to which government? To the Indian government. But do you think it is possible? It is not possible. Why? Because a person is located outside of India. How the government can pressure him to pay the GST to the Indian government? Quite not possible, no. So that's why here we have a separate mechanism called reverse charge mechanism. So now I am introducing you to one more concept under GST. So under GST, there are two mechanisms for collection of GST by the government. One is forward charge mechanism, other one is reverse charge mechanism. See, what is the usual forward charge mechanism is, which we experience in our day-to-day life. We go to shop, we go to service provider, we buy some goods, we get some service. That person will ask you to pay the money along with the GST. As a recipient, we pay the GST to the supplier. Supplier will pay the GST amount to the government. This is what forward charge mechanism. But in some transactions, in some circumstances, it will be difficult for the government to collect the amount of GST from the supplier. In some circumstances, it will be very difficult for the In some circumstances, it will be difficult for the government to collect the amount of GST from the supplier. Then what they will do, they will ask the recipient only to directly to pay the GST amount to the government. So here is what RCM will come. So practically what should happen? This recipient should have paid 1 lakh along with GST to the supplier. Supplier should have paid it. But here it is difficult for the Indian government to collect the amount of GST from the foreign supplier. So that's why what they're saying here, you do one thing, RCM we will put. So what is RCM? You are a recipient, no. You are importing the services, no. For a consideration, no. We will not check whether it is in the course or furtherance of the business. So on this you have to pay GST. Sir, I am recipient. Yes, we know you are a recipient. You pay the GST to the government directly. You pay 1 lakh rupees to the supplier. On that 1 lakh rupees, calculate the amount of GST at the applicable rate. That GST you directly pay to the government. So the government is putting the responsibility on the recipient to deposit the amount of GST directly with the government. This I call it as RCM. This I call it as RCM. There are bunch of services. There are a very good number of services on which recipient will be liable to pay the amount of GST. What and all are that services where the recipient will be liable to pay the GST under reverse charge mechanism, that we are going to see it in the chapter charge of GST. That we are going to see it in the chapter. In the chapter charge of GST, we are going to talk about it. But this is one such case. Import of services is one such case where the recipient will be liable to pay the GST under reverse charge mechanism. I hope you are all able to understand this. Okay, so whatever it is, section 7 subsection 1 clause B, if you are importing the services for a consideration, whether or not in the course or furtherance of the business, it will get qualified as supply. Next, we have section 7 subsection 1 clause C. There are few more activities which will become supply under section 7 subsection 1 clause C. So what are that few more activities is? Deemed supply, I call it. I call them as deemed supply. And what is the deemed supply is? There are certain activities which are specified under schedule 1. There are some activities which are specified under schedule 1. In total, 4 activities are specified. How many? In schedule 1, there are 4 activities which are supplied. And if these 4 activities which are mentioned under schedule 1, if they are supplied, even without consideration, if these activities are getting supplied, still we will deem it as supply. And on that government want to impose GST. So deemed supply, section 7 subsection 1 clause C. Under section 7 subsection 1 clause C, they have mentioned that there are certain activities which are mentioned in schedule 1. There are 4 activities which are mentioned in schedule 1. These 4 activities, even if you are doing it without consideration, even if there is no consideration involved in that 4 activities mentioned under schedule 1, still we will deem it as supply. See, if you pay close attention in all the above clauses, whether you take section 7 subsection 1 clause A, or you take section 7 subsection 1 clause AA, or even you take 7 subsection 1 clause B, in all the cases consideration is must. Pay here, see here, if you want you can check. So section 7 subsection 1 clause A, I told that consideration is required. Section 7 subsection 1 clause A, I told here also consideration is required. Even in section 7 subsection 1 clause B, here also I told consideration is required. But in section 7 subsection 1 clause C, they are telling that we will mention some activities, and those activities are actually mentioned in schedule 1. And even if these transactions are done without consideration, we will qualify it as supply. It will become supply. It will be deemed as supply, and on that we want to impose GST. That's what the government is saying. Now you will get a doubt, sir, what are that activities which are mentioned in the schedule 1? You told 4 activities are there. So what are that 4 activities which are mentioned in the schedule 1, which will be deemed as supply even if done without consideration? So to learn that, we have to go to schedule 1. So let us go to now schedule 1 and try to understand what are that 4 activities which will be deemed as supply even if done without consideration. Number 1, para number 1. Permanent transfer or disposal of a business asset on which ITC has been availed. First activity which will be deemed as supply even without consideration is permanent transfer or disposal of a business asset. Let us say I am a registered person. Okay, I have one business asset. So when I say business asset here, I am not just referring to only capital assets. Even stock is also my business asset. When I say business asset, even stock is also my business asset, whether current assets or fixed assets, whatever it is. If there is a business asset on which I have availed input tax credit, I purchased a business asset on which I have availed input tax credit. Thereafter, I am permanently transferring or disposing of that business asset without consideration. Still, it will be deemed as supply. I will give you one simple example. Let us say, for example, I am a registered person. I purchased one laptop. Let us say 1 lakh worth of laptop I have purchased. On that, I have paid 18,000 rupees of GST also. And on this laptop, when I purchased it, I even took the input tax credit. I availed input tax credit of 18,000 rupees. Thereafter, this laptop, I am giving it free of cost. Permanently transferring. I'm not doing temporary transfer. I'm permanently transferring the business asset. Permanently, on a permanent basis, I'm transferring that business asset. One day, one friend came to me and told, boss, I need a laptop. I told, okay, I know this friend very much. And also this laptop has become outdated. It is no longer fitting my purpose. So what I have thought is, let me do one thing. This laptop, I will give it to you. Since he is my close friend, I can't ask any consideration from them. No, I can't ask any consideration from them. So I permanently transferred or disposed of that business asset without any consideration. If it is no consideration, it will not qualify as supply under clause A, clause AA, clause B. But still, since this is an activity mentioned under schedule 1, so this will qualify as supply under section 7 subsection 1 clause A, and on clause C, sorry, on that it will be treated as supply, on that GST will be payable. Now a question you will get, sir, how will I calculate the amount of GST, sir? There is no consideration only. No, there is no consideration. On what value I will pay GST? That is altogether a different issue that we will try to learn it at the CA final level. So we have valuation rules applicable. So according to the valuation rules, we will determine what is the value. Even if there is no consideration, using some rules will determine what is the value, and on that value we will make this person liable to make the payment of GST. How to determine the value and all, you keep it aside, but GST will come here. Understood? Clear? So what is the first activity which will be deemed as supply even if done without consideration? Permanent transfer or disposal of a business asset on which ITC is availed. Then it will be deemed as supply even if transferred without consideration. Now few things you have to keep it in here in mind. Only those assets on which ITC has been availed. Only those business assets on which ITC is availed, if they are getting permanently transferred without consideration, then only it will qualify as supply. Which means if I'm permanently transferring or disposing a business asset on which I haven't availed input tax credit, and which I did not take input tax credit, or on which ITC is blocked, there will be certain assets on which ITC will be blocked. Let us say I purchased a car. On that car, I did not take the input tax credit. Thereafter, I am permanently transferring or disposing that car without any consideration. Will it be deemed as supply? No. Why? Because under para number 1 of schedule 1, it will be deemed as supply only when you are permanently transferring or disposing a business asset on which ITC is availed. If you have not availed ITC, if you have not availed input tax credit, or if ITC is blocked, that asset you are permanently transferring or disposing it, it will not be deemed to be a supply. So number 1, first condition, that should be such a business asset on which you should have availed input tax credit. Number 2, the transfer should be permanent. Transfer or disposal must be permanent. It should not be temporary. If it is a temporary transfer or disposal, once again it will not be deemed as supply. So this is what para number 1 of schedule 1. Clear everyone? Right. So let us come to the next part. Second activity which will be deemed as supply even if done without consideration. Supply between related persons or distinct persons. So supply of goods or services between related persons or between distinct persons, even if done without consideration in the course or furtherance of the business, it will be deemed to be supply. It will be deemed to be supply. But before that, first we need to understand, what do you mean by related person? Sir, who will be treated as a related person? What do you mean by distinct persons here? That terms we have to understand. Sir, when two persons are considered to be related? See, the GST Act has not given you freedom to choose who is your relative, who is not your relative. They are defining the term. They are telling there are certain relationships. These relationships, we will treat them as related. Whether you like it or not, we will deem you as a related person. And if any transaction is happening between these related persons, if any supply of goods or services is happening between related persons, even if there is no consideration, still we will deem it as supply. Sir, who are that related persons? Let us see here. So related persons under section number 15. Persons including the legal persons deemed to be related when, if they are officers or directors of one another's business. Let us say I'm a director in my friend's business. My friend is a director in my business. We both will be considered as related. So such persons are officers or directors of one another's business. They will be considered as related. Even director of a company also will be considered to be related as per the circular. But whatever it is, if you are officers or directors in one another's business, like I'm a director in my friend's business, my friend is a director in my business, we both will be considered as related. Then such persons are legally recognized partners. You both are legally recognized partners. You both are partners in a partnership firm. Then it will be considered as related. Here I am not talking about life partner. I am talking about business partner. Then such persons are employer and employee. If both are employer and employee, they will always be considered as related. A third person controls or owns or holds indirectly or directly greater than or equal to 25% of the voting stock or shares of both of them. Let us say, for example, there is A Limited, there is B Limited. There is one third person. Let us say there is one person who is holding greater than or equal to 25% of the shares in A Limited, and he is holding greater than or equal to 25% of the shares in the B Limited. Now also this A Limited and B Limited, they both will be considered as related. They are not saying this person and this person and A Limited, this person and B Limited. No, they are not saying it. If a third person owns, controls or holds greater than or equal to 25% of the voting stock or shares of both of them, then the both will be considered as related. If a third party is owning greater than or equal to 25% of the shares in both companies, both companies will be considered as related. Understood. Next, regarding control, we have 3 points. One of them controls the other. Let us say, for example, there is a company A Limited, there is a company B Limited. A Limited controls B Limited or B Limited controls A Limited. Related. A third person controls both of them. Let us say one third company C Limited is there, which is controlling both of them. Then also they will be considered as related. Or both of them collectively control a third party. A Limited, B Limited, collectively they are controlling D Limited. Then also they will be considered as related. So regarding control, we have 3 points. One of them controls the other, or a third party controls both of them, or both of them collectively control a third party. So control can happen in any of these ways. If these control conditions are existing, then they will be considered as related. Then such persons are members of the same family. Members of the same family will always be considered as related. But who is family, sir? Who is family? So, sir, along with me in my house, my brother-in-law is also staying. We both can be considered as family? No. They did not give you that freedom to decide who is your family, who is not your family. They are identifying some family relationships. They only will be considered as related. Who are they? Spouse and children. Spouse and children. My spouse, my children. They will always be deemed to be related. Whether they are dependent on me, not dependent on me, doesn't matter. Spouse and children of the person will always be considered as people of same family. Parents, grandparents, brothers and sisters of the person, if they are wholly or mainly dependent on the said person. Parents, grandparents, brothers and sisters, they will be considered as related only if they are wholly or mainly dependent on me. My parents, my grandparents, my brothers, my sisters, if they are wholly dependent on me, then only we are part of same family. Then only we are related. They are not dependent on me. Let us say, for example, I myself and I have a parent, my father is there. My father is having his own business. He is not dependent on me. Can we both be considered as related? Sir, we both stay in same house, sir. No. You both will not be considered as members of same family. Okay. So this definition you have to remember. Spouse and children. Spouse and children, it is always related. Then whether they are dependent on you or not, parents, grandparents, brothers, sisters, they will be considered as related only when they are wholly or mainly dependent on you. Understood? So they will be considered as related persons. Okay, we have understood who is related person. Now we will try to understand what do you mean by distinct person. Very, very important concept. Distinct person. Sir, who are distinct persons? Let us say for example, I'm a person who is into business. I'm a person who is into business. Let us say for example, I'm into business of electronics. I'm into business of selling electronics. Let us say in Karnataka, I have my place of business. In Bangalore, I have one store where I will sell my electronic goods. Let us say in another place of Karnataka, in Mysore, I have another store. In Mysore, I have another store. There also I will sell my electronic goods only. So I am a single business person. I am having multiple places of business within a same state. If I am having one branch office, one head office like that, I have multiple places of business within the same state. If I have multiple businesses within the same state, you tell me, am I required to take separate registration? Am I required to take separate registration for Bangalore and Mysore separately? The answer is no. There is no mandatory requirement. So GST Act permits that if you have multiple places of businesses within the same state or union territory, you can operate all of them under single registration. You can operate all of them under single registration. You are not required to take multiple registrations. GST department will permit you. Even whether in the same stores, in the both stores you are doing same business or different business, that doesn't matter. Let us say in the Bangalore store I am selling electronics. In the Mysore store I am selling garments. Not necessarily I need to take separate registration. I can operate them under single registration. But if you voluntarily come forward and say, no sir, for Bangalore I want sorry, but if you voluntarily come forward and say, sir, for Bangalore I want separate registration, for Mysore also I want separate registration, department will not say get lost. Department will give you. Department will grant you separate registration if required. If you are insisting, sir, I have multiple places of business in same state, sir, but for my convenience, for my business purposes, I want to take separate registration, sir. Can I take it? Yes, you can take separate registration for both of your businesses separately. But in case if you have taken separate registration, now you both will be treated as distinct persons under section number 25. In case if you have taken separate registration, you both will be treated as distinct persons. Let us say, for example, from my Bangalore store, I have transferred some stock to my Mysore store. See, both are my branches only. If I'm transferring stock from one of my place of business to another place of business, will I charge any consideration? No. But here, since you have taken separate registration, You both will be treated as distinct persons. If you are doing any transfer, if you are making any supply of goods or services between distinct persons, even without any consideration, still the act will deem it as supply. The act will deem it as supply, and on that they will ask you to pay the GST. Sir, no consideration, no. How I will pay GST, sir? That we will determine as per valuation rules, but you will be liable to pay the GST. This activity we will deem it as supply. Understood? So if you have taken separate registration under same PAN, if there are multiple registrations under same PAN, then all that entities will be treated as distinct persons, and you are required to pay GST on supply of goods or services between distinct persons, even if done without consideration. Now, let me put it another way. Let me give you another example. Let us say I'm a business person. I have a place of business in Bangalore. I have a store in Bangalore. I also have a place of business in Chennai. So Bangalore is in Karnataka, Chennai is in Tamil Nadu. I'm having place of business in multiple states. Now can I operate this Bangalore and Chennai under same registration? Not possible. Not possible, because GST registration is state specific. You have to get separately registered with the Karnataka state government. You have to get separately registered with the Tamil Nadu state government. So in case if you are taking separate, not in case, you have to compulsorily take separate registrations here. Since these are registrations of same person, since these are two separate registrations under same PAN, this two also will be treated as distinct persons. This two also will be treated as distinct persons. If any supply of goods or services are happening between them, even without consideration, still we will deem it as supply under para number 2 of schedule 1, even if done without consideration. Okay, not just that, I will tell you one more thing here. Let us say I'm a business person. I'm having an electronics store. I'm having an electronics store in Bangalore. Okay, which is registered. Now in Chennai, I have a bar where I sell alcoholic liquor for human consumption. In Bangalore, I have an electronic store for which I have taken registration. In Chennai, I am running a bar where I am selling the alcoholic liquor for human consumption. So you tell me in Chennai, if I have a bar where I am selling alcoholic liquor for human consumption, will I get this premises registered? Not required. Why? Because you are selling alcoholic liquor for human consumption, which is outside of the GST purview. So even these two entities also will be treated as distinct persons. Or if I put it in other way around, these two will be treated as establishments of distinct person. Let us say from my electronic store at the bar at Chennai, I needed one TV here. Those people, my customers need entertainment. I need one TV. So what I thought is, let me do one thing. Why to buy it from outside? From my Bangalore related electronic store, I will bring one TV and place it at Chennai bar. There will be no consideration because both are my businesses only, but still these two will be treated as establishments of distinct person. If any supply of goods or services is happening even without consideration, we will deem it as supply under section 7 subsection 1 clause C, and I will be liable to pay the amount of GST. Understood? Clear and comfortable? So that is what para number 2. So supply means supply. It could be supply of goods or supply of services either between related persons or between distinct persons under section number 25. Even if done without consideration, still it will be deemed to be supply, and on that GST will be payable. Okay, right. So this is what regarding para number 2. Now let us come to one more proviso is there. So one more extra point regarding para number 2 we have to understand. See, I told that employer employee both are related. No, employer and employee both are related. Let us say employer is giving a gift to employee. Employer is giving a gift to employee. So now when employer is giving a gift to employee, generally when I say gift, there will be no consideration. No, even though there is no consideration, it is a supply of goods by employer to employee who are related persons without consideration, but still it will qualify as supply under section 7 subsection 1 clause C or not? 100%. Just now, as I've told, because of para number 2, schedule 1, supply of goods or services between related persons even without consideration will be deemed as supply. So if the employer is giving a gift to an employee, definitely there will be no consideration. Still it will be treated as supply under para number 2 of schedule 1. But here they have given relaxation. What relaxation they have given? If the employer is giving a gift to the employee up to a value of 50,000 per year per employee. Per year per employee, if they are giving the gift up to 50,000 rupees, it will not be treated as supply. It will not be treated as supply. Let us say an employer is giving a gift to his employee. He is giving one phone. He is giving one mobile phone whose value is 48,000 rupees. Whose value is 48,000 rupees. So here employer has given a gift to an employee amounting to 48,000, which is up to a value of 50,000 per employee in one financial year. So on this, it will not be treated as supply. No GST will be payable. Let us say if the employer is giving a gift to an employee of an iPhone which is 75,000 rupees. 75,000 rupees worth of mobile phone has been given as gift by employer to employee. Supply of goods between related persons without consideration. Will it be treated as supply? Yes, here we will treat as supply. Why? Because the value of the gift is more than 50,000. Okay, sir, you are treating it as supply. What will be the amount of supply here? Will it be total 75,000 or will it be only 25,000, value exceeding 50,000? Doubt you should get, no. So you are telling supply of gift by an employer to an employee up to an value of 50,000 will not be treated as supply. This is what you have mentioned. Okay, I will not treat it as supply. But if the value of the gift is exceeding 50,000 rupees, I have to treat it as supply. But what is value of supply? Entire gift value or value exceeding 50,000? Entire gift value. Entire 75,000 will be treated as supply. Entire 75,000, not just the value exceeding 50,000. Entire value will be treated as supply. Entire. Just 1 minute. Yeah, fine. I think there was some glitch and all. Now I think everything is okay. Fine. Yeah, so this is what I was saying. When the value of the gift is more than 50,000 rupees, the entire value of the gift will be treated as supply. Entire value will be treated as supply. So entire 75,000 will be treated as supply and on that GST will be payable. Understood? Right. So this is what regarding para number 2 of schedule 1. Now we will go to the next paragraph, para number 3. One more activity which will be deemed as supply even if done without consideration, which is supply of goods by principal to agent or by agent to principal. Sir, what is it? So let us say, for example, there is a principal and principal is supplying the goods to an agent. Thereafter, agent will make a further supply to the ultimate customer, to a third party. There is a principal. Principal is supplying the goods to an agent and agent is making a further supply. Now, principal is supplying the goods to the agent without consideration. Principal is supplying the goods to an agent without consideration. Now they're saying that even though there is no consideration, still it will be deemed as supply. Supply of goods by a principal to the agent, even if done without consideration, will be deemed to be a supply. Now, in para number 3 of schedule 1, they are only talking about services. Para number 2 says supply of goods or services between related persons or distinct persons will be deemed to be supply. Para number 2 says between related persons or distinct persons, whether you are making supply of goods or you are making supply of services, it will be deemed to be supply. But in case of para number 3, that is between principal and agent, they will deem it as supply only for supply of goods. If there is supply of goods by principal to the agent, even if done without consideration, it will be deemed to be supply. Similarly, let us say, for example, there is an agent who is procuring the goods from the third party. Thereafter, agent is making the supply of the goods to the principal, even without consideration. Still, it will be deemed to be supply. Still, it will be deemed to be supply. So, either supply of goods by principal to the agent or by agent to the principal, even if done without consideration, it will be deemed to be supply. But one thing here you have to remember, only those agents will get covered under para number 3 of schedule 1, those agents who are issuing the invoice in their own name. Who are issuing the invoice in their own name. Only those agents will get covered under para number 3 of schedule 1. Sir, what do you mean by this? Principal has made a supply of goods to the agent, no? Now agent will make a further supply to the customer, no? To the customer, invoice should be given by the agent in his own name. If the principal itself is giving the invoice in his own name, then that agent will not get covered under para number 3 of schedule 1. Similarly, if you take the second case also, agent procure the goods from the third party. Thereafter, agent will make the supply to the principal, no? For this transaction, agent should give the invoice in his own name, not the supplier. So then only these agents will get covered. So very important point here, my dear students. Supply of goods only are getting covered under para number 3 of schedule 1. Only supply of goods between principal to the agent or from agent to the principal will be deemed as supply even if done without consideration. But not all agents will get covered under para number 3 of schedule 1. Which agents will get covered? Only those agents will get covered who are issuing the invoice in their own name, not on behalf of the third party or principal's name. Then that activity also will be deemed as supply under para number 3 of schedule 1. Then so we have one concept regarding del cred agent, one clarification we have regarding del cred agent that we'll try to talk about it later because it is having linkages with the value of supply chapter and all. There we'll try to see. It is having linkages with value of supply and also exemptions. This circular we'll talk about it later. Then the last activity which will be deemed as supply is para number 4 of schedule 1, which is regarding importation of services. So para number 4 of schedule 1 says that if you are importing services without consideration, but it should be from a related person, or your own establishment outside of India. Is from your own establishment outside of India, and it must be in the course or furtherance of the business. When all these conditions are satisfied, then also it will be deemed to be a supply. So if you read it here, if you are importing the services from related person or from your own establishment located outside of India, like you have a branch office outside of India, from that branch office outside of India, if you are importing the services, or from your related person, if you are importing the services, there is no consideration, sir, but it must be in the course or furtherance of business, then also it will be deemed to be supply. Sir, regarding importation, you have told one more point. Section 7, subsection 1, clause B also you have mentioned, which is also talking about importation of services. Can you do a comparative study between section 7, subsection 1, clause B and clause C? Yes. So when it comes to importation of services, whether it will fall under supply definition or will it not fall under supply definition, this we have to follow one system to decide it. Sir, what is that system? In case in the exam, if they have given you question that there is import of services, first check, is there a consideration? Yes, sir, consideration is there. Don't check for anything, whether it is in the course or furtherance of the business, from whom you are receiving. Don't check anything. It will qualify as supply. Under section 7, subsection 1, clause B. Sir, I am importing the services, but there is no consideration, sir. If there is no consideration, don't immediately conclude that it is not a supply. You need to check one more thing. If you are importing the services without consideration, then you have to check from whom you are importing the services. Are you importing the services from related person or your own establishment outside of India? That you have to check. Yes, sir. Answer is yes. Then you have to check, is it in the course or furtherance of the business? Yes, sir. Answer is yes. Then it will get qualified as supply under section 7, subsection 1, clause C. So very important, importation of services. This is where often students write the wrong answers. So that's why I'm telling you system. In case if they're asking you a question regarding importation of services, to determine whether it will qualify as supply or not, this is what the system you have to follow. First check, is that import of services is for a consideration? Yes, import of service is for a consideration. Then you have to treat it as supply under section 7, subsection 1, clause B. On the other hand, no sir, there is no consideration for that. There is no consideration for importing. Then you have to check one more thing. Is it from a related person or your own establishment outside of India? And also, is it in the course or furtherance of the business? Yes, if for these two questions you have asked, and if the answer is yes, I'm importing the services without consideration, that too from a person, from a related person or my own establishment outside of India, and also it is in the course or furtherance of my business, then it will automatically qualify as supply under section 7, subsection 1, clause C. You follow this system, you will never write the wrong answer. Understood? So this is what regarding section 7, subsection 1. We are only done with section 7, subsection 1. What is section 7, subsection 1 saying? Section 7, subsection 1 is saying which activities will be deemed to be supply. Section 7 is not over. Only section 7, subsection 1 is over. So this part is over when an activity will be treated as supply. So an activity might become supply under clause A, clause AA, or clause B, or clause C. Under any of these clauses, an activity might become supply. So if a activity falls under supply definition, then the question of GST will come into picture. Okay, section 7, subsection 1, we are done. So once an activity has been classified as supply, whether it will be treated as supply of goods or will it be treated as supply of services? The next question. The next question, once an activity has been qualified as supply, whether that activity will be considered as supply of goods or it will be considered as supply of services. The next question will come. Why the next question will come? Sir, why this classification is very important? Why? Because depending on whether it is supply of goods or supply of services, the rate of GST is going to depend on that. So that's why it is very much important for us to classify once an activity has been qualified as supply. We will go to section 7(1)(a) and we will determine whether that activity will fall under supply of goods or will it fall under supply of services. Okay. So section 7 subsection 1 clause A says that we have given schedule 2. In that schedule 2, we have specified activity and which activity will be treated as what. We have given list of activities and whether that activity will fall under supply of goods or that activity will fall under supply of services. We have given that list under schedule 2, refer schedule 2, and accordingly you classify whether that activity is supply of goods or that activity is supply of services. Now let us go to that schedule 2. So activities or transactions to be treated as supply of goods or services. Once an activity has been classified as supply, whether that will fall under supply of goods or supply of services. That guidance has been given under schedule 2. Let us see what does schedule 2 say. So schedule 2 says that if it is transfer, if there is a transfer involved in the transaction, which is what? If you are transferring the title, if you are transferring the ownership in the goods, always treated as supply of goods. On the other hand, you are not transferring the property, you are not transferring the ownership, but just you are transferring the right in goods or undivided share in goods. Let us say, for example, I am having a car. That car I am not transferring. I am not transferring the ownership. The right in the car I am transferring. That means I am giving the right to use that car for another person for 1 or 2 days in return for consideration. So if there is a only transfer of right in goods or undivided share in goods without any transfer of title, ownership is not getting transferred, just right in goods or undivided share in goods is getting transferred, that you treat as supply of services. Next, any transfer of title in goods where property ownership will pass at a future date. There is any transfer of title where ownership will get transferred at a future date. Sir, what they are referring to? Hire purchase. If you take a hire purchase transaction, ownership will get transferred at a future date on payment of full consideration. So even that hire purchase transactions also will be considered as supply of goods only. So this is how you have to classify in case if it involves transfer. Then land and building. So when it comes to land and building, sir, land and building is not goods, no? Land and building is not goods because you told that it is an immobile property. Yes, it is not goods, but it will fall under services. Why? Because what did I say? If an activity, or how the term services has been defined, anything other than goods. Something is not falling under goods definition, it will fall under services. So now here for land and building also, they are not talking about sale. They are talking about lease, tenancy, easement, license to occupy the land. If you are giving land on lease, if you are doing easement of lease, if you are giving license to occupy the land, how it will be treated, sir? Straightforward. It will be treated as supply of services. Similarly, any lease or letting out of a building, including a commercial, industrial, residential complex for business or commerce, that is also supply of service. If you are giving building on lease or if you are giving land on lease, they will always be treated as supply of services. Then this is important. Any treatment or process which is applied to another person's goods, it will always be treated as supply of services. Like they are mainly talking about job work. Let us say if I'm a person who is into printing, I'm into printing industry. I'm into business of cloth printing. One person, one manufacturer of shirts, he sent me the piece of cloth. On that piece of cloth, I'm required to do some printing and I'm required to send it back. So I'm doing some treatment or process on the goods belonging to another person. I'm doing a job work kind of activity where I'm performing some activity. I'm doing some process or treatment on goods belonging to others. So they asked us to treat always it as supply of services. So job work will always be treated as supply of services. Next, transfer of business assets. Sir, what is this transfer of business asset? This is having linkages with the registration, cancellation of registration and all. So here I will tell you only what is necessary. So what is it? Goods forming part of business asset are transferred or disposed by or under the directions of a person carrying on the business so as to no longer form part of those assets. It will be treated as supply of goods. Nothing but I have business asset. That business asset I am selling it. That business asset I am disposing it so that it will no longer form part of my business. How it will be treated as supply of goods. This you try to link it with schedule 1. In schedule 1, para number 1, I told that permanent transfer or disposal of a business asset, even without consideration, it will be treated as supply, no? So it is treated as supply. But will it be treated as supply of goods or supply of services? That answer you will get it here. It will be considered as supply of goods. So if you are goods forming part of business assets, there are some goods which are forming part of your business assets. Now that you are disposing it so that they no longer form part of your business assets, it will be treated as supply. If it is treated as supply, whether it will be considered as supply of goods or supply of services, it will be considered as supply of goods. Okay, next. Goods held or used for business are put to private use or made available to any person for use of any purpose other than business by or under the directions of the business person carrying on the business. That will be treated as supply of services. Sir, what is it? Let us say, for example, there is one company. So this company is having a car. This company is having a car. This car is the property of the company. But one day, one of its director came to the company and told, sir, on a weekend, I want to go with my family on a vacation. My car is in trouble. On weekend, anyhow, this car will not be used for any purposes in the company. I will do one thing. I will take this car on this weekend and I will use it for my family trip. In return, I will pay you some money. I'll pay to the company some money because I'm using the company car. No. So now it will be treated as supply of services. So what they say here, goods which are used for business, they are being put to private use or they are being made available to any person for use other than business purposes. So there are some business assets that either you are putting it for private use or you are giving it to another person who will use it for other than business purposes. That will be treated as supply of services. Next, last one. Goods forming part of business assets carried on by a person who ceases to be a taxable person are deemed to be supplied by him in the course or furtherance of business immediately before ceasing to be a taxable person. Sir, now what is it? It is having linkage with registration and ITC chapter. I will tell you in one simple logic, just that much you remember. Let us say, for example, I'm a registered person. Let us say I'm ceasing to be a taxable person. Let us say on 31st of December, I'm cancelling my registration. I'm no longer liable for registration, or I'm closing down my business. On 31st of December 2025, I'm closing down my business. I'm ceasing to be a taxable person. Now, one day before that, whatever stock and all is there left out. I'm not selling it. Let us say I'm closing down my business. I'm not selling it. Just like that, I'm leaving it. In my premises, some stock is there, some assets are there. I'm leaving it. If I sold it, anyhow, it will be treated as supply of goods. But let us say I'm not selling it. I'm leaving it as it is. Let us say at the time when I'm closing my business, I have some 10 assets, 10 small fixed assets are there. Some stock is there. This stock I am leaving. I'm not doing anything. Just like that, I'm leaving it. Now they say that even if you are not doing anything also, it will be deemed to be supplied. It will be deemed to be supplied and we will treat as supply of goods. On that, you will be liable to pay the amount of GST. Sir, I'm not doing anything, sir. I'm not selling, sir. I'm not disposing, sir. Just like that, I'm leaving at the premises and going, sir. But still the act says we will treat as supply and we will treat as supply of goods. On that also, we want you to pay the amount of GST, except two circumstances. Two exceptions are there. So in two exceptions, they will not be deemed to be supply. What are that exceptions? Business is going to be continued as a going concern. You are ceasing to be a taxable person. You are leaving that stock as it is, but that business is getting acquired as a going concern basis by another person. Another person is going to run your business as a going concern. If the another person is going to run your business as a going concern, he will use the asset, he will use that stock, and he will ultimately pay the GST. No. So the government is, it will be enough for the government if one person pays the GST. If you are closing the business and you are leaving the stock as it is, no one will pay GST. That's why they are saying it will be deemed as if you have supplied it and you pay the GST. But in case if the business is getting continued as a going concern by another person, we will collect the GST from him. You are not required to pay the GST. And one more exception, when the business is carried on by legal representatives. So let us say, for example, there is one person, that person has expired, that person died. So he ceased to be a taxable person. So whatever stock and all is there deemed to have been supplied. But in case this person is expired, but that business is carried on by their legal representatives, then also it will not be deemed to be supplied. No need to pay the GST on it. So these 2 points you have to remember. So generally, goods forming part of business asset who ceases to be a taxable person are deemed to be supplied by him. But two exceptions are there. What are they? Number one, business is transferred as a going concern. Number two, business is carried on by the legal representative. Understood? Next. One more category, renting, construction, etc. Under para number 5, they have listed out various activities which all will be treated as supply of services. They have identified a bunch of activities which will always be treated as supply of services. What are they? Number 1, renting of immobile property. If immobile property is given on rent, it will always be treated as supply of service. Straightforward. Direct point. Next. Second one, construction of a complex building or civil structure. If you are providing construction services, then also it will be treated as supply of service. But for construction, here it is having linkage with schedule 3. Let me try to cover it. In a single go. Or else I will do one thing. I will link it along with schedule 3. For the time being now, you just remember that renting of immobile property, supply of service, construction services. Like for example, I have a piece of land. On that, a builder came forward and told, sir, I will do the construction for you on this building, on this piece of land. I will do the construction for you. So that construction of building is also a supply of service. But a thin line is there, a small connection is there with the schedule 3. When I take up 7 subsection 2, which activities will not fall under supply, there I will try to link it. Okay. So for the time being now, just remember that construction of a complex building or civil structure, if someone is offering that services, it will be a supply of service. Then temporary transfer or permitting use or enjoyment of any intellectual property right. Like you have a patent, you have a copyright, you have some goodwill. If you are temporarily transferring or permitting the use of that intellectual property, it will be treated as supply of services. Development, design, programming, customization, update, adoption, upgradation, enhancement, implementation of IT software. So either you are designing the IT software, developing the IT software, programming the software, customizing, the adoption, upgrading, enhancement, anything done with regard to the IT software, it will be treated as supply of services. Next, agreeing to do an obligation, agreeing to refrain from an act, or to tolerate an act, or to do an act. So now this is also one more thing important from the examination perspective. So if you are agreeing to do an act, as a part of supply, let us say, for example, there is one factory, or let me put it this way, there is one builder. He got one piece of land. On that piece of land, he got the permission to construct 5 floors. Now, adjacent to that, there is already one building existing. There is already one 4 floors building which is existing. Now this builder has got the plan to construct 5 floors. This builder has agreed to, so I think I'm first giving the example for refrain from an act. Okay, let us take the example. So 4 floors, already existing building is there. Now this builder is having a vacant land. For that he got 5 floors of building permission. Now what happened is he can construct 5 floors. But this another residential community went to this builder and told, sir, you got the permission for 5 floors. You do one thing, don't construct 5 floors, sir. Construct 4 floors only. We are already having a blockage of the sunlight. So if you construct that extra floor also, it will be completely dark for us. Please don't construct that extra floor. Now why this builder will agree? Builder will not agree. No. Why? Because government gave him the permission to construct 5 floors. Who are you to come and restrict me to stop constructing one extra floor? So now this person is not agreeing. Now this building owners have told, sir, we'll do one thing. We'll give you 10 lakh rupees. In return for the 10 lakh rupees, you please don't construct that extra 1 floor. So now this builder has got 10 lakh rupees. In return, what service he has provided? In return, what supply he has made? He has agreed to refrain from an act. He agreed not to do some act. What he agreed not to do? He agreed not to construct that extra floor for which you have received a consideration of 10 lakh rupees. Sir, will it be supply? Yes. Will it be supply of goods or supply of services? It will be supply of services. You made the supply of service by agreeing to refrain from an act, by agreeing to not construct an extra floor. You received a 10 lakh rupees. You are agreeing to refrain from an act. This will be treated as supply of services. They should be treated as supply of services. Or you are agreeing to do an act. Sir, what do you mean by agreeing to do an act? Let us say, for example, there is one factory which is doing manufacturing. So within the close proximity, there is one residential welfare association. There is one gated community is there. This factory is doing the manufacturing and also they are emitting the waste emission they are doing within the pollution norms only. Within the pollution limits only, they are releasing some waste gases into the air. But this residential welfare association is little worried. Okay, they are having permissions and all, but they are located near to that factory. Now, these people went to this factory and told, sir, you do one thing. You are releasing that waste from your factory, no? But before releasing it, do some treatment. You install some effluent treatment plant, treat the waste, then release it. Treat the waste and then release it so that hazardous gases will get eliminated. But this person will say, why I will do? I am releasing polluting. I am releasing all that thing, everything within limits only. Government is having the government has given me permission. Why I will install extra effluent treatment plant? So now this residential welfare association told, okay, sir, we'll do one thing. We'll give you 5 lakh rupees. In return, you agree to install that effluent treatment plant. So here, this factory has got 5 lakh rupees. In return, what they are offering, they are agreeing to do an act. What they are doing, in return, they are agreeing to do an act. They agreed to do an act for which they are receiving the consideration. Will it be treated as supply? Yes. Will it be supply of goods or supply of services? It will be supply of services. Or even agreeing to tolerate an act. Let us say, for example, there is a jewelry store on a busy street. Inside of the busy street, instead of that store, there is a footpath. On that footpath, every evening, a pani puri wala is coming and placing his stall. So when this person is coming, so many people are gathering around him, and it is becoming a blockage for people to enter inside that store. Now, this jewelry store went to that pani puri wala and told, please remove your place from here because it is becoming an obstacle. My business is getting affected. Now, this person told, sir, please do tolerate. Please do tolerate. Monthly, I will give you certain amount. Every month, I will pay you certain figure. So you take, let us say, for example, every month I will pay you 20,000. In return for that 20,000, you please tolerate. I will keep my stall in front of your gate for some 3-4 hours. Please do tolerate it. For that, I will give you 20,000. So now this jewelry store, sorry, my pencil has run out of power. So this jewelry store is getting 20,000 every month. In return, what they are doing? In return, they are agreeing to tolerate. In return, they are agreeing to tolerate an act. So will that be supply, sir? Yes. What it will be? It will be supply of service. Okay. So agreeing to do an act, agreeing to refrain from an act, or agreeing to tolerate an act, all this will be considered as supply of services. But there is one circular associated with that. So agreeing to do an act, or agreeing to tolerate an act, or agreeing to refrain from an act, they will be treated as supply only when some conditions are fulfilled. Agreeing to do an act, agreeing to tolerate an act, or agreeing to refrain from an act, it will be considered as supply of service only when certain conditions are fulfilled. Sir, what are the conditions? Number 1, there should be an express or implied agreement or contract. There must be some agreement, either express or implied agreement, either to refrain from an act, or to tolerate an act, or to do an act. That means the person, whoever is doing it, should be under a contractual obligation. I'm not doing it voluntarily on my own. Because of some contract, I'm agreeing to do an act. Because of some contract, I'm agreeing to tolerate an act. Or because of some contract, I'm refraining from an act. So there must be either an explicit or implied agreement. And consideration must flow. There must be consideration. Then only it will qualify as supply of services. Understood, everyone? Clear and comfortable? So this is what regarding that 5E. And one more activity which will qualify as supply of services is transfer of right to use any goods for any purpose, whether or not for specified period, for cash, deferred payment, or other valuable consideration. If you are transferring right to use any goods, let us say, for example, I have a plant and machinery. That plant and machinery I'm giving on rent to another person for use. So that will be considered as supply of services. Understood? So this is what regarding para number 5. Then we have the next one, composite supplies. Sir, what is composite supply? We are about to see it in section number 8, but the government has identified few supplies in which supply of goods is also there, supply of services is also there. The government has identified few supplies in which there is supply of goods also, supply of services also. And the confusion is coming there, whether it should be treated as supply of goods or supply of services. The confusion is coming there. Government tried to sort out that confusion. First one is works contract. Sir, what is works contract? Works contract means is an activity in relation to an immovable property. Works contract means it is an activity in relation to an immovable property where supply of goods is also be there, supply of services also will be there. Let us say, for example, I have a building. On my building, I want to construct one extra floor. Now one builder came forward and told, sir, I will do that construction of extra floor. Material also I will only provide, labor also I will only provide. You pay me some 10 lakh rupees. I will bring all my material. I will only provide cement, sand, steel, everything. It's my responsibility. Along with that, I will construct that extra floor and give it to you. So this is an activity in relation to an immovable property. And as a part of that supply, I am receiving supply of goods also. I am receiving supply of services also. Now confusion will come. Let us say I am paying 10 lakh rupees. For that 10 lakh rupees, I am getting supply of goods also, supply of services also. How I should classify? So this confusion is coming, and department has clarified that always treated as supply of services only. Always treated as supply of service. Agreed, there is some goods also involved with there, but you always treat it as supply of services only. Similarly, restaurant services. Even if you go to the restaurant also, their service is also there, food is also there, goods are also there, service is also there. So here also a confusion is coming. In case of restaurant services, whether it will be treated as supply of goods or supply of services, the department has clarified always treated as supply of services only. Always treated as supply of services only, even though goods are involved. So this is what regarding whether an activity should be treated as supply of goods or it should be treated as supply of services. So with this, we have covered section 7, subsection 1A also. So our prime discussion is section number 7. In that we have covered section 7, subsection 1, which is saying which activities will be considered as supply. Then we have covered section 7, subsection 1A. Once an activity has been classified as supply, whether it will be treated as supply of goods or it will be treated as supply of services. Now comes section 7, subsection 2. Section 7, subsection 2. There are certain activities which will be neither considered as supply of goods, not even considered as supply of services. So there is section 7, subsection 2, which is negative list, I call it. There are certain activities which will be neither considered as supply of goods, not even considered as supply of services. That means they are not treated as supply only. If they are not treated as supply only, there is no question of GST at all. So let us try to understand which are that lucky activities which will be neither considered as supply of goods, not even considered as supply of services. Those activities are given under Schedule 3. Actually, the activities which will not be treated as supply are given at 3 places. One is Schedule 3. Schedule 3 lists some activities which are not considered as supply. Thereafter, government has released a notification. By way of notification, they have specified certain activities which will not be treated as supply. And even government has given some circulars. By way of these circulars also, they have clarified some activities which will not be treated as supply. So first I will talk about Schedule 3. As per Schedule 3, which activities will not be considered as supply? First one, services by an employee to the employer in the course or in relation to the employment. See, you all are aware, different people, either your family, friends, whoever it is, they are all working with some companies as an employee, no? So as an employee, you provide services to your employer and every month you get some salary. You are making supply of services. Let us say, after my chartered accountancy, I joined a company for work. Every month I will work for them. Every month I will get a salary. I'm an employee. I'm providing services. Every month I'm getting 1 lakh rupees salary. Supply of services is there. There must be GST, no? There must be GST when supply of service. But have you ever heard that an employee collecting the GST along with his salary? Hey, can I say to my employer 1 lakh rupees salary, 18% GST, paid to me 1,18,000? Did you ever hear this scenario? No. Why, sir? Why? Because that supply of services by an employee to the employer is neither considered supply of goods, not even considered supply of services. They are outside of the GST purview. The government doesn't want tax on it. So that's why they have told services provided by an employee to the employer is neither a supply of goods, not even supply of services. However, if you are providing something outside of your employment, whatever services you are providing under your employment, they are not treated as supply. But in case if you are trying to do something else beyond your contract of employment, then that will become supply of service. Let us say I'm an employee of some company. I'm getting monthly salary. My employer came to know that I also teach audit. He asked me, hey boss, why don't you teach my son also for his CA inter examinations? So I tried to offer coaching for his son, for which I am receiving some extra amount. Will that be considered as supply of service? Yes, because this I am doing it outside of my employment. Understood? Clear and comfortable, everybody? And also a few more things I will try to explain it here. Very important for examination perspective. Payments made to an employee for not joining competing business. Not joining competing business. Let us say, for example, for my employee, I'm paying some 1 lakh rupees so that he will not go and join my competitor. That is not the amount paid in the course of employment. That amount I'm paying it for not joining another business that is outside of the course of employment, that will be treated as supply of service only. Similarly, if there is an independent director for whom sitting fees is paid, there is an independent director for whom you are paying a sitting fee, not salary. If you are paying sitting fee to the director, which is subjected to TDS under section 194J, that is also not a service that is also not a supply of service in course of employment. Independent directors for whom you pay sitting fees and all, that is not salary, that is their remuneration, professional fees, that also will be subjected to GST. However, if there is a managing director, whole time director for whom you are paying for whom you are paying salary, for whom company is paying a salary, which is subjected to TDS under section 192, that is salary, that is outside of the GST purview. So you have to check when it comes to director's appointment, you have to check under which section TDS is getting deducted. If the TDS is getting deducted under section 194J, supply of service. If the TDS is getting deducted under section 192, it is not a service in the course of employment. It will be not subjected to GST. Able to understand? I think I told it in reverse. So once again, let me rephrase it. If the TDS is getting deducted under section 194J, not employment, GST will become applicable. If the TDS is getting deducted under section 192, it is in the course of employment, GST will not be there. Right. Next. Not just that, one more activity which will neither be considered as supply of goods, not even considered as supply of services is services by any court or tribunal. So if you want judgment, you approach a court. If you approach a tribunal, and they will ask you to pay some nominal fees for the purpose of that court proceedings and all. So you'll pay some fees to the court or tribunal for hearing your case. That is not considered as supply of goods, not even considered as supply of service. On that, GST will not come. Similarly, functions performed by MPs, MLAs, members of municipalities, and members of other local bodies, not a supply. Duties performed by person who holds any post in pursuance of the provisions of the Constitution in that capacity, like President of India, Vice President of India, Prime Minister of India. They are also holding the positions as per the Constitution. No, they on that also GST will not be there. And duties performed by any person as a chairperson or member of director in any body established by central government, state government, or local authority, and who is not deemed as an employee. So similarly, if you are holding any position as a chairperson, as a director of any body established by central government or state government, that is also not treated as supply. Next activity which will not be treated as supply: services of funeral, burial, crematorium, or mortuary, including transportation of deceased. See, when the person is alive, from the day he is born till the time he is expired, you are harassing him by collecting GST. At least when he died, let him die in peace. So at the time, even after the person has expired, so there will be some crematorium services, there will be some burial services, there will be some mortuary services. This deceased person has to be transported. On that, government told we don't want GST on it. We have harassed you enough when you are alive. At least when you have expired, services related to funeral, burial, crematorium, mortuary, including transportation of deceased, on that we don't want GST. We don't want your curse even after you have expired. So that's why this activity will not read as supply. Then fifth point, so sale of land. If you are selling land, sale of land will be outside of the GST purview. When you are selling the land is not goods, but land can fall under services. So sale of land is not a supply. On sale of land, government don't want GST. Whereas, what about sale of building, sir? See, when it comes to sale of building, here we have to understand one concept. So in case of sale of building or sale of flat, what you have to do is, in case of sale of building, we have to determine first one cutoff date. I will tell you one simple system. Remember it. In case of sale of building, whether it is not a supply or it is a supply, you have to decide it. Very important concept. In case of sale of land, no questions asked. Sale of land is not a supply. But when it comes to sale of building, there is some interpretation involved here. What is that interpretation? In case of sale of building, first you have to determine cutoff date. You have to determine one cutoff date. Sir, what is that cutoff date? Earlier of date of first occupation, or date of issuance of completion certificate by competent authority. So in case of sale of building, you have to determine one cutoff date. Sir, what is that cutoff date? Earlier of two dates: date of first occupation, date of issuance of completion certificate. Let us say date of first occupation is 20th of October. Date of issuance of completion certificate is 15th of October. Whichever is earlier. Which one is earlier? 15th of October, sorry. So that will become my cutoff date. So once you have determined the cutoff date, you need to check when the consideration is received. If the entire 100% of the consideration is received after the cutoff date, let us say entire consideration has been received on 25th of October, then it is not considered as supply at all. Not even supply of goods, not even supply of services outside of the GST purview. But in case, if you are receiving even a part of the consideration before the cutoff date, let us say total flat which I am purchasing it for 1 crore. Cutoff date, earlier of date of first occupation or date of issuance of completion of certificate is 15th of October. Let us say some 1 lakh rupees advance, I have paid it on 1st of September. The balance 99 lakh rupees, I have paid it after the cutoff date. Now it will be considered as construction service. It will be considered as supply of service. Entire 1 CR will be considered as supply of service. On that, GST will be applicable. Understood? Clear? Thumb rule. In case of sale of building, you have to follow one system. First, you determine cutoff date. How to determine cutoff date? Earlier of two dates: date of first occupation, date of issuance of the completion certificate. You will determine cutoff date. Now you determine when the consideration is received. If the entire consideration is received after the cutoff date, after this cutoff date, it will not be treated as supply. Even if 1 rupee of consideration you have received it before the cutoff date, entire value will be considered as supply of service and GST will be applicable. Understood? So this you remember. This is what you will be able to find it here. This I have tried to summarize it in simple terms. And one more thing, when I say sale of land here, sale of land means not just open land, even sale of developed land is also not a supply. Thereafter, actionable claims other than specified actionable claims, which means I have told actionable claims will fall under goods definition, but all actionable claims will not be treated as supply. Only specified actionable claims will be treated as supply. Sir, what are that specified actionable claims? Betting, casino, gambling, horse racing, lottery, and online money gaming. Only these 6 specified actionable claims will be treated as supply. Apart from that, whatever other actionable claims we have, that will be neither considered as supply of goods, not even considered as supply of services. This list you have to remember. So tell me, what are specified actionable claims? What are specified actionable claims? They have specified 6 specified actionable claims. What are they? Betting, casino, gambling, horse racing, lottery, online money gaming. Repeat once again. Betting, casinos, gambling, horse racing, lottery, and online money gaming. Only these 6 actionable claims will be considered as supply. All other will be not a supply. Next. Now we have insurance related 2 points. Insurance related 2 points we have. So this insurance related 2 points I will try to tell you in one simple way. So one is apportionment of co-insurance. Let us say, for example, one company need insurance amounting to 1000 crore rupees of insurance policy they want. They want a cover of 1000 crore rupees of insurance. They want 1000 crores of stock insurance. They approached one insurance company. Insurance company A, they have approached, sir, I need 1000 crore rupees of insurance coverage. Now, insurance company A don't want to take that much risk. So what they have done is they have approached another insurance company B. So this insurance company A, I call them as lead insurance. This company I call them as co-insurer. So this company has approached insurance company A. They told, sir, I want 1000 crore rupees of insurance coverage for my stock. But insurance company A doesn't want that much exposure. So they went to another insurance company. Hey boss, I do one thing. I will provide insurance coverage for 600 crores. You provide the insurance coverage for 400 crores. We both will collectively sell the policy. So this I call it as co-insurance agreements. Okay, this company told, okay sir, I need whatever you want to do. I want 1000 crore rupees of insurance cover. Now insurance company A told, okay, not myself. We along with another co-insurer, insurance company B, we both will provide you insurance. Now for this they have charged insurance premium. Let us say some 10 crore rupees of insurance premium they are charging. 10 crore rupees of insurance premium they are charging. Now this amount will be actually collected by lead insurer. Whoever is leading that agreement, he will collect it. 10 crore rupees of insurance premium he has collected. On that 10 crore rupees, even GST also he will collect. 1.8 crore rupees of GST also he has collected. 11.8 crore rupees of total amount was collected by insurance company A. Now this insurance company A will retain 10 crore and balance 1.8 crore rupees they have to pay to the government. No, they have to pay to the government. Yes, they paid it. So now insurance company is having how much insurance premium? 10 crores they have. But 10 crores is not belonging to them. No, because they have involved other insurer also, co-insurer. Now out of this 10 crore rupees, 6 crore rupees they will keep, 4 crore rupees they have to give it to the co-insurer. Because both of them collectively have offered to offer the insurance policy. No. So this lead insurer collected 10 crore rupees, but they can't keep entire 10 crore. They have to keep 6 crore rupees. Balance of 4 crore rupees they have to remit it to co-insurer. So now what they are telling is whatever 4 crore rupees they have remitted, the apportionment of premium between lead insurer and co-insurer. This lead insurer is apportioning 4 crore amount of insurance premium to co-insurance. No, this will be neither considered as supply of goods, not even considered as supply of services. On that GST will not come. On that apportionment GST will not come. The logic is very simple. This 4 crores is a part of 10 crores only. On the 10 crores, anyhow, entire 1.8 CR GST is already paid to the government. So it is just a sharing. 4 crores is just a sharing. So once again, if they start asking the GST on this 4 crore rupees also, it will be double taxation. Why? Because this 4 crores is a part of 10 crores only, on which lead insurer has already paid the full amount of GST to the government. Understood? So simply, if I have to put it, very simply, if I have to put it, this is very much I have made it as simple as I could. This alone, this one, each point, this insurance related point, each point I can explain it for half an hour, but we can't afford that much amount of time. I try to make it as simple as possible. So if you read it here, activity of apportionment of co-insurance premium by lead insurer to the co-insurer for insurance services jointly supplied by both of them in co-insurance agreements, subject to the condition that lead insurance pays the GST on the total premium. That's what even example I have given you here. So if this lead insurer has already paid the GST on the total insurance premium, whatever he is sharing with the co-insurer, on that once again it will not be treated as supply. On that once again GST will not come. Similarly, In case of reinsurance agreement also, listen carefully. Reinsurance agreement also, it will happen. Let us say there is an, I will take the names actually. Let us say Max Insurance is there. Max Insurance is there. They sold a insurance policy amounting to 1000 crore rupees. They sold a insurance policy amounting to 1000 crore rupees to one company, for which they received some 10 crore rupees of premium they have received. Now, after they have on the 10 crore rupees, even 1.8 CR GST they have collected, total 11.8 CR GST they have collected, and this amount 1.8 CR they have paid it to the government also. Now, after they have sold the policy, they want to reinsure it. They want to reinsure it. In the previous case, it was co-insurance, but here it is reinsurance. Reinsurance means you want to transfer the risk. So after you have sold the policy, now you approached another insurance company. Let us say, for example, you approached ICICI Insurance for the purpose of reinsurance. Sir, we have already sold a policy. We want you to reinsure it. Let us say, for example, half of it we want to reinsure. They told, okay, boss, we will do the reinsurance. We will do reinsurance. But for that, let us say they are saying we want 5 crore rupees of consideration. Reinsurance. It is altogether different agreement. So they have got 5 CR in return for reinsurance services. They have paid reinsurance services for 5 crore rupees of premium. Now, along with that 5 crore rupees, they will also collect GST. They have to collect it on reinsurance. Reinsurance is a separate agreement. On this 5 CR, they have also collected 18% of GST because they are providing reinsurance services for a consideration. So, along with this 5 crore rupees, 18% GST also they have collected. 5.9 CR GST also they have collected. Now, ICICI Insurance will pay that 0.9 CR, 90 lakhs to the government as GST. Now, here one more thing will happen. See, Max Insurance customer, they have initially purchased a policy. Now they are finding the customer and giving it to ICICI Insurance. No. Initially, what happened? Max Insurance found the customer, sold the insurance policy. Thereafter, they are getting it reinsured with ICICI. That means they are giving business to ICICI Insurance, for which they will get something called receding commission or ceding commission. Some commission they will get it. So that commission will be actually from this 5 crore. They required to pay 5 crores for reinsurance. No, from that, let us say 10%. So 50 lakh rupees, they will get it as commission because they are giving business to them. No. So that 50 lakh rupees, they will get it as commission. Now they are saying that this ceding commission will not be treated as supply. This ceding commission will not be treated as supply. Why? Because the logic is very simple. This 50 lakh rupees of ceding commission is from the amount of reinsurance premium which has already been subjected to GST. This 50 lakh rupees ceding commission, they are getting it from a total premium of reinsurance premium of 5 crore rupees, on which 5 crores they have already paid GST amounting to 0.9 CR. No. So this ceding commission is a part of that reinsurance premium only. No. So that's why on that ceding commission, once again, there will be no GST. Once again, there will be no GST. So two things here: apportionment of insurance premium between lead insurer and co-insurer, not a supply. Similarly, ceding commission charged by the person from the reinsurer, that is also not a supply. So if you read it here, services by insurer to reinsurer, for which ceding commission or reinsurance commission is deducted from the reinsurance premium paid by insurer to the reinsurer, subject to condition that central tax, state tax, union territory tax is paid on the gross reinsurance premium. So on this entire gross reinsurance premium, anyhow you are paying GST. This ceding commission is a part of that reinsurance premium only, which has already been subjected to GST. If you once again start imposing GST on that ceding commission, it will lead to double taxation. Okay, clear? Right. So these two are little complicated. In our regular class, we have understood in a detailed manner. So here we can't go beyond this. Right. Then, so these are the activities which are not considered as supply by way of Schedule 3. There are few more activities which are notified by way of notification, which will not be deemed as supply. Sir, what are they? Activity in relation to municipality or panchayat functions. So if you take municipality or panchayat, they have various functions which are entrusted to them under Article 243G or Article 243W of the Constitution. Municipality or panchayat, they perform various functions which are entrusted to them under Article 243G or 243W of the Constitution. Now, the notification this says that, see, this panchayat or municipality, whatever activities they are performing under Article 243G and W of the Constitution, they will be neither considered as supply of goods, not even considered as supply of services. Let us say, for example, municipalities are required to maintain street lights. So they will collect some consideration for that, maybe. So now, since that activity is assigned to them under Article 243W of the Constitution, they will not be liable to pay GST on it. It will be considered as not a supply. Similarly, grant of alcoholic liquor license. Today, if I want to open a bar where I want to sell alcoholic liquor for human consumption, I need to get a license from state government. If I pay a certain amount of money, state government will give me license. Now they say that the license provided by the state government for grant of license for alcoholic liquor for human consumption, that is also not treated as supply. On that license provided by state government, also there will be no GST. But here you have to be very careful. Only what they say here, only grant of license for alcoholic liquor for human consumption. If they are granting other licenses like telecom licenses or mining licenses, on that will be treated as supply, on that GST will come. Only thing is, only grant of alcoholic liquor license is only not treated as supply. Other licenses will be taxable. Other licenses will be treated as supply. Now, we'll try to understand a few activities which will not be treated as supply and which have been given by way of circular. So what are that activities? I will try to tell you in one simple way. Let us say, for example, there is one logistics company. There is one logistics company. Let us say this logistics company, VRL Logistics is there. They are having an office in Chennai. They are also having an office in Bangalore. Since they are having a place of business in multiple states, they will get separate registration. This they have registered with Tamil Nadu state government. This they have registered with Karnataka state government. Okay. So now when they have registered, let us say, for example, every day they are required to transport some goods. There is a truck here. So now in this goods, the truck, the goods will be loaded. Now this truck will go from Chennai. It will go to the Bangalore office. There all these goods will be delivered. Thereafter it will be dispatched to their customers. So every day the truck is going from Chennai office of VRL Logistics to Bangalore office of VRL Logistics. But both are registrations of same person. So they both will be treated as distinct persons under section number 25. Just now we have seen they both will be treated as distinct person. Now what one interesting officer has done is, what one PO has told us, hey, you both are treated as distinct person. You are making supply of truck. Every day the truck is going between distinct persons without any consideration. So now what this PO has done, he determined the value of the truck. And he told that, see, this entire value of the truck is a supply of goods between distinct persons under section number 25 without consideration on the entire value of the truck. I will treat as supply under section 7 subsection 1 clause C read with para number 2 schedule 1, supply between distinct persons even without consideration on the entire value of the truck. He slapped the amount of GST. Interesting interpretation, very intelligent proper officer, but this is purely harassment. So that's what even the circular has also clarified. Movement of conveyance like trains, buses or any other kind of conveyance between distinct persons for the purpose of transportation of passengers or for the purpose of transportation of goods or for the purpose of getting the repairs, that you don't treat it as supply. It is unnecessary harassment unless you are making a further supply of it. So what do you mean by unless you are making a further supply? Let us take Ashok Leyland manufacturing factory is there. In the factory they have manufactured some 10 Ashok Leyland buses or lorries, whatever it is. From there they have taken it to the depot, sales depot. Let us say manufacturing unit is there in Gujarat, sales unit is there in Delhi. So now this some 10 trucks are moved from manufacturing factory to the depot for the purpose of making further supply. So here you determine value of the goods because your truck will become goods here. Here you determine that value of the 10 trucks that you treat as supply under para number 2 of schedule 1, supply between distinct persons under section number 25. Why? Because here conveyance is getting transferred with the intention of making further supply. Then you treat it as supply. But in case if the conveyance is getting moved for the purpose of transportation of passengers, for the purpose of transportation of goods, or for getting the repairs done, then you don't determine that value of the conveyance as supply. Don't do it. Okay. Similarly, one more circular also they have given. Let us say I'm a builder. I'm doing one construction. I have my office in Karnataka. I also do some constructions in Chennai. Now I have one truck. I have one JCB. Let us say I have a JCB. Now this JCB I was using at one site in Karnataka. Now this JCB I have to move it to Chennai because there I have to use it. Now I have to take this JCB and I have to use it at another place. At Chennai I have to use it. Now I am registered in both the states. both are distinct person. Now here also PO has done interesting interpretation and told, hey, you both are distinct persons under section number 25. JCB is goods. You are causing the movement of the goods between now. You are making a supply of goods between distinct person. He determined the value of the JCB and he told that I will treat as supply even without consideration. On that you pay GST. Harassment, no. So now what they have told us, whatever explanation they have given in this circular, the same thing will become applicable here also. So when wheels on truck, or they use some phrase here. So if you see it, yeah, interstate movement of rigs, tools and spares and all goods on wheels, when you are moving it for the purpose of repairs or etc., then you don't treat as supply. Don't unnecessarily do the harassment. Understood? Clear? Right. So then we have one more thing here. One more clarification regarding vouchers is there. This clarification regarding vouchers, I will tell you at a later point of time. This clarification regarding vouchers, I will tell you at the time of supply. When I take up the time of supply, there I will teach you about this circular vouchers. Very important circular. We will talk about it later. Right. So these are the activities which will not be treated as supply. So we have seen a few activities under schedule 3. We have also seen few activities under notification. We have also seen few activities under circular which will not be treated as supply. So with this, we are putting an end to section number 7. Now we will try to understand section number 8. One more small section we have. Section number 8 we will try to understand. With that, supply under GST will come to an end. Supply chapter will come to an end. So what is section number 8? Section number 8 is going to talk about composite supply and mixed supply. Section number 8 is going to talk about composite supply and mixed supply. Let us try to understand what is the concept of this composite supply, what is the concept of this mixed supply, and how to determine its taxability. Everything we'll try to cover. First of all, I will talk about composite supply. Sir, what is composite supply? What is composite supply? See, sometimes what will happen is you get a bundle of supplies for a single price. You get a bundle as a package. You get a combination of goods or services, sometimes combination of services, sometimes combination of goods and services for a single price. You are going to get it. Let me give you one example. You go and take the hotel accommodation. You go and stay in a hotel. Now, along with that hotel stay, they provide various other services. Let us say, for example, complimentary breakfast will be there. Complimentary breakfast will be there. Along with that, they will also provide laundry services. Along with that, they will also provide airport pickup and drop. Airport pickup and drop. So this bundle of services is getting offered to you. Let us say, for example, you paid some 10,000 rupees. For that 10,000, you are going to get the hotel accommodation also. You are going to get the complimentary breakfast also. You are going to get the laundry services also. Airport pickup and drop also you are getting. So now for a single price, you are going to get a combination. When more than two or more taxable supplies, are getting provided, then we call it as composite supply. You're paying 10,000, but you are getting this much combination. Now, how to treat it? This is a taxable supply. On this, GST is required to be paid. But how to treat this 10,000 rupees, sir? Should it be treated as hotel accommodation services? Should it be treated as for complimentary breakfast? Should it be treated as for laundry? Or should it be treated as for airport pickup? Or do I need to bifurcate it? So that depends on whether it will become a composite supply or mixed supply. So if you are getting a combination of supplies in a single transaction, how to determine the taxability? That depends on whether that combination is falling under composite supply or mixed supply. So when it will fall under composite supply is, if all that supplies are naturally bundled. If all that supplies are naturally bundled, then we will treat them as composite supply. Sir, what do you mean by naturally bundled? When we can take them as naturally bundled is, let us say, for example, out of the combination of supplies which I am getting, one is principal supply, one is main supply, other one is ancillary supply. One is main supply, other one is ancillary supply. So you tell me, in this entire combination, is there anything which is principal supply? Is there one thing which is main supply? Yes. What is the main supply? Hotel accommodation is main supply. This complimentary breakfast, laundry, airport pickup and drop, these are all ancillary. To make my main supply more enjoyable, I am getting ancillary services. Okay. Or everybody in the market is doing it. Let us say, for example, not just this supplier, everybody in the market is doing it. Or as a customer will always expect these services as a package. Generally, when I want to go and stay in a hotel, I want everything as a package. I want hotel accommodation, I want complimentary breakfast, I want laundry, I want airport pickup and drop. So like that, a few conditions will be checked. Like, is one thing is a main supply, other is ancillary supply, is everybody in the market is doing it, or recipient generally expects it as a package. So like that, I will do some testing, and depending on that, if I have classified that yes, these are all naturally bundled, these are all naturally bundled, then I will treat it as composite supply. And once an activity I treat as composite supply, entire value will be treated only for principal supply. So here I have got 10,000 rupees. No, this 10,000 rupees will be deemed for only hotel accommodation. So whatever rate of GST which is applicable for hotel accommodation, let us say this hotel accommodation will attract 18% of GST, entire 10,000 will be treated as a consideration for making hotel accommodation only, and entire 10,000 will attract the GST at the rate of 18%. Able to understand? Clear and comfortable? So when you are getting two or more taxable supplies as a combination, you need to determine first whether it is naturally bundled or artificially bundled. If it is naturally bundled, it will be composite supply. It will be treated as supply of the principal supply. Whatever is the principal supply, that entire value will be treated as principal supply only. And whatever rate of GST that is applicable for principal supply, entire value will attract the GST at that rate only. So here entire 18% will GST will entire 10,000 will attract GST at the rate of 18%. Now, sometimes the supplies will be not naturally bundled. So one common example which I often use, let us say for example, Cadbury is selling a Diwali pack. In that Diwali pack, 4 compartments are there. In one compartment, they have kept chocolates. In one compartment, they have kept sweets. In one compartment, they have kept crackers. And in one compartment, they have kept dry fruits. And this package, they are selling it for 2,000 rupees. Now, for this 2,000 rupees, you are getting a combination. You are getting a combination of different supplies. Chocolates will attract, let us say, 5% GST. Sweets will attract 18% GST. Dry fruits will attract, let us say, 28% GST. Crackers will attract, let us say, some 12% GST. So like that, for single price, you are getting multiple supplies which are not naturally bundled. You tell me, out of all this, what is the principal supply? Can you say something is a principal supply here? Is chocolates a principal supply? Is sweets a principal supply? Is crackers a principal supply? Is dry fruits a principal supply? We are not able to determine it. So that means every supply is having its own prominence. Nothing is principal supply here. So this we call it as mixed supply. If you classify this supply, if you classify this combination as a mixed supply, then what will happen is this entire value will be treated as that supply which is having highest rate of GST. So what is the which product is having highest rate of GST? Dry fruits is having highest rate of GST of 28%. This entire 2,000 rupees will be deemed to be the supply of dry fruits only, and highest rate of GST 28% will become applicable on the entire value of 2,000 rupees. Able to understand? Clear? So very simple here. Composite supply, principal supply, it will be treated as supply of principal supply. Whatever rate that is applicable for a principal supply, entire value will attract that rate only. In case of mixed supply, which are not naturally bundled, it will be treated as supply of that product which attract, or that service which attract highest rate of GST. Entire value will be subjected to GST at that applicable rate only. Okay. Next, sometimes what will happen is we get certain kind of activities where it is neither a composite supply nor a mixed supply, where a complete breakup is given. Let us say, for example, you took your car for service. So now when you took your car for service, you will get a bill. In that bill, it was written, for example, some part is replaced, headlight is replaced, amount is 10,000, rate of GST is 18%. Then some part, some engine part is replaced, amount is 5,000, rate is 5%. After all that, service charges are 2,000 rupees, GST rate is 18%. So like this, sometimes what will happen is they are not naturally bundled, and also individual rates are separately bifurcated. Individual component prices are separately bifurcated. Then it is neither a composite supply nor mixed supply. What you do is, since you break up, you clearly have it on the invoice, calculate the GST amount appropriately, which means for this 10,000 rupees of headlight, GST amount of GST will be 1,800. For this 5,000 rupees, amount of GST will be 2,500. For this 2,000 service charges, amount of GST will be 360. Like that, separately you can calculate it. Understood? Clear and comfortable, everybody? So this is what regarding composite and mixed supply. So with this, we have completed section number 7 as well as section number 8, supply under GST. We are successfully done with. So we took more time for supply than what has been estimated. No issues. So today we'll wind up our revision with this. We have done only 2 chapters, introduction and supply we are done. Tomorrow we'll start with the registration, charge of GST, all that we'll try to do it from the next session. So that's all for today, guys. See you tomorrow once again live. So let us continue our revision. Let us continue our marathon series without wasting any time further. So in the previous session, in the previous day, we are done with only 2 chapters, but we had a very comprehensive revision in the previous session. One is we are done with introduction to audit. Thereafter, we have spent some time in revising. We have spent a good amount of time in revising the content from the chapter supply under GST. So a very good and interesting discussion. We had so much of comprehensive coverage. We had it, and also you guys have responded back. You guys even have commented to the videos below, commented to the video which I have uploaded yesterday. So thanks for all your kind words and all. So with the same motivation, with the same energy, with the same conceptual clarity, let us try to proceed ahead and try to understand important concepts, important chapters for revision. So today it's going to be a one cluster. That cluster is going to be very important from the examination perspective. So a cluster of chapters we'll try to revise today. Okay, right. So first, I will start my revision with registration. So very important chapter from the examination perspective. A good amount of weightage will be there from this chapter. So let us try to quickly revise this chapter, registration. And as a part of this registration chapter, we are going to cover a bunch of sections here. So we are going to cover section number 22 till section number 30. Starting from section number 22 till section number 30, all the sections are there covered as a part of this registration chapter. One by one, each section will try to pick up and will try to understand it. See, if I have to give you logical flow of the discussion, so we have seen that yesterday in the previous session. So GST is a tax. Tax on what? Tax on supply of goods or services or both. So for GST to be imposed, first there should be goods or there should be services. And just having the goods and services alone will not be enough. Even a taxable event called supply should have taken place. Just having the goods and services alone will not be enough. Just because the goods are there existing, the services are there existing, it doesn't trigger the government to come and impose a GST. The government will impose GST only when the government will come and impose a GST only when a taxable event called supply has taken place. Only when supply has taken place, then only the GST will be imposed, right? And just because goods and services are there, just because a taxable event called supply has taken place, then also the government will not come and impose GST. The GST will be collected only when the person making such a taxable supply is a registered person or he is a taxable person. So one term we have to understand here, just because goods and services are there, just because supply of goods and services has taken place, the government will not come and impose GST. That supply should have been made by a taxable person. Now a question you will get, sir, what is the meaning of taxable person? They say that taxable person means the person who is already registered under the GST Act or a person who is liable to register under the GST Act. So what do you mean by taxable person? Very important. This thing you have to remember. So what do you mean by taxable person in this term, in this concept GST? This term taxable person is very, very important. So what do you mean by taxable person? So taxable person means a person who is already registered under GST Act or a person who is liable for registration. So that we call them as a taxable person. So only when the person making such taxable supply is a taxable person, then only the government will collect the GST from such person. So now we have to understand, sir, you are saying taxable person means who is already registered or a person who is liable for registration. But please tell us when a person will become liable for registration. When a person will become liable for registration. So that discussion has been contained in section number 22. So if you go to section number 22, we will get the clarity who is the person, who are such people, who are such business people who will be liable for registration. So section number 22 simply has told that the person who is liable for registration is, if you come to the material here, every supplier who is required to register, every supplier of goods or services or both is required to obtain registration. They are saying the suppliers are liable for registration. Sir, which kind of, when their aggregate turnover exceeds a specified threshold limit. When their aggregate turnover exceeds a specified threshold limit. And where they are required to get registered, sir? In every state or union territory from wherever they are making a taxable supply. So 3 things here. Section 22 addresses 3 things. Number 1, who is required to get registered? They say that every supplier of goods or services or both is liable to get registered. When he is required to get registered, they say when his aggregate turnover exceeds the applicable threshold limit. Where he is required to get registered, they say that he is required to get registered in every state or union territory from wherever he is making a taxable supply. So who we got the clarity? Every supplier. Now when this clarity we have to get it. So what do they say here? When a person will become liable for registration, they say that when their aggregate turnover exceeds the applicable threshold limit. when their aggregate turnover exceeds the applicable threshold limit. Now we need to understand these two terms. What is aggregate turnover? What is applicable threshold limit? So let us try to understand what is the meaning of this term aggregate turnover. So here we have the definition here. So what do you mean by aggregate turnover? Means it includes all taxable supplies. It even includes exempt supplies. Sir, what do you mean by exempt supply? In under GST Act, wherever I say exempt supply, it includes three things. Number one, it could be a wholly exempted supply, or it could be a nil rated supply, or even it could be a non-taxable supply. So whenever I say exempt supply throughout this GST Act, exempt supply includes three things. So what are the three things which will be included in the exempt supply? Number one, it is wholly exempted supply. There is a supply which has been wholly exempted by way of notification. Number two, it could be a nil rated supply. So in the GST rate chart, if you see, there will be certain items, there will be certain services which they will keep it as nil rate. That nil rated supplies will also get covered under exempt supplies. And thereafter, non-taxable supplies. Sir, what is non-taxable supply? Those supplies which are not at all leviable to GST. Like examples, alcoholic liquor for human consumption, that 5 petroleum products which I have told you yesterday, they will fall under non-taxable supply. So whenever I am saying exempt supply, it includes all these three. Even that also should be included in my aggregate turnover. If you are making any export of goods or services, or both, if you are making any exports of goods, if you are making exports of services, if you are making exports of both, that will also be included in your aggregate turnover. Then it also includes interstate supplies of the persons having same PAN. Like for example, you are having places of business in multiple states, and from one place of from let us say for example, I have my place of business in Karnataka, I also have my place of business in Tamil Nadu. So from Karnataka, I am sending some goods to Tamil Nadu for my own branch under same PAN. That also will be deemed to be supply, no, even without consideration. That also should be added in my aggregate turnover. So tell me, what and all will get included? See, this aggregate turnover is very, very important from the examination perspective at various instances. Wherever they wanted to give you some applicability, that applicability they will always try to link it with your aggregate turnover. So it becomes very much necessary for us to understand what will get included in the aggregate turnover, what will not get included in the aggregate turnover. So when it comes to inclusion part, what will get included in the aggregate turnover? All taxable supplies, exempt supplies, exports, interstate supplies of the persons having same PAN. Then, sir, what is not required to be included while calculating that aggregate turnover? So few things you are not required to include it while calculating aggregate turnover. Number one, GST, CGST, SGST, UTGST, IGST or cess. So whatever taxes which are levied under the GST Act, whatever taxes which are getting levied under the GST Act, either it could be CGST or it could be SGST or it could be UTGST or it could be IGST or it could be cess. So that has to be taken out. That means when you are calculating aggregate turnover, you have to calculate the figure exclusive of taxes, not inclusive of taxes. Not just that, in case if you are receiving any inward supply on which you are liable to pay tax under RCM, that is also not required to be included in your turnover. So this is very important. This is where many of the students often make the mistake. So what they're trying to say here is, let us say for example, there is one supplier. He made some supply to the recipient and he is making some supply. This supply is getting covered under RCM. I told you already yesterday what is the meaning of the term RCM. I have already explained it. So what is the meaning of the RCM? Recipient will be liable to pay the amount of GST. So let us say 1 lakh worth of supply has been made. How much supply? 1 lakh worth of supply has been made, which is getting covered under RCM. So on this, the GST will be paid by recipient. Let us say 18% is the applicable rate of GST. 18,000 will be paid by the recipient under RCM. So this 1 lakh worth of supply has taken place. No, it should be included in host turnover. Should it be included in the supplier's turnover or should it be included in the recipient's turnover? You tell me, should it be included in the supplier's turnover or should it be included in the recipient's turnover? Sir, recipient is paying the GST. No, I will include it in my recipient's turnover. Wrong. Absolutely wrong. It should be included in the turnover of the supplier. It should be included in the turnover of the supplier. So that's what they say here. If you read it, if you are receiving any inward supplies on which you are paying tax under RCM, that will not get included in your turnover because you are a recipient to that. It will get included in the turnover of the supplier, whoever has made that supply. Understood? So this is what you have to remember, what is included, what is excluded. And few more things here. This aggregate turnover, when I say aggregate means what? Total. Aggregate turnover, it should be computed on all India basis. On overall India basis, you have to calculate this turnover. If you are having multiple places of business in multiple states, aggregated total turnover, you have to take it. It includes all supplies made by taxable person, whether on his own account or even on behalf of principal. Even if you are making the supply as an agent on behalf of your principal, that will be included in your turnover only. So it includes the supplies which are made on your own account. It also includes the supplies which are made on behalf of principals. So everything will be included in the aggregate turnover. So first of all, sir, why are we discussing aggregate turnover? Because under section number 22, they told that every supplier of goods or services is liable for registration when his aggregate turnover exceeds applicable threshold limit. So we got the clarity how to calculate the aggregate turnover. But once we have calculated aggregate turnover, that you have to match with applicable threshold limit. When my aggregate turnover has exceeded the applicable threshold limit, then I have to apply for registration. Now the next question what you will get is, sir, what is this applicable threshold limit? What is this applicable threshold limit? For that, I have summarized all this discussion. For that, I have this summary available. So let us try to have a look at it. I have tried to prepare one chart so that you all will feel comfortable for the purpose of remembrance. Okay, so just give me 1 minute. Let me separate this. Yeah. So let us see here. What is the applicable threshold limit for registration? So in case of determining applicable threshold limit for registration, you have to follow one system. I will give you steps. These steps you have to follow as it is even in the exam also. In case if they are asking you a question regarding whether the person is liable for registration or not, you have to determine whether a person will be liable for registration or not. While determining what is this applicable threshold limit, you have to follow the same system. You have to follow the same steps, whatever I'm going to tell you now. So what are that steps which I will be required to follow? Number one, first you need to check, is that person making any taxable supply from MMNT? First you need to check, is he making any taxable supply from MMNT? If he is making exempt supply, ignore. But you have to check only if he is making any taxable supply from MMNT. Sir, what is MMNT? Manipur, Mizoram, Nagaland, Tripura. Remember it, guys. This you have to remember it. So what are the 4 states? Manipur, Mizoram, Nagaland, Tripura. So first thing what you have to check is, to determine the applicable threshold limit, you need to check, is the person making any taxable supply from MMNT, Manipur, Mizoram, Nagaland, Tripura, from any of these 4 special category states? Are they making any taxable supply? If the answer is yes, yes, you got the answer as yes. Then whether they are engaged in supply of goods, or they are engaged in supply of services, or if they are making supply of both. They might be engaged in supply of goods also, they might be engaged in supply of services also, whatever they might be doing. In case if they are making any taxable supply from MMNT, whether they are engaged in supply of goods, or they are engaged in supply of services, or they are engaged in supply of both, the applicable threshold limit is always going to be 10 lakhs only. That means if their turnover exceeds, if their aggregate turnover exceeds 10 lakh rupees, then they are liable for registration. Where they have to get registered? Not just in MMNT. From whichever state or union territory they are making a taxable supply, in all that states or union territories, they have to take their registration. Okay, this is the first step. Okay, first step you have checked. There is a business person. He's making supplies. Now first thing you will check whether he making any taxable supply from MMNT. You got the answer as no. No, he's not making any taxable supply from MMNT. Next thing what you have to check is, so first always you have to check this. Next, in case if the first condition is not getting fulfilled, in case if the first step is not getting covered, then only you have to come to the second step. What is it? You need to check whether he making any taxable supply from UP match. Whether he is making any taxable supply from UP match. Sir, what do you mean by UP match here? So once again, these are all mnemonics which I have used it here. So what is UP matches? Uttarakhand, Puducherry, and Meghalaya, Arunachal Pradesh, Telangana, Sikkim. So in case if he is not making any taxable supply from any of this MMNT, then you have to check, is he making any taxable supply from UP match? Only taxable supply you have to check. Is he making any taxable supply from UP match? So what are UP match? Uttarakhand, Puducherry, Meghalaya, Arunachal Pradesh, Telangana, Sikkim. If the answer is yes, yes sir, he is making a taxable supply from UP match, then what will happen? So in case if you have decided that he is making a taxable supply from UP match, then whether he is engaged in supply of goods, or he is engaged in supply of services, or he is engaged in supply of both, the applicable threshold limit will be 20 lakh rupees. So in case if you are making any taxable supply from UP match, so first always you have to check this. If the first condition is not fulfilling, then you come and check the second condition. So in the second condition, yes sir, he is making taxable supply from UP match, then the applicable threshold limit will be 20. Whether you are engaged in supply of goods, or you are engaged in supply of services, or you are engaged in supply of both, always the applicable threshold limit is going to be 20 lakh rupees. If your aggregate turnover exceeds 20 lakh rupees, you will become liable for registration. Sir, where I have to take registration? In every state or union territory from wherever you are making a taxable supply, there you are required to take the registration. Okay, next, coming to the next part. Sir, all other cases, that means even second condition is also not fulfilled. Sir, I am determining my applicable threshold limit. I checked whether am I making any taxable supply from MMNT. The answer is no. Then I have checked, am I making any taxable supply from UP match? The answer is no. Then in all other cases, in all other cases. In case if you are exclusively engaged in supply of goods, you are making only supply of goods. In case if you are exclusively engaged in supply of goods only, you are not making any supply of service, you are exclusively engaged in supply of goods only, then your applicable threshold limit will be 40 lakh rupees. Your applicable threshold limit will be how much? 40 lakh rupees. When you are not making any taxable supply from MMNT, you are not making any taxable supply from UP Mats, and you are only making supply of goods. You are only making supply of goods. You are not making any supply of services. Then the applicable threshold limit will be 40. You are not liable for registration until and unless your aggregate turnover exceeds the 40 lakh rupees of limit. You can enjoy the enhanced threshold limit. This I call it as enhanced threshold limit. The government is giving you advantage. If you are not making taxable supply from MMNT, if you are not making taxable supply from UP Mats, and you are not making any supply of services, then we will let you enjoy the enhanced threshold limit. Excess threshold limit you can enjoy. What is that excess threshold limit? You are not liable for registration unless and until your aggregate turnover exceeds 40 lakh rupees. On the other hand, sir, I am not making any taxable supply from MMNT. I am also not making any taxable supply from UP Mats. But I am not just engaged in making supply of goods, sir. I am also making supply of services. I am also making supply of both. That means I'm making supply of services or I'm making supply of goods as well as services. Then you can't enjoy the enhanced threshold limit. You can only enjoy the 20 lakh rupees of limit. Then your applicable threshold limit will be 20 only, not 40. So this enhanced threshold limit of 40 lakh rupees will become applicable only when you are exclusively engaged in supply of goods, not when you are engaged in supply of services or supply of both. Clear? Able to understand? But however, to this 40 lakh rupees, there are some exceptions. That means sometimes you are not making taxable supply from MMNT. You are also not making any taxable supply from UP Mats. You are exclusively engaged in supply of goods. So practically you should be eligible for 40 lakh rupees of enhanced threshold limit. But in some cases, they will not give you that 40 lakh rupees of threshold limit. They will let you take the applicable threshold limit of only 20 lakh rupees. Sir, what are that exceptions? So if you come back to the material here, so what are that exceptions is when I can't enjoy that enhanced threshold limit of this 40 lakh rupees is, let us see. So if you read it, so as per the notification, it exempts any person exclusively engaged in supply of goods and whose aggregate turnover in the financial year does not exceed 40 lakh rupees. They are not liable for registration. But however, there are some exceptions. That means even though you are exclusively engaged in supply of goods, in some cases, they will not let you enjoy that enhanced threshold limit of 40. Your applicable threshold limit will be restricted only to 20. When, sir? When means if you are a person who is required to take compulsory registration. If you are a person who is required to take compulsory registration under section number 24. We will see in a short while. We are currently at section number 22 now. In a short while, we will be discussing section number 24. There I will be telling you a few category of persons who are liable for compulsory registration. If you are liable for compulsory registration under section number 24, no limit, nothing will be checked. So there you can't anyhow enjoy 40 lakh rupees of limit. Or if you are a person engaged in making supplies, if you are a person engaged in making supplies, when I say making supplies, it could be manufacturing, it could be trading. So either you are manufacturing or you are trading any of these products. They have identified a few products. If you are engaged in making supplies, sir, they are telling making supplies. It doesn't include just trading. It even includes manufacturing. So either you are manufacturing or you are trading any of these 7 products which they have listed. Even you might be exclusively engaged in supply of goods only, but you can't enjoy that enhanced threshold limit of 40. Sir, what are that products, sir, which I should not be making supplies if I want to enjoy that enhanced threshold limit of 40? So number 1, ice cream and other edible ice, whether or not containing cocoa, pan masala, all goods of chapter 24, that is tobacco and manufactured tobacco substitutes. Then fly ash bricks, fly ash aggregates, fly ash blocks, bricks of fossil mills or similar siliceous earth, building bricks, earthen or roofing tiles. This list you have to remember, my dear students. At one more place, I'm going to make you come back and revisit this list, but this list you have to remember. So repeat once along with me. So what are the things, what are the products which you should not be engaged in making supplies if you want to enjoy that enhanced threshold limit of 40? Number 1, ice cream and other edible ice, pan masala, tobacco products, fly ash bricks, fly ash blocks and fly ash aggregates, building bricks and earthen or roofing tiles. And one more thing, bricks of fossil mills and other siliceous earth. So if you are engaged in making supplies of any of the 7 products, then you can't enjoy that enhanced threshold limit of 40. And this point anyhow you have covered. If you are making supplies from UP Mats or MMNT, anyhow your threshold limit will get reduced. And also if you are making any interstate supplies, this you need not separately remember. Why? Because if you are making interstate supply, anyhow you will become liable for compulsory registration. So if you are liable for compulsory registration, no limit will be checked. And even you have opted for voluntary registration. See, some people will be there who will be overexcited. Even though they are not liable for registration, they voluntarily come forward and make an application for registration. If you are voluntarily coming forward and applying for registration, why the limit will be applicable for you? Why we will check the limit for you? We will not check it. No. So these are the exceptions actually. So if you come back here once again, so in case if you are not making supply from MMNT, if you are not making taxable supply from UPMATs, you are exclusively engaged in supply of goods, you can enjoy the threshold limit of 40, but there are some exceptions. In some cases, you can't enjoy that enhanced threshold limit of 40. Only 20 lakh rupees of limit will become applicable. Even I have explained you what are that circumstances where 40 lakh rupees of limit will not become applicable. Understood? Clear and comfortable, everybody? Now, so one more thing here, one more small thing which is important here. Sir, if I am exclusively engaged in supply of goods, then only I can enjoy the threshold limit of 40, no? But one service you can provide. One service you can provide, still you will be considered to be exclusively engaged in supply of goods only. So you told, sir, if I am exclusively engaged in this supply of goods, then only I can enjoy that enhanced threshold limit of 40. That means if I am making supply of services, if I am making supply of any service, I become ineligible for 40 lakh rupees of threshold limit. No. Yes. But one exception. That means one service you can provide, still you can enjoy that enhanced threshold limit of 40 along with goods. So what is that service which is permitted? It is permitted for you to provide the services of giving money as loans or advances or deposits for which you are receiving interest. This service you can provide. That means, let us say, for example, I'm a business person. I'm only dealing in supply of goods. I have some excess money. This excess money I have kept it, I have given it as a loan, or I have kept it as a deposit in the bank for which I will receive interest or discount. Like if you remember the previous session, I have told that even though money is excluded from definition of goods and services, but activities relating to use of money for which a separate consideration is charged, that will be considered as supply of service. So if I keep my money in the bank account or if I give it as a loan, I will receive interest. So that means I'm getting a separate consideration for giving money for use. I'm engaged in supply of services. If I'm engaged in supply of services, I should not be eligible for enhanced threshold limit of 40. But here they have given relaxation. Even if you are providing this kind of service along with the goods, if you are providing this service, which is service giving money as use for which you are receiving interest or deposit, we will still treat you as the person exclusively engaged in supply of goods only. You can still enjoy that applicable threshold limit of 40 lakh rupees. You can still enjoy that applicable threshold limit of 40 lakh rupees. Clear? So these are all the various intricacies associated with the applicable threshold limit and the aggregate turnover. Clear? So this is what regarding section number 22 subsection 1, when a person will become liable for registration. Clear? So I have explained what is aggregate turnover. I have explained what is the applicable threshold limit and where you are required to obtain registration in every state or union territory. From wherever you are making a taxable supply, in all that states and union territories, you are required to apply for registration. Understood? Now, this is what regarding 22 subsection 1. Now let us come to other cases where a person will become liable for registration. Under section number 22, we have 22 subsection 3, 22 subsection 2, 22 subsection 3 and 22 subsection 4. They are telling some other cases where a person will become liable for registration. Let us see what are that other cases. Number 1 case, if your aggregate turnover exceeds the applicable threshold limit. So there are other cases also where a person will become liable for registration. Sir, what are that other cases? If you come to 22 subsection 2, they say that if you are a person who is already registered or if you are a person who is already holding a license under an existing law, that means before this GST Act came into picture, I told you already that there used to be various kinds of indirect tax laws. If you are already registered under, at the time when GST has come into picture, if you are already registered under, let us say, excise duty, if you are already registered under state VAT, if you are already registered under service tax, then no limit, nothing will be seen for you. Now, from that appointed day, that is with effect from 1st of July 2017, no limit, nothing will be checked for you. You have to become automatically registered under GST Act. So that's what they say. If you're already registered or if you're already holding a license under an existing law, you shall be liable to be registered under this act with effect from the appointed day. What is appointed day? With effect from 1st of July 2017, you become liable for registration under GST automatically if you're already registered or licensed under earlier tax laws. Next. One more thing, on transfer of business, either because of succession, ownership, change or death of a sole proprietor as a going concern by a registered person. Let us say, for example, there is a person who is registered. Now his business is getting transferred either he's selling his business, or he's transferring his business, or that business is getting succeeded by his legal hires, or he's a sole proprietor, he expired, his business is getting taken over by his legal representative. So in case of all of these reasons, in case of transfer of business of a registered person, so now whenever he is transferring the business to a new person, now new person, that whoever is transferee is there, he is required to take a separate registration. He is required to apply for registration mandatorily. If a registered person is transferring his business, the transferee is required to take compulsory registration. Now the transferee cannot say, now I will wait till my aggregate turnover exceeds the applicable threshold limit. No. Why? Because you are taking the business as a going concern of another registered person. No. So as a transferee, you become liable for compulsory registration. And one more case also they say here, 22 subsection 4, where they say that in case if the business is getting transferred because of reason of amalgamation or demerger. Let us say, for example, there are two companies X and Y, both are getting amalgamated into XY Limited. Or let us say there is a company AB Limited, it is getting demerged into A Limited and B Limited. Now in case of amalgamation and demerger, so that old companies will be no longer existing. No, they take up new structure, right? In case of amalgamation, the newly amalgamated company is altogether a new company which is different from the previous companies. Even in the case of demerger also, these are newly incorporated companies. That means old company is no longer there. So in case of amalgamation or demerger on account of order of court or tribunal, transferee, that means this resulting companies or this amalgamated companies, they must register. They have to become liable for compulsory registration with effect from date of issue of ROC certificate of incorporation. So incorporating this amalgamated company or incorporating this demerged companies, resulting companies, sorry, the ROC will give certificate of incorporation, no, with effect from the date of that incorporation. They have to get themselves registered. They are liable for registration. That means with effect from the date of ROC certificate of incorporation, within 30 days, they have to submit an application for registration. All that formalities are required to be fulfilled. Understood? Right. So this is what regarding section number 22. So usual cases where a person will become liable for registration. 22 subsection 1 says when your aggregate turnover exceeds the applicable threshold limit. 22 subsection 2 says if you are already registered under existing indirect tax laws. 22 subsection 3 says in case of transfer of business, and 22 subsection 4 says in case of amalgamation or demerger. Right. So this is what regarding section number 22. Now we will go ahead and try to revise section number 24. Sir, what is section number 24, sir? Section number 24 is talking about those circumstances where a person will be liable for compulsory registration. Section number 24 will talk about those circumstances where a person will become liable for compulsory registration. Sir, what do you mean by compulsory registration? Compulsory registration means your turnover, what is your aggregate turnover, whether applicable threshold limit is exceeded or not, all that will not be verified. All that will not be checked. The moment you are falling under section number 24, irrespective of how much turnover you have made, whether your turnover has exceeded the applicable threshold limit or not, that things will not be checked. You become liable for compulsory registration. Sir, which kind of people are they who will become liable for compulsory registration without checking any turnover limits? So the list is given here. If you see, number 1, if you are a person making any interstate taxable supply. So if you are making only intrastate supplies, you can enjoy the threshold limit. If you are making intrastate within the state, within the union territory, if you are making the taxable supplies, then you can enjoy the threshold limit of 10, 20, 40, whatever it is. We have seen it under 22(1). But in case if you are making any interstate taxable supply, so let us say, for example, I'm a person in Andhra Pradesh. I have made a supply to a person located in Tamil Nadu. I made a interstate supply. The moment I made a interstate supply, I become liable for compulsory registration. If I'm making any interstate taxable supply, not exempt guys, if you're making any interstate taxable supply, then you become liable for compulsory registration. But however, two exceptions are there. Even though if I'm a person, if I'm making a interstate taxable supply as per section number 24, I become liable for compulsory registration. But in two cases, they have given the relaxation. What are the two cases where they have given the relaxation? So first point, so if you come here, if you are a person making interstate supply of taxable services, if you are a person making interstate taxable supply of services, then the government told, okay, you are making supply of services, no, service sector is very much booming, no, it is quite not possible for you to make only intrastate supplies. Definitely in case of services, since the services are intangible, you will sit in one state and you will provide the services to another person in another state. Now, if I say if you are making interstate taxable supply, you become liable for compulsory registration. This will discourage the people from providing services. So that's why what they have told, okay, we'll do one thing. So actual rule is if you are making an interstate taxable supply, you become liable for registration. But we will give you one relaxation. What is that relaxation? If you are a person making supply of services, and if you are making interstate taxable supply of services also, still we will not make you liable for compulsory registration. We will give you that threshold limit of 10 or 20. You enjoy the threshold limit of 10 or 20, we will not make you liable for compulsory registration. So that is the first exception. So if you are making interstate supply of services, only for services, my dear students, if you are making interstate supply of services up to 20 lakh rupees or 10 lakh rupees, you are not required to undergo compulsory registration. One more relaxation also they have given. So let us say, for example, I'm a person dealing in goods. If I make interstate supply, I become liable for compulsory registration or not? The relaxation, whatever I have told you, that relaxation is only for services. But in case if I'm making interstate supply of goods, I become liable for compulsory registration or not? Practically, yes. But one category of interstate supply of goods, they have given a relaxation. What is that relaxation is? If you are a person making interstate taxable supply of certain notified goods, which goods, sir? Notified handicraft goods or notified products made by craftsmen predominantly by hand. If you are a person who is making interstate supply of notified handcraft products or notified handmade goods which are predominantly made by hand, then also we will let you enjoy the threshold limit of 20 or 10. Then also we will let you enjoy the threshold limit of 20 or 10. We will not make it compulsory for you to take the compulsory registration. So that is also in goods only for notified handicraft products and notified handmade goods. Only for these two products only they have given relaxation. If you are making interstate supply of notified handicraft goods or notified handmade goods which are predominantly made by hand, then also you can enjoy the threshold limit of 20 or 10. However, these people who are making interstate supply of notified handicraft goods or notified handmade products, they are required to fulfill some conditions. Sir, what are that conditions? Their aggregate value of turnover should not exceed 20 lakh rupees or 10 lakh rupees. And also, these people must have a PAN and they must generate an e-way bill. That is a condition. They must have a PAN and they must generate the e-way bill. Understood? So we are done with one category of person who is liable for compulsory registration and two exceptions for that. Thereafter, one more category of persons who are liable for compulsory registration is CTP. CTP making a taxable supply. If you are a casual taxable person, sir, what is a casual taxable person? I am a person who actually having a place of business in another state. I am coming to some other state where I don't have any fixed place of business. Some expo, some exhibition, something like that is happening there for 5 days, 10 days, 15 days, something like that. An expo or exhibition is happening. I want to come and participate in that expo or exhibition, and I want to make the supply there in that exhibition in another state where I don't have any fixed place of business. So those kind of people we call them as CTP, casual taxable person. Let us say I'm a person in Andhra Pradesh. I have my place of business and all in Andhra Pradesh. I came to know that I'm dealing in electronics. I came to know that in Karnataka, in Bangalore, there is one electronics expo happening. I want to go and participate in that expo and I want to sell some products in my expo. So now for the Karnataka state, I become a CTP. Now, if I become a CTP for the Karnataka state government will not check what is my aggregate turnover, whether I have made aggregate turnover exceeding 10 lakh, 20 lakh, 40 lakhs. They will not check any such limit. The moment if I am becoming a CTP for them, they will ask me to take the compulsory registration and I have to take it. I must take it. So that is the second category of person who is liable for compulsory registration, CTP, making taxable supply. However, here also they have given one exception. Sir, what is that one exception? If you are a person who is a CTP, you are making interstate supplies. You are going to another state and making interstate supply. But if you are a CTP, if you are making interstate taxable supply of certain notified goods, which notified goods? Notified handicraft goods and notified products which are predominantly made by hand. So then also the government has given you relaxation. Okay, boss, you are a CTP, but you are making a interstate supply of notified handicraft goods or notified handmade goods, then also will not let you liable for compulsory registration. Here also you enjoy the threshold limit of 20 or 10. Here also you must have a PAN and you must have generated an e-way bill. If you fulfill these conditions, even though you are a CTP, will give you relaxation. Okay, so second category of persons who is liable for compulsory registration is CTP, and also we have seen related exception. Now, third category of persons who are liable for compulsory registration is if you are a person who is required to pay tax under reverse charge. Under RCM, if you are required to pay GST, then you will be liable for compulsory registration. Under RCM, if you are liable to pay GST, then you are liable to compulsory registration irrespective of your turnover. Like as I was saying, let us say, for example, there are various services on which services we will be liable to pay RCM, that we will cover it in the charge of GST chapter. But I will give you one example, one reference I will give you so that you will get the clarity. Let us say there is an advocate. There is an advocate. So this advocate is providing legal services to a business entity. Legal services to a business entity. Now, this service is one such service which has been notified under RCM. Who is supplier? Advocate is a supplier. Who is recipient? This business entity is a recipient. Now, as per the notification, this service is under RCM. Now, let us say, for example, for providing this legal services, he has charged some 1 lakh rupee. Now, on this service, the recipient is required to pay the GST under RCM. So he is required to pay that 18% of GST, that is 18,000 rupees of GST is required to pay to the government under RCM. Now, since this recipient is receiving such services on which he is required to pay GST under RCM, he is required to undergo compulsory registration. This recipient is required to undergo compulsory registration. Very simple here. If you have the obligation to pay the amount of GST, if you are not registered, how you will make the payment? Not possible, no? So that's why what they have told is, if a recipient is required to pay the tax under reverse charge mechanism, then no turnover, nothing will be seen for him. He has to undergo compulsory registration. Compulsorily have to register and make the payment under RCM. Here also one exception is there, one relaxation is there. That relaxation has been given to the suppliers. That relaxation has been given to the suppliers. If you are a supplier, if you are making only such outward supplies and all your outward supplies are covered under RCM. If you are a supplier, if you are making outward supply of services, if all your services are getting covered under RCM, if you are such a supplier, whatever services you are providing, whatever outward supplies you are making, not just services, whatever outward supplies you are making, if all your outward supplies are covered under RCM, on all your outward supplies, your recipients only will pay the amount of GST. You don't have even a single supply which is taxable under forward charge mechanism. You don't have a single supply which is taxable under forward charge mechanism. Then what is the purpose of this person to take the registration? Even though his aggregate turnover has exceeded the applicable threshold limit, will there be any purpose if he takes the registration? No purpose. Why? Because you are such a supplier, you are making only such kind of outward supplies where all such outward supplies are covered under RCM. On all your outward supplies, your recipients will anyhow pay the amount of GST. You don't have any obligation to pay the amount of GST only. So then this supplier is also exempted from taking registration. He is not required to take registration even if his aggregate turnover exceeds the applicable threshold limit. Able to understand? So RCM, in case of RCM, on recipient, they have put the responsibility of compulsory registration. But for exemption, they are thinking from the supplier's perspective. If you are a supplier, making outward supplies and all your outward supplies are covered under reverse charge mechanism. On all your outward supplies, your recipient only will make the payment of GST. As a supplier, you don't have a single outward supply on which you are required to collect the GST from your recipient and make the payment to the government. If you are such a supplier, you have been granted relaxation from registration. Even though your aggregate turnover exceeds the applicable threshold limit, you are not liable for registration. Understood? So that's what they try to say it here. So this is 23. This is the exception which I have already covered it. So this one, persons making only reverse charge supplies. If you are a supplier, you are making supply exclusively supplying goods or services where tax is payable by your recipients under 9 subsection 3, then you are exempted from registration. Okay, right. Coming to the next few things here. One more category of persons who is liable for compulsory registration is NRTP. If you are an NRTP, you are also liable for compulsory registration. Sir, now who is this NRTP, sir? Same like CTP only, but in case of NRTP, he is a person from outside of India. He's a non-resident. So a person from outside of India who doesn't have fixed place of business in India, he came to India for making some supply. So he will become NRTP. Like let us say, for example, these IPL players. IPL matches are going now. So for this IPL, the people from these players from outside of India will come and participate and play in that IPL match for this 1 month, 2 month and all. So these IPL players, do they have any fixed place of business in India? No. Temporarily they are coming, non-residents, temporarily they are coming to India and they perform some services and they will go back. They will fall under NRTP. They will fall under NRTP. So these kind of NRTPs are also liable for compulsory registration. Then e-commerce operator. Today, in each and every aspect of our life, which has become the part and parcel of our life, is e-commerce business. So now e-commerce operators are also liable for compulsory registration. And two kinds of e-commerce operators they have told. Number one, e-commerce operator who is required to collect TCS under section 52. liable for compulsory registration. And e-commerce operator who is required to pay the GST under 9 subsection 5. What are this? This we are going to cover it in the subsequent chapters. Just I will tell you here which kind of e-commerce operators are liable for compulsory registration. But whatever section references I am giving here, those section references we will see it in our subsequent chapters. So what they have told, which kind of e-commerce operators are liable for compulsory registration? Every e-commerce operator who is required to collect TCS under section number 52, liable for compulsory registration. And every e-commerce operator who is required to pay the GST under 9 subsection 5, then also they are required to undergo compulsory registration. Not just that, even they have told one more thing. So let us say if you are an e-commerce operator who is required to collect TCS under section number 52, you are liable for compulsory registration. The supplier, whoever is making supply of goods or services through you, if there is any supplier who is making the supply of goods or services through the e-commerce operator who is required to collect TCS under section number 52, even that supplier is also liable for compulsory registration. E-commerce operator anyhow liable for compulsory registration. But if you are a supplier of goods or services who is making supply of services or goods through the e-commerce operator who is required to collect TCS under section number 52, even these suppliers are also liable for compulsory registration. But however, for these suppliers in the recent times, the government has given relaxation. So what relaxation they have given is, for normal suppliers, whatever exceptions they are giving, the same exceptions they have given it to them as well. So what are that normal exceptions given to suppliers? If you are a person making supply of services, whether interstate or intrastate, you can enjoy the threshold limit of the 20 or 10. Initially, they told if you are a supplier making supply of goods or services through the e-commerce operator who is required to collect TCS under section number 52, you are liable for compulsory registration. That's what they have told initially. But thereafter, they have given some exceptions. To the suppliers, they have given exceptions. What exceptions? Whatever exceptions they are giving to normal suppliers, they have given exceptions for those suppliers who are providing goods or services through e-commerce operator also. Like if you are a person making supply of services, so if you come to the E and F point here, if you are a person making supply of services through an e-commerce operator, you are not liable for compulsory registration. You can enjoy the threshold limit of 20 or 10. Whether you are making interstate supplies or intrastate supplies, you can enjoy the threshold limit of 20 or 10. Similarly, if you are a person making supply of goods, but you should be making only intrastate supply of the goods. Why? Because if you are a normal supplier, if you make any interstate supply, you become liable for compulsory registration, no? So even if you are a supplier making supply of goods through the e-commerce operator, okay, you are not liable for compulsory registration. You can enjoy the threshold limit of 40, 20, 10. If you're a person exclusively engaged in supply of goods, you can enjoy the threshold limit of 40, 20 or 10. But the condition is you should not make any interstate supplies. You can make only intrastate supplies. Why? Because anyhow, if you are a person making interstate supply, you become liable for compulsory registration under another point of section number 24. The same thing they are trying to say it here. Clear? So I will come back to this point later. I will come back to this e-commerce related discussion later. But for the time being now, I just want you to remember, because e-commerce related discussion, it is going to come around various places. In charge of GST, we will try to cover what is 9 subsection 5. In TDS TCS chapter, we are going to cover section number 52. We'll try to come back to this. But for the time being now, what is it you have to remember? E-commerce operator who is liable for registration, compulsory registration. E-commerce operator who is required to collect TCS under section number 52. E-commerce operator who is required to pay the GST under 9 subsection 5. Not just that, any suppliers who are making supply of goods or services through such e-commerce operators who is required to collect TCS under section number 52, those suppliers are also liable for compulsory registration. But for these suppliers, subsequently they have given relaxation. What relaxation they have given? Whatever relaxations which are available for normal suppliers, the same relaxations they have given even for suppliers making supply of goods or services through the e-commerce operator also. Okay, so just much you have to remember it. So this is regarding e-commerce operator. Now going forward, next few categories of the people who are required to obtain compulsory registration is the person whoever is required to collect TCS under section number 51. If you are a person, there are some people, we will see once again in the TDS TCS chapter, there are certain category of the persons who are required to deduct TDS. So if you are a person falling under that person who is required to deduct TDS under section number 51, you are required to get separately registered, mandatory registration. And if you are an agent making a taxable supply of goods or services on behalf of another taxable person, this is very important. So what is this is, if you are a person, if you are making a taxable supply on behalf of a principal who should be a taxable person. So the agents are required to undergo compulsory registration. Simply that's what they try to say it here. But which kind of agents? You must be such an agent who should be making a taxable supply, and your principal must be a taxable person. If you are an agent making taxable supply on behalf of your taxable person, on behalf of the principal who is a taxable person, then only those agents are liable for compulsory registration. Which means, let us say, for example, you are an agent, your principal is a taxable person, but you are making an exempt supply. You are making an exempt supply. Will you be liable for compulsory registration? No. On the other hand, let us say you are an agent, you are making a taxable supply on behalf of your principal who is not a taxable person. Are you liable for compulsory registration? No. So agents will become liable for compulsory registration when two conditions are fulfilled. Number one, you should be making a taxable supply on behalf of a taxable principal. So when only both conditions are fulfilled, then only those agents will become liable for compulsory registration. Number one, they should be making a taxable supply on behalf of a taxable person. Next, few more categories of the persons who are liable for compulsory registration. So if we start seeing it here, every person who is making an OIDR service, every person whoever is supplying OIDR services from a place outside of India to a person in India other than registered person. Like for example, we have this Netflix, Amazon Prime, Google Cloud. All these are examples of OIDR services. So not important for CA Inter. These provisions will try to learn it at the CA final level. OIDR services are not as a part of CA Inter services, CA Inter syllabus. It is there as a part of our CA final. There will try to learn it. But here you have to remember, if you are a person supplying OIDR services from a place outside of India to a person in India who is not a registered person, then you are liable for compulsory registration. So this Netflix, Amazon Prime, these are all liable to compulsory registration in India. Then ISD, there is a concept called input service distributor. They are also required to undergo compulsory registration. Once again, a CA final topic, not relevant for CA inter level. Just you have to remember, like this one category of person is there who is liable for compulsory registration. And every person supplying online money gaming from a place outside of India. So if you are a person supplying services of online money gaming, then also you'll be liable for compulsory registration. Once again, relevant for CA final. Or such other persons or class of persons as may be notified by the government on the recommendations of the council. Not just the above list, the government can also notify some other class of persons, some other categories of the persons who may be liable for compulsory registration. So this is what regarding section number 24. So we are done with the two sections. Section number 22, normal liability for registration. Section number 24, compulsory registration. Along with that, a bunch of section 23 also we have covered. Like all these exceptions, whatever I have told, those people who are exempted from taking registration, these are all actually from section number 23. So what is section number 23 saying is, when a person will not become liable for registration. When a person will not become liable for registration. That means even though your aggregate turnover has exceeded the applicable threshold limit, you are not liable for registration. So who are that lucky fellows who are not liable for registration? Who are that category of persons who are exempted from taking registration? If you see here, number one, if you are a person engaged exclusively in business of supplying goods or services which are not liable to tax or wholly exempt from tax. Let us say I'm running a bar. In the bar, I'm selling only alcoholic liquor for human consumption. I'm selling alcoholic liquor for human consumption. Let us say I made 1 crore of turnover with that bar, where I am selling only alcoholic liquor for human consumption. Sir, my aggregate turnover has exceeded applicable threshold limit. Am I required to take registration? No, not required. Why? Because even if you take the registration also, you are not having any liability to pay. You are not having any liability to pay to the government. No. Why? Because all your supply is a non-taxable supply. Understood. Let us say if I am running a petrol pump, where I am selling this diesel petrol, I made, let us say, 5 crores of turnover. My aggregate turnover has exceeded the applicable threshold limit. Am I required to take registration? Not required. Why? Because even though your aggregate turnover has exceeded the applicable threshold limit, you don't have any obligation to pay the GST. No. So that's why not required to take registration. Or let us say, for example, I'm making only exempt supplies. Let us say I'm a charitable entity. I'm doing only charitable activities. So which are actually an exempt supply. Or let us say, for example, I'm running a school. See, school activities are exempted up to secondary higher education. It is exempted. So I'm running a school in which I have made 2 crores of turnover. So your aggregate turnover has exceeded 2 crore rupees. Are you liable for registration? Not required. Why? Because you don't have any obligation to pay to the government, because whatever services you are offering, that is exempted. You don't have any obligation to pay. What is the purpose of taking registration? So that's what they say here. if you are a person, even if your aggregate turnover has exceeded the applicable threshold limit, but if you are exclusively engaged in supplying goods or services which are either not liable to tax or which are wholly exempt from tax, then you are not liable to take any registration. Similarly, even an agriculturist, even they have given relaxation for agriculturist also, to the extent of supply of produce out of cultivation of land. If you are an agriculturist and if you are making supply out of cultivation of land, from doing cultivation, you will get, you from doing cultivation of land, you will get the agricultural produce. No, you are making supply of only that agricultural produce, and you are an agriculturist. No need to take any registration because all that is exempted. So that's what they say here. First of all, who is agriculturist? We have to understand who is agriculturist. So agriculturist status can be given only to individual or HUF. Agriculturist status has been given only for individual or HUF. Let us say, for example, a group of people have come forward, created a partnership firm, and in the name of the partnership firm, they are carrying out the agricultural activity. Can they be exempted from registration? Absolutely not. Why? Because as per the GST, agriculturist status can be acquired only by individual or HUF. And who is taking the cultivation of land either by using their own labor or by using their family's labor or by appointing some servants or hired labor under your personal supervision or supervision of your family members. So the only they can enjoy the status of agriculturist. And also till the time they are doing cultivation of land, till the time they are making supply of produce out of cultivation of land, then only they can enjoy the exemption. Let us say, for example, there is a farmer who is selling the agricultural produce. Along with that, he is also running a rice mill, and rice also he is selling. Rice is not an agricultural produce. Rice is not an agricultural produce. Paddy is an agricultural produce, but rice is not. So if he is selling rice, then he will be liable for registration. Why? Because an agriculturist is exempted from taking registration only to the extent of supply out of cultivation of land. If you are making any other supply other than cultivation of land, then you can't enjoy the relaxation here. You become liable for registration if your aggregate turnover exceeds the applicable threshold limit. Clear? Then whatever is there in 23 subsection 2, that all I have already covered along with section number 24, compulsory registration. So but whatever it is, these are the specifically, if I have to say two things here, if you are a person exclusively engaged in making wholly exempt supply or non-taxable supply, or if you are an agriculturist making supply out of cultivation of land, then you are exempted from taking registration. Understood. So we have covered section number 22, 23, 24, all the three sections we have covered. Now we will talk about collectively section number 25, 26, 27, where procedural formalities will be there. In all the procedural formalities, I will try to tell you a few important things here. Okay. First of all, sir, within what time limit I have to apply for registration? Within what time limit? Let us say if I become liable for registration, either under section number 22 or under section number 24, if I become liable for compulsory registration, you are saying that I have to get myself registered. But I have to submit an application. No, what is the time limit within which I am required to submit an application for registration? So they say that if you are a person liable for registration under section number 22 or 24, then where I am required to get myself registered, in every state or union territory, wherever you are making a taxable supply, there you have to submit an application. Within how many days, sir? Within 30 days from the date on which he becomes liable for registration. Within whatever date you become liable for registration, within 30 days, you have to submit an application for registration. Okay. In case if it is a CTP or NRTP, then also he is required to submit an application for registration in every state or union territory from wherever he is making taxable supply. But for CTP or NRTP, it is not within 30 days. You have to submit an application for registration even 5 days prior to commencement of business. At least 5 days prior to the commencement of business. So for a normal person liable for registration under 22-24, in every state or union territory from wherever you are making a taxable supply, you have to submit an application for registration. What is the time limit, sir? Within 30 days from the date you become liable for registration. But if you are a CTP or NRTP, the time limit of 30 days will not be given to you. Even 5 days prior to the commencement of your business itself, you have to submit an application for registration. Now you might get it out, sir. Sometimes the person may be making a supply from territorial waters. No, let us say, for example, I hope you are able to remember the territorial waters. I told you definition of India. Territorial waters means up to 12 nautical miles. So let us say this is India. Here we have Goa. See, in Goa, you will be very often able to find these casinos. But those casinos will not be there on land. They will be in the territorial waters. So in the territorial waters, there will be a cruise ship. In that cruise ship, they will run that casinos. So these people is running a casino. Let us say, for example, we have this thing called Big Daddy, Casino Royal. So like that, some popular casinos are there. So there is some Big Daddy casino which is operating in the territorial waters up to 10 within 10 nautical miles. They are operating in the water. They will run these casinos. Their aggregate turnover has exceeded the applicable threshold limit. they are liable for registration. They have to submit an application for registration. Sir, with which state or union territory they will submit an application, sir? GST registration is state-wise. So you have to submit an application for registration. Sir, with which state or union territory they have to submit an application for registration? The act says the nearest coastal line. From the coastal line, whatever is the nearest state or union territory, with that state or union territory, they have to submit an application for registration. Let us say for this casino, the nearest coastal state is Goa. Nearest coastal state is Goa. So they have to submit an application for registration with the Goa state government within 30 days of becoming liable for registration. Clear? So that is what this point, person making supply from territorial waters in coastal state or where they have to submit an application for registration in such a coastal state or union territory where the nearest point of appropriate baseline is located. And here also within 30 days, usual time limit will become applicable. Then state-wise registration, all this discussion I have already explained it. Generally, if you remember that supply related discussion, there itself I have told, if you're having multiple places of business in same state, you can operate them under single registration. If you want, even you can get separate registration also. And in case of multiple states, you have to get yourself registered in all the states or union territories. So like that, all this discussion we have already had it, and it is just a repetition. And if at all you are not liable for registration, but voluntarily you are coming forward and getting yourself registered, government will be very happy. They will grant you the voluntary registration also. Distinct persons or establishment of distinct persons. This also we have already covered it in the supply chapter itself. Who are distinct persons? What are establishments of distinct person? I have covered it in supply chapter itself. And one of the most important thing, PAN is very much essential. PAN is compulsory for obtaining GST registration, but one exception, NRTP need not have a PAN. For NRTP, even without PAN also, by submitting other documents, they can grant him registration. And there is one more small concept called UIN. Sir, what is this UIN? So UIN is a special kind of registration. See, for some people, who are that some people? United Nations organizations, multilateral financial institutions and organizations which are notified under UN, and foreign consulates, embassies of foreign countries, or any other persons notified by commissioner. They are required to obtain something called UIN, not GSTIN. They are required to obtain something called UIN. Who, sir? These people. Who are that people? United Nations organizations, multilateral financial institutions, foreign embassies, foreign consulates. These people also will submit an application, but not for application of GSTIN, but for getting one registration number called UIN. Sir, what is the purpose of this UIN, sir? What is this is? Let us say, for example, US Embassy in India is there. They provide various outward supplies. See, all their outward supplies are exempted. In exemption chapter, we will see whatever services which are provided by the foreign embassies, foreign consulates and all, their outward services are exempt. And they will buy inward services. Inward supplies will be there. On their inward supplies, they might have already paid the GST. These US embassies or United Nations multilateral financial organizations who are having their place in India, their outward supplies are exempt. But they will receive various inputs or input services for running their operations. On all that, they might have paid the GST. But they will not be able to use it. Why? Because they don't have any output tax liability only. Their outward services are exempted. But they will have paid their GST on all their inward supplies. No. So now what this US embassies or this United Nations organizations they can do is they will get a registration with they will apply for one registration and they will get one unique number called UIN. Now using that UIN, they can file one return and they can claim the refund of all the taxes, whatever they have paid on their inward supplies. So for claiming a refund of GST, whatever they have paid on their inward supplies, these organizations will obtain one separate registration called UIN. Okay, so this much you remember. And this UIN is not state-wise registration. This UIN is a centralized UIN. So if you obtain registration at one place, it will be applicable all over India. Like GSTN, you need not have separate state-wise registration. Only one centralized UIN you will have. Next. Suo motu registration. Sometimes what will happen is you are liable for registration, but you are not obtaining registration. PO has come for inquiry, inspection, survey, and he found out that even though you are liable for registration, you have not taken the registration, then he will grant you temporary registration. Now, on granting the temporary registration, as a business person, what you should do is either you should submit an application for registration within 90 days. He came for survey, inspection and all. He granted you temporary registration. Now, in response, what you should do? Within 90 days, you either have to submit an application for registration. Or if you want to challenge, you are feeling that no, you are not liable for registration, that person is wrong, you go for an appeal. So either of this thing you have to do. Either you apply for registration within 90 days or submit an appeal. Now, in appeal also, if you lost, if you have gone for appeal, even if that appellate authority has also decided that no, you are liable for registration, then you don't have any other option. Within 30 days from the date of order of that appellate authority, you have to submit an application for registration. Okay, next. Sir, what is the procedure for registration and all? Here I have told you this procedure already. I have presented it in the form of the chart. This you can refer to it. So just a procedural formality, like you have to fill two parts, GST REG01 part A, part B, and all you have to fill. So this all procedural formality already I have put it in the form of the chart. This you can refer to it. Now this is where the procedural registrations will come here. So this part 2 I will explain. So once you submitted an application for registration, verification should happen. So how the verification will happen? So once it will be forwarded to PO. Now PO, if he finds that everything is in order, PO, if he finds that if you have submitted all your information in a correct manner in your application, if he found that everything is in order, he will grant you registration certificate. Sir, within what time limit he will grant me registration certificate? If you are a good fellow, if you have successfully done the Aadhaar authentication, within 7 working days only you will get the registration certificate. Within 7 working days you will get the registration certificate if you have successfully done the Aadhaar authentication. On the other hand, if you have not opted for Aadhaar authentication, or if you have opted but you did not successfully undergo for the Aadhaar authentication, or PO on the basis of risk parameters he finds necessary to carry out the site verification, in those cases, department can take their own sweet time. They can grant you the registration certificate within 30 days. If you are non-risky case, you have successfully done the Aadhaar authentication, within 7 working days of submitting the application, you will get the registration certificate. But in case if you have not opted for Aadhaar authentication, or if you have not successfully done the Aadhaar authentication, or PO deems it fit necessary to carry out your site verification, then the department can take 30 days of time for granting you the registration certificate. On the other hand, if your document is not in order, if your application is not in order, that means you did not submit some correct details, then what will happen is, then PO will issue notice electronically. First he will issue the notice. Sir, within how many days he can issue the notice? Same. If you have done successfully Aadhaar authentication and all, within 7 working days he can give the notice. If you have not done the Aadhaar authentication, then he can issue the notice within 30 days also. Within 30 days he can issue the notice. But if you have successfully done the Aadhaar authentication, within 7 days only he will give you the notice. Whatever it is, either within 7 days or 30 days, once you get the notice, you have to reply. Within 7 working days, you have to reply back. If you are not replying within 7 working days, directly he will reject your application for registration. If you have replied it within 7 days, now PO will check whether your reply is satisfactory. If he is satisfied with the reply, or if he is not satisfied with the reply, you have given reply within 7 days, but PO is not satisfied with the reply, then also he will reject your application. But if you have submitted the reply, if he is satisfied with your reply, then the PO will grant the registration certificate within 7 working days. Able to understand? Clear and comfortable? So this tentative timelines you have to remember. That's all. So this is this thing regarding procedural formality we will try to cover. Remaining we have discussion regarding Aadhaar authentication and all. Just you can have a quick look at it. What is Aadhaar authentication and all? You can have a quick look at it. Not that important from the examination perspective. So that's why I'm proceeding ahead with the important concepts here. Now what will happen? You will get the registration certificate. Generally within 3 days after the grant of registration, you will get it, and you will get one GSTIN number. You will get a GSTIN number which will contain PAN. Mainly it will be PAN, and state code will be there. You will have entity code and checksum character will be there. And whatever your registration certificate they have given, that has to be displayed. Sir, where I have to display it? That will be displayed on the common portal, and that GSTIN you have to mention on your GSTIN you have to mention at your principal place of business and also at your additional place of business. Even on the name board also you have to mention it. Now the most important part here is effective date of registration. Sir, what will be the effective date of registration? This is very important because it will have a connection with various other chapters. So let us have connection. This is going to have connection with other chapters. Let us try to understand what is the effective date of registration. So I told you that within 30 days you are liable to, you are required to submit an application. No, let us say for example, I became liable for registration on 5th of January. I submitted an application for registration on 30th of January. I became liable for registration on 5th of January. I submitted my application for registration on 30th of January. Within 30 days or not? Yes. Thereafter, your application will be verified and one fine day registration certificate will be granted. Let us say, for example, GST registration certificate was granted on, let us say, 25th of February. The registration certificate was granted. Now, what will be my effective date of registration? They say that even though you are getting your registration certificate here, your registration will be effective retrospectively. From the date whenever you become liable for registration, from that date itself, your registration will be effective. It will have a retrospective effectiveness. When if you are submitting your application within 30 days, even though you are getting your registration certificate at a later point of time, but your registration will be effective retrospectively from the date you become liable for registration. From the date itself, your registration will be effective. On the other hand, if you are not submitting the application within 30 days of your liability, let us say I become liable for registration on 5th of January. I submitted my application on 10th of February. After 30 days, I have submitted the application. Thereafter, I got my registration certificate on 25th of February. Now, your registration will be effective from the date of grant of registration certificate only. It will not have any retrospective effectiveness. So, from here itself, it will become effective. Understood? Clear? So this effective date you have to remember. The same thing I have put it here. Within 30 days from the date a person become liable for registration, if you are submitting an application, then on whatever date you become liable for registration, from that retrospectively your registration will be effective. If you are submitting your application after 30 days from the date you are becoming liable for registration, then the date of grant of registration certificate will become the effective date of registration. Understood? Next. Then comes the next part. In case of CTP, NRTP, there is a separate registration requirement applicable. I have already explained what is CTP, what is NRTP and all. Now, what is the special procedure for registration of CTP and NRTP is they have to, one point we already know, one special point we already know. Here, the department will not wait for you to submit the application within 30 days. Even 5 days prior to the commencement of your business only, you are required to submit an application for registration. This is already, we know it. Even 5 days prior to the commencement of business, you have to submit your registration. And one more important point here is you have to make an advance deposit of tax. CTP and NRTP, 5 days prior to your application, 5 days prior to your commencement of business, you have to submit your application for registration. But not just that, even you have to make an advance deposit of tax. For whatever duration you are going to run your business, for that duration, what will be your estimated tax liability? That estimated tax liability you have to calculate, and even you have to make the advance deposit of the tax. Very important here. So if you see, while submitting the registration application, CTP and NRTP must make an advance deposit of tax of their estimated tax liability. You will, when you submitted an application, a TRN will be generated. No, using that TRN, you have to make an advance deposit of tax. And once you are done with your business, you will submit your final returns and all. Now they will check. Let us say, for example, if your actual tax liability is more than your advance deposit, pay that excess amount. No, sir, my advance deposit is more than my actual tax liability. They will give it to you as refund. You can claim it as refund, no issue. Clear? So this is what regarding advance deposit. Now, one more important point is, sir, what is the period of validity? How long that registration of CTP or NRTP will be valid? So they say that CTP or NRTP registration will be valid either for the period specified in the registration application or 90 days from the effective date of registration, whichever is earlier. So either if you want registration only for 30 days, so either 30 days or maximum 90 days, whichever is earlier, 30 days. Let us say you are applying for registration, you are asking for registration for 120 days, but maximum they will give you only 90 days. So 90 days. So either period specified in the registration application or 90 days from the effective date of registration. But however, in case if you are, let us say initially you have taken 90 days of registration, but thereafter you want to extend that registration of CTP or NRTP. Can you do it? Yes, you can do it. You can make an application, and even when at the time of making an application for extension, at that time also for that extended period, you have to calculate your estimated tax liability, and that estimated tax liability, once again you have to make an advance deposit. Once again, you have to make an advance deposit. So that's what they say it here. 90 days maximum. First, in the first application, they will give you 90 days, but that can be extended further by period, not exceeding further 90 days by making an application before end of the validity of the registration. So first you have got 90 days before expiry of that period. If you feel that no, I want my extension, I want registration to be extended for a few more days, you can make an application for extension. For further 90 days, they can give an extension. But once again, you have to make for that extended period advance deposit of tax. If you do that, then only they will extend it. Next, deemed registration. If you are registered under SGST Act, you will be automatically registered under CGST Act also. No need to make a separate application with the central government. Or if your registration is rejected under SGST Act, your application will be automatically rejected under CGST Act also. Next. This is regarding TDS provisions. Even the person who is required to collect TCS and even the person who is required to deduct TDS, they are also required to get registration, but they have a special registration for them. Within 3 working days only, the registration certificate will be granted. So this you remember, TDS with 3 working days only they will get the registration, not like usual 7 days and all. But who is this TDS deductor? Who is this TCS collector? We have a dedicated chapter talking about it. So this is what regarding procedure for registration. So 22, 23, 24, 25, 26, 27 till here we are done. Now we will come to section number 28. Sir, I have made an application for registration. I have got my registration certificate also. I've got my registration certificate also, but I want to amend my details in the registration certificate. I got my registration certificate. No, in my registration certificate, some details I want to amend. So what is the procedure I have to follow for amendment of registration? Now, when you want to amend the details in your registration certificate, we will identify the fields, whatever details are there in your registration certificate, that we will bifurcate into 2 categories: core fields, non-core fields. Whatever details which are there in your registration certificate which you want to amend, that we will bifurcate into 2 categories, either core fields or non-core fields. See, if it is a core field, the procedure is lengthy. For amending that core fields, you need permission, you need approval of proper officer and all. But in case if you want to amend your non-core fields, nothing, no approval, nothing is required. Just you submit an application, automatically it will be amended. For core fields, you need an amendment, you need approval of the PO and all. But for non-core fields, approval of PO, nothing is required. Just you submit an application, automatically the details will be amended. But you will get it out, sir, what is a core field? What is a non-core field? So that we have identified it here. Core fields are name of business, legal name without change in PAN. PAN should not change. If you want to change your PAN, then you can't do amendment. You have to cancel this registration. You have to apply for new registration. PAN related changes, you can't do it through amendment. If you want to change the PAN without changing the PAN, if you want to change the name, it is fine. But if you want to change the PAN, let us say for example, proprietorship is getting converted to partnership. Can I amend, sir? No, you can't amend. You have to cancel the proprietor's registration and you have to apply for fresh registration in the name of the partnership firm. So PAN changes you can't carry out through amendment. Very important point. And even addition or deletion of stakeholders, like addition of partners, addition of directors, addition of Karta, managing committee. So these additions of the stakeholders you can do, additions or deletions of the stakeholders. That is also a core field. Principal place of business, additional place of business. That is also a core field, provided they are within the same state. If you are changing your address of either principal place of business or additional place of business within the same state, you can do amendment. If you want to update your principal place of business or additional place of business to another state, there also you can't do amendment. You have to take a fresh registration in the new state. Okay, so these are core fields: name of the business, details of the stakeholders, principal place of business, additional place of business. There are some non-core fields. What are non-core fields? All other fields like name of day-to-day functionaries, email IDs, mobile numbers, all this will form part of non-core fields. Now, what is the procedure for amendment, sir? Very simple. As I've told, if it is a non-core area, just you have to go to the GST portal. You have to submit an application for amendment of non-core fields. Automatically, the registration certificate will get amended. No approval, nothing will be required. On the other hand, if it is a core area, there is one procedure. What is it? You have to submit an application within 15 days of changes. Whatever that changes have happened in the core fields, within 15 days you have to submit an application. If PO is of the opinion that amendment is unwarranted or documents are incomplete, if he feels that documents are incomplete, if the answer is yes, document is incomplete or incorrect, within 15 working days of receipt of application, he will give you show cause notice. Boss, you have submitted details of amendment, but it is not looking appropriate. So he will give you first a show cause notice why your amendment application should not be rejected. So if registered person replies to the notice within 7 working days, and if the reply is satisfactory, then he will amend the certificate. If the reply is either he is not giving reply, but he is giving reply, but that reply is not satisfactory, then application for amendment will be rejected. This when you submitted an application for amendment and it is incorrect, then all this show cause notice, reply and all will happen. In case if you submitted the application, PO didn't find any mistakes, he finds that application is complete, then he will directly give the approval and the registration certificate will get amended. In case if the application is incorrect or incomplete, then only the show cause notice, all this headache will come. If you have correctly submitted the application and if you have uploaded all the supporting documents in a proper way, then no show cause notice, nothing. PO will approve it. Automatically the registration certificate will get amended. Understood? Right. So this is what regarding procedure for amendment. So now we will talk about section number 29 and section number 30, the last 2 sections from the registration chapter. Section number 29 will be talking about cancellation of registration. See, whatever registration that you have obtained, that registration can be even cancelled also. And there are 2 ways for cancellation. Either as a registered person, you voluntarily can make an application for cancellation of your registration. If you are a registered person, you yourself might want to cancel your registration. There might be a number of reasons why you might voluntarily want to cancel your registration. Might be you're discontinuing your business, might be you're transferring your business, might be you're no longer liable for registration. In those cases, either you will submit an application or PO also can initiate the action for cancelling your registration. But specifically, there are some certain circumstances where PO on suo motu basis, where proper officer on suo motu basis, he can proceed ahead to cancel your registration. So two circumstances where either you or PO can cancel registration. Then there will be other category of circumstances where proper officer on suo motu basis, he can proceed ahead to cancel your registration. Sir, when that second scenario will come, sir? When the second scenario will come is when you have done some violations. When you have done some violations, then only the PO will take that second course. That means on suo motu basis, he will cancel your registration. So let us see first circumstances. What are the circumstances where the registered person himself can make an application for cancellation? And what are that circumstances where the proper officer on suo motu basis, he can proceed ahead to cancel your registration? Let us see those circumstances first. So first I will talk about the circumstances where the registration can be cancelled either suo motu by the proper officer or on an application made by the registered person or legal heirs. In case of death of a person, their legal heirs can make an application for cancellation. These are genuine reasons where either you yourself or PO can cancel the registration. What are they? Number one, you are discontinuing your business. Number two, you are transferring your business fully for any reason, including the death of the proprietor. Or your business is getting amalgamated with other entity. Or if there is a demerger happening, or you are disposing of your business. Or if there is a change in constitution of business, like for example, proprietorship firm is getting converted to partnership firm. So now this proprietorship firm's registration has to be cancelled and partnership firm will get a new registration. And taxable person who is no longer liable to be registered under section number 22 or 24, or who intends to opt out of voluntary registration. So if you are a person, you are no longer, you decided that no, my aggregate turnover is not exceeding my applicable threshold limit, or I used to do some activities under section number 24 which made me liable for compulsory registration, but I no longer do it. So that means you are no longer liable for registration either under section number 22 or section number 24. Then you can submit an application. Or if you have taken voluntary registration, now you have realized your mistake, you want to cancel your registration, then also you can submit your application. So these are the circumstances where either the registered person himself or PO, any of them can proceed ahead and cancel the registration. Now comes the next circumstances where proper officer on suo motu basis, he will cancel the registration. So in the following cases, registration can be cancelled by the PO, including retrospective date. Even he can cancel with effect from retrospective date also, not just prospectively. Retrospective cancellation also they can do. PO on his own, he can initiate the action. When, sir? See, definitely whenever you have committed some non-compliances. After taking registration, if you have done some violations, if you have done some non-compliances, then only PO will proceed ahead to cancel your registration voluntarily. So when, sir, what are those circumstances? Number one, a registered person has contravened the prescribed provisions. There are certain provisions, not all provisions, certain provisions of the GST Act you have violated. Then PO will cancel registration. Sir, what are that prescribed contraventions which could lead the PO to proceed ahead and cancel my registration? So these are such prescribed contraventions which make a person liable for, which makes a person's registration liable to be cancelled. What are they? Number one, does not conduct any business from declared place of business. You have declared one place of business, but from that place of business you are not doing any business. Then, if he is issuing invoice or bill without supplying goods or services, that means you are doing supplies without giving invoices, then also they can cancel your registration. Violates the provisions of section 171. There is something called anti-profiteering. Section 171 talks about anti-profiteering. Not there as a part of our CA inter syllabus. But if you have violated the provisions of section 171, then also they will cancel your registration. There is one more thing, violating the provisions of Rule 10A. See, Rule 10A, we have missed it out in revision. So what is Rule 10A is furnishing of the bank account details. This I will take the opportunity to come back. This I think I have missed out. Rule 10A. Where is Rule 10A? Just 1 minute. Yeah, furnishing of bank account details. Sir, what is this Rule 10A, sir? Rule 10A says that at the time when you are submitting an application for registration, at that point of time, you need not furnish your bank account details. After you have got the registration certificate, then you can furnish the bank account details. After you get the registration certificate, then you can furnish bank account details, but there is one prescribed time limit. What is the time limit, sir? Either within 30 days of registration or before filing your GSTR1 or IFF, whichever is earlier. So if I have to put it in other way around, you will get 30 days of time after you get the registration certificate to furnish the bank account details. In case if you are not furnishing your bank account details after getting the registration certificate, that too within 30 days from the date of grant of registration certificate, then also the PO can proceed ahead and cancel your registration. So that is what Rule 10A is. So that's what they say here. One more condition where your registration can be cancelled by the suo motu by the proper officer. So if you are violating Rule 10A, not furnishing your bank account details, or if you are availing ITC, violating sections of section number 16. So going forward, we are going to take up ITC chapter. In that ITC chapter, we will see that in case if you want to claim the input tax credit, you are required to comply with some conditions. You are not complying with some conditions. Without violating the conditions of section number 16, you have taken the ITC. That means you are claiming wrong ITC. Then also PO can cancel your registration. Or furnishes details of outward supplies in GSTR1 in excess of outward supplies declared by him in your GSTR 3B. That means in your GSTR1, I will give you one example. In your GSTR1 or 1A, let us say you are declaring your outward supplies as 50 lakh rupees. But in your GSTR 3B, when actually you have to make the payment, there you are declaring your outward supply as only 30 lakh rupees. So this is also a case where you are declaring more outward supplies in your GSTR1 and you are declaring less outward supplies in your GSTR 3B. Then also PO can cancel your registration. Next, if you are violating the provisions of Rule 86B, what is this Rule 86B? This also we'll try to get to know about it in the ITC chapter. Then, if you are violating the provisions of third or fourth provision to Rule 23, if you are violating the provisions of Rule 23, then also your registration will be liable for cancellation. Or if he is not furnishing the returns. These 2 points are regarding non-furnishing of the returns. So, non-furnishing returns. When if you don't furnish the returns, your registration will be cancelled. That I will tell you one quick summary. Let us say you are a registered person and you are under regular scheme. You are under regular scheme. And if you are under regular scheme, you could be either a quarterly return filer or if you are a monthly return filer. You could be a quarterly return filer or if you are monthly return filer. If you are a monthly return filer, if you did not file your returns for 6 continuous months, if you are not filing your return for 6 continuous months, then what will happen? Your registration will be liable to be cancelled. In case if you are a quarterly return filer, if you are not filing the returns for 2 continuous quarters, if you are not filing your returns for 2 continuous quarters, then you will be liable, then your registration will be liable for cancellation. On the other hand, if you are opting for composition scheme, if you are a composition scheme dealer, if you are not filing your annual return in GSTR 4, if you are not filing your annual return beyond 3 months from the due date, then your registration will be liable to be cancelled. That's all. 3 return cases. If you are a regular registered person, if you are a monthly return filer, if you did not file returns for 6 continuous months. If you are a quarterly return filer, if you did not file your quarterly returns for 2 continuous quarters. If you are a composition dealer, if you have not filed your annual return GSTR 4 beyond 3 months from the due date. 30th of June is the due date. Beyond 3 months from the due date also, if you are not filing your annual return, your registration will be liable for cancellation. Understood? Clear? So that's what they try to say it here. So you are not filing your returns. That's what even I have tried to explain it. Whatever is there here, that itself I have tried to explain. So that is if you are doing prescribed contravention and a registered person has not filed returns for specified period. This also anyhow I have covered it. If you are a composition taxpayer, if you have not furnished your return for a financial year beyond 3 months from the due date. This also I have just now covered. And if you are voluntarily registered person, but you are not commencing the business within 6 months from the date of registration, even though you are not liable for registration, you came forward voluntarily. You told that, sir, voluntarily I want to get the registration. But after getting registration, 6 months is over, but still you are not commencing the business. Then also PO can cancel your registration on suo motu basis. Or after you got the registration certificate, if it was found that whatever registration that you have obtained, that was by means of fraud, by means of willful misstatement, or by suppressing the facts. If after you have submitted the registration, after you got the registration certificate, if the PO finds that you have obtained that registration by way of fraud, willful misstatement, or suppression of the facts, then also he can proceed for cancellation of registration. Understood? Right. Now suspension is that suspension part is not that important. I will so this procedure for cancellation and all this you can refer to it. So what will happen in case of voluntary cancellation? Just you have to submit an application within 30 days that you are cancelling your registration, and you have to furnish the details of your inputs which are in stock and what is the liability thereon, and even you have to pay if any payment is there. You are required to make the payment and all. Then after you have submitted the application, if it was found that you are no longer liable for registration, PO will issue the cancellation order within 30 days. On the other hand, if the PO on his own, if the department itself initiates the action for cancellation, first what they will do is, first they will issue show cause notice. Just like that, they will not cancel your registration. First they will give you show cause notice and they will give you opportunity of being heard, and you have to reply within 7 days. If reply is satisfactory, then PO will drop the cancellation proceedings. If Instead of giving a reply, one more thing you can do if you're not filing the returns. That's why PO has given you show cause notice for cancellation. Instead of giving a reply, you can do one thing: file all your pending returns. Within that 7 days, file all your pending returns, pay all your taxes, pay all your interest. Then PO will drop your cancellation proceedings. And if the cancellation is warranted, PO will issue the cancellation order also. Sir, what will be the effective date of cancellation? Effective date of cancellation will be mentioned in your cancellation order. Effective date of cancellation will be mentioned in your cancellation order. So that could be even retrospective date also, that will be mentioned in the cancellation order. Now amount payable on cancellation and all, not important, so this we will keep it aside. Then we'll come to the next point. Other points about cancellation, one important point I will try to tell it here. See, cancellation procedure and all will become applicable only for GSTIN. If you are a person, like you are an United Nations organization, or if you are a foreign embassy, foreign consulate, if you have obtained UIN, for UIN there is no procedure for cancellation. UIN, there is no procedure for cancellation. These cancellation proceedings, whatever I have told you here, they will become applicable only for GSTIN. For UIN, there is no cancellation procedure at all. Then one more last point from this chapter, section number 30. See, if your registration is cancelled, you can get revocation of cancellation of registration. If PO on his own motion, let us say for example, if you yourself voluntarily went and cancelled your registration, there is no option of getting it back. If you are a business person, if you voluntarily cancelled your registration, then there is no option of getting it back. But in case if the PO has cancelled the registration, if the department has cancelled the registration on suo moto basis, then they will give you one more option. We will give you one more option. You make an application for revocation of cancellation. Then they will consider it. So once again, you have to remember, if you voluntarily went ahead and cancelled the registration, there is no option of getting it back. But in case if the PO has cancelled the registration on suo moto basis, then they will give you one option, one more last option they will give you to get your registration back. That we call it as revocation of cancellation of registration. So that's what they say here. Time limits are very important here. So if you see this procedure, this much we will have to understand it. If registration was cancelled suo moto by the proper officer, then that person may apply for revocation of cancellation in the prescribed form. Within how many days? Within 90 days from the date of service of the cancellation order. You will get the cancellation order, no? From that date of cancellation order, not from effective date of cancellation. You will get the cancellation order, no? From the cancellation order. See, sometimes the cancellation order, you will get it. Let us say, for example, you are getting the cancellation order as on today. But in the cancellation order, it was mentioned that your registration has been cancelled with effect from 31st of December also. Yes, they can say it. Even they can do retrospective cancellation. So within 90 days, you can submit an application for revocation of cancellation, no? So what is that 90 days? From where you have to calculate that 90 days? From the date of order of service of cancellation order. Sorry, from the date of service of cancellation order. So from whichever date they have given the cancellation order, from that date within 90 days, you can submit an application for revocation of cancellation. However, this 90 days period of submission of application can be extended. So you have 90 days for the submission of application of revocation of cancellation, but that 90 days period can be extended. Who can extend it? By a commissioner of an by a commissioner or an officer authorized by him, not below the rank of additional or joint commissioner. Sir, how much time they can extend it for it? So they can extend it for a duration of not exceeding 180 days. So initial 90 days plus 180 days extension they can do. So maximum 270 days you will have to get your registration back. 90 days usual time limit. If you have any valid and genuine reason, you can submit an application. Then commissioner or officer not below the rank of AC or JC, they can extend that time limit by 180 days. Next. So if you submit the application, if the PO is satisfied, then he can revoke the cancellation by an order within 30 days of receipt of the application. Otherwise, if he feels that no, you are not justified, it should not be given to you, revocation of cancellation should not be done to you, then he will not revoke your cancellation. Okay, so it is completely up to the PO's choice. Clear? Next, there is some information regarding pending returns and all. This you can keep. This you can keep it on hold. This you can keep it aside. So this is what regarding mainly on revocation. Mainly they ask this question from the time limit only. Within what time limit you have to submit an application for revocation of cancellation. So that time limit is only very important. 90 days. Initially 90 days. Thereafter 130 days. Thereafter 180 days can be extended. Understood? Right. So with this, I want to put an end to the registration chapter. So with this, I want to put an end to the registration chapter. The next chapter which will take up for revision will be composition levy. We'll try to take up the chapter composition levy. So composition levy, very small chapter. Quickly, we will try to revise it. So since we have successfully completed revising the chapter registration under GST, now we will talk about the composition levy. Very small chapter, very important from the examination perspective. Very simple chapter only. We'll try to cover it in a quick go. So first of all, what exactly is this composition levy? See, composition levy is an optional scheme which is given for the small registered persons. See, they have already given threshold limit. If your aggregate turnover exceeds the applicable threshold limit, then only you become liable for registration. Once you become registered, it's not going to be an easy task. There are n number of compliances which you have to take care of. There are so many compliances which you have to take care of it. Like month on month, you have to file the returns, you have to maintain accounts, you have to maintain records, you have to make the payment of the GSTs, so you have to issue the invoices. So like that, multiple compliances will be there. So now what GST department has taught us, the moment you are registered, there are n number of compliances which you have to take care of. But all these compliances are adding up to the cost of that registered person. So that's why what they have told is, they have told, okay boss, you are registered, but if you are a small registered person, sir, how they will decide the small registered person? They will decide it on the basis of turnover. As I've always said, whenever they want to link it with whenever they want to give relaxation, whenever they want to check the eligibility criteria and other kind of criterias, they will always try to link it with the aggregate turnover. So they have given one turnover. If you are already a registered person, but if your turnover is within that prescribed limit, then we will treat you as a small registered person, and we will give you one optional scheme called composition levy. If you opt for composition levy, what will happen is you will get some relaxation. Number one, you need not file month on month returns. You need not file quarterly returns. Only one return for the entire financial year. One annual return you will be required to file, GSTR 4. And you are required to make only quarterly payment. You are not required to maintain full records. You will be given exemption from maintaining some records. And you are not required to issue invoices every time. You have to issue one other document called bill of supply. So like that, they have given some benefits for small taxpayers. So for small registered person, that scheme we call it as composition scheme. And there are two kinds of composition schemes actually. One is composition scheme for those people who are engaged in goods and also restaurant service providers. And we have one more composition scheme, which is composition scheme for services. There are two composition schemes actually. One is composition scheme under 10 subsection 1 and 2. The other name for that is, we also call it as composition scheme for goods. There is another composition scheme which is 10 subsection 2A. This is something which is composition scheme for services. I will come back to this 10 to A later. First, we will try to complete all the relevant discussion for composition scheme for goods. 10 subsection 1 and 2 will try to finish it off. Thereafter, we'll come back to 10 subsection 2A. First, we'll try to revise 10 subsection 1 and 2. Normal composition scheme for goods. Now, before I go into that composition scheme discussion, I wanted to tell you a few certain things in case of composition dealer. Number one, if you are a composition dealer, if you have opted for composition scheme, you will be permitted to pay the GST at a discounted rate. You will be permitted to pay the GST at a discounted rate, like 1%, 5%, 6%, like you will be given the permission to pay the GST at a discounted rate. And that GST which you are required to pay under composition scheme, that you can't collect. That you can't collect it from your customers. You cannot collect that GST amount, whatever discounted rate of GST that you are required to pay. That amount of GST, you can't collect it from your customer, that you have to pay it from your own pocket. So first point, you can't collect that GST amount from your customers, you have to pay it from your own pocket. Point number two, for the purpose of discharging that GST, you can't use input tax credit. You can't use ITC for that. Whatever GST that you have to pay under composition scheme, that discounted rate of GST, whatever you are required to pay under composition scheme, that you can't use for discharging that tax liability under composition scheme. You can't use the input tax credit. That means you have to make that payment compulsorily in cash. So you can't use input tax credit. Similarly, you can't pass on input tax credit. Whatever discounted rate of GST that you are paying, that you can't pass it on as an input tax rate for your customer also. So which means that if I am a person, if I am a customer, I went to one dealer, I went to one supplier who has opted for composition scheme. I went to one dealer who has opted for composition scheme. Just give me 1 minute. Yeah. So if I went to one supplier who has opted for composition scheme, from that person, if I am purchasing some goods or if I am receiving some services, that person can't pass on credit to me. That means whatever GST that a supplier is paying under composition scheme, that he can't give it as credit to his customers, that his customers can't take the ITC for that. Clear? So these 3 points always you have to keep in mind. What are that? Number one, composition dealer will pay the GST at a discounted rate. That GST which he is paying at a discounted rate, he can't collect it from his customers. Number 2, for discharging that GST liability under composition scheme, he can't take input tax credit. Number 3, he can't pass on the input tax credit to his customers. These 3 points you have to keep in mind. So having said this discussion, now I will try to explain about the composition scheme under 10 subsection 1 and 2. 10 subsection 1 and 2 will try to understand, which is also called as composition scheme for goods. Sir, who can opt for this composition scheme? Who will be eligible for this composition scheme? Only the following category of suppliers are eligible for composition scheme. Who are they, sir? If you are a manufacturer, if you are a manufacturer of goods, or if you are a trader, if you are not doing manufacturing, you are just trading the goods, or if you are a restaurant service provider. Who? If you are a restaurant service provider, only these 3 category of persons are eligible for composition scheme under 10 subsection 1 and 2. So tell me, who are eligible for composition scheme under 10 subsection 1 and 2? Either you are a manufacturer, or you are a person trading in goods, or if you are a restaurant service provider. Only these 3 people are eligible for composition scheme under 10 subsection 2. But not every manufacturer, every trader, every restaurant service provider. Only when these people, when they have a aggregate turnover less than or equal to certain limit, in the preceding financial year. If even a manufacturer, trader, or even a restaurant service provider, they will also become eligible to opt for composition scheme under 10 subsection 1 and 2 only if their aggregate turnover in the preceding financial year is up to certain limit. Then only they can opt for composition scheme. Sir, then what is that limit, sir? What is that limit is generally 1.5 CR. How much? 1.5 crores. If your aggregate turnover in the preceding financial year has not exceeded 1.5 CR, or is it up to 1.5 crores, then in the current year, you become eligible for composition levy. So this is what the limit the government has given, 1.5 CR. But if you special category states came forward and told, no, we don't want 1.5 CR of limit, we will allow only up to 75 lakhs. We will allow only up to 75 lakhs. Only up to 75 lakh rupees we will, if the turnover in the preceding financial year is up to 75 lakhs, then only we will allow the persons to opt for composition levy. Not all special category states, only these special category states, 1, 2, 3, 4, 5, 6, 7, 8, 8 special category states have told it. I have developed a mnemonic for that, which is Matson. Matson, or these are the alphabets actually, whatever code you want to, whatever mnemonic you want to develop, you can do permutations and combinations and work out some mnemonic which you will be able to remember it. So I have kept it as Matson. So what and all are that special category states who told I want only 75 lakh rupees of limit for composition scheme? So Matson, which is Meghalaya, Manipur, Mizoram, then Arunachal Pradesh, then we have Tripura, then we have Sikkim and Uttarakhand and Nagaland. So these 8 special category states came forward and told, no, in our states, if the person is registered, if the aggregate turnover in the preceding financial year is up to 75 lakh rupees, then only we will make them eligible for composition scheme. Okay, so if I have to put it, only manufacturer, trader, restaurant service provider, they will be eligible for opting for composition scheme under 10 subsection 1 and 2, provided their aggregate turnover is either less than or equal to 1.5 CR or 75 lakhs in case of that 8 special category states. And they can remain under composition scheme in the current financial year only up to the time their turnover is within that limit of 1.5 CR or 75 lakh. For checking applicability, for determining eligibility, we check the aggregate turnover in the preceding financial year. If their aggregate turnover in the preceding financial year is up to 1.5 CR or 75 lakh rupees, they can remain under composition scheme. They become eligible for composition scheme in the current year. But in the current year, they will remain under composition scheme only till the time their turnover is up to 1.5 CR or 75 lakhs. Let us say, for example, for this year, for the year 24-25, I am eligible for composition scheme. So till December, my turnover is 1.5 CR. So till December, I can remain under composition scheme. But from 1st January onwards, my turnover has exceeded 1.5 CR. Now from 1st January onwards, I have to withdraw from the composition scheme. I have to come to the regular scheme. Able to understand? Right. So up to 1.5 CR or 75 lakhs. So if you are in the 8 special category states, yes, that up to 75 lakhs in the current financial year, you can remain under composition scheme. If you are from other states, up to 1.5 CR in the current financial year, you can remain under composition scheme. Understood? Able to understand? Right. So let us have a quick look at it. So this is what regarding applicability criteria. So read this point. Option to avail composition scheme under 10 subsection 1 shall lapse with effect from the date on which aggregate turnover in a financial year during a financial year sorry, exceeds the threshold limit of either 1.5 CR or 75 lakh rupees. Next. Now, okay, sir, if I have opted for composition scheme, what is the rate of GST which I will be liable to pay? If I'm opting for composition scheme under 10 subsection 1 and 2, what will be the rate of GST I will be required to pay? So what will be the rate of GST I will be required to pay is if I'm a manufacturer. If I'm a manufacturer, I will be liable to pay 0.5% of the turnover in a state or union territory. This is under CGST Act. Equal amount of SGST also will come. So effectively 1%. If I'm a manufacturer, I'm liable to pay 0.5% of turnover in a state or union territory. In every state and union territory, how much is the turnover I am making? In that turnover in a state or union territory, I will be required to pay 0.5%. Equal amount of SGST, 1% effectively I have to pay. If you are a restaurant service provider, then you will be required to pay 2.5% of turnover in a state or union territory, equal amount of GST, SGST also, effectively rate is 5%. On the other hand, if you are any other supplier eligible for composition levy, other than manufacturer, other than restaurant service provider, who is left out? Traders are left out. So if you are a trader opting for composition levy, the rate of GST will be 0.5% of turnover of taxable supplies of goods and services in state or union territory, equal rate of SGST, effective rate will be 1%. So now what exactly they are trying to say here is, if you are a manufacturer or restaurant service provider, if you are a manufacturer, you will pay 1% of the turnover in a state or union territory. If you are a restaurant service provider, you will pay 5%. And this 1% and 5%, you have to pay it on total turnover in a state or union territory. Total turnover in a state or union territory. So if I give you one example, let us say there is a person who is having a place of business in Andhra Pradesh, is also having a place of business in Tamil Nadu. So in Andhra Pradesh, he made taxable supplies amounting to 10 lakhs. In one quarter, he made taxable supplies amounting to 10 lakhs, exempt supply amounting to 2 lakhs. And in Tamil Nadu, he made taxable supplies amounting to 5 lakh rupees, and exempt supply he made 1 lakh. He's a manufacturer. How much he is required to pay? 1% of total turnover. So what is total turnover of AP? 10 plus 2, 12 lakh. 5 plus 1, 6 lakhs. So on total, this 18 lakhs. On this 12 lakhs also he will pay 1%. On this 6 lakhs also he will pay 1%. On total turnover, if you are a manufacturer, you will be required to pay that 1%. Or if you are a restaurant service provider, you are required to pay 5% on your total turnover, including your exempt supplies. But on the other hand, if you are a trader, if I take the above example, but in case if the person is not a manufacturer, if he is trader, then what is the scenario is the trader will be required to pay 1% only on taxable turnover. So that means on this 10 lakh rupees, 1%, which will come to 10,000. On this 5 lakh rupees, 1%, which will come to 5,000. Total 15,000 only he will be required to pay. On the other hand, if he's a manufacturer, he will be required to pay on total turnover, including the exempt supplies also he will be required to pay. Very, very important. This is what one of the most common point in the composition levy, which many students often commit a mistake. So what will be the rate of GST that will be applicable in case of person opting for composition scheme under 10 subsection 1 and 2? If you are a manufacturer, 1% of your turnover, total turnover in a state or union territory. If you are a restaurant service provider, 5% of your turnover in a state or union territory. Any other supplier, that means if you are a trader, 1% of taxable turnover in a state or union territory. That much amount you will be required to pay. Understood? And this amount you will be required to discharge only in cash. You can't use the input tax credit for that, and even your recipient can't take the input tax credit of this. Understood? Clear? Then we have to see a few more things here. Sir, who is not eligible for composition scheme? Who is not eligible for composition scheme for goods? That means even though you are a trader, even though you are a manufacturer, even though you are a restaurant service provider, if your aggregate turnover is within the limit of 1.5 CR or 75 lakhs also, still you might not become eligible for composition scheme. Sir, who are that people not eligible for composition scheme? Number one, if you are a supplier who is engaged in supply of goods or services not leviable to tax. That means if you are making a non-taxable supply. If you are making what? Non-taxable supply. So what is non-taxable supply? Alcoholic liquor for human consumption, 5 petroleum products. If you are making a non-taxable supply, you are ineligible for composition scheme. Then if you are a person making supply of interstate outward supplies, if you are making interstate outward supplies, then also you become ineligible for composition levy. Sir, the restriction is only on interstate outward supplies. What if I am purchasing from other states? If I have interstate inward supplies, will I become ineligible for composition levy? No, I will not become eligible for ineligible for composition levy. if I have interstate inward supplies, if I'm purchasing from other state, I can still enjoy composition scheme. But in case if I'm making an interstate outward supply, if I'm making supply to other states, outward supply to other states, if I'm doing, then I can't remain under composition scheme. I become ineligible for composition scheme. Then, if you are a person making supply of services through e-commerce operator who is required to collect TCS under section number 52. If you are a person, if you are a supplier who is making supply of services through an e-commerce operator under section number 52, who is required to collect TCS under section number 52, you become ineligible for composition levy. See, if you see the restriction here, it is only on services. That means you can make supply of goods. You can make supply of goods through e-commerce operator who is required to collect TCS under section number 52. You will not become ineligible for composition levy. You become ineligible for composition levy only when you are making interstate supply of services through an e-commerce operator who is required to collect TCS under section number 52. And if you are a manufacturer of specified goods, if you are engaged in manufacture of certain goods, then also you become ineligible for composition levy. Sir, what are the goods which I should not manufacture? If you pay close attention, the restriction is only on manufacturing. That means you can do trading. Trading is permitted, manufacturing is prohibited. If you are engaged in manufacturing of this below notified products, then you become ineligible for composition levy. Sir, what are that products which I should not manufacture? Ice cream and other edible ice, whether or not containing cocoa. Pan masala, tobacco products, aerated waters, fly ash bricks and fly ash blocks, fly ash aggregates, bricks of fossil mills or similar siliceous earth, building bricks, earthen or roofing tiles. Is this list sounding familiar? Is this list sounding familiar? Yes. Just now in the registration chapter we have seen. So if you remember, if you are not making supply from MMNT, I'm connecting the dots here. Listen carefully. For checking the threshold limit, I have gave you one chart. There I told that if you are not making taxable supply from MMNT, if you are not making taxable supply from UP match, then if you are engaged in only supply of goods, you can enjoy the enhanced threshold limit of 40. Yes or no? But in case if you are engaged in making supplies, there the term which they use is if you are engaged in making supplies of 7 products. So they're making supplies means what? Either you are engaged in manufacturing or trading of 7 products. You can't enjoy the enhanced threshold limit. What are that 7 products? As you could see here, ice cream and other edible ice, pan masala, tobacco products, fly ash bricks, fly ash blocks, fly ash aggregate, bricks of fossil mills or similar siliceous earth, building bricks or earthen or roofing tiles. Then you can't enjoy the enhanced threshold limit of 40. But in composition levy, you become ineligible for composition levy only when you are manufacturing. That means you can trade. If you are doing trading, you still become eligible for composition levy. Restriction is there for only on manufacturing. If you are manufacturing, but for 40 lakh rupees of limit, they say making supplies. That means to enjoy that 40 lakh rupees of threshold limit, you should not be manufacturing, you should not be trading. But to become eligible for composition levy, if you are not doing manufacturing, it is enough. If you are doing trading, still you become eligible for composition levy. Sir, which goods I should not trade? Same 7 goods. Same 7 goods. To that, one more product will get added to the list. What is it? Aerated waters. Even aerated waters also you should not manufacture in order to be eligible for composition levy. The remaining 7 products are same. All the 7 products are same. So 7 products you should not deal. You should not supply. You should not either do the manufacturing or trading to be eligible for enhanced threshold limit of 40 lakh rupees. On the other hand, that 7 products along with aerated waters, you should not manufacture. You can trade, but you should not manufacture to be eligible for composition levy. Understood? Clear and comfortable, everybody? So we are actually talking who will not become eligible for composition levy under 10 subsection 1 and 2. Who? Number 1, if you are a person if you are making non-taxable supplies. Number 2, if you are making any interstate outward supplies of goods or services. Number 3, if you are making supply of services through e-commerce operator who is required to collect TCS under section number 52. Number 4, if you are engaged in manufacturing of specified goods. Number 5, if you are a CTP or NRTP. Even CTP or NRTP also will not be eligible for composition levy. Then, if you are a supplier of services other than those provided in 10 subsection 1. That means apart from restaurant services, if you are providing any other services, then you become ineligible for composition levy. So you should be either trader, manufacturer or restaurant service provider. If you are engaged in any other services, then you become ineligible for composition levy under 10 subsection 1 and 2. But this last point was creating trouble. What is the trouble, Let us say, for example, I'm a trader. I'm a person who is trading in electronic goods. I'm selling electronic goods. Mainly I'm selling goods only. Let us say my aggregate turnover is also within 1.5 CR, less than that only. But since I am into electronic goods, what I am doing is along with my supply of goods, I am also providing little bit of repairs. Along with the supply of electronic goods, I am also required to do some repairs. Depending on the nature of the business, I have to do. But repairs is very, very minimal. Let us say, for example, I'm doing only 5 lakhs or 2 lakhs, 3 lakhs worth of repairs only. So I'm primarily engaged in supply of goods, but I'm doing very small amount of service. But if I do this service, I become ineligible for composition levy. If I provide any service, I will become ineligible for composition levy. No, because composition levy under 10 subsection 1 and 2 is only for manufacturer, trader, restaurant service provider. Apart from that, I should not provide any other services. So that's why I become here ineligible for composition levy if I do some repairs. Yes or no? But the government has given relaxation. These are all genuine cases. No, we will do one thing. We will allow you to take composition scheme under 10 subsection 1 and 2, provided if you are doing a marginal supply. If you are doing what? Marginal supply of services, very minimal amount of services if you are doing, then we will still make you eligible to opt for composition scheme. Sir, but how to decide what is that marginal supply? How to decide marginal supply when you can say he's making only small amount of supply? Criteria should be given. No. So what is that permitted limit of providing the services is, this is what will be considered as marginal supply of services. 10% of the turnover in a state or union territory in the preceding financial year, or rupees 5 lakhs, whichever is higher. That much marginal supply you can do. So which means 10% of the turnover in a state or union territory, or rupees 5 lakhs, whichever is higher, that much amount of services you can provide in the current financial year, and you can still become eligible for composition levy. Let us say turnover in the preceding financial year is 80 lakh rupees. So 80 lakh rupees or 5, what is the amount they say here? 10% of the turnover in the preceding financial year. So 10% of the turnover in the preceding financial year, 10% of 80 lakhs, which is 8 lakhs, or 5 lakh rupees, whichever is higher. Which one is higher? 8 lakh rupees. So in the current year, you can provide the services up to 8 lakh rupees of value. Still you become eligible for composition levy. In case if your marginal supply of services exceeded 8 lakh rupees, then you have to withdraw from the composition scheme and you have to come under regular scheme. Understood? Clear and comfortable, everybody? Right. So this is what regarding marginal supply of services. So you are permitted to provide marginal supply of services and you can still remain under composition scheme. Till here, everybody comfortable? So we have seen composition scheme under 10 subsection 1 and 2. Who is eligible? What will be the turnover limit? What rate of GST they are required to pay? When a person will become ineligible? And what kind of marginal supply of services he can provide? So this is what the initial scheme which the government is having for composition. But what happened is, over a period of time, since the service sector is also very much booming, but service sector other than restaurant service providers, other service sector is completely kept outside of the composition purview. So in 10 subsection 1 and 2, they are giving this option of composition levy only for primarily goods and restaurant service providers. If at all you want to do a service, even only you can do marginal supply of services. That means entire service sector has been kept outside of the purview, right? So these people also went and requested to the government, sir, why are you so harsh on us? Why are you not giving some simplified scheme for us? We are also doing business. We are also genuine taxpayers only. But you have given a scheme called composition scheme only for goods and restaurant service providers. What mistake we have done? Please give us also a composition scheme. So department gave a thought and brought one more scheme. They have introduced a new section 10 subsection 2A. So it says that if you are some person who are ineligible for composition scheme under 10 subsection 1 and 2, might be you are only service provider, or you are making supply of goods as well as services where your service component is more than marginal supply. So because of some reason, if you are ineligible for composition scheme under 10 subsection 1 and 2, no need to worry. We will give you one more scheme. You can come and claim the composition scheme under 10 subsection 2A. You can come and claim the composition scheme under 10 subsection 2A. This I call it as composition scheme for services. This I call it as what? Composition scheme for services. So if you are a person who is ineligible for composition scheme under 10 subsection 1 and 2, no need to worry. We have one more option for you. You can opt for composition scheme under 10 subsection 2A. Sir, which persons will become eligible for composition scheme under 10 subsection 2A? They say that if you are such a person whose aggregate turnover in the preceding financial year is less than or equal to 50 CR. If you are such a person whose aggregate turnover is less than or equal to 50 crores in the preceding financial year, then in the current year, you can opt for composition scheme under 10 subsection 2A up to a turnover of 50 crore rupees. Up to a turnover of 50 crore rupees in the current financial year, you can opt for composition scheme under 10 subsection 2A. This is mainly for service providers. So if you are a service provider, you are ineligible for composition scheme under 10 subsection 1 and 2. Don't worry, you have one more option. If your aggregate turnover in the preceding financial year is less than 50 lakh rupees. What 50 crores I told? Sorry. Not 50 crore rupees, it's 50 lakh rupees. So sorry, it's 50 lakh rupees only. So if your aggregate turnover in the preceding financial year is less than or equal to 50 lakh rupees, then in the current year, you can remain under composition scheme up to a turnover of 50 lakh rupees under 10 subsection 2A. The limit for composition scheme under 10 subsection 2A is only 50 lakh rupees. So where it is mentioned, here it is mentioned. So if you see turnover limit in case of composition levy for services under 10 subsection 2A, 50 lakh rupees in the preceding financial year. And in the current year, you can remain under composition scheme up to a turnover of 50 lakh rupees. Sir, you told rate of GST. So rate of GST is you told for composition scheme under 10 subsection 1 and 2, 1%, 5% you told. But what will be the rate of GST which I'm required to pay if I'm opting for composition scheme under 10 subsection 2A? Here they told 6%. For 10 subsection 2A, the rate of GST which you will be required to pay is 6%. Why? Because service sector, no, in service sector profit margins will be little higher than when compared with the goods. So that's why what they have told is, in case if you want to opt for composition scheme under 10 subsection 2A, you have to pay 6% on your turnover in a state or union territory. 3% CGST, 3% SGST. You have to pay effectively 6%. And here this 6% also you have to pay it on total turnover, not just on taxable turnover. This 6% you are required to pay it on total turnover in a state or union territory. And even here also the same category of people who are ineligible, who will become ineligible even for 10 subsection 2A. So who will become ineligible if you are engaged in making non-taxable supply, if you are making interstate outward supplies, if you are supplying services through e-commerce operating under section number 52, if you are if you are engaged in that manufacturing of that notified goods, if you are a CTP or NRTP, you become ineligible for composition scheme under 10 subsection 2A also. And whether you are a person opting for composition scheme under 10 subsection 1 and 2, or you are a person opting for composition scheme under 10 subsection 2A, there are some conditions and restrictions which are applicable for you. If you are a person opting for composition scheme either under section 10 subsection 1 and 2, or you are opting for composition scheme under 10 subsection 2A, there are some conditions or there are some restrictions which you are required to fulfill. Sir, what are they? Let us see. So you shall pay the tax under 9 subsection 3 or 4 on your inward supplies. You are a supplier, you have opted for composition scheme. But in case if you are receiving any services on which you are required to pay tax under RCM, you have to discharge that RCM liability. At what rate, sir? At whatever rate which is applicable for that supply, not discounted rate of 1%, 5%, 6%. So let us say I'm a person opting for composition scheme under 10 subsection 1 and 2. I will be making outward supplies. On my outward supplies, I will pay GST at the rate of 1% or 5%. Let us say I am receiving an inward supply. Legal services I am receiving, which is getting covered under RCM. So now on this supply, on this inwards, I am liable to pay the GST under RCM. So let us say 1 lakh worth of services I have received, legal services. That 1 lakh rupees I have to discharge the GST under RCM. At what rate, sir? At whatever rate that is applicable for legal services. Let us say applicable rate for legal services is 18%. So 1 lakh into 18%, 18,000 I will be required to pay. I cannot say, sir, I am opting for composition scheme. Even RCM liability also I will pay it at discounted rate. No, not possible. If you are required to pay GST under RCM, you have to pay it at the usual rate only, not the discounted rate. So that is first condition. You have to discharge your tax liability under reverse charge mechanism. And you should not be a CTP or NRTP. This point we have already covered. And you should compulsorily mention the words composition taxable person who is not eligible to collect a tax on supplies at the top of the bill issued by you. So if you are a composition dealer, first thing, you will not give tax invoice. You will give a document called bill of supply. Composition dealer will not issue a document called tax invoice. Composition dealer, whenever he is making any outward supplies, he will give a document called bill of supply. On that bill of supply, at the top, you have to mention that you are a composition taxable person. You are not eligible to collect tax on supplies. Like that, one sentence you have to compulsorily mention. And you have to mention the words composition taxable person on every notice or signboard displayed at a prominent place of your principal place of business and additional place of business. At your principal place of business, at your additional place of business, at a very prominent place, you have to mention that you are a composition taxable person. And tax on goods held in stock liable to reverse charge under must have been paid. This is not relevant. You can ignore this. So in case if you are liable to pay GST under RCM under 9 subsection 4, that you have to discharge it. Next. Sir, now what is the procedure? Now, before that, one more point I would like to explain. See, they told you to exclude one kind of supply, one kind of value of supply from 3 places. They told you to exclude one kind of value of supply from aggregate turnover also, from calculating the turnover in state or union territory also, and even while calculating marginal supply of services also. In all these 3 cases, one value of the supply you have to exclude it at all 3 places, my dear students. And this is a common point which is applicable for both composition schemes. So in case if you have made any outward supply by way of giving money as either loan or by way of giving of advance or by way of giving a or by way of making deposit for which you are getting interest, for which you are getting interest or for which you are getting discount, consideration is in the form of interest or discount. This is supply of service, no? And once again, if you go back to the services definition, activities relating to use of money for which a separate consideration is charged, that will be considered as supply of service. So in case if you are making an outward supply of giving loan, advance, deposit for which you are receiving the consideration in the form of interest or discount, this is supply of service. But that value of the interest or discount, you should not include it while calculating aggregate turnover. You will calculate aggregate turnover in the preceding financial year, no, whether it is within 75 lakhs, 1.5 cr, 50 lakh rupees, and up to in the current financial year also up to an aggregate turnover of 1.5 cr, 75 lakhs, 50 lakh rupees, you will remain under composition scheme. So when you are calculating aggregate turnover, either for the preceding financial year or in the current financial year, that value you don't include it. Then when you are calculating turnover in a state or union territory, see this is actually the turnover on which I will pay the GST, on which I will multiply that 1%, 5%, 6% I will multiply, no, turnover in a state or union territory. From there also you don't include it. In the turnover in a state or union territory also exclude that interest or discount component. Similarly, when you are calculating marginal supply of services, you will calculate marginal supply of services under 10 subsection 1 and 2, that you can make marginal supply of services up to 10% of aggregate turnover in the preceding financial year or 5 lakhs, whichever is higher. So while calculating that marginal supply also, don't include that interest or discount component. Okay, so interest or discount, if you are given any loan, advance or deposit for which you are receiving interest or discount, so that is also supply of service only. But that value of supply of service which is in the form of interest or discount, that you have to exclude it from three places. Exclude it while calculating aggregate turnover, exclude it while calculating turnover in a state or union territory, also exclude it while calculating the marginal supply of services. At all these three places, you have to exclude that interest or discount component. Very important. You have to keep this in mind while doing the calculation figure. Next, after all this, few more things which I have to keep it here. So intimation, sir, how you can opt for composition levy? Very simple. At the time, if I'm submitting the registration application now itself, if I'm a new registrant, in my registration application itself, I can mention, sir, I'm taking registration, but after taking registration, I want to remain under composition scheme. Then whatever registration application you are submitting, no, in that registration application itself, you can exercise your option to remain under composition scheme. On the other hand, if you are already registered person, you are under regular scheme, but if you want to convert to composition scheme, you have to submit an intimation. But if you are already registered person, you can switch to composition scheme only before the commencement of the financial year. Very important. If you want to switch to composition scheme, if you are already registered person and if you are under regular scheme, if you want to convert from regular scheme to composition scheme, you can switch to composition scheme only before the commencement of the financial year. Before the commencement of the financial year only, you can switch to the composition scheme. But if you want to come from composition scheme to regular scheme, this you can do it anytime. From the composition scheme, you can get yourself converted to regular scheme at any time. But if you want to convert from regular scheme to composition scheme, that you have to do it before the commencement of the financial year. You have to intimate. Okay, so that is what key discussion from here. Yeah. And one more important point which I have to bring it here. This point. All registered persons having same PAN have to opt for composition scheme. If one such registered person opts for normal scheme, others also will become ineligible for composition scheme. Let us say under same PAN you have multiple registrations. You are having places of business in multiple states. Sir, can there be any option for a few registrations I will remain under composition scheme? For a few registration I will remain under regular scheme. Is there any such option like that? No. If you want to remain under composition scheme, all the registrations under the same PAN must be under composition scheme. If you want to go out of the composition scheme, all the registrations under same PAN must opt out of the composition scheme. There will not be such option where few registrations will remain under composition scheme, few registrations will remain under normal scheme. There is no option like that. Either all registrations must be under composition scheme or all registrations must be under regular scheme. So there is no if you under that option is not possible. Clear? Able to understand? So these are all the important discussion from composition scheme. So mainly the question is going to come from that calculation of the GST part and all, and checking of the eligible criteria, whether you are eligible for composition scheme or not. That is where mainly the questions are going to come from. So this is the important content from the composition scheme. Very small chapter, and we have covered the revision of it. Right. So now, since we are done with composition scheme also, the next chapter which we will be picking up for revision is going to be, we'll now try to do charge of GST. We will try to do charge of GST. Okay. So mainly here we are going to talk about reverse charge mechanism. Mainly we are going to talk about the list of services which are covered under reverse charge mechanism. So that charge of GST chapter, we will try to do it now. Okay. Right. So one of the students is asking in the comments section, sir, from today onwards, GST compensation cess will be closed. That is 31st of March 2026. What would be the impact in the state? So this point I have already covered yesterday. If you haven't watched the marathon of the yesterday we had a live session. The same point I have told. See, this is the last day. Even though this is the last day, it has been ruled out already by 22nd of September itself. They have made all the changes. They have stopped imposing this compensation cess. They have increased the rates of GST to 40% and all. In the previous session only, just in the yesterday's session only, I have clarified on this point. Just refer to the previous video. You will get to know what will happen if compensation cess is not going to be there from today. They have already taken care of it. Right. Okay, so now we will try to talk about charge of GST. See, in the charge of GST, the main concept which we are going to talk about here is there are a list of services which have been notified. So I will directly come to the point here. In the charge of GST, we are going to talk about a list of services which have been notified by way of a notification, which are getting covered under reverse charge mechanism. Very important, in the exam, compulsorily there will be a question regarding this. Either it could be a comprehensive question. Question number 1 will be a comprehensive question, right? Where they will connect all the chapters and ask a question. No, definitely in that question number 1 descriptive question, you will find at least 1 or 2 points which are related to RCM provisions, where you will be required to decide as a part of your first question whether the service is getting covered under RCM or FCM. That one testing will happen compulsorily in the first question. Sometimes you will also find one standalone question regarding this reverse charge mechanism. So not all goods and services are getting covered under RCM. The government will, over a period of time, they will notify. So there are various goods also. This is just given for reference sake. No need to remember. There are various kinds of goods also which are notified under RCM. So if a supplier is supplying these notified goods to the recipient, supplier will not collect any amount of GST from the recipient. The recipient himself will directly deposit the amount of GST with the government. So there are list of goods which have been notified, and we are not going to talk about this goods at all. Goods discussion is not important. This has been given only for reference. But there are bunch of services. There are a good number of services which have been covered under reverse charge mechanism. There are a good number of services which have been covered under reverse charge mechanism. So let us try to understand all those services which are covered under reverse charge mechanism. So first category of service, we will talk about GTA, the services provided by a goods transport agency by way of transportation of goods to a specified recipient. They will get covered under reverse charge mechanism. So the services provided by a goods transport agency. Supplier is GTA. See, there are different categories of the services. One by one, we will pick up one each service and we will try to understand when RCM will become applicable, when RCM will not become applicable. We will try to understand. So first category which I am taking up for discussion is GTA service provider. GTA service provider. So when RCM will become applicable? First, supplier should be GTA. And what services they are providing? Services provided by way of transportation of goods. What service is covered under RCM? Transportation of goods by road. If these services are getting provided by a GTA to recipient, not all recipient, if the recipient is a specified recipient, if the recipient is a specified recipient, then RCM will become applicable. Now you will get a question, sir, who is GTA? GTA means a person who is engaged in services of transportation of goods by way of road, and who will issue a document called consignment note. Who will issue a document called consignment note? He will be called as GTA. On the other hand, sir, you are telling RCM will become applicable only when the recipient is a specified recipient. Sir, who is that specified recipient, sir? Who is that specified recipient? Let us see. In order to become applicable, in order for RCM to become applicable, recipient must be specified recipient. Sir, who are that specified recipients? Number one, a factory registered or governed by the Factories Act. If the recipient is a factory, whether they are registered under GST Act or not doesn't matter. If they are a factory registered under Factories Act 1948, then they will become liable for RCM. If it is a society registered under Societies Registration Act 1860 or any other law for the time being in force, whether they are registered under GST or not doesn't matter. If they are a society registered under Societies Registration Act, then they will become specified recipient. RCM will become applicable. Cooperative society established under any law, RCM will become applicable. A person already registered under GST Act. If you are a registered person under GST Act, then RCM will become applicable. And body corporate. If you are a body corporate established under any law, then RCM will become applicable. If it is a partnership firm, whether or not registered, doesn't matter. Then also RCM will become applicable, including association of persons. See, when it comes to partnership firm, whether registered or not, even if it is an unregistered partnership firm also, RCM will become applicable. When I say partnership firm, for the purpose of GST, partnership firm includes LLP also. For the purpose of GST, partnership firm will include LLP also. Not just that, even a CTP, any CTP located in the taxable territory, they will also be liable for RCM. So what they're trying to say here, so if I put it in other way around, if you are already a registered person, if you are already a registered person under GST, then RCM will become applicable. Apart from that, if you are a factory, if you are a society, if you are a cooperative society, if you are a body corporate, if you are a partnership firm, if you are a CTP, so then also you become liable for registry. Then also you become liable for RCM. So if you are a registered person or if you are a CTP, anyhow they will become liable for compulsory registration. So CTP and registered person, anyhow they will be registered under GST Act. But these category of person, that is factory, society, cooperative society, body corporate, partnership firm, even though they are not registered under GST Act, but now since they are liable to pay the GST under RCM, now they will fall under compulsory registration under section number 24. Now they have to take the compulsory registration. Now they have to take compulsory registration. If you're already a registered person, fine. But you are not already a registered person. But now, since you are receiving the services on which you are liable to pay the GST under RCM, you will fall under compulsory registration under section number 24. Now you have to get yourself compulsorily registered. Able to understand? So if you are a GTA and if you are providing services by way of transportation of goods by road, and if the recipient falls under any of this specified recipient, then RCM will become applicable. These recipients are required to discharge the GST under RCM. However, there are some points which we need to keep in mind. What is that? RCM shall not become applicable if the service is provided by GTA to the following recipients. So this RCM will not become applicable when the recipient is even a specified recipient. Let us say, for example, if the recipient is already a registered person, the recipient is a registered person, then they have to pay the GST under RCM or not. But let us say if the recipient is a registered person, but the recipient is such a registered person who is in department or establishment of central government, state government or union territory or local authority or government agency who have taken registration only for the purpose of deducting of TDS under section number 51 and not for making any taxable supply. Not for making any taxable supply, then even though they are registered person, still RCM will not become applicable. So if I have to put it in other way around, just give me 1 minute. I have one chart. With the help of that chart, I will try to summarize everything. Just give me 1 minute. I will try to cover the exemptions also. I will try to cover exemptions as well. Just 1 minute. CA final IDT. CA final IDT. This one. Just 1 minute. Just a minute. Where is that? Yeah. So just let me take the chart. With the help of the chart, I will be able to summarize it in a better way. I will try to cover the amendments also. There are some amendments covering this area. I will try to cover that amendments as well. Okay, perfect. Got it. Hmm, Copy page. Where is it? Okay, I am not getting it. How to import it? Just we'll do one thing. I'll try to explain it from here. Okay, right. So if you see, if you try to link it with GTA services here, I'm trying to talk about GTA services. Services provided by GTA. Services provided by GTA. So actually what will happen is if the recipient is a specified recipient, just now I have told who and all are the specified recipient. If the recipient is a specified recipient, it will become taxable under reverse charge mechanism. But just now, as I've told, even though the recipient is a registered person, but if the recipient is a department or establishment of central government, state government, or union territory, or local authority, or government agency, who have taken registration only for the purpose of deducting TDS under section number 51. Just now, as I have told here, RCM will not become applicable. Just now, as I have told here, RCM will not become applicable. Not just RCM will not become applicable, guys, even FCM also will not become applicable because this is exempt. This is what? Exempted. That has been exempted. Okay, so supplier is a GTA, and if the recipient is specified recipient, then it will be taxable under reverse charge mechanism. So supplier is GTA if the recipient is a registered person, but if the recipient is such a registered person who is a department or establishment of central government or state government or local authority, government agency who has taken registration only for the purpose of deducting TDS under section number 51, but they are not making any taxable supply, then RCM will not become applicable. Not just RCM, even FCM also will not become applicable because this service is exempt. Because this service is exempt. On the other hand, sir, what if the recipient is somebody else? If the recipient is not a specified recipient, who will be that other than specified recipient? See here they have covered maximum. If the recipient is a registered person, factory, society, cooperative society, body corporate, partnership firm, CTP, if these recipients are specified recipients, then RCM. Who could be other recipient? Who could be other recipient? The other recipient is individual unregistered person. Who will be left out? If the recipient is an individual unregistered person, then for them GTA services are exempted. No one will be liable to pay the amount of GST. For them GTA services will be exempted. No one will be liable to pay the amount of GST. Able to understand? Till here everybody comfortable? So GTA provisions I'm trying to cover it here. So when GTA, RCM will become applicable. Supplier is GTA. Services by way of transportation of goods by road. Recipient is a specified recipient. Who is specified recipient? Already registered person or a CTP or a factory, cooperative society, body corporate, and partnership firm including association of persons. So if these recipient is a specified recipient, then they will get covered under RCM. One exception is there if the recipient is a department or establishment of central government, state government, union territory, local authority who has taken registration only for the purpose of deduction of TDS under section number 51, but for not making any taxable supply, exempt. No RCM, no FCM. Sir, what if the recipient is other than specified recipient? Then also no RCM, FCM because it is exempted. Okay, this discussion will you be able to remember? Yes, you have to remember it. Thereafter, one more option also they have given. See, actually, if the recipient is a specified recipient and the supplier is GTA, RCM will become applicable. But to the supplier GTA, the government has given one option. To the supplier GTA, the government has given one option. What option they have given? If you want, you can exercise the option to pay the tax under forward charge mechanism also. If you want, even GTA service provider, they can exercise the option. They can take the registration and they can exercise the option saying that I am GTA, my recipient is a specified recipient. Actually, my specified recipient is liable to pay the GST under RCM, but I want to pay the GST under forward charge mechanism. I will take registration and I will pay the GST under forward charge mechanism. If the GTA exercises such option, then that will be taxable under forward charge mechanism. Actually, RCM. But for this GTA service providers, they have given one option. What is that one option? Boss, if you come forward voluntarily and if you say that I will take registration and I will pay the GST under forward charge mechanism, then we are very happy with you. Then we will make the forward charge mechanism applicable, not the reverse charge mechanism. So that's what they say here. Nothing contained in this entry shall apply when the supplier, who is supplier? GTA. When the supplier is registered and he has exercised the option to pay the GST on GTA services under forward charge mechanism. However, he must issue a tax invoice, and on that tax invoice, he must make a declaration. On the tax invoice, he must make a declaration. What declaration he has to make on the tax invoice? So I am a GTA service provider. I have taken the registration and I have exercised the option to pay the GST under forward charge mechanism. That declaration he has to mention on the tax invoice. Then RCM will not become applicable. That GTA service provider only will pay the GST under forward charge mechanism. Now here comes one small amendment part. What is that amendment is? See, in case of GTA services, listen carefully. In case of GTA services, anyhow, for amendments, I have uploaded a separate video. This is anyhow relevant to that. This amendment is relevant to this discussion. That's why I'm explaining it here. See, in case of GTA services, just now, as I have told, either there can be forward charge mechanism. If the supplier himself is opting for forward charge mechanism, he will pay it. Or if the supplier is not opting for forward charge mechanism, recipient will pay the GST under reverse charge mechanism. If the recipient is paying the GST under reverse charge mechanism, he is required to pay the GST at the rate of 5%. 2.5% CGST, 2.5% SGST. Under RCM, the recipient of GTA services, if he is liable to pay the GST under reverse charge mechanism, the rate of GST which is required to be paid is 5%. How much? 5%. In case, if the GTA service provider has opted to pay the GST under forward charge mechanism, in case if the GTA service provider has opted to pay the GST under forward charge mechanism, there are two options here. Either he can pay 5% under forward charge mechanism, but he will not be able to take ITC. ITC is restricted. If he wants to pay GST under forward charge mechanism, he can pay the GST at the rate of 5%, but ITC will be restricted. So without claiming ITC, he can pay 5% under forward charge mechanism. On the other hand, one more option has also been given. He can pay the GST at the rate of 18% with full ITC under forward charge mechanism. He can take GST and he can pay the GST at the rate of 18% by claiming full ITC. Here is the amendment. This is amendment. Previously, the rate used to be 12%, but now that has been replaced with 18%. Previously, the rate used to be 12%. Now that has been replaced with 18%. So like that, if you see it here in this chart and all, you'll be able to find 12%. But if you find the supplementary material, if you look at the supplementary material, this is what the amendment we have given here. So where GTA wishes to avail ITC on goods and services used in supplying GTA services, earlier the rate used to be 12%, but now this has been changed to 18%. Clear? So this chart you have to remember. So for GTA services, if the recipient is opting to pay the GST under, if the recipient is liable to pay the GST under reverse charge mechanism, the rate of GST will be 5%. In case if the GTA service provider has opted to pay the GST under forward charge mechanism, two options are available for him. Either he can pay 5% without ITC, or he has to pay 18% if he wants to claim full ITC. Here is the amendment. Earlier it was 12%. Now it is 18%. Clear? Able to understand everybody? So one amendment, I have covered it here. Understood? Clear and comfortable? So this is what regarding GTA services RCM and also related exemptions. A few exemptions I have covered. Regarding transportation of goods, I was showing you some chart, no? I was showing you this chart, right? This chart is very comprehensive. Only one part of this chart I have covered. Only one part of this chart I have covered. There is so much of exemption which we are required to cover regarding transportation of goods that I will try to cover it in the exemption. Only relevant part I have covered it here. Whatever is relevant for us, that much only I have covered it. Understood? So this is what regarding GTA services. Now we will talk about other category of services which are exempted. Other category of services which are covered under RCM. So here there are some legal services which are getting covered under RCM. Services provided by an individual advocate, senior advocate or form of advocates, and legal services provided by arbitral tribunal. There also some RCM provisions are applicable. But along with RCM provisions, even exemptions are also there. Along with RCM provisions, even exemptions are also there. So now what I will try to do is legal services, everything I will try to cover it now. Along with exemptions, where RCM, where exempted, where FCM. FCM is not applicable here. So in case of legal services, at some places it is exempted, at some places it is taxable. Wherever it is taxable under RCM. So I have summarized it here. So services provided by advocates, senior advocate and also arbitral tribunal. When exempted, when RCM, that I have given this chart, this will try to cover it from here. So coming to this legal services part, let us see. In case if the legal services are provided by individual advocate who is other than senior advocate or form of advocates. See, senior advocate, we have a separate provision. Senior advocate, we have a separate provision. So that's why first chart I'm going to talk about where the service provider is individual advocate other than senior advocate. or firm of advocates. So services provided by individual advocate and firm of advocates, when they are exempted, when they are taxable, when RCA. So they say that when the legal services are provided by either individual advocate or firm of advocates to another advocate or firm of advocates, exempted. To another advocate or form of advocate. Let us say I am an individual advocate. I am providing legal services to another advocate or another form of advocate. Then that services are exempted. No need to pay any GST on it. Services provided by individual advocate or form of advocates to central government, state government, union territory, local authority, government agency or government entity. Government authority or government entity, sorry. So then also they will be exempted. If the recipient is government, exempted. Sir, services provided by individual advocate or form of advocates to a non-business entity, sir. Let us say I am an individual advocate or a form of advocate. We are getting this. Someone is asking, sir, where to get this chart book? This is not complete chart book. These are only few places where I have taken the help of the charts. This I will upload it in the resources section. Don't worry, this I will upload it in the resources section. Please concentrate now. So in case if the services are provided by individual advocate or firm of advocates to a non-business entity, let us say for example, one lawyer or one firm is fighting a divorce case. For that they are providing legal services. So that divorce case is a service provided to non-business entity, right? So for that non-business entity, if the services are provided, then also exempt. No, sir. Services are provided by individual advocate or form of advocates. Recipient is a business entity only, but the recipient is such a business entity whose aggregate turnover is up to applicable threshold limit in the preceding financial year. Small business entity, sir. So services provided by individual advocate or form of advocates. Recipient is a business entity, but that recipient is a small business entity whose aggregate turnover in the preceding financial year is up to the applicable threshold limit of 40, 20, 10, whatever it is. So if that business entity, if their aggregate turnover is less than applicable threshold limit in the preceding financial year, then also it is exempt. Sir, when it is taxable, only one more case is left out. What is it? If the recipient is a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, then it will become taxable and it will be taxable under reverse charge mechanism. This recipient business entity will be liable to discharge the GST under reverse charge mechanism. Able to understand? Clear? So when it comes to services provided by individual advocate or firm of advocates other than senior advocate, mostly exempt. At only one place it is taxable. There also wherever it is taxable under RCM. Sir, where and all it is exempted? If the services are provided to another advocate or form of advocates, exempt. If it is provided to government, exempt. If it is provided to non-business entity, exempt. If it is provided to a business entity whose aggregate turnover is up to applicable threshold limit in the preceding financial year, exempt. If it is provided to business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, taxable. Now taxable under reverse charge mechanism. Understood? Now, sir, what about senior advocate? Mostly it will remain the same. Mostly the services provided by senior advocate is going to remain the same. So if the senior advocate is providing the services to government, exempt. If it is provided to non-business entity, exempt. If it is provided to business entity whose aggregate turnover is less than applicable threshold limit in the preceding financial year, exempt. If it is a business entity whose aggregate turnover is more than aggregate turnover in the preceding financial year, including another individual or form of advocates, then it will be taxable under reverse charge mechanism. Able to understand? So the difference between individual advocate and senior advocate is, in case of individual advocate or form of advocates, even if they are providing services to another advocates or form of advocates, it is exempt. But if a senior advocate is providing services to another individual advocate or form of advocates, then there is no such a specific exemption. And if their aggregate turnover has exceeded the applicable threshold limit in the preceding financial year, they will become taxable, that too under reverse charge mechanism. Able to understand, clear and comfortable. So mostly the same, individual advocate or form of advocates and senior advocate mostly the same, but only difference is coming here. If an individual advocate or form of advocate is providing services to another advocate or form of advocates, it will be generally exempt irrespective of what is the recipient's turnover. But here that relaxation is not there. Understood? Clear? Next, on the same lines, if the services are provided by arbitral tribunal, even services provided by arbitral tribunal also, at most of the places it is exempt, at a few places it will be taxable. Sir, when it will be exempted, sir? If arbitral tribunal is providing services to central government, state government, union territory, local authority, government entity, exempt. If the services of arbitral tribunal are provided to non-business entity, exempt. If it is provided to business entity, arbitral tribunal is providing the services, legal services to a business entity, but that business entity is a small business entity whose aggregate turnover is less than or equal to applicable threshold limit in the preceding financial year, exempt. But however, the recipient of arbitral tribunal services is a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, then it will become taxable and it will be taxable under RCM. Understood? Clear everyone? So this you have to remember it. So this is one chart where I have covered exemptions regarding legal services and arbitral tribunal, and also I have covered RCM related provisions of legal services and arbitral tribunal services. Clear? So two category of services we have covered under RCM. Number one, GTO services we have covered. Number two, legal services including the arbitral tribunal services. Okay, now let us come to the next part. Sponsorship services. Even for sponsorship services also RCM will become applicable. Even for sponsorship services also RCM will become applicable. Sir, for sponsorship services, when RCM will become applicable? So for sponsorship services, when RCM will become applicable? Supplier should be other than, so if you see here, supplier should be other than body corporate. We'll try to cover it from here. Supplier should be other than body corporate. A recipient should be either a body corporate or partnership firm located in the taxable territory. RCM will become applicable. So this you have to remember it, my dear students. So in case of sponsorship services, when RCM will become applicable, supplier should be other than body corporate, recipient must be a body corporate or partnership firm. If these conditions are fulfilled, then RCM will become applicable. So that's what I say here. Sponsorship services, supplier should be other than body corporate, recipient must be a body corporate or partnership firm located in the taxable territory, then RCM will become applicable. Sponsorship services, important area. Many times we find the questions from sponsorship services, so please be careful about it. Next, then we have government related services. This government related services, you keep it on hold now. Government related services, you keep it on hold now, because I have a comprehensive chart. For government services, I have a comprehensive chart. As you could see here, services provided by government. I have tried to summarize everything in this simple chart. This exemptions I will try to explain. This chart I will try to explain in the exemptions chapter. Currently, please do keep it on hold. So services provided by government, currently keep it on hold. Why? Because here when RCM, when exempted, when taxable, all that I have summarized it in one simple chat. This exemptions will try to cover it in the exemption chapter. Okay, so 5 and 5A I'm not covering it now, because this two I will cover along with the exemptions. When exempted, when RCM, we will try to cover it in one comprehensive chart. Then renting of residential dwelling. So this we'll try to do 5AA, 5AB, renting of residential dwelling. Here also some associated exemptions are there. That exemptions part we will see it in the exemptions chapter, but now I will tell you RCM. So what is that RCM is? Renting of residential dwelling. If someone is providing the services of renting of residential dwelling, if the supplier could be any person, supplier of renting of residential dwelling, supplier could be any person, but in case if the recipient is a registered person, always RCM. Always RCM. So residential dwelling. Sir, what do you mean by residential dwelling? A residential house here, if a place which is meant for residential purposes, like let us say for example 1 BHK flat, 2 BHK flat, residential house. So if there is a residential dwelling, that residential dwelling has been given on rent. Supplier could be any person. There is no restriction on supplier. Supplier could be any person. But in case if the recipient is a registered person, then always RCM. Recipient, if he is registered person, always RCM. Recipient is required to discharge that liability under RCM. But however, there are some exemptions here. Renting of residential dwelling is exempted. When it is exempted, sir? In case if the renting of residential dwelling is received by a person who is an unregistered person for residential purposes. For residential purpose, renting of residential dwelling to an unregistered recipient for residential purposes. Exempted. No one will be liable to pay the GST. Let us say, for example, I am a salaried employee. I went to some metropolitan city. I have taken there 1 2 BHK flat for rent, where I am staying it along with my family. I am an unregistered person. I have taken one residential dwelling for my residential purposes. Then also, do you think I will be liable to pay the amount of GST? No, no RCM, no FCM, exempted, because shelter is essential need for everyone. No. So that's why renting of residential dwelling for residential purposes to an unregistered recipient is exempted. No one will be liable to pay the GST on it. Similarly, renting of residential dwelling for residential purposes only. Renting of residential dwelling for residential purposes only. But if the recipient is a registered person, but if that recipient is an individual person, if that recipient is a registered person, but he is a registered individual, that means he is a registered sole proprietor. But in that residential dwelling, he is using it for residential purposes of himself and his family, and also he is incurring that expenses on his own account. Then also it is exempted. Let us say I'm a business person. Let us say I'm taking up this coaching classes. I'm a registered person. I have taken one 2 BHK flat on rent. I'm a recipient. A recipient is a registered person. I have taken a 2 BHK flat for rent, not for running my office. There I will stay with my family. Should I also liable to pay GST on that? Not required. That is exempted. Once again, shelter. That I am using it for shelter purposes. That's why there also it is exempted. Sir, what if a company which is a registered person, they have taken one 2 BHK flat on rent where the company's guest will stay there. Company's guest will stay there. Will it be taxable? Yes. Will it be covered under RCM? Yes. Why? Because exemption is there only when that renting of residential dwelling is taken by a recipient who is a registered person who must be an sole proprietor. Who must be a sole proprietor and he must be using that residential dwelling for residential purposes. Then only exemption will become applicable. In case if the partnership firm has taken a 2 BHK flat for residential purposes only, for their partners, no exemption will become applicable. Only when the recipient is a registered person who is a sole proprietor and who is using that residential dwelling for his residential purposes, then only exemption will come. Understood? Clear and comfortable, everybody? So what did I say? Renting of residential dwelling for residential purposes when the recipient is unregistered, exempted. In case if the recipient is registered, if the recipient is a registered person and he's renting that residential dwelling, and recipient is a registered person, he is a sole proprietor, not company, not partnership firm, not anybody else. If the recipient is a registered person but he is a sole proprietor and he is taking that residential dwelling for staying along with his family, not for commercial purposes, he is incurring that expenses on his own account, not on behalf of his business, then also it is exempted, no GST. Okay, in all other cases, if the recipient is a registered person, always it will be taxable under reverse charge mechanism. Understood? Clear and comfortable? And one more thing, if you pay close attention, even for exemptions also, when residential dwelling is given for residential purposes, then only exemption is there. If the residential dwelling is given for commercial purposes, then there will be no exemption, then GST will be payable. GST will be payable. For commercial purposes, no exemptions are there. Only when renting of residential dwelling is for residential purposes, then only exemption will become applicable. Understood? Clear? So this is what one entry. Next, renting of immobile property other than residential dwelling. Sir, residential dwelling you have explained. What if a property is being rented out which is other than residential dwelling? That means if commercial premises like shops, offices, if they are given on rent, then when RCM will become applicable? When they say here it depends on the status of the supplier and status of the recipient. If the supplier is unregistered, if the recipient is registered, then RCM. Then only RCM. Sir, what if supplier is registered person? Then forward charge mechanism only. So renting other than residential dwelling will get covered under RCM only when few conditions are fulfilled. What are they? Supplier should be unregistered person, recipient must be registered person, then only RCM. Sir, what if supplier is a registered person? Then forward charge mechanism only. Able to understand? So if I have to summarize it once again, renting of residential dwelling. If it is a residential dwelling, if the recipient is registered, who is supplier doesn't matter. Supplier could be any person. If the recipient is registered, then RCM, but subject to some exemptions. Renting other than residential dwelling. If the supplier is other than registered person, but if the recipient is registered person, then it will be covered under reverse charge mechanism. Understood? Clear and comfortable? Other than composition dealer. Here they have kept one more point here. The recipient should be other than composition dealer in case of other than residential dwelling. So that means here if the recipient is registered person other than composition dealer. Let me put it this way. So recipient is registered person other than composition dealer. Other than composition dealer, then only RCM. Sir, what if recipient is a composition dealer? Then RCM will not become applicable. Is it exempted? No. If I say RCM is not applicable, it doesn't mean it is exempted. If I say RCM is not applicable, then it is forward charge mechanism. If there is any specific exemption, then only exempted. If I say RCM is not applicable, don't directly come to the conclusion that it is exempted. No, if RCM is not applicable, there is one more option there, FCM. If specific exemption is there, then FCM also will not become applicable. Understood? Clear and comfortable? Right. So this is what regarding renting of immobile properties. So what bunch of services under RCM we have covered? First one, GTA services we have covered. Thereafter, second category we have covered regarding legal services. Third one, sponsorship services. Fourth block we have completed regarding renting of immobile properties. Then we will talk about director services. Services provided by director will also be covered under RCM. So there is a director. Directorship services. Who is the supplier here? Director. Supplier is director. Who is recipient? The company or body corporate in which he is a director. So there is an individual who is providing directorship services to a company or body corporate, who is supplier, director, who is recipient, body corporate. Now they are saying this service will get covered under reverse charge mechanism. That means on that directorship services, let us say for this director, for acting as a director, they are paying them the remuneration of 1 lakh rupees. On this 1 lakh rupees, this recipient being body corporate, they will only be liable to pay the GST under reverse charge mechanism. Able to understand? But here there is one conflict. But here there is one matter requiring discussion. Here there is one conflict. See, companies started arguing that, see, when we are paying remuneration to the director, director is our employee. When we are paying remuneration to the director is our employee. So that is services provided by an employee to the employer in the course of employment, which is neither a supply of goods, not even supply of services. It is getting covered under Schedule 3. So we will not be paying any GST. Like that, companies are not paying GST under RCM on directorship services. Because there was a confusion, because companies are arguing that director is an employee. So we are paying him the salary. So services provided by employee to the employer in the course of his employment is specified under Schedule 1, Schedule 3. Not even a supply of service, not even supply of goods. So it is outside of the GST purview. Like that, some companies are arguing and not paying GST. So that's why department has clarified is. So here point of conflict is whether director is an employee or not. That is where the question is coming. In order to decide whether director is an employee or not, what they have told is, when the company is paying the remuneration to the director, check under which section of the Income Tax Act they are deducting TDS. When they are paying remuneration to the director, you have to first check under which section TDS is getting deducted. If it is salary, if it is a remuneration is in the form of salary, then generally TDS will be deducted under section 192. If the TDS is deducted under section 192, then that services provided by the director is in the capacity of an employee. Those are services provided by the employee to the employer in the course of employment. It is not at all a supply, getting covered under Schedule 3, and no GST will come here. No GST implications, no forward charge mechanism, no RCM. On the other hand, if the company is paying some remuneration to their independent directors, generally there will be some independent directors in the company, to them also they will pay remuneration, but they will not pay it in the form of salary. They will pay something called sitting fees and all. That remuneration, it will be subjected to TDS under section 194J. So if the remuneration paid to the director is getting subjected to TDS under section 194J, then it is a supply. It is not falling under Schedule 3. It is not service provided by the employee in the course of his employment, because it is a professional service. You are subjected to TDS under 194J. So then it will be treated as supply of service, and GST will be payable, and that GST will be payable under reverse charge mechanism. That GST will be payable under reverse charge mechanism. Able to understand? So the main point here is, in case of directorship services, we have to check under which section TDS is getting deducted. If the TDS is getting deducted under section 192, those are the services provided by the employee to the employer in the course of employment outside of the GST purview. On the other hand, if the remuneration is paid if the remuneration is subjected to TDS under section 194J, then it will be the professional service. It is not getting covered under Schedule 3. It will be a supply. It will be subjected to GST, but under reverse charge mechanism. Company has to discharge it. And this RCM provisions will become applicable only for the services provided in the director's capacity. Only services provided in the director's capacity. Let us say this person, in addition to acting as a director of the company, he is also providing some other service. Let us say he is also providing services of renting of immobile property. So will that also get covered under RCM? No, unless otherwise covered anywhere else. Okay. So this clause, this entry only talks about services provided by him in the capacity of a director only. They will only get covered under RCM. If he is a director, but in other capacity, if he is providing services to the said company, then it will not come under RCM. It will go to forward charge mechanism. Only directorship services will get covered under this entry. Understood? Clear? Next. So this is what regarding directorship services. Now we will talk about some financial services. Banking sector, insurance sector, we will see. So what is a banking sector, insurance sector? Services provided by an insurance agent. Services provided by an insurance agent. So insurance agent is there. He is providing some services to an insurance company located in the taxable territory. Now they told this is under RCM. So that means whatever services insurance agent has provided to the insurance company, for which he will receive some commission, remuneration, etc. On that, this insurance company is only required to pay the GST under reverse charge mechanism. Okay, so this is what regarding services provided by insurance agent to a person carrying on insurance business. This is getting covered under RCM. Similarly, recovery agent services. The services provided by recovery agent. Let me once again come here. Services provided by a recovery agent. There will be a recovery agent, no? So there is a recovery agent. He is providing the services to a recipient. Sir, who is that recipient? Recipient is a banking company, financial institution, or NBFC. So recipient should be banking company, NBFC, or any financial institution. So services provided by recovery agents to a banking company, NBFC, or financial institution, for which this bank, NBFC, financial institution will pay them the remuneration. This also will get covered under RCM. Bank, NBFC, or financial institution is required to pay the GST under reverse charge mechanism. These days it is quite common. No, you take the loan, you will not repay it. Now some recovery agents will come for recovery. These are not bank employees. They are some professionals. There's gundas, rowdies, and all. They will recruit, and they have to go and recover that money from that borrower on behalf of that lender. So that we call it as recovery agent services. They have told that even these recovery agent services also will get covered under reverse charge mechanism. So one, services provided by insurance agent to the insurance company, services provided by recovery agent to a banking company, NBFC, or financial institution covered under RCM. There are few more services covered under this. So let me come here. This one. Direct selling agent. This also will try to cover 12, 13, 14. All these three are also related to banking sector and financial sector only. We'll try to cover it. Services provided by individual direct selling agents other than body corporate, partnership firm, or LLP firm to a banking company, NBFC. They will also get covered under RCM. So what is this? So now here many students often get confused here. I will give you one small clarity here. Services provided by a direct selling agent. Services provided by a direct selling agent, and that direct selling agent must be a individual direct selling agent. And services provided by individual direct selling agent to a banking company. What they're saying here, who should be recipient? Recipient should be banking company or NBFC. Recipient should be banking company or NBFC located in the taxable territory, then RCM will become applicable. Now where students often commit the mistake is when it comes to recovery agent. When it comes to recovery agent, there is no restriction that recovery agent should be only individual. Recovery agent could be body corporate also. Recovery agent could be even partnership firm also. So recovery agent services, supplier could be anybody. And if the recipient is banking company, NBFC, or other financial institution also, all will get covered under RCM. But when it comes to direct selling agent services, only individual direct selling agent. If the services provided are by a direct selling agent, but if the direct selling agent is body corporate or partnership firm, then RCM will not become applicable. In case of direct selling agent, RCM will become applicable only when the supplier, only when the direct selling agent services are provided by an individual, then only RCM will become applicable. But there is no such restriction with regard to recovery agent services. Recovery agency services can be provided either by individual or a partnership firm or a body corporate, still RCM only. But for direct selling agent services, only the supplier should be individual. Only the supplier should be individual. If the supplier is individual direct selling agent, and if the recipient is a banking company or NBFC, then only RCM. Okay, so please keep this point in mind, guys. Many students often commit a mistake. Right. Fine. So let us try to understand it. Let us try to proceed further. So one question they are asking, sir, if the recipient is a composition dealer and the supplier is unregistered person, then how can supplier collect a GST from the recipient? See, there what will happen is, so one of the student is asking a question. I think this is the question regarding immobile property, renting of immobile property. Yes, I got your question. So one of the student is asking a question. Sir, renting other than residential dwelling. Recipient is a registered person, but let us say he's a composition dealer. If he's a composition dealer, then RCM will not become applicable. Forward charge mechanism should be applicable. No, sir. Yes, forward charge mechanism should be applicable. But here supplier is an unregistered person. No. Yes, supplier is unregistered person. No one will collect the GST. No one will collect the GST in that case. So let us take a typical scenario. Renting other than residential dwelling. Recipient is a registered person, but he is a composition dealer, sir. So in that case, RCM will not become applicable. Supplier is unregistered, recipient is a registered person, but he is a composition dealer. RCM not applicable. Yes, when RCM is not applicable, forward charge mechanism will become applicable. Supplier should collect the amount of GST and pay it to the government. But here supplier is unregistered person. No, sir. Yes, supplier is unregistered person. That's why he will not collect any GST. But can I call it as exempt? No, you can't call it as exempt. It is not exempt. It is taxable. But here GST will not be collected. Why? Because supplier is not a taxable person. Supplier is not a taxable person. Okay. So yes, it is not RCM only we have to say, but we should not say it exempted. We have to say it forward charge mechanism. But under forward charge mechanism, here GST will not get collected. Why? Because supplier is unregistered person. Okay, I hope your doubt is solved here. So many students will have this common doubt. So that's why I thought of clarifying it for everybody. Now, so once again, let us come back to the financial sector. Right. In the financial sector, what and all I have covered? Services provided by insurance agent to an insurance company located in taxable territory, RCM. Services provided by recovery agent to a bank, NBFC, or financial institution, RCM. Then we have individual direct selling agent services provided to bank or NBFC, covered under RCM. There are few more things which will be added to the list here. Now, what are that few more things is services provided by a business facilitator to a banking company located in taxable territory, covered under RCM. So what is one more service? Services provided by business facilitator to a banking company. Only banking company, here NBFC is not there. Services provided by business facilitator to a banking company will get covered under RCM. So let me write it here clearly. Banking company is covered under RCM. Not just that, one more thing they say here. Services provided by agent of business correspondent to a business correspondent. To a business correspondent. Let me write it completely. To a business correspondent is also getting covered under RCM. So this is all bunch of financial services which are getting covered under reverse charge mechanism. Understood? That will be the next entry. See, I'm not going into the technical details. Who is business correspondent? Who is agent of business correspondent? All that I'm not going into the technical details because that will take a lot of time. Who is business facilitator? Who is business correspondent? All this discussion we generally have it in our regular class in a detailed manner. But here I'm letting you revise the entire provision. So these are the bunch of banking and financial services which are getting covered under RCM. So in all this, you have to remember who should be supplier, who should be recipient, what should be the status of the supplier, what should be the status of the recipient, that you have to remember it. Okay, clear? So one more last time I'm revising. So insurance agent providing services to insurance company, recovery agent providing services to banks or NBFCs or financial institutions, individual direct selling agent providing services to banks or NBFCs, a business facilitator providing services to banking company only. Here NBFC is not covered. Let me write and strike it off. So here they did not say NBFC, only services provided to banking company by the business facilitator only will get covered under RCM, and services provided by agent of business correspondent to a business correspondent. So these are the bunch of financial services which will get covered under RCM. Okay, right. Now, associated with the banks, we have one more entry also. Services provided by members of overseeing committee to the RBI. So let me add it here itself. One more thing also I will add it here. Members of overseeing committee. Members of overseeing committee. These members of overseeing committee will provide the services to RBI for which they will get remuneration. That will also get covered under RCM. See, what is this overseeing committee is? In India, we have RBI, right, which is a central bank. Now this RBI will take various decisions regarding the money circulation, whether or how to keep the repo rates, should they increase it, decrease it. All the decisions are taken by RBI. Now RBI, how they will take the decision is they have created one committee where there will be industry experts and all. These people will study the market, they study the Indian market situation. They will give suggestions to the RBI regarding what decisions have to be taken. So like that, some industry experts will be there who will be acting as members of overseeing committee. They will study the industry trends and give the suggestions to the RBI. For their services, RBI will pay them some remuneration. For them, RBI will pay them some remuneration. So for that remuneration, even RBI is only liable to pay the GST under reverse charge mechanism. Here supplier will not collect any GST under forward charge mechanism. This will get covered under reverse charge mechanism. Okay. So these are the bunch of banking and financial and insurance services which will get covered under RCM. Now we will try to proceed ahead. Now we will try to talk about some intellectual property related RCM services. We'll try to talk about intellectual property related services like copyright and trademarks, copyrights, mainly copyrights related services which are covered under RCM, that we'll try to cover. So we have that one bunch. So services provided by way of transfer or permitting use or enjoyment of a copyright under Copyrights Act relating to original dramatic, musical or artistic works. So what is the service here? Transfer or permitting use or enjoyment of a copyright. Either that copyright is related to original dramatic work, musical work or artistic work. So what they are trying to say here, service, what kind of services is covered under RCM? Transfer or permitting use or enjoyment of a copyright. Who should be the service provider? Either music composer, photographer, artist or the similar kind of people who are engaged in that artistic work. And who should be recipient? Music company, producer, or the like located in the taxable territory, RCM. Sir, what is it? What they are trying to say? Let us say, for example, I'm a music composer. I created one song. I created one song. For that song, I will take the copyright. For that song, I have taken the copyright under Copyrights Act. One day, T Series has approached me. T Series is a music company. T Series approached me and asked me, sir, you have taken the copyright. You have created a song and taken the copyright. No, you please permit us to use that copyright. So what we will do is we will keep your song on our YouTube channel, and for keeping that, you give us that right. So if you transfer or permit us to use your copyright, in return we will pay you some consideration, generally in the form of royalty. So here, who is the service provider? As a music producer, I am the service provider. So I am the music producer. I'm a music producer, music composer, sorry. So I have created one song. For that, I have taken copyright. That copyright I am transferring, or I am permitting it to be used to some music producer company or some music company. Here it is T Series. So now, for which they will pay me some consideration, because I am transferring or permitting the use or enjoyment of a copyright which I have. So here, who is the service provider? Music composer. Who is the service recipient? Music company. Now they are saying that this will get covered under RCM. So on this, for permitting or transferring that right to use copyright, this company will be paying me some consideration. No, on that consideration, this music company is only liable to pay the amount of GST. Or let us say I'm a photographer. I'm a wildlife photographer. I went into the wild and I have taken some wildlife animals photographs. And for that photographs, I have taken a copyright. One day, one magazine, when Wildlife magazine has approached me and they asked me, sir, you please transfer or permit the use or enjoyment of that photo of copyright related to that photo, so that that photo will publish in our magazine. So for that, the magazine company will give me a photographer. They will give me some amount. So I am the service provider. I am the photographer. I am providing the services relating to transfer or permitting use or enjoyment of a copyright in relation to the photo to a magazine company. So this is also getting covered under RCM. Or let us say I'm an artist. I have drawn painting. I have taken a copyright. So one day one producer is coming to me and asking me to transfer or permit or use, enjoy that intellectual property. For that services also RCM will become applicable. Able to understand? So this is what one category of services for copyrights. One more copyright is also covered. Let us say I'm an author. I'm an author. So I have written this book. So I'm an author. So I have written one book. I have written one novel. For that novel also I will take a copyright. For that novel also I will take a copyright. So I have taken copyright. So one day one publisher has approached me. Let us say, for example, Penguin publisher has approached me. They asked me, sir, please transfer the copyright to us. Please permit to use the copyright. Please let us enjoy the copyright. So what we will do is, if you give us rights, if you transfer us the copyrights, we will do the publishing and we will sell your book. Since you are permitting us to use that copyright in relation to your book, we'll pay you some royalty. We'll pay you some consideration. So here, who is the service provider? As an author, I am the service provider. What service I am providing? I am permitting transfer or permitting use or enjoyment of a copyright in relation to original literary work to a publisher who is located in the taxable territory, who is recipient. Now they say that this service is also getting covered under RCM. This publisher is required to pay the amount of GST with the government. Understood? Clear? But however, here they have given some relaxation. Here they have given one option. In case if the author insists, in case if the author wants, he can take registration and he can make a declaration. He can exercise the option that, sir, even though this service you have notified under RCA, but I want to take the registration and I want to make the payment of GST under forward charge mechanism. I will give the tax invoice, sir. On that invoice, I will also give the declaration, sir. Even though the service is getting covered under RCM, I have exercised the option to pay the GST on it under forward charge mechanism. Even I will give declaration on the tax invoice also, sir. If he is ready to do it, then the government can consider, then the GST department will let the author discharge the tax liability under forward charge mechanism. Able to understand? So that's what they try to say it here. If you see, so services provided by author by way of transfer or permitting use or enjoyment of the copyright covered under 13(1)(a) of the Copyright Act 1957 relating to original literary works to a recipient who is a publisher located in the taxable territory, that will get covered under reverse charge mechanism. However, an author can choose to pay the tax under forward charge mechanism if he is registered and is filing a declaration exercising the option to pay GST under forward charge mechanism, and he has agreed to comply with all the provisions. And one more important condition, the author shall not withdraw from that option up to 1 year. It is not like today you are exercising the option and saying, sir, I will pay the GST under forward charge mechanism. After 1 month or 2 months, you are saying, no, sir, this is very much trouble. Let it be under RCM. Government will not agree. So if you have exercised the option, if you are an author, if you have exercised the option to pay the GST under forward charge mechanism, you have to remain under that option for 1 year. Understood? And one more point here, this option to exercise to pay the GST under forward charge mechanism is only applicable for author. That option is not given for music composer, photographer or artist. For music composer, photographer or artist, it must remain under reverse charge mechanism. Compulsory under reverse charge mechanism. There, even as a music composer, photographer, artist, if you are voluntarily coming forward and saying, sir, I will pay the GST under forward charge mechanism, government will not permit. That option they have given only for author. So one more point which I want to bring it before you here, till now whatever services I have notified under RCM, unless they have given the option for the person to pay the GST under forward charge mechanism, like in GTA they have given option for GTA service provider, and here for other they have given option for GTA. For other they have given the option to pay the GST under forward charge mechanism. Only when they are giving option, only when they have given permission, then only you can opt for forward charge mechanism. In all other cases, if they have told RCM, that is compulsory. In all other cases, if they have told RCM, it is compulsory. Like if you take insurance agent, they told services provided by insurance agent to a insurance company under RCM. There can the insurance agent come forward and say, no, I will take registration, I will pay GST under forward charge mechanism. Will that option be given to him? No, the government will ask him to get lost. So unless they give the permission somewhere, like in GTA, they have given permission. For other, they have given permission. Only when they are giving permission, they can exercise the option to pay the GST under forward charge mechanism. If they have not given any option, if they told something is under reverse charge mechanism, it is must, mandatory. You can't there come and poke the government saying, no, I will pay the GST under forward charge mechanism. I don't want to give the trouble to my recipient. All that will not work. Unless they are giving you any option, if they have told you RCM, that is compulsory. Recipient is only required to pay the GST under RCM. Okay, clear? Right. So even that also we have covered. Copyright related things also we have covered. So once again, what and all categories of the services we have covered under RCM? So just I'm dividing it category wise, industry wise. First, GTA we have covered. Thereafter, after GTA, we are done with what? Next category, legal services we have covered, where we have seen the services provided by advocate, form of advocates, and also arbitral tribunal. Thereafter, we have seen sponsorship services. Sponsorship services we have covered. Thereafter, we have started looking into renting of immobile property. Renting of immobile property we have covered. And then we have seen banking and financial sector and insurance sector. So I will call them as financial sector related things we have covered. Thereafter, just now we have covered copyright related services, permitting or transferring or use or enjoyment of a copyrights. Next, let us see the next bunch of services which are getting covered under RCM. Sorry, my pencil has ran out of power. Just give me 1 minute. Right. So in the meantime, we'll try to cover the remaining things also. Right. Now we have one more thing, which is security services. Security services also we have. Sir, which kind of security services are getting covered? Security services means, let us say for example, if I'm giving CCTV cameras, if I'm coming and installing CCTV cameras, that is also security services, but that is not covered under RCM. When they say security services, they are only talking about one particular kind of security services. What is it? Security services, which are services provided by way of supply of security personnel. Not for all kind of security services RCM will become applicable. What they're clearly saying it here, security services which are provided by way of supply of security personnel. Let us say I'm running a security agency. Let us say one supermarket is there. They want security guards. So I am providing them security guards. I am providing security personnel. So only this kind of security services will get covered under RCM. Let us say if some company has asked me to install the CCTV cameras, that is also security services only. Will that get covered under RCM? No. Only one kind of security services will get covered under RCM. What is it? Services by way of security services provided by way of supply of security personnel. If I am running a security agency whereby I am providing the supply of security guards to the recipients, that will only get covered under RCM. So security services provided by way of supply of security personnel. Who should be supplier? Supplier should be other than body corporate. Who should be recipient? Recipient should be registered person located in the taxable territory. Who should be recipient? Recipient must be registered person located in the taxable territory. But here there are some few points which we need to keep in mind. There are some exceptions also for RCM. We'll try to talk about it. I will try to summarize it. So what is the service which is getting provided? Security services. Which kind of security services? by way of providing security personnel. Only this will get covered under RCM. Security personnel is getting provided. Who should be supplier? Supplier should be other than body corporate. Who should be recipient? Recipient should be a registered person. Supplier should be other than body corporate. Recipient. Who should be recipient? Recipient should be a registered person. Then RCM will become applicable. However, even though the recipient is registered, even though the supplier is other than body corporate, still RCM will not become applicable. Still RCM will not become applicable. When RCM will not become applicable? When RCM will not become applicable is if the recipient is a registered person, but if the recipient is a department or establishment of central government, state government, union territory, local authority, government agency registered only for deducting TDS under section number 51. So like whatever relaxation they have given for GTNO, the same. So supplier recipient is registered person. But if the recipient is a department or establishment of central government, state government, union territory, local authority or government, what else they say here? Local authority or government agency who have taken registration, if they are registered only for deducting TDS under section number 51, not for making any taxable supply, then RCM will not become applicable. If RCM will not become applicable, then what will happen? Then forward charge mechanism will become applicable. Don't say exempt. When I say there is no RCM, then it will become forward charge mechanism. So recipient is a registered person, but if that recipient should not be a department or establishment of central government, state government or union territory or local authority or government agency who have taken registration only for deducting TDS under section number 51. Recipient is registered, but he should not be this kind of registered person. Then RCM will not become applicable. And one more case where RCM will not become applicable is recipient is a registered person paying tax under composition scheme. Same like renting of immobile property other than residential dwelling. So recipient is registered person, but he is a composition dealer. Then also RCM will not become applicable. If RCM not becoming applicable, then what will happen? Then forward charge will become applicable. Don't say exempted. Then forward charge will become applicable. Understood? So I try to present it in a neat manner. So when RCM will become applicable? When all these conditions are satisfied. Security services, and that security services should be by way of providing of security personnel. Supplier should be other than body corporate. Recipient must be registered person, but the recipient should not be a department or establishment of central government, state government, union territory, local authority or government agency who have taken registration only for the purpose of deducting TDS under section number 51, but not for making any taxable supply. Or if the recipient is a registered person, but he has opted for composition scheme, then also this RCM will not become applicable. If RCM will not become applicable, then what will happen? Then forward charge mechanism will become applicable. Understood? Clear? Next. So this is regarding security services. Now one more thing we have, renting of motor vehicle. So this also I will try to summarize it. Come on. This also I will try to present it in a neat manner. So renting of motor vehicle will get covered under RCM. When, sir? Here also some conditions. This you have to mug it up. Here also some conditions. Number 1, supplier should be other than body corporate. Recipient must be a body corporate. And some conditions are required to be fulfilled. What and all conditions are required to be fulfilled? That motor vehicle should be designed to carry passengers. Okay. Then cost of fuel must be included in the consideration. Let me put it this way. Cost of fuel must be included in consideration. And supplier should not have charged the GST amounting to, and one more thing they say here. So one more thing. So supplier should be other than body corporate and recipient should be body corporate. Renting of any motor vehicle should be designed to carry passengers. Cost of fuel must be included in the consideration, and the supplier should not have given the tax invoice charging GST at the rate of 6%, but now it is not 6%, it will be 9%. That is what the amendment that you will find it in the supplementary material. So once again, if I write it here, supplier should not have given invoice. That means he should not have opted to pay the GST under forward charge mechanism. Supplier should not have given invoice charging GST at the rate of 9%. 9% means 18% effectively. Supplier should not have given the invoice charging GST at the rate of 18%. Previously, it used to be 12%, but now it is 18%. Okay. So when all these conditions are satisfied, then RCM will become applicable. This you have to remember it, my dear students. So what and all are the conditions when renting of motor vehicles will get covered under RCM? Number one, supplier renting of motor vehicle, that motor vehicle should be designed to carry passengers. That means if I'm giving a motor vehicle on rent, which is not designed to carry passengers, let us say I'm giving truck on rent, will it get covered under RCM? No. Only renting of motor vehicle, which must be designed to carry passengers. Cost of fuel must be included in the consideration. Supplier should not have given the invoice at the rate of charging GST at the rate of 18%. That is 9%. Previously it used to be 6%. Now 9%. And supplier is other than body corporate. Recipient must be a body corporate. When all these conditions are satisfied, then RCM will become applicable. So now here also one slight amendment which we have to remember is, even in case of renting of immobile property, even in case of renting of motor vehicles also, the supplier of renting of motor vehicle services has two options. If he has opted to pay GST under forward charge mechanism, here in case if the supplier of renting of motor vehicle designed to carry passengers, if he has opted to pay the GST under forward charge mechanism, like GTA service provider, here also he is having two rates. So renting of motor vehicle designed to carry passengers, if the supplier opts to pay the GST under forward charge mechanism, or if the supplier is required to pay the GST under forward charge mechanism, then there will be two options. Basically, there used to be two options. Either he can pay 5% of GST with very much restricted ITC. Very restricted ITC he will get. And that means with restriction on ITC, he can pay GST at the rate of 5%. On the other hand, he can pay 12% with full ITC. Previously, this used to be 12%, but if he wants to claim full ITC, he has to pay 18% GST now with full ITC. This is also one amendment. Along with the GTA, this is one more amendment. So that's what, even if you look at the supplementary material, you'll be able to find it. Taxability of services by way of renting of any motor vehicle designed to carry passengers where the cost of fuel is included in the consideration charged from the service recipient. If the supplier of services has taken only limited ITC, if he is taking only limited ITC, then he has the option to pay GST at the rate of 5%. Where supplier wishes to avail ITC without restriction on goods or services used in supplying renting of motor vehicle service. Without any restriction, if you want to take full ITC, previously the GST rate used to be 12%, but now it has been changed to 18%. You will be required to pay 18% of the GST. Understood? Clear and comfortable? So this is one such amendment. So just this much you have to remember it. When renting of motor vehicle or designed to carry passengers will get covered under reverse charge mechanism. Just it is a thumb rule. You have to remember all this. When all these conditions are fulfilled, then GST will be payable under reverse charge mechanism. Okay, right. So with this, we are done with the renting of immobile properties also. Renting of motor vehicles also. So this is also one such a service where covered under RCM. We have one more category of service which is getting covered under RCM. So what is that RCM? What is that one more service? Lending of securities. So one more thing is lending of securities. Sir, what is that lending of securities? In the stock market, there will be an option called lending of securities. So there will be one person who is having the shares. He is lending the securities to another person. So here supplier will be lender. Recipient will be borrower. So even like the way you lend the money, even you can lend the securities also. Let us say I'm a person who is trading in the stock market. I have some shares which I'm holding it for long-term investment. I don't sell it in the near time. So what I can do, I can lend my shares to another person who is ready to borrow them. So he will borrow the shares, and after a certain period of time, he will return back the shares to me. Since I am lending the shares to another person, what will happen is I will collect from him some amount. Some charges I will collect, some consideration I will collect. I am lending the shares, no? For that I will receive some consideration. So some charges I will collect. So here, who is the supplier? Lender of the securities is the supplier. Who is the recipient? Borrower of the securities is the recipient. And this scheme is approved by, there is a scheme approved called Securities Lending Scheme, which is approved by SEBI. And this transaction will happen through a mediator. Like one stockbroker will be involved here. So through the mediator, not stockbroker actually, these depositories are there, no? So there will be one intermediary. This transaction will generally happen through an intermediary. Keep the intermediary aside. So who is the supplier of service? Lending of securities? Lender. Who is the recipient? Borrower. So now they are saying that this service will get covered under RCM. As a borrower, you are recipient. You are receiving the services of lending of securities. You will pay the consideration to the lender. On that consideration, whatever is the applicable amount of GST is there, that amount of GST is required to be discharged by the recipient under reverse charge mechanism. Understood? So this is what they try to keep it here. So if I read it for you, services of lending of securities under securities lending scheme, that is a person who is a service provider, lender, who the person who deposits the securities registered in his name or in name of his authorized representative on with approved intermediary. Who is recipient? Borrower, that is a person who borrows the securities under this scheme through an intermediary. So this will get covered under reverse charge mechanism. Understood? Then so under IGST also they have notified some services. So any service supplied by a person located in non-taxable territory to a person located in the taxable territory other than non-taxable online recipient, that will also get covered under RCM. So I spoke about import of services. This point I have already clarified in the supply chapter. In case of import of services, the importer is liable to pay the GST under reverse charge mechanism. Yes or no? Being a recipient, as an importer, if you are receiving the services from a person located outside of India, the recipient, whoever is located in the taxable territory, whoever is importing it, that person will be liable to pay the GST under reverse charge mechanism. They use some phrases here, non-taxable online recipient and all. Not important. This non-taxable online recipient and all is something which is relevant for CA final, not for the CA inter. This you can ignore it. Just you can remember this point as import of services. For import of services, GST will be payable under reverse charge mechanism. Understood? Clear and comfortable, everybody? So with this we have completed all different categories of the services which are covered under reverse charge mechanism. Now I wanted to explain one more point here. There is one more thing which is 9 subsection 5. There is one more thing, 9 subsection 5. See, 9 subsection 3 and 9 subsection 4 will talk about those cases where RCM will become applicable. So when it comes to manner of collection of GST, I told you about two cases. One is forward charge mechanism and the other one is reverse charge mechanism. One is forward charge mechanism, other one is reverse charge mechanism. What is forward charge mechanism? In the forward charge mechanism, what will happen is the supplier will collect the amount of GST from the recipient and pay it to the government. In the reverse charge mechanism, what will happen? The recipient will directly pay the amount of GST to the government. See, both in forward charge mechanism and under reverse charge mechanism, the ultimate burden of tax is going to be on the recipient only. Both under forward charge mechanism and reverse charge mechanism, the ultimate person, the person whoever is bearing the taxes is recipient only. Just who is paying is changing. See, in case of forward charge mechanism, supplier will pay the amount of GST to the government, but supplier will not pay it from his pocket. Who will pay? Supplier will collect it from the recipient and pay it to the government. In case of recipient, in case of RCM, recipient himself is paying the GST amount to the government from his own pocket. So that's what I say, whether it is forward charge mechanism or it is reverse charge mechanism, just the person through whom the money is going to the government is changing. But ultimate burden in both the cases, both in forward charge mechanism and reverse charge mechanism, the ultimate person whoever is bearing the taxes is the same, who is recipient. Yes or no? So I have told you about two cases, two mechanisms for collection of tax. But now I am going to tell you one more case. 9 subsection 5. There is one more category, there is one more mechanism for collection of GST where neither the supplier will pay the amount of GST to the government, not even recipient will pay the amount of GST to the government. There is one more mechanism for recovery of taxes where neither the supplier will pay the amount of GST to the government, not the recipient will pay the amount of GST to the government. Then who will pay the amount of GST, sir? E-commerce operator will pay the amount of GST. Who will pay the GST? E-commerce operator will pay the amount of GST. So there are some services which are notified under 9 subsection 5. Listen carefully. There are some services, only services. There are some services which are notified under 9 subsection 5. If these services are provided through the e-commerce operator, not the supplier will pay the amount of GST, not the recipient will pay the amount of GST, but e-commerce operator will have the obligation to collect the amount of GST and pay it to the government. Ultimately, anyhow, he will collect it from the recipient only, but the payment has to be done by the e-commerce operator. Sir, what are those services? Those services are notified under 9 subsection 5. Sir, how many services are notified, sir? 6. Now here is one more amendment. Previously, there used to be only 5 services which are notified under 9 subsection 5. Now to that 5 services, one more service they have added to the list, which is an amendment. So altogether, there are 6 services which are notified under 9 subsection 5. If these services are provided through the e-commerce operator, if these six notified services are getting provided through the e-commerce operator, neither the supplier will pay the amount of GST, not even the recipient will pay the amount of GST. Then who will pay the amount of GST, sir? E-commerce operator will pay the amount of GST. Sir, what are that 6 services which are notified? If provided through e-commerce operator will pay the amount of GST. Let us start looking at that list. So, number 1, services by way of transportation of passengers by a radio taxi, motor cab, maxi cab, motorcycle, or any other motor vehicle except omnibus. Other than usual bus, we see if services of transportation of passengers is getting provided through the e-commerce operator, like here whom they are referring to, Ola, Rapido, Uber, all this they are referring to. So these are the e-commerce operator. Let us take Ola. Ola is an e-commerce operator. There is a cab driver. He will get registered with Ola. He will provide the services of transportation of passengers to a recipient. Who is the supplier? Cab driver. Who is the recipient? That person whoever is booking the cab. What is Ola doing here? Ola is just an intermediary. He's just a mediator. But they say that if these services are getting provided through this e-commerce operator, on that services, Ola has to pay the amount of GST. So Ola will give the invoice. On that invoice, they will collect the amount of GST from the recipient, and this e-commerce operator will pay the amount of GST. So first category of service on which GST will be paid by e-commerce operator is services by way of transportation of passengers by vehicles other than omnibus. Omnibus means is normal travel buses we have, no. Other than this, whatever other passenger transportation services which are getting provided through the e-commerce operator only will pay the amount of GST. Next, second category of service which will get on which GST will be paid by the reverse on which GST will be paid by e-commerce operator is services by way of, once again, transportation of passengers. So let me try to put it in a diagrammatic format. So there is an e-commerce operator and there is a service getting provided. Sir, what is that service, sir? Transportation of passengers. Service which is getting provided is 1 minute. Just give me 1 minute. The pencil will get charged. So talking about this second category of service which is getting covered under 9 subsection 5 is through e-commerce operator, the services of transportation of passengers is getting provided by way of omnibus. In the first service, transportation of passengers by other than omnibus. But in the second service, which is notified under 9 subsection 5 is transportation of passengers by way of omnibus, where the supplier is other than body corporate. Supplier should be other than body corporate. Then this is also getting covered under 9 subsection 5. On this services also, e-commerce operator will pay the amount of GST. Which means what? If the supplier is body corporate, and if they are providing the services of transportation of passengers by way of omnibus through the e-commerce operator, then 9 subsection 5 will not become applicable. Then supplier only required to pay the amount of GST under forward charge mechanism. Only when the supplier is other than body corporate and if they are providing the services by way of transportation of passengers by way of omnibus, then only 9 subsection 5 will become applicable. So first, let me rewrite this first point also in a detailed manner. First category of service where 9 subsection 5 will become applicable is, just 1 minute. So I will structure it. What is this, Ray? So once again, e-commerce operator, service which is getting provided is transportation of passengers. Other than omnibus. By other than omnibus. Supplier could be any person. There is no restriction here that only body corporate and out. Supplier could be any person if they are providing the services by way of transportation of passengers by other than omnibus through e-commerce operator. Supplier could be any person. Then always it will get covered under 9 subsection 5. E-commerce operator only will pay the amount of GST. However, if it is transportation of passengers by way of omnibus, 9 subsection 5 will become applicable. That is, e-commerce operator will pay the amount of GST only when the supplier is other than body corporate. Next, third category of services under which 9 subsection 5 will become applicable is, so third category of service which is services by way of providing accommodation in hotels, inns, guest house, clubs, campsites or other commercial places meant for residential or lodging purposes except where the person is liable for registration. Sir, what is that? So now they are talking about this OYO and this other kind of platforms. So which service will get covered under RC 9 subsection 5? E-commerce operator. Services by way of providing accommodation in places. accommodation in places, like it could be hotels, clubs, campsite, whatever it is. Just remember the example here as OYO. And supplier, if any supplier is providing the services by way of accommodation in places, and supplier is not liable for registration. Supplier should not be liable for registration. Supplier is not, if the supplier is not liable for registration under section number 22 subsection 1. So in that case, 9 subsection 5 will become applicable. Okay, so which means if the supplier, if that hotel owner is already liable for registration, if they have already been registered and they are listing themselves on OYO through the e-commerce operator if they are providing accommodation services. But in case if the supplier is already liable for registration, then 9 subsection 5 will not become applicable. If 9 subsection 5 will not become applicable, that means what will happen? The supplier only will collect the amount of GST. Supplier only has to remit the amount of GST. So when 9 subsection 5 will become applicable, in case of accommodation services, supplier should be a person who is not liable for registration. If the supplier is liable for registration and if he is providing the services through the e-commerce operator, then 9 subsection 5 will not become applicable. Usual forward charge mechanism only will become applicable. Next, fourth category of service, and which will get covered under 9 subsection 5. I am trying to make it as simple as I could here, my dear students. Listen carefully. I am giving some excellent presentation which you can understand it. So fourth category of service which is covered here is housekeeping services, plumbing, carpenting services. So let me put it this way. If someone is providing housekeeping services, so plumbing, carpenting, all that will come here. So here they are talking about this urban clap. So if housekeeping services are provided through e-commerce operator by a supplier, and here also supplier is not liable for registration. Supplier should not be, so let me put it this way, let me duplicate it. Supplier should not be liable for registration under section number 22, then 9 subsection 5 will become applicable. That means if the supplier is already liable for registration, then 9 subsection 5 will not become applicable. Supplier is only required to collect the amount of GST from the recipient under forward charge mechanism. Now, one more category of service which will get covered under 9 subsection 5 is, once again, e-commerce operator. Now they will talk about restaurant service providers. So if they are providing restaurant services, now they are talking about Swiggy and Zomato. If the supplier is providing restaurant services through e-commerce operator, then also 9 subsection 5 will become applicable. But here supplier should be other than hotel located at specified premises. So if you see it here, restaurant services other than the services supplied by restaurant or eating joints located at specified premises. That means they should not be located at specified premises. If they are not located at specified premises, then 9 subsection 5 will become applicable. Sir, now what is specified premises? Now, what do you mean by specified premises? Specified premises means those providing hotel accommodation service, those restaurants which are at a hotel, which are at a place where it is providing hotel accommodation, having a declared tariff of accommodation more than 7,500 per unit per day or equivalent. So if they are charging more than, if it is a 5-star hotel, like for example, if there is a 5-star hotel where they are charging per day per room more than 7,500, in that 5-star hotel, if a restaurant is located, and if that restaurant, that will call as specified premises, and if that restaurant is providing the restaurant services through e-commerce operator like Swiggy and Zomato, then 9 subsection 5 will not become applicable. Then forward charge mechanism, that restaurant only will collect the amount of GST and pay it to the government. But in case if the restaurant is other than specified premises, if the restaurant is located at other than specified premises like normal restaurants and all, if they are providing the services, restaurant services through the e-commerce operator, that will get covered under 9 subsection 5. Understood? E-commerce operator only will pay the amount of GST. So I told you about 5 cases. These 5 cases are already there. There is no amendment in this. Now the next point which I am adding, that is an amendment. So earlier there used to be only 5. Can you repeat it once for me? Services by way of transportation of passengers by other than omnibus. Supplier could be any person. 9 subsection 5. Transportation of passengers by omnibus by a supplier who should be other than body corporate. 9 subsection 5. Accommodation at places provided through an e-commerce operator where the supplier is not liable for registration under section 22 subsection 1. Then also 9 subsection 5. Supplying of housekeeping services, plumbing, carpeting services through the e-commerce operator where the supplier is not liable for registration under 22 subsection 1. 9 subsection 5. Supply of restaurant services through the e-commerce operator where the supplier is not located at specified premises. Then also 9 subsection 5. Now we have one amendment to this list. So what is that amendment is? One more item they have added to the list which will get covered under 9 subsection 5. services provided by way of local delivery, except where the person supplying such services is already liable for registration. Sir, what they are trying to say here? What they are trying to say here? So one more last service they have added here. Through the e-commerce operator, if local delivery services are getting provided, which services? Local delivery services. Let us take Rapido Parcel. In Rapido, we have an option, Rapido Parcel, Dunzo, like that we have platforms, no? So through that e-commerce operator, if local delivery services are getting provided and if the supplier is not liable for registration, supplier should not be liable for registration under section 22 subsection 1. So if the supplier is not liable for registration, then also this 9 subsection 5 will become applicable. This is an amendment here. So let us say, for example, today Rapido Parcel has become part and parcel of our life. Let us say I want to send one item. Let us say I want to send this book. I want to send this book from here to another place. So what I will do, I will open the Rapido Parcel I will open. So I will book a person where he will come and pick up this. He will come and pick up this book from me and he will deliver it wherever I wanted that to happen. So that is a service which is getting provided through e-commerce operator. And they're the supplier. Who is the supplier there? That individual person who will come and pick this book from me. No, he is a supplier of service. He is actually registered with Rapido Parcel. Here, Rapido Parcel is just a aggregator. Actual service provider is who? That supplier, that individual person who will come to you, know, to pick that book from you. So that is a supplier. So that services of local delivery, let me write it here. Services of local delivery provided through the e-commerce operator, where the supplier, that supplier, whoever is providing that services, if he is not liable for registration under 22 subsection 1, even on that local delivery services also, e-commerce operator is only required to pay the amount of GST under section 9 subsection 5. E-commerce operator only liable to pay the GST under 9 subsection 5. Understood? Clear and comfortable? So this is one more amendment under 9 subsection 5. See, I would suggest you, please have a look at the amendment video. I connected it. I connected all the amendments at one place in a beautiful manner. Just I would ask you to refer to that amendment video. The first half an hour you watch it. I have connected all these amendments. What is the logic behind all these amendments also I have explained in the amendment video. My request will be to just to watch that initial half an hour of the amendment video. You will get the next level of clarity why all these amendments have come. Here I can't explain the background logic, but in the amendment video I have explained the background logic for all these amendments. Clear? So these are the 6 services which are covered under 9 subsection 5, where neither the supplier will pay the GST under forward charge mechanism, neither the recipient will pay the GST under reverse charge mechanism, but e-commerce operator will pay the amount of GST under 9 subsection 5. Understood? Clear and comfortable? That's all. So this is what regarding charge of GST, my dear students. I hope, so with this we'll try to wind up our today's revision session. I hope you guys are all able to understand it. You're all able to learn. You're all able to revise the concepts in a much better manner. So I will wind up my session here. Today we have done 3 chapters. Registration we have done. Charge we have, composition levy we have done. Charge of GST also we have done. So today we'll try to wind up with that. And one more important announcement I have to make it here. Tomorrow the live session is going to be at 10 to 2. Tomorrow the live session is going to be at 10. Tomorrow's marathon. So tomorrow's marathon is going to be at morning 10 a.m. to 2 p.m. We'll have a marathon, not at 9. So we'll have it from 10 to 2. Kindly do note it and you try to attend it. Okay, right. So in case if you have already joined it, so since it is a update, so many students will be texting me from 9 itself. If they have not attended live today, they will be texting it that sir, why live has not started? Is there no live and all? Just in the comments section. I will be busy with some other meeting. In the comments section, my request from you, in case if you have already joined, in case if you have already, if you are already tracking from 9 itself, I will schedule and keep it. In case if in the comment section, if someone is asking, is there no live today and all, since you have attended the live for today, just let them know in the comment section that it will be starting at 10 a.m. or something like that. Just let them know so that they will also be aware. Okay, right. So that's all for now. See you in the tomorrow's marathon session. Bye everyone. Take care. Yeah. So welcome back everybody. I hope you guys are all doing good. You guys are all perfectly fine. I do wish and hope that your preparation is all going on well. So now we are going to commence. Now we are going to resume our marathon for the CA into GST. So till now, till yesterday, till the previous session, what and all are the things which we have covered? What and all chapters we are successfully done revising? So first we are done with introduction to GST. So the first and foremost chapter, that's what we have picked it up and we are done with that introduction to GST. Thereafter, we have understood supply what is supply under GST section 7, section 8, so that we have revised. Thereafter we have took registration chapter, and we have revised this contents of the registration chapter also in a very thorough manner, where we have taken up discussion from starting with section number 22 till section number 30. So all the various sections associated with the registration chapter, that also we have covered. Then we are done with composition levy. Even we have completed that concept of composition levy and all. Thereafter we have also completed charge under GST, where we have understood a bunch of services which are covered under reverse charge mechanism. So what is reverse charge mechanism, where and the list of services which have been notified, under which the recipient of the services will be liable to pay the GST under RCM. Along with that, at the end I have already covered 9 subsection 5 also, those few services which are notified, on which neither the supplier nor the recipient, but instead the e-commerce operator will pay the amount of GST. So that we have covered, and in that area there was an amendment. That amendment also we have covered in our previous session. So now we will go ahead. Now we will try to pick up few more important chapters. Now once again we are going to pick up a bunch of important chapters which are going to be very very important from the examination perspective, from which there will be a compulsory question. So huge weightage oriented chapters today we are going to do. So one is value of supply. We are going to start with value of supply chapter. We'll try to quickly revise the content of the value of supply chapter. See, this chapter, when you look from the conceptual perspective, it's very small, very limited amount of discussion will be there, hardly 3 subsections of one section. Section 15 discussion, related discussion we are going to have, hardly any discussion we are going to have, very small content is there, but equally important from the examination perspective. You will not find a question paper, even if you go to the past attempts and have a look at it, you will not be able to find a question paper without the question from this particular chapter, value of supply. Such an important chapter it is. So such a very good and important chapter we are going to see. But once again, even though this chapter is having that much importance, but it is not so technically complicated. It is as simple as it is. It is very simple chapter, no need to break your heads and all. Very small concept, very easily understandable concept, but equally important from the examination perspective. So having said that, let us try to start our discussion. So what exactly we are going to learn in this value of supply chapter? Very simple, my dear students, from the beginning as we have seen. So in order for the government to come and impose a GST, first there must be goods or services or both, and a taxable event called supply should have taken place. When GST will be imposed, the whatever the subject matter of the transaction is there, it must be either goods or services or both, and a taxable event called supply should have taken place. Then the government, that will be the triggering point for the government to come and impose GST. Now, just because goods are there, just because services are there, or just because both is there, and just because supply has taken place, the GST triggering movement will happen, but GST will be levied only when it is not exempted. That supply should be taxable supply. So that means whatever supply you have made, that should not become exempted. Sir, what and all are the various exemptions that we are going to cover in the exemptions chapter? But I'm giving you overall perspective now. Where does this chapter value of supply fall into the entire GST system? I'm giving you overall structure. So in order to levy GST, there must be goods or services or both, and a taxable event called supply should have taken place. Just because supply of goods or services has taken place, it doesn't mean automatically the GST will be triggered. We need to check whatever supply we are doing, that supply, is it exempted? Is it falling under any exempted category? If it is falling under exempted category, once again GST will not be collected. So supply should have taken place, that supply should be a taxable supply, and that supply should be made by a taxable person. That supply should be made by taxable person. Sir, who is taxable person? Like in the previous session, if you remember, I have already explained taxable person includes two things. Number one, a person who is liable for registration, or a person who is already registered. Both will fall under taxable person. So, and if the supply is taxable supply and the person is a taxable person, then GST will be collected. Now you have to determine the GST. You have to determine what is the amount of GST which I am required to collect as a supplier. Let us say, for example, if I'm a supplier, I'm required to determine what is the amount of GST which I'm required to collect from my recipient and pay to the government. The determination has to happen. Sir, how the determination will happen? How the determination will happen is, first you will find out the product or service, whatever you are offering. And now you have to find out the classification, that good or service. You have to find out the classification according to one HSN. So we have an harmonized system nomenclature. We have a classification system. So HSN system we have. According to that HSN system, you have to identify what good you are providing, what service you are providing. It will fall under which HSN classification. Now you go to the rate chart. Against that HSN code, what will be the applicable rate of GST? That rate you have to find it out. So by doing the proper classification and by referring the HSN classification, I will find out the rate. Now that rate you have to multiply it to some value. That rate you have to multiply it with value. So that's how you are going to arrive at the GST. So how you will arrive at the GST component? You have to determine the value. To that value, you have to multiply the rate of GST which is applicable for that good or service whatever you are offering. Okay. So now determination of percentage is very important, very easy. As I've already told you, determination of percentage is not at all complicated. Just you have to find out the classification, go and refer to the GST rate chart. Percentage you can easily find it out. But where the complications are going to come is on how to determine the value. Because unless and until you determine the value, you will not be able to calculate the amount of GST. If you are not able to calculate the amount of GST, you will not be able to collect that amount. If you are not able to collect it, you are not able to do the compliances. So that's why determination of value is very important. It is not as simple as determining the rate. Like as I was saying, rate determination is very easy, but determination of value is not as simple as said. So how to determine that value? That guidance has been given under section number 15. That guidance has been given under section number 15. So in fact, as a part of this chapter, we are going to cover the content of the section number 15, how to determine the value of supply. So that is what we are going to cover as a part of this chapter. And where that guidance has been provided for, that guidance has been provided under section number 15. So let us try to understand what does section number 15 say, how to determine that value of supply. Okay, right. So first we will talk about, there are various subsections of section number 15. There are various subsections of section number 15. Let me try to give you overall structure. So now we have section number 15, which is going to talk about valuation. We have various subsections, subsection 1, subsection 2, subsection 3, subsection 4, subsection 5. So 15 subsection 1 says that whenever the transaction is happening between two unrelated persons, whenever the transaction is happening between two unrelated persons, plus price is the sole consideration. That means entire consideration is in money. When two persons are unrelated and when price is the sole consideration, then 15 subsection 1 says that there you can take transaction value itself as value of supply. Whenever the transaction is happening between two unrelated persons where price is the only consideration, then value of supply you can commence the valuation considering the transaction value as a value of supply. So, sir, what is the transaction value here? Transaction value means price paid or payable for that supply. Or if I have to put it in very simple terms, the value at which the transaction is taking place. So, whenever the transaction is happening, some value will be there, no? So, the value at which the transaction is taking place, that value itself is going to be considered as value of supply. That is a starting point. But when 15 subsection 1 will become applicable, in order for 15 subsection 1 to get triggered, there are two conditions which are required to be fulfilled. What are they? Number one, the transaction must be happening between unrelated person and price is the sole consideration. That means whatever consideration you are getting, that is completely in the form of money. So which means here some questions you will get. Sir, there could be a case where the transaction is happening between related persons. Sir, who are related persons? That we have already covered it in the supply chapter. You are telling that if the transaction is happening between unrelated persons, then only 15 subsection 1 will say transaction value will be value of supply. But sir, the transaction might be happening between related persons also. No. Then how to determine value of supply? Then how to determine the value of supply is, now you have to come to 15 subsection 4. Under 15 subsection 4, they have given various valuation rules. They have given, according to that valuation rules, you have to determine the value of supply. When the transaction is happening between related persons, then 15 subsection 1 will not become applicable. You have to come to 15 subsection 4 where some valuation rules are prescribed. According to that valuation rules, you have to determine the value. But that valuation rules are not there as a part of our CA inter syllabus. That is something which we will learn it as a part of our CA final syllabus. Okay, so in case if the transaction is happening between related persons, yes, I'm telling you how to determine. You have to determine it as per valuation rules. But at the CA inter level, we are not required to learn that CA valuation rules of goods. That we can the valuation rules of supply, that we have to learn it at the CA final level. Okay. Now, one more thing also can come to your mind. Okay, sir, transaction is happening between unrelated persons only, buyer and seller, that is supplier and recipient, both are unrelated. But price is not the sole consideration. That means, let us say, for example, I am doing the supply where consideration is in non-monetary format. Let us say, for example, we are doing a barter transaction. I am making some supply. In return, I am receiving some supply. It is a complete barter transaction. Then how to determine value of supply? There also can I say transaction value? No. Here also transaction value will not become applicable. Why? Because once again, two prerequisites for 15 subsection 1 to get triggered is what? Buyer and seller should be unrelated and the price is the sole consideration. That means entire consideration should be in the monetary format. Sir, if I'm having completely non-monetary consideration, how to determine value? Once again, come to valuation rules. In some cases, what will happen is, sir, supplier and recipient both are unrelated, but the consideration is partly monetary, partly non-monetary. The consideration is partly monetary, partly non-monetary. That means I'm getting, let us say for example, exchange. I'm doing a exchange kind of supply where the consideration is partly in money, consideration is not partly in money. Then what will happen, sir? Then also can I take transaction value? No, there also you can't take transaction value as a value of supply. There also you have to come to the valuation rules. There also you have to come to valuation rules. According to that valuation rules, you have to determine the value of supply. Able to understand? So 15 subsection 1 clearly says that our discussion is restricted only to these cases whenever the transaction is happening between two unrelated persons, and when price is the sole consideration, then you can start with the transaction value. Transaction value itself will be considered as the value of supply. So if you see here, this is what the Bayer Act says. The value of supply of goods or services or both shall be what? Transaction value, which is the price actually paid or payable. Now you will get a doubt, sir, what is the meaning of transaction value? Transaction value means price which is actually paid or payable for the said supply of goods or services or both, where the supplier and the recipient are not related and price is the only consideration. And price is the only consideration, then only we will treat it as, then only we can start with the transaction value. This is what 15 subsection 1 is saying. Okay, so one thing we are done. Now coming to the next part. Now if you come to 15 subsection 2, what it says is, okay, you will start with the transaction value. You will start with transaction value. The first commencing point is transaction value. Now 15 subsection 2 says that to arrive at the value for the purpose of determination of GST, you are required to make some additions. You are required to make some additions. There are some things which are required to be added to the transaction value to arrive at the total value of supply. Sir, what are those items which are required to be added under 15 subsection 2? That's what we have to learn it as a part of our 15 subsection 2. So what is the 15 subsection 2 saying? If I have to put it in very simple terms, so as per 15 subsection 1, we'll start with the transaction value. But 15 subsection 2 says that in order to arrive at the value of the supply, to that transaction value, whatever you are taking, to that transaction value, you are required to make some additions. You have to add certain items to that transaction value to arrive at the supply. So what are that additions which we are required to do? That we are going to learn it as a part of 15 subsection 2. Now, what 15 subsection 3 says is, okay boss, you will do transaction value. You will do additions as per 15 subsection 2. Whatever additions are there, that also we will do. Now 15 subsection 3 says that from this value, you are required to exclude some discounts. You are required to exclude some discounts. You are required to eliminate, you are required to take out the discounts from the transaction value to finally arrive at the value of the supply. So what are those discounts, and when those discounts are permitted to be excluded from the value of supply? That's what 15 subsection 3 is trying to say. Able to understand? So 15 subsection 2 will say what are the additions which are required to be made to the transaction value, whereas 15 subsection 3 says what are the treatments, what is the treatment of discounts. It is quite a common practice in the business transactions, but the supplier gives a discount to the recipient. So what will be the treatment of that discount? So when that discount is permitted to be excluded, that discussion is there under 15 subsection 3. So if we could complete that 15 subsection 2 and 15 subsection 3, our discussion regarding the entire value of supply chapter will get over. Our entire discussion regarding value of supply chapter will get over. Okay, sir, you told us what is 15 subsection 3. You also told us what is 15 subsection 2 dealing about, what is 15 subsection 3 dealing about. You have also explained what is 15 subsection 4 dealing about. So anyhow, this 15 subsection 4 is something which we are going to talk at the CA final level. Now, what is 15 subsection 5 saying, sir? What is 15 subsection 5 saying? So if you come to the 15 subsection 5 also, that also I will try to give you a clarity here. So if you read, notwithstanding anything contained in subsection 1 or 4, value of such a supplies as may be notified by the government on the recommendations of the council shall be determined in such manner as may be prescribed. That means under 15 subsection 5, the government has reserved the power. They are saying that in future, if you want to notify certain supplies, we will notify. We'll give a notification, and in that notification, we'll mention some supplies. And whatever supplies which have been notified, for that, you have to follow different valuation rules. We will give you different valuation rules. Follow that valuation rules for supplies, whatever we have notified. We will notify certain supplies. For that notified supplies, we will tell you different valuation rules. You have to follow that different valuation rules for the time when you are doing the valuation of that supplies. So like that, there are some extra rules which have been given. These are also special cases where the government will notify the supplies, where you have to follow different valuation rules. This is also not something we are going to learn at the CA inter level. This is something which we are required to learn it at the CA final level. So practically speaking, we are only required to discuss three subsections of of section number 15. Out of that, 15 subsection 1 already we have covered. Now we are only left with the two more subsections, 15 subsection 2, 15 subsection 3. If we could complete that too, chapter will come to an end. So first we will talk about 15 subsection 2. What are those items which are required to be added to the transaction value? Let us have a quick look at it. So one by one, there are 5 items. They have told 5 items which are required to be added to the value of supply as per 15 subsection 2. Let us try to understand what are that 5 items which are required to be added to the value of supply. Number 1, any taxes, duties, cesses, fees and charges levied under any law for the time being in force, other than this act, that is CGST Act, SGST Act, UTGST Act and GST compensation cess, if charged separately by the supplier. Sir, what is it? What is the first item which is required to be added? So first item, they say that in case if the supplier is collecting from you any other taxes apart from GST, not GST, apart from GST and compensation cess, if the supplier is collecting from you any extra tax, or he is collecting you some charges, or he is collecting from you some duty, or he is collecting from you some cess which is imposed under any law other than GST laws and other than GST composition cess, that has to be added to the value of supply. Let us say for example, if the supplier is supplying some goods to you, in addition to that transaction value, in addition to that price, he's also collecting from you some taxes other than GST. Like let us say for example, he's collecting from you some cess, local cess he's collecting, or he's collecting from you some municipal tax, or he's collecting from you some duty. So like that, in addition to the transaction value, if he's collecting from you some extra amount in the name of taxes, charges, duties, cess under any law other than GST law, other than compensation cess, that is required to be added to the value of supply. That is required to be added to the value of supply. Like municipal tax or any other tax, whatever he's collecting it from you, that has to be added to the value of supply. So that is what 15 subsection 2 clause A says. Taxes, cess, duties are required to be added. Now there came one issue. There came one circular. So what is that circular is? Let us say for example, there is a automobile dealer. There is a automobile dealer. Now this automobile dealer has supplied a car. They have supplied one car to a recipient. Let us say the price of this car is 15 lakh rupees. The price of this car is 15 lakh rupees. So now this is a supplier. Now the recipient is a customer. Now they will collect from him, the supplier will collect from the recipient this 15 lakh rupees of consideration. In addition to that, also under Income Tax Act, in case of sale or in case of sale of the car and all, the seller is required to collect something called TCS. In addition to the consideration, in addition to that value of the car and all, they are also required to collect something called TCS. Let us say some 0.1%, 1%, they will collect it in different circumstances. For ease in calculation, let me put it this way. They are collecting TCS at the rate of 1%. So let us say for example, 15,000 rupees of TCS they have collected. So how much this automobile supplier has collected? Automobile dealer has collected. Transaction value is 15 lakh rupees. In addition to that, they are also collecting TCS under Income Tax Act amounting to 15,000. So now what should be value of supply? Should it be only 15 lakh rupees, or should I also add the TCS amount 15.15 lakhs? So what should be the value of supply? So this is what the issue which has come. Now department has given a clarification that boss, TCS whatever you are collecting, that is not in the nature of tax. That is not in the nature of tax. Why? Because what will happen is this supplier will collect the amount of TCS under Income Tax Act. 15,000 he will collect, but that amount he will deposit it against the PAN number of the recipient. So that will get reflected in his PAN number. Now this recipient, when he is filing his income tax return, if he has having a tax liability, against that tax liability, he will claim that TCS amount. He can adjust it against that tax amount. In case if he is not having any tax liability, whatever TCS amount is there, that even he can claim it as refund. That even whatever TCS amount is there, which he, if he is not having any tax liability, whatever amount of TCS that has been collected, that even he can collect it as refund. Yes or no? So what is the department giving the clarification here is, boss, whatever TCS amount which has been collected by the supplier from the recipient, it is not in the nature of tax. It is not in the nature of tax. It is just an interim levy. So which means what will happen? Even though he is collecting that 15,000 rupees of TCS, that is not going to the government, that is getting credited to his PAN number only. Whose PAN number? Recipient. Which recipient can use it to adjust his tax liability, or if there is no tax liability, recipient can claim that TCS amount as refund. So this is not in the nature of taxes. This is just an interim levy. So that's why department has given a clarification that TCS amount should not be added to the value of supply. So here the value of supply is going to be only 15 lakhs. Here the value of supply is going to be only 15 lakhs. Very important. So that is what the circular. Clear? Okay, we are done with 15 subsection 2 clause A. Along with that, we are also done with one circular. That circular also I have explained. This TCS under Income Tax Act is not includable. Very important. Next, one more item which is required to be added to the value of supply is any amount that supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and which is not included in the price actually paid or payable for the goods or services. Sir, what they are trying to say here, let me put it in a very simple way. Let us say supplier is making some supply to the recipient. In relation to that supply, supplier is having some obligation to a third party. But instead of supplier paying that obligation, recipient is incurring on behalf of the supplier. Even that also required to be added to the value of supply. I know you might not be able to understand it, but I will give you one simple example to make you understand. See, often I use this example in my class also, in my regular class also. Same example I will try to use it. Let us say, for example, there is a event manager. Okay, there is a event manager. Now this event manager is providing this event management services to one recipient. There is a person who is undergoing wedding. So he is a person who is his wedding is happening. So he is the recipient. He is the recipient. So there is an event manager. He is providing the event management services. So he is the supplier. He is the recipient. Now, as per the contract, this event manager is required to supply food. They are required to supply the food also. They are required to take care of the decoration also. They are even required to take care of some other various items, guest receiving and all also they are required to take care. So food also they are only required to provide. So this event manager has to procure the food and he has to provide that food at the venue, for which this recipient will pay the total consideration to the event manager. So composite supply he is making. Now what happened is, let us say for example, at the time when the event is happening, this event manager has ordered some food which is required to be delivered. So that third party vendor is there. Some vendor has come. Let us say for example, ice creams. So as a part of this event management, along with the food, ice cream is also required to be provided, which is whose responsibility? Supplier's responsibility. Now what this event manager has done, he asked that third party vendor to come and deliver that ice cream at the venue. Okay, this fellow came and delivered that ice cream boxes at the venue. Now this fellow is asking for payment. This vendor, this third party is asking for payment. At that point of time, supplier is not having money. At that point of time, supplier is not having money. So he told, I will pay you later. But this fellow is not listening only. This vendor is not listening. This third party is not listening. He started creating show at that event. At that wedding event, he started creating some nuisance. Now this fellow is getting married after a very long period of time. So now this fellow doesn't want, this recipient doesn't want to have any kind of mess at his event. So that's why what he did, what he told is, okay boss, what is your issue? He told, sir, he asked me to deliver the ice cream here, but he is not making me the payment. He told, as a recipient, I told, okay, I will do one thing, don't create issue here, I will make the payment. Let us say for example, 50,000 rupees is the payment. He made that payment. Who made the payment? Recipient made the payment. To whom? Third party. But actually, is making that payment to that third party, is it recipient's obligation? No. It is whose obligation? Supplier's obligation. So supplier is having an obligation to make some payment to the third party, but instead of supplier making it, recipient has made that payment to the third party. Okay. So now finally, after the event and all has been done, finally for the services of this event management, this recipient is required to pay the amount to the supplier, no? So event manager told that, sir, total amount is 10 lakh rupees for your event, but on my behalf, you paid 50,000 rupees, no? You pay me only now 9 lakh 50,000. You pay me only now 9 lakh 50,000. So here recipient will pay 9 lakh 50,000 to the event manager who is supplier. So here what is the transaction value? I told that transaction value is price paid or payable. So how much the recipient is paying the price to the supplier? 9 lakh 50,000 rupees only. So transaction value will become only 9 lakh 50,000. So as per 15 subsection 1, we will start with the transaction value which is 9 lakh 50,000. But 15 subsection 2 clause B says that if the recipient has made any payment to the third party, which is actually the obligation of the supplier, and in relation to that supply, even that also should be added. So the recipient, whatever payment he has made to the third party, that also should be added. Total value of supply will be considered as 10 lakh rupees. On that 10 lakh rupees, GST has to be imposed, not just on 9 lakh 50,000. Let us say applicable rate of GST is 18%. If you take that rate on entire 10 lakh rupees, the GST is required to be collected, not just on the 9 lakh 50,000 rupees. I hope you are able to understand this point. Clear? So one more addition. I think this example will make this concept all clear. It is very much difficult to read and understand this sentence, but with the help of example, you guys will get the extreme level of conceptual clarity. Right. So that is what the second item. So two items which are required to be added. Only two we have seen. Number one, taxes, cess, duties, or any other charges under any other law apart from GST. Number two, any amount that supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and which is not included in the price payable. Next, third one, not just that, any incidental expenses. Any incidental expenses, including commission, packaging charged by the supplier to the recipient of a supply, and any amount charged for anything done by the supplier in relation to the supply, in respect of the supply of goods or services or both, which has been done either at the time or before delivery of the goods or services. So very important point here is, in addition to the transaction value, if the supplier is collecting from you any other incidental expenses, let us say he is collecting from you some commission, he is collecting from you some packing charges, he is collecting from you some transportation charges, he is collecting from you some freight charges. So like that, he is collecting from you testing charges, he is collecting from you some inspection charges, he is collecting from you some installation charges. So like that, any charges, any incidental expenses like commission, packaging charged by the supplier to the recipient, or any amount charged for anything done by the supplier to the recipient at the time or before delivery of the goods or services, it must be added to the value of supply. So if you are doing something at the request of the recipient as a supplier, you are trying to do something, you are doing something in respect of that supply, either at the time of supply or before delivery of goods or services, either at the time of delivery or before delivery of the goods or supply of services, that amount is required to be added here. So one very important point here, you will find one question. Even if you refer to the question bank also, you will be able to find one question. There in one of the points in the valuation, they say one point. There is a supplier who made a supply of one machine to the recipient. Now delivery was completed. After delivery, the recipient asked for inspection, post-delivery inspection. You have supplied machinery, delivery is also completed. After the machinery has been delivered, the recipient has asked the supplier for post-delivery inspection. For that, the charges are 10,000 rupees and the supplier has collected that charges from the recipient, post-delivery inspection charges. Will that post-delivery inspection charges, will it be added to the value of supply? The answer is no. Why? Because what they are saying, anything which is done by the supplier in respect of the supply, in respect of the supply, either at the time or before delivery of the goods or supply of services. If you are doing something after delivery of the goods or services and for that you are collecting any separate charges, that will not be added to this value of supply, that will be treated as a separate supply. Able to understand, clear and comfortable? So there will be one question, you will be able to find it. So the most important thing here is any incidental expenses or amount charged for anything done by the supplier in respect of the supply, whether either at the time or before delivery of the goods or supply of services. Clear? So three things which are required to be added under 15 subsection 2 we have covered. First one, any taxes, duties, cess, fees or any charges levied under any other law other than GST law. Number two, the amount which recipient has incurred on behalf of the supplier. Number three, incidental expenses or any amount charged by the supplier for doing anything either at the time of delivery or before the delivery of goods or services. Next item, interest, late fee, penalty for delayed payment of any consideration. So generally, if you take the business transactions, it happens on credit basis, right? So it is common practice in the industry that supplier will give some credit period to the recipient. Let us say I made the supply of the goods amounting to 1 lakh rupees to the recipient. I made it on credit basis. I gave them 3 months of credit. Thereafter, within 3 months, if I'm telling well in advance, if within 3 months you are not coming back and making me the payment, I will collect from you 10,000 rupees of interest, late fee, penalty, whatever name you want to give it, you give it. I told him that I will collect some late payment charges. So now, if within 3 months, if the recipient did not come and make the payment, then what will happen? I will not just ask for that 1 lakh rupees. I will also ask him to make the payment of interest. That 10,000 rupees of interest, late fee, penalty also, I will ask him to pay, no? So now this 10,000 rupees also should be included in the value of the supply. Here, the value of supply is not just 1 lakh, even this 10,000 rupees also should be added to the value of supply. GST should be collected even on that 10,000 rupees of the value of supply also, on that interest component also. Able to understand? But here there is one small thing which we have to understand. So what will be the time of supply in respect of that interest, late fee or payment, delayed payment charges is whenever it is received. Whenever it is received, that will become the time of supply. At that point of time only you become liable to pay the GST. See, today you are making sale. when you are filing the return for the current month, at that point of time only you will give tax invoice for 1 lakh rupees, and you will pay GST on that 18,000, on that 1 lakh 18,000 rupees GST you will pay it in the current month. But on this 10,000 rupees, whether you will collect this interest or not, you don't know it. No, you gave 3 months of credit period. Whether you will collect this interest or not, it you doesn't know. Why? Because if the recipient comes back and make the payment within 3 months, I will not collect any interest. If the recipient does not make the payment within 3 months, then only I will collect the interest. So whether you will be liable to collect the interest, whether you will become eligible to collect the interest or not, you don't know at the time of making supply. So that's why what we will do, we will give a tax invoice for 1 lakh rupees only whenever we make a sale. Initially, we pay the GST of 18,000 rupees only. But subsequently, let us say if this person has not made the payment of GST, then I am eligible to collect the interest. Now what I will do is, at the time when I am collecting that interest, then I will give a document called debit note. Then I will give a document called debit note. For that 10,000 rupees, I will give a debit note and I will collect the GST. On that interest along with GST, I will collect it. Sir, at what rate I have to multiply? What is the rate which I have to apply on interest? Whatever rate that you are going to, whatever rate that is applicable for your main supply, even on that interest component also, same rate will become applicable. So if your main supply is attracting 5% of GST, even that interest also will attract 5% of GST. If your main supply is attracting 18% of GST, that interest also will attract 18% GST. If your main supply is attracting 12% of GST, even that interest also will attract 12% of GST. So the rate whatever is applicable for your main supply, even that interest also will be taxed at the same rate. But one important point I'm going to tell you, very important, whenever you are writing the exam, whenever they give this interest that you have late payment charges interest or late fee has been collected, always assume that interest component is inclusive of GST. Always assume that interest component is inclusive of GST unless they specifically mention in the question. Unless they specifically mention in the question, you go with the presumption that interest component is inclusive of GST. So if they are saying 10,000 rupees of interest has been collected, what does that mean? So you imagine it as inclusive of GST. Let us say applicable rate of interest is 18%. So you do the reverse calculation. This 10,000 rupees is inclusive of GST. So what is the value exclusive of GST? Into 100 divided by 100 plus tax rate. That means 100 divided by 118. If you do it, you will get the value. That value is the value exclusive of GST. On that you multiply 18%, then total you will get it. Able to understand? So I hope you all are already aware regarding how to calculate the figures in case of inclusive of GST. The same logic you have to apply it here. Unless they specifically mention in the question. In case if they are specifically mentioning in the question 10,000 rupees of late fee payment interest penalty or interest is collected exclusive of GST, then you multiply that rate of GST on that interest component given. But if nowhere it was mentioned, you always assume that whatever interest that you are collecting, that interest is inclusive of GST. Do the reverse calculation, determine the value exclusive of GST, and accordingly calculate the GST liability. Clear? Able to understand? Right. So and one more point also you have to remember it here. Sometimes what will happen is in normal business transactions, you are eligible to collect the interest. The recipient is not coming back and making the payment within the prescribed time limit. So legally you are eligible to collect interest. You have the right as per the contract, you have the right to collect interest. But in majority of the business circumstances, that interest will be waived off. The supplier will not collect any interest. Why? Because he's a regular customer? No. So we want to have good business relationship? No. So many a times what suppliers will do is even though you are eligible for collecting interest, but you will try to waive off that interest. You will say that no, I don't want any interest. Then also is the GST required to be payable? Not required. Then also interest is required to be included? Not required. Only when the interest late fee penalty has been actually collected, then only interest. If it is not received, no interest. If it is waived off, no GST. Only when the interest late fee penalty is collected, then only GST. In case if it is getting waived off, supplier is giving up his right, no, I don't want interest late fee or penalty, then no GST is required to be paid. Understood? Right. So all the complicated points I have covered associated with that interest. Then thereafter, one more last item which is required to be added to my value of supply is subsidies directly linked to the price, excluding subsidies provided by central government and state government. So in relation to the value, in relation to the transaction, whatever you're doing, let us say, for example, I'm into business of selling notebooks. Actually, I can sell the notebook at 20 rupees. But one day, one NGO has approached me and told, boss, you do one thing. You don't sell your notebooks at 20 rupees. You sell your notebooks at 15 rupees only. to the customer, you sell your notebooks at 15 rupees only. Now this business person will not agree. Why? Because he was able to sell it at 20 and make a profit of 20 and make a revenue of 20. But now NGO is coming to him and saying, don't sell it at 20, sell it at 15 rupees only. Sell it at 15 rupees only. So if they say that, please sell it at 15 rupees only, now this person will be at loss. No. Now what NGO told is, don't worry, we will do one thing. For every notebook which you are selling at 15 rupees, what we will do is, we will give you 5 rupees of subsidy. We will give you 5 rupees of subsidy. You sell it at 15 rupees only, but we will give you 5 rupees of subsidy for every notebook. Sir, when I am selling this notebook to the customer, my value of supply, my transaction value is 15 rupees only. Should I collect GST only on 15? No. Why? Because 15 subsection 2 clause E says that if you are receiving any subsidy and that subsidy is given by other than central government or state government, even that subsidy is also required to be added. So on 20 rupees, you are required to collect the amount of GST. You might be collecting from the customer 15 rupees only, but GST you have to calculate on 20 rupees. Able to understand? So, but two conditions. Not all subsidies will be included in the value. Only two, when two conditions are fulfilled, those subsidies are only added to the value of supply. So, what are the two conditions which are required to be fulfilled? Number one, that subsidy should be linked with the price. That is not some blanket subsidy or bulk subsidy. That subsidy should be linked with the price. See, sometimes what will happen is some people will come and say, hey, you are doing a very good job. We will give you bulk subsidy of 10 lakh rupees. Use it for your plant and machinery. Sir, can that subsidy also, is that subsidy also required to be added to value of supply? Not required. Only when the subsidy is linked with the price. Only when the subsidy is linked with the price, and also that subsidy should be given by other than central government and state government. If the central government and state government is giving that subsidy, it should never be added to the value of supply. In case if that subsidy is given by other than central government or state government, and also if it is a price linked subsidy, then only those subsidies are required to be added to the value of supply. Understood? Clear? So this is what regarding 15 subsection 2. So we have covered 15 subsection 1, which says that you have to start with the transaction value. Then we have covered 15 subsection 2, which says what and all are the additions which you are required to do to determine the value of supply. Now we are going to talk about 15 subsection 3, which is talking about what is the treatment of discounts. It is also a often business practice. It is also a often a business practice to give discounts. Suppliers, many a times they give the discounts to the recipient. Now that 15 subsection 3 is dividing the discounts into two categories. 15 subsection 3 is dividing the discounts into two categories. One is pre-supply discounts. And the other one is post-supply discounts. One is pre-supply discount and the other one is post-supply discount. Sir, what is pre-supply discount? Those discounts which are given at the time of making supply only. Those discounts which are given at the time of making supply only, and those discounts which are recorded on the invoice itself. Those discounts which are recorded on the invoice itself. Like let us say, for example, often when you go for shopping, like today if you go to some stores and all and do the shopping, let us say for example they are offering 10% discount. You make a shopping for 5,000 rupees. Now since you have made a shopping for 5,000 rupees, they will give you 10% discount. 500 rupees of discount they will give you, and that discount will be recorded on the invoice itself. That discount that you are eligible for 500 rupees discount. If you look at the invoice there, 5,000 rupees is the total value, less 10% discount 500, net 4,500. So those discounts which are given at the time of making supply and those discounts which are duly recorded on the invoice itself. Let us take this example. 5,000 rupees is the total value. From there, they have reduced the discount of 500 rupees. Net 4,500 they are showing on the invoice. Now you tell me on what value GST should be imposed. Should GST be imposed on the value of this 5,000 rupees or should the GST be imposed on the net value of 4,500? So here 15 subsection 3 clause A says that the GST is required to be calculated only on the net value. Able to understand? So straight away, one simple point here. In case of pre-supply discounts, that means those discounts which are given at the time of making supply and which are duly recorded on the invoice, that has to be excluded from the value of supply, and GST will be calculated only on the net value, not on the gross value. So those discounts which are recorded on the invoice can be excluded, have to be excluded from the value of supply. This point everybody clear? Then comes the next part, very important. From here generally questions will not be tested, but the questions are going to come from here, post-supply discounts. Sir, what is post-supply discounts? See, there could be some business transactions where it is not possible for the supplier to give the discounts at the time of making supply. at the time of making supply only, it might not be possible for the supplier to give the discounts. So he will give the discounts after supply. Let us say, for example, one best example, if I have to give you cash discount. Supplier told, boss, I'm making the sale on credit. You have 3 months of credit period. If you could come back and pay it within 1 month, I will give you 2% of cash discount. I will give you 2% of cash discount only when you come back and make me the payment within 1 month. Now, I will make the supply. Let us say, for example, 10 lakhs worth of supply I have made. I will give a tax invoice for 10 lakh rupees. But I made him a promise. If you come back and make me the payment within 1 month, I will give you 2% discount. Now, I'm not giving discount at the time of making supply because I don't know whether that person will come back to me and make me the payment of that, make me the payment within 1 month or not. I don't know. So I'm unable to record that discount on my invoice because I don't know it. No. But thereafter, let us say after supply has completed within 1 month, that customer came to me and actually made me the payment within 1 month. Now, as promised, I have to give a discount to him. No. So this is what I call it as post supply discount. Post supply discount, those discounts which are not there at the time, which are not given at the time of making supply, but they are given at a later stage. So those discounts, we call them as post supply discounts. I will give you one more example. See, manufacturers often give discounts to the dealers. They have agreements with the dealers where they say that if you purchase this much minimum quantity from me in this year, if you purchase minimum 10,000 quantity from me, I will give you 10% discount. So whether that discount will be given or not, we don't know at the time of making supply because there is a condition attached to it. Only when he purchases 10,000 quantity from me, then only I will give him discount. So as agreed, that person, that dealer has actually purchased it from me 10,000 quantity in the entire year. Now definitely, as promised, I have to give a discount. No. So at a later point of time, I'm giving a discount. Sir, what should be the treatment of this post supply discount? Should it be excluded or should it not be excluded? So now what 15 subsection 3 clause B says is, so post supply discounts can be excluded from value of supply only when 3 conditions are fulfilled. In material, you will be able to find 2 conditions, but that 2 conditions only, I'm breaking it down into 3 conditions here. So post supply discounts can be excluded from the value of supply only when 3 conditions are fulfilled. What are they? Number 1, there should be an agreement. There should be an agreement to give discount at the time of supply. Whenever I might not be giving discount at the time of making supply, but there must be an agreement. I should agree to give the discount at the time of making supply. I should have made a promise. If you do this, I will give you discount. So you are not giving discount at the time of making supply, but there must be an agreement to give such a discount at the time of making supply only. There must be an agreement. So there must be an agreement. Point number 2, we should be able to calculate the discount invoice wise. We should be able to calculate the discount invoice wise. Invoice wise, we should be able to calculate like 10% discount, 20% discount. So on each item, 20 rupees. So like that, we should be able to calculate the discount invoice wise. If it is a bulk discount, if you are not able to calculate it invoice wise, we will not be able to reduce it. So that's why, number 1, there should be an agreement at the time of making supply. Number 2, we should be able to calculate the discount invoice wise. Number 3, the recipient should reverse the proportionate input tax credit. In case if the recipient has taken input tax credit, this will happen in the case of B2B supplies. So in the case of B2B supply, in case if the recipient has availed input tax credit, recipient should reverse the proportionate input tax credit. Recipient should reverse proportionate input tax credit. When all these conditions are fulfilled, then that post supply discounts will be excluded from the value of supply. So 3 conditions are required to be fulfilled for post supply discount to be reduced from the value of supply. What are they? Number 1, there should be an agreement to give the discount at the time of making supply. We should be able to calculate the discount invoice wise. Number 3, recipient should reverse the proportionate input tax credit. Now how this will practically work out is, I will give you a scenario. Let us say, for example, there is one supplier. He made supply amounting to 10 lakh rupees. To the recipient, for which he has given a tax invoice. Total 10 lakh rupees of value, 1.8 lakh rupees of GST, total 11 lakh 80,000 rupees of invoice has been given. Now at the time of making supply, he made a promise. If you come back and make me the payment within 1 month, I will give you 10% discount. Like that, he made a promise. But initially he gave a tax invoice. No. Now this tax invoice he will declare in his GSTR1, he will declare his output tax liability. He will pay that amount of GST, 1,80,000 rupees of GST he will pay to the government. Now, on the basis of the tax invoice, this recipient will also take input tax credit. This recipient, on the basis of this tax invoice, he will also take ITC. No, how much ITC he will take? 1,80,000 rupees of ITC he will take. Thereafter, as agreed, this person came back and made me the payment within 180 days. Sorry, within 1 month he came back and made me the payment. Let us say, for example, he's coming back and he wants to make the payment within 1 month. So as agreed, I told him I will give him 10% discount. As agreed, I told him I will give 1% discount. So now I have to give him discount. No, how much discount? On 10 lakh rupees, 10% if I calculate, 1 lakh rupees of discount I have to give. Now if I give the discount only on value, it will not be enough. I have to give the discount on GST also. I have to reduce the GST amount also. Initially, considering the value as 10 lakh rupees, I have charged from him 1,80,000 rupees of GST. Now I am giving him a discount of 10%. 1 lakh discount I am giving. So now I have to give him discount amounting to 18,000 rupees also. No, total I have to give a credit note of 1,18,000. So this discount I will give, and this discount will be given by issuing a document called credit note. What I will do, I will issue a document called credit note passing on that discount. Now what will happen is this discount, see, and this credit note under GST Act can be given when only all the three conditions are fulfilled. You can give credit note under GST Act only when all the three conditions are fulfilled. What are the three conditions? There must be an agreement at the time of making supply. We should be able to calculate invoice wise, and the recipient should be ready to reverse the input tax credit. When all these conditions are satisfied, then only I will give the discount for GST component also. Then only I will give credit note under GST Act. So this credit note I have given. Now what will happen? This credit note I will declare in my GSTR1. My output tax liability will get reduced, because I am saying to the government, sir, I already paid 1,80,000 rupees of GST, but now I am giving a discount to my recipient. Please give me GST back. So your output tax liability will get reduced. Now what this recipient also should do is, on the basis of this credit note, the recipient is also required to reverse 18,000 rupees of input tax credit. He is also required to reverse 18,000 rupees of input tax credit. He is required to reverse it. Understood? So this is how practically things will work out. Now, let me extend this discussion further. Let us say, for example, there is no agreement, nothing. There is no agreement, nothing is there. There is no agreement is there at the time of making supply that I will give you discount. No, no agreement, nothing. But after I have made the supply, just out of concern for my customer, even though I did not make any promise, I am giving him a discount. Even though I did not agree at the time of making supply, I am giving him a discount. 1 lakh rupees discount I am giving. But here the first condition itself is violated. There is no agreement at the time of making supply. This discount you can't reduce it from the value of supply. This discount you can't reduce it from the value of supply. That means in these cases you can give discount only on value. You can't give discount of GST. You can't reduce a GST amount. Why? Because it is a post supply discount and one of the condition got violated. There was no agreement at the time of making supply. So you can't reduce that GST amount. If you want, you can give discount only for your value. And these kind of discounts for only value will be given not using the credit note under GST Act. Here I will give something called financial credit note or commercial credit note. What I call it, financial credit note or commercial credit note I call it, where I will pass on through that financial credit note or commercial credit note, I will only pass on the benefit of reduction in value. I will not give any reduction of GST. So like this, I will give financial credit note or commercial credit note. This I will not declare in my GSTR1. My supplier's output tax liability will not get reduced. Even the recipient is also not required to reverse his input tax credit. So only when the credit note under GST Act has been given, that will be declared by the supplier in his GSTR1. His output tax liability will get adjusted, and the recipient is also required to reverse ITC. On the other hand, if I am not able to give a credit note under GST Act, if I am giving financial credit note or commercial credit note, that will not reduce the output tax liability of the supplier. Even on that basis, the recipient is also not required to reverse his proportionate input tax credit. Understood? Clear and comfortable? So this is what regarding 15 subsection 3, treatment of discounts. That's all here. This is what regarding supply chapter. This is what regarding supply chapter. And I have one important thing to share it with you. There was one circular in the value of supply chapter. There was one important circular which has been newly added here. This circular, I have explained it in a beautiful manner in the amendment video with a hell a lot of examples. My request is, please refer to the amendments video and please do watch this circular. Whatever explanation I have given for this circular, please do watch it. Very interesting discussion, and I am expecting a question from here. I am expecting a question from here. See, if at all I try to revise it now also, it will take more amount of time because it is not such a simple circular. So much of background discussion will be needed. I have taken hell a lot of time. I have taken a very good amount of time and made you I have given elaborative explanation as a part of that amendment video. So my request will be to please watch that amendment video once to understand this circular. And for this attempt, I am definitely expecting a question on this circular. Please refer to it. Okay, next. See, one more circular also I will try to explain here. One more circular. There should be one circular regarding no claim bonus. There should be one circular regarding no claim bonus. That also I will try to explain it here. Right. So no claim bonus circular is there. So what is that no claim bonus circular? Let me put it like this. See, there is an insurance company. There is an insurance company. Let us say they have sold you vehicle insurance. They have sold you vehicle insurance for the year 2024. You purchased a car. You are the owner of this car. You purchased a insurance policy. Let us say, for example, you paid some 50,000 rupees insurance premium, and by paying that insurance premium, you have taken an insurance policy. See, generally, insurance companies will have a policy. In the insurance agreements, there will be one thing called no claim bonus. There will be one small thing called no claim bonus. Sir, what is this no claim bonus? No claim bonus is a commitment which says that, let us say, for example, you have taken insurance on this car, no? If you did not make any claim, you took the insurance policy, but if you have not made any claim, if you have not lodged any claim with the insurance company, they will give you something called no claim bonus. They will give you something called no claim bonus. Sir, how that no claim bonus will be given? Okay, this year you have taken insurance policy. You did not make any claim. Next year you will renew your policy, no? Next year for the year 2025, you will renew your insurance policy, no? So when you are renewing your insurance policy, you are required to pay insurance premium. Let us say insurance premium you are required to pay is 50,000 rupees. But as per the insurance contract, since in the last year you did not make any claim for compensation, so that's why they are giving you no claim bonus. 5,000 rupees of no claim bonus they will give you, and you will be required to pay net 45,000 rupees only for this year when you are not making any claim. When you are not giving any, and when you are not making any claim. So that's why if you are not making any claim, they will give you something called no claim bonus. So current year's insurance premium amount is 50,000 rupees. From that, 5,000 rupees is getting deducted. So net to 45,000 only you will be required to pay. Now the question has come, on what value GST is required to be charged? Is GST required to be collected on total insurance premium of 50,000, or is it required to be collected only on 45,000 rupees? The correct logic what they have told us, the CBIC has given a circular and clarified that GST will be applicable only on 45,000. No claim bonus is eligible to be deducted from the value. No claim bonus is eligible to be deducted. Why? Because what they have clarified is it is in the nature of 15 subsection 3 clause A, pre-supply discount only. That discount which has been given at the time of making supply and which was duly recorded on the invoice. So that no claim bonus is eligible to be deducted from the transaction value. Only on the net amount you will be liable to pay the amount of GST. So one more important circular. This is one more thing which they have clarified. Understood? So with this I am putting an end to the value of supply chapter. So with this, I am putting an end to value of supply chapter. Clear? Right. So the next chapter which we will try to do is ITC. Input tax credit chapter. We will try to revise it. Since we have successfully completed value of supply chapter, now we will try to do input tax credit. Input tax credit we will try to do. Okay. Right. Yeah. So since we have successfully completed the value of supply chapter for revision, now the next most important chapter which we are going to take up for revision is going to be input tax credit. So you all are well aware how important this chapter is. Why? Because there will be a good weightage from this chapter. So in your first question, which is going to be a comprehensive question where concepts combining multiple chapters will be tested. In that question number 1, there will be compulsory some aspects relating to input tax credit. In fact, they will ask you to calculate what is your total output tax liability, what is your total input tax credit, and what is the net amount of GST liability that you have to pay it in cash. Yes or no? So that is what will be the requirement of the question number 1. First descriptive question is a comprehensive question where they will ask you to write, they will ask you to compute what is the net amount of GST liability which has to be paid in cash. So in order to know that, first you should know what is your total output tax liability, what is your total input tax credit. Then you should adjust your output tax liability against your input tax credit. Thereafter, you have to calculate thereafter, once you have adjusted your input tax credit against your output tax liability, the balance, whatever is there, that is something which you have to discharge in your cash. So all this we are all well aware. But in order to answer this, first we should know when I am eligible for credit, when ITC is blocked, when ITC has to be apportioned, and what are the special circumstances which I have to give where I can get the credit. And not just that, what are the conditions which are required to be fulfilled to get that input tax credit. So like that, there will be multiple associated things. Unless and until you are comfortable with the discussion of this chapter input tax credit, you are not going to give your attempt with a lot of confidence. You will not be able to give your attempt with confidence. So that's why please listen to this chapter very carefully. We will try to revise every point from this chapter. We'll try to make sure that we are covering everything from this chapter, because keeping in mind the importance of this chapter, we will try to do it. So I will try to cover almost everything from the chapter without leaving out anything. So you all have to be attentive, you all have to be participative, so that our discussion goes on well. So first, I will be starting with section number 16. Sir, what is section number 16 talking about? Section number 16 will talk about who is eligible for availing input tax credit and what are the conditions which are required to be fulfilled for availing input tax credit. So what does it say? It will talk about who is eligible for availing input tax credit. And also, after being eligible, what and all are the conditions that you are required to fulfill to avail that input tax credit. So both we will try to cover. First, when I talk about eligibility, section number 16 straight away says that every registered person is entitled to take input tax credit. Who is having the eligibility criteria? Every registered person. The moment you are registered under GST Act, you are entitled to take input tax credit. On what? On your inward supplies of goods or services. But even though you are a registered person, yes, you are eligible to take input tax credit, but it will be subject to some conditions. And restrictions which we are about to see in our going forward discussion. So first eligibility criteria, in order to be able to avail input tax credit, the number one eligibility criteria, you must be a registered person. Not just that, one more condition, you can avail input tax credit on goods or services which are used or intended to be used for business purposes. Two things, my dear students, two things must be there in order to be eligible for availing input tax credit. Number one, I must be a registered person. Number two, I should whatever goods or services, whatever I am buying, that I should either use it for my business or I should have an intention to use it. Immediate usage is not necessary. Even if you have an intention to use them in your business purposes also, that is fine. At the time when you are procuring that goods, at the time when you are procuring the services, if you have an intention to use them for your businesses, that will be enough for you to become eligible to avail input tax credit. So only two eligibility criteria: every registered person on goods or services which are used or intended to be used for business purposes. Now that is eligibility criteria. Now next comes conditions. See, just being eligible alone will not be enough. If you want to avail the input tax credit, even you are required to comply with some conditions also. Let us try to understand what and all are the conditions which are required to be complied for taking the input tax credit. Let us see it. Number one by one. So 16 subsection 2 actually will talk about conditions. We have various clauses here. 16 subsection 2, clause A, clause AA, clause B, clause BA. So like that, various clauses are there. Each clause will be talking about the conditions which are required to be fulfilled for availing input tax credit. Number one, first condition. In order to avail input tax credit, you must have some tax paying document. You must be possessing some tax paying document. Documentary proof should be there for availing input tax credit. Sir, which document can be considered as a valid document for claiming input tax credit? So the following are the documents. So ITC can be availed on basis of any of the following documents. If you have any of the following documents, on that basis you can avail input tax credit. Sir, what it could be? It could be an invoice or revised invoice, or it could be an invoice issued by the recipient for goods or services from unregistered supplier. There will be something called self-invoicing. There is a concept called self-invoicing. So what is the self-invoicing? If you are a recipient who is liable to pay GST under reverse charge mechanism. If you are a recipient, so let me bring it here. Let me bring that discussion here once. So what is that self-invoicing? Once again, important topic from the examination perspective. So what is that self-invoicing is? Let us say there is one supplier. Okay. He is making some supply to the recipient. And this supply is getting covered under reverse charge mechanism. Which means if it is a reverse charge mechanism, the recipient only will pay the amount of GST with the government. The recipient will discharge the amount of GST with the government. If the supplier is also a registered person, under GST, he will only give the tax invoice. he will only give you tax invoice. On the basis of tax invoice, whatever GST that you have paid under reverse charge mechanism, that also you can take it as input tax credit. Whatever GST that you have paid under RCM, that GST also you can take it as input tax credit. But first you have to pay it, thereafter you have to take the credit. But for taking that credit, you need some tax paying document. So if the supplier is already registered person, he will give you tax invoice. But in case if the supplier is not a registered person, he will not give you tax invoice. But you have paid the amount of GST under reverse charge mechanism. You have to avail ITC on that. But for that, you need tax paying document. But the supplier has not given you any tax invoice. So in those cases, what you should do is you are required to do something called a self-invoicing. You will be required to do something called a self-invoicing. Not you will not give it to any supplier or something. So what you will do is you yourself will do self-invoicing. You yourself will do self-invoicing. So that self-invoicing you are going to do. Even that self-invoicing can also be a valid document for availing the input tax credit. Able to understand? So in case of reverse charge mechanism supplies, if the supplier is already registered, he will give you tax invoice. That can be a valid document for availing input tax credit. In case if the supplier is unregistered, he will not give you tax invoice. But in that circumstances, as a recipient, you are only required to do something called self-invoicing. That self-invoicing also could be a valid document for availing input tax credit. Understood? Right. Or it could be even a debit note. It need not be a tax invoice. Even on the basis of debit note also you can avail the input tax credit. Or it could be a bill of entry. In the case of imports and all, even imports also will be subjected to IGST. That IGST also you can avail it as input tax credit. But in the case of imports, you will not have tax invoice, something like that. But you will have something called bill of entry. So that could be a valid document on the basis of which you can avail the input tax credit. Or if it is the ISD credit, there will be a concept called ISD. As I've already told, ISD concept is something which you will learn it as a part of our CA final. If you want to avail credit from ISD, that ISD will give you a document that also could be a valid document. So if you are a registered person, even though you are buying goods or services which are used or intended to be used in business purposes, but the first condition the first condition which you are required to fulfill to avail input tax credit, you must be in possession. Just 1 minute. Kept my mobile phone on silent mode already, but it's continuously making sound. Just 1 minute. So sorry for the trouble. It's connected with one of the Bluetooth devices, so that's why it is making the sound. Okay, perfect. Yeah. So sorry for the trouble. So let me continue. So even though you are a registered person, even though you are procuring goods or services for the purpose of your business, but you must be having a tax paying document. Sir, what could be a valid tax paying document? Any of this could be a document. On the basis of any of this document, you can avail ITC. But just having the document alone will not be enough. That document should contain the minimum following details. Either that invoice, a tax invoice, debit note, credit, a debit note, whatever on the basis of which you are availing ITC. That document should contain minimum following details also. Sir, what should be the minimum following details which must be mentioned in the document? Amount of tax, description of goods or services, total value of supply of goods or services, GSTN of the supplier and recipient, and place of supply in case of interstate supply. Place of supply in case of interstate supply. So if you have any of this document, and in that documents also, if these minimum details are present, then you have fulfilled the condition number 1. You will be eligible to take the input tax credit. This you have to remember. What are the list of documents which you should have, and in that documents what details must be there, that you have to remember it. Okay, right. So condition number 1 we are done. Now let us come to second condition. 16 subsection 2 clause AA. So what does 16 subsection 2 clause AA says is, in order to understand this, we need to have a little background of returns. So what is that concept is, there are basically a few returns here. So one thing which is GSTR1, then we have something called GSTR2B, then we have something called GSTR3B. So 3 returns will be there. So what are the 3 returns is, I will give you one basic discussion, because understanding of this 3 returns is very important for in order to continue to our discussion. So there are 3 basic returns which you need to understand. One is GSTR1. So what is GSTR1? GSTR1 is a statement of outward supplies. Whatever outward supplies you have done, all that outward supplies you are required to declare in your GSTR1. And GSTR3B, one more statement will be there. This is the GSTR3B, where you will declare what is your total output tax liability, what is your total input tax credit, and what amount you are required to pay it in cash, or what amount will be carried forward to your electronic credit ledger. That actual payment and settlement will happen by way of GSTR3B. Okay, so let us say there is a supplier, Mr. A. Now this person, Mr. A, he has run the business for the month of April. For the April, he has done the business. For the month of April 2025, he has done the business. Once the April month comes to an end, once April gets over, he is required to file 2 returns actually. Number one is GSTR1, where he will declare his outward supplies for the month of April, what and all outward supplies he has made. So if he has made B2B supplies, that means B2B, B2C. One more terminology which we often use in GST. What is a B2B supply? If the supplier recipient both are registered. If the supplier and the recipient, if both are registered persons, we call the transaction as a B2B supply. On the other hand, if the supplier is registered but the recipient is unregistered, that we call it as B2C supply. Okay. So now what he will do is, in the month of April, he might have made n number of sales. Let us say he also made supplies to unregistered, he also made some B2B supplies. He made sale to B, he made sale to C, he made sale to D. All these three are registered person. So these are all B2B supplies. Now what he will do, in his GSTR1, he will declare all his B2B supplies. I made a sale to Mr. B. He will mention the GSTI number. 1 lakh rupees worth of sale I have made. On that 18% of GST, 18,000. His GSTN number also will be mentioned. I have made a sale to C, whose GSTN number is so and so. I made 2 lakh worth of supply, on which applicable rate of GST is 36,000. I made 3 lakhs worth of sale to Mr. D, who is also a registered person. 54,000 rupees is the amount of GST. Like that, 3 B2B supplies he has declared. Apart from that, he sold to unregistered customers also. He, let us say for example, he made some 10 lakh worth of sales to unregistered customers. So when it comes to B2C sales, you need not give invoice wise details. Just I will mention total amount. Total 10 lakh worth of B2C sale I have made, on which the total amount of GST is 1 lakh 80,000 rupees. Like this, you will declare all your outward supplies. You will declare all your outward supplies in your GSTR1. Now what will happen is, this GSTR1 you will file, no, generally you will file it by 11th. Generally you will file it by 11th of the next month. So once you file your GSTR1, there will be one statement called GSTR2B. It is not something which you are required to do anything. It is an auto-populated statement. This statement will be auto-populated statement. Now what information will be captured in GSTR2B is, so if you take this A's example only, come on. If you take this A's example only, A has mentioned in his GSTR1 that he has made a sale amounting to 1 lakh, on which GST is 18,000 to Mr. B. No, that was mentioned in GSTR1 of A, right? A has filed a GSTR1 in which he has declared that he made a sale to Mr. B, who is also a registered person. He mentioned his GSTIN. He declared what is the value he has sold, what is the amount of GST. Now what will happen is, if Mr. B logs into the GST portal, if he opens his GSTR2B for the month of April, he will be able to find that data. It will show that, okay, you have made a purchase amounting to 1 lakh from Mr. B, on which you have paid GST amounting to 18,000. Similarly, if the C logs into his GST portal and if he opens the GSTR2B for the month of April, he will find that he has made a purchase of 2 lakh rupees, on which he has paid a GST of 36,000. Similarly, if D goes to his GST portal, logs in and open his GSTR2B for the month of April, it will show that he has made a purchase amounting to 3 lakh rupees from Mr. A, and he is eligible for ITC of 54,000. Right? Similarly, Mr. A would also have purchased multiple goods from other persons. Like the way he is selling goods to another registered person, Mr. A also would have purchased goods from another registered person. No. Those people also might have filed their GSTR1. No. From that GSTR1, even in the GSTR2B, of this person also, of this person Mr. A also, when he opens his GSTR2B, depending on GSTR once filed by the supplier, it will show what and all purchases he has made and how much amount of GST he is eligible for, ITC he is eligible for. Let us say he made a purchase from Mr. P amounting to some 2 lakh rupees. The amount of GST is 36,000. He made some purchase amounting from Mr. Q, from another registered person. He made a purchase amounting to 5 lakh rupees, and it will show that, let us say for example, 90,000 rupees is the amount of GST. So like that, this person, Mr. A, has also made purchases from another registered person. Those suppliers might have filed their GSTR1. Depending on their GSTR1s, this GSTR2B of this Mr. A also will get updated. So now his GSTR2B will show. This is a auto-populated statement. You are not required to do anything. It is an auto-populated statement. Now in GSTR2B of Mr. A, it will show that he made a total purchase from registered persons amounting to 8 lakh rupees, on which he is eligible for ITC of 1,26,000. He is eligible for GST of 1,26,000. Where it is shown? In the GSTR3B it is shown. Now, after this GSTR3B is generated, what you are supposed to do? You are required to file your GSTR3B. So what is GSTR3B? In that GSTR3B, you will say that my output tax liability is 1,80,000, not 1,80,000. So in your GSTR1, you have declared all your outward supplies, no? So what is your total output tax liability? So 54, I have 1,08,000, 1,08,000 plus 1,80,000. 2,88,000 is my total output tax liability, where as per GSTR1. So I will say in my GSTR3B, my output tax liability is 2,88,000. I am eligible for input tax credit. Let us say I am eligible for 1,26,000. Where I am getting it from? From my GSTR2B. Auto populated statement is there? No. From my GSTR2B, I am getting that I am eligible for 1,26,000 rupees of ITC. So let us say I don't have any opening balance in my electronic credit ledger or something. So my output tax liability is 2,88,000. From my GSTR2B, I will take ITC, whatever amount of GSTR2B, whatever amount of ITC that is reflected in my GSTR2B, that I will take it as credit. The balance amount, 1,62,000, this I will try to discharge it using cash. I will deposit the cash and discharge that liability. Understood? So like that, 3 returns will be there: GSTR1, GSTR2B, GSTR3B. Out of that, GSTR2B is just a auto-populated statement. You will be required to file only 2 returns, GSTR1 and GSTR3B. So what is GSTR1? GSTR1 is a statement where I will declare my outward supplies. GSTR3B is a summary statement where I will declare what is my output tax liability, what is my input tax credit. I will settle my liabilities in my GSTR3B. Whereas GSTR2B is a auto-populated statement. GSTR2B is a auto-populated statement which will capture the data from GSTR1s of the suppliers, which will show me how much amount of ITC I am eligible for. Able to understand? Now, due dates, you have to understand it here. GSTR1 due date is 11th. GSTR due date is 11th. And there will be some return filers who are quarterly return filers. Some taxpayers might opt for QRMP scheme where you have to file returns quarterly. In those cases, they will file their GSTR1 by 13th. So they have 2 due dates, either 11th or 13th. If you are a quarterly return filer, 13th. If you are a monthly return filer, 11th. And you are a monthly, you will file this dates. Now, this GSTR2B will be generated on 14th. On 14th, exactly at 0001 at that point of time, this GSTR2B will get generated. And GSTR2B will capture only that data from the GSTR1s which have been filed on or before due date. GSTR2B of the current month will capture the data from those GSTR1s which have been filed on or before due date. If your supplier has filed your GSTR1 after due date, after 13th or 11th, that will not get reflected in the current month's GSTR2B. It will get reflected in the next month's GSTR2B. Okay, so GSTR2B will get generated on 14th. So it will capture the data from the GSTR1s of the suppliers which have been filed on or before due dates. If you are a monthly return filer, on or before 11th. If they are a quarterly return filer, on or before 13th. So whatever GSTR1s, and there will be one more statement called IFF also. So on the basis of GSTR1s or IFFs which are filed on or before due date, that data only will be captured in the GSTR3B. And GSTR2B, sorry, and GSTR3B will be required to be filed. In case of monthly return filer, it will be 20th. If it is quarterly return filer, it is either 22nd or 24th, depending on, for some states it is 22nd, for some states it is 24th. Able to understand? Clear and comfortable, everybody? Now, one more small thing which I would like to introduce it here. I am giving you overall understanding of returns here as well. So I am giving you all the necessary discussion required for returns also I am covering here. Listen carefully. One more last important point I would like to tell in returns before I go ahead with my ITC chapter. See, there is one more option. Let us say you have filed your GSTR1. You have filed your GSTR1. Sorry, this point here only, no? B2C 10 lakhs. Okay, let me keep this B2C also. 10 lakhs worth of B2C supply I have made, on which my GST liability is 1,80,000. So let us say what happened is, you are filing your return for GSTR, you are filing your returns for the month of April. You filed your GSTR1 on 11th. Let us say you are a monthly return filer. By 11th of May 2025, you filed your GSTR1. You declared all these supplies. You told the total how much? 16 lakhs worth of outward supply you have made, on which the output tax liability is 2,88,000. You have declared it. But let us say we have filed GSTR1, but you forgot to add one supply. You actually made a supply to Mr. E also. In the April month, there is another B2B sale for which you have made another 1 lakh worth of sale to Mr. B, on which amount of GST was 18,000 rupees. This you forgot. You filed your GSTR1 for the month of April already, but you forgot to enter this B2B supply in your GSTR1. GSTR1 is already filed. Now what you can do? There is one option. So what will happen is, after you have filed your GSTR1 or due date of filing of GSTR1, whichever is later, simply take it after filing your GSTR1. Till the time you file your GSTR3B, there is one more option given to you. There is one more optional facility given to you, which is called GSTR1A. They have given one more optional filing facility called GSTR1A. Now, what is this purpose of GSTR1A is, in case if you have filed already your GSTR1, but in that GSTR1 you have forgot to add some details, or you have reported if you have reported wrong values, they have given one more option after you have filed your GSTR1, but before you file your GSTR3B. After you have filed your GSTR1, till the time you file your GSTR3B, if you have not yet filed your GSTR3B, so they are giving you one more option called GSTR1A. So you can file that GSTR1A and declare that missing details. So I filed my GSTR1 already, in which I have declared only 16 lakhs worth of supply, 2,88,000 rupees of output tax liability. But I did not file my GSTR3B yet. Don't worry, there is an optional facility given to you. You can file GSTR1A. In that GSTR1A, you can declare this extra supply. So I will declare one more B2B supply I have made to E, amounting to total 1 lakh rupees, and the amount is 18,000. So now what will happen is, if you file your GSTR1A, that will get reflected in the current month's GSTR3B only. So now if you open GSTR3B, if you have filed GSTR1, thereafter you file your GSTR1A, then you are filing your GSTR3B. Now your GSTR3B will show not just this amount which has been filed in your GSTR1, it will also capture that GSTR1A related data also. This 18,000 also it will capture. So your total output tax liability will be this much. You will be paying this amount. So if I do the calculation part here, so total how much amount it will be? So let me put it this way. So your total output tax liability will be how much? 8 plus 8, 16, 0. 3,06,000 rupees will be your total output tax liability. And your input tax credit is, see, there might be calculation mistakes here. Sorry for that if I am doing any calculation mistake. So 1,26,000 is IDC. The balance amount you will be required to pay. How much? I think if I'm not wrong, 1,80,000 rupees will be your output tax liability. That much amount you will be required to pay. So if you have filed your GSTR1A after filing GSTR1, that amount will be reflected in the current month's GSTR3B only. Okay, but sir, you are updating this B2B entry for Mr. E. To E, you have made a sale amounting to 1 lakh, amounting to 18,000 rupees of GST. This should get reflected in the GSTR2B of the recipient. No, sir. Mr. E, when he logs into the GST portal, when he opens his GSTR2B, this amount should get reflected in the recipient's GSTR2B. No, when it will get reflected, it will not get reflected in the April month's GSTR2B. It will not get reflected in the April month's GSTR2B. It will get reflected in the next month's GSTR2B. For the May month GSTR2B, whenever it will get generated, generally it will be generated on 14th of June. 14th of June it will get generated. In the next month GSTR2B, it is going to get reflected. The next month's GSTR2B it is going to get reflected. So one important point here. So once again, I have spent some time in making you understand the returns, but this discussion is very important to have that seamless discussion going forward. So one important point regarding GSTR1A, if you have filed your GSTR1, but before filing GSTR3B, if you want to amend your GSTR1, can I do it? Yes, there is an optional facility called GSTR1A. You file the GSTR1 and update the details. That GSTR1A related data will get reflected in the GSTR3B of the same month. But that will get reflected in the GSTR2B of the recipient in the subsequent month, not of the same month. Not of the same month, it will get reflected in the GSTR2B of the recipient of the subsequent month, not of the same month. Okay, so this much you remember. Sir, where we started, where have we come? What we are actually discussing is what are the conditions which are required to be fulfilled for availing input tax credit. So first condition, they have told that you must be having some tax paying document, and that document should contain the minimum details. Now, second condition says that details of one more condition which is required to be fulfilled to avail input tax credit is details of invoices or debit notes which are uploaded by the supplier in the GSTR1 or using invoice furnishing facility, and that details must be communicated in your GSTR2B. So what they're trying to say here, my dear students, whatever I have told you till now, the same thing they are trying to say. So second condition for availing input tax credit. So if you want to take the input tax credit, first it must be reflected in your GSTR 2B. So if you see here, Mr. A's example, in his GSTR 2B, how much GST is getting reflected? 1,26,000 rupees of GST is getting reflected. Only that much amount of input tax credit he can take. Let us say, for example, he purchased it from Mr. Q, but that Q did not file the return on or before due date. This data is not coming. Let us say this data is not reflected in his GSTR 2B. In his GSTR 2B, only the data which is reflected is 2 lakh rupees. Along with that, 36,000 rupees of GST is only getting reflected. Why? Because he made a purchase from Mr. Q, but that Q did not file his GSTR 1 on or before due date. That will get reflected in the next month. But in the current month, his GSTR 2B is reflecting only 2 lakh rupees along with 36,000 rupees of GST. How much ITC he can take? Since he is having invoice for Q, can he take total ITC of 1,26,000 or can he take ITC of only 36,000? He has to take only ITC of 36,000, not 1,26,000. Why? Because the second condition for availing input tax credit is that ITC must have been reflected in your GSTR 2B. So claim the input tax credit. You become eligible to take the input tax credit only when the ITC has been reflected in your GSTR 2B. So that is the second condition. So whenever GST is reflected in your GSTR 2B, then only you avail the input tax credit. Understood? Clear? So this is what regarding second condition. So first condition, you must have a tax paying document. Number two, that amount should have been reflected in your GSTR 2B. Now coming to the next condition, third condition, condition number 3, which is required to be fulfilled for availing input tax credit is you must have received the goods or services. You must have received the goods or services. Just having invoice alone will not be enough. Just having that thing reflected in your GSTR 2B alone will not be enough. You should have actually received that goods or services. In case if you have an invoice, in case if it is reflected in your GSTR 2B also, but you have not yet received the goods, you have not received the services, you should not be eligible to claim the input tax credit. So that's why one more condition is you should have received the goods or services, then only you will be able to claim the input tax credit. See, sometimes what will happen is, let us say for example, I made a purchase on 25th of March. Even the supplier has also filed his GSTR 1. It has got reflected in my March month related GSTR 2B also. 1 lakh worth of purchase I have made, on which 18,000 rupees is the GST. On 25th I have purchased it. On the same day I got the tax invoice. Even it was filed in, even the supplier has filed his GSTR 1. In my GSTR 2B also that 18,000 rupees is reflected. But I received this goods on 15th of April. When I received the goods, 15th of April. Sir, can I claim ITC for the month of March only? Because I have a tax invoice. In the March month GSTR 2B also it has reflected. Can I take ITC? Obviously no. You have to wait till April. So when you are filing the return for the month of April, then only you can claim the ITC. Because agreed, you have tax invoice. Agreed that is reflected in your GSTR 2B. But third condition is not fulfilled. That is you have not actually received the goods or services. Understood? So you have to wait till the time you receive the goods or services to avail the input tax credit. So third essential condition, you must receive the goods or services to avail ITC. But here there is one small clarification given here. Bill to ship to transaction. Bill to ship to transactions. So interesting discussion we have here. Let us say there is a person, let me put it this way. There is a person Mr. A, there is a person Mr. B. Mr. B placed an order with Mr. A. Sir, I want some 1,000 quantity of the stock. So he's a supplier. So with the supplier, Mr. A placed an order. Mr. B is a recipient. So Mr. B placed an order with Mr. A. Sir, I want 1,000 quantity. Let us say this supplier is located in Delhi. This recipient is located in Mumbai. So this recipient placed an order. Sir, I want 1,000 quantity of the goods which are required to be delivered. Now this Mr. A is required to pack the goods and he has to ship it to Mumbai. But in the meantime, what has happened is there is another person, Mr. C. There is another person, Mr. C. He placed the order. Same person. He is also from Delhi. He placed the order with Mr. B for the same 1,000 quantity. Hey boss, I want 1,000 quantity of the stock to be delivered. Now, as a prudent businessman, what I thought is, let me do one thing. Anyhow, I have to receive the goods from Mr. A. No, Mr. A is anyhow in Delhi. Why to bring it to my premises and then later after deliver it to Mr. C? I will ask my supplier to directly deliver it to Mr. C only. To directly ship the goods to Mr. C. Whereas he will give the bill to me. He will give the invoice to me. He will give the invoice in my name. Mr. A will give the invoice in Mr. B's name, but he will ship the goods to Mr. C. So this typical transaction, I call it as bill to ship to transaction. Which transaction? The transaction between Mr. A and Mr. B. I call it as bill to ship to transaction. Why? Because Mr. A is giving the invoice in the name of Mr. B, but he is shipping the goods to Mr. C. So this typical transaction, I call it as bill to ship to transaction. Now what is the problem here is, so if you see, two invoices will be there here. Mr. A will give invoice to Mr. B. Let us say, for example, 1 lakh worth of invoice has been given, charging 18,000 rupees of GST. Now let us say Mr. B will give invoice to Mr. C. Why? Because this transaction is between B and C. So B is giving invoice, let us say 1,20,000 rupees of value. Let us say some 19,000 rupees of GST. That invoice will be given. Now, if you look from the Mr. C's perspective, is he having an invoice? Yes, he's having a tax paying document. Let us say, for example, Mr. B has filed his return and even it is getting reflected in his GSTR 2B also. And third condition, did he receive the goods? Yes, he received the goods also. He is receiving from Mr. A, but anyhow he is receiving the goods? No. Yes, he received the goods also. So since all the conditions are satisfied, can he take ITC? Yes, he can take ITC. No issue. But come to the Mr. B. Is he having an invoice? Yes, invoice was given to him by Mr. A. Is it reflected in GSTR 2B? Let us imagine that A has filed his return and even he has declared and it is getting reflected in the Mr. B's GSTR 2B. But did he receive the goods? No. He did not receive the goods. No. Why? Because he asked Mr. A to deliver the goods directly to Mr. C. So if you literally see here, Mr. B did not receive the goods. Since he did not receive the goods or services, one of the condition got violated. Will he be eligible to claim ITC? No. ITC should not be allowed to him. But it is a practical obstacle or not. So that's why what they have given the clarification is, in this case, even though Mr. B has not actually received the goods, it will be deemed as if he received the goods. It will be deemed as if he received the goods and he will be eligible to take the input tax credit. Understood? Clear and comfortable? So in case of bill to ship to transaction, the original recipient, even though he hasn't received the goods, still it will be deemed that he has received it and he will be eligible to take the input tax credit. Understood? Clear? Right. So that's what I have clarified it here. Bill to ship to model. So three conditions we have seen till now. Number one, you must be in possession of a tax paying document. Number two, that amount should be reflected in your GSTR 2B. Number three, you should have actually received the goods or services. Not just that, here also one important circular is there. One more circular is there. See, there will be something called X works contract. There will be something called X works contract. So what is this is, let us say for example, there is Tata Motors. There is one dealer. Now dealer placed order for 1,000 quantity of, let us say some 100 quantity of cars. Tata Motors is selling 100 quantity of cars to a dealer. But these automobile companies, they will operate something called X works model, X works contract. So what is X works contract is, Tata Motor will only deliver the goods at the factory gate. At the factory gate, they will keep the goods ready. Once they make the goods available at the factory gate, their responsibility will get over. They will not undertake any transportation responsibility. The buyer has to arrange for the transportation facility. He has to bring the goods from the factory gate to his premises. He has to bring the goods to the factory, from the factory gate to his premises. Whereas the seller, he will take the responsibility for the goods only till the factory gate. At the factory, after factory gate, he will not take any responsibility. The goods will be deemed to have been, the sale will be deemed to be completed at the factory gate only. From the factory gate, bringing the goods to his premises is whose responsibility? The buyer's responsibility. Let us say this Tata Motors has made these goods available, or he handed over to the transporter at the factory gate. Dealer has arranged a transporter. The transporter has come to this place. So these goods are handed over by Tata Motors to the truck on 25th of March. The goods are handed over by the supplier to the transporter on 25th of March. Now this truck will take some time and this truck is reaching the dealer on, let us say on 15th of April, this truck is reaching the dealer. So now we have told that this dealer can claim ITC only when he has actually received the goods. Only when he has received the goods, then only this dealer can take the ITC. Now you tell me when the goods will be deemed to have been received. Will it be deemed to have been received on 15th of March when they actually reach him, or when the goods are handed over to the transporter? When the goods are made available to the transporter, when the goods will be deemed to have been received? CBIC has given a circular that saying the goods will be deemed to have been received on 25th of March only. Goods will be deemed to have been received on 25th of March only, and you become eligible to take ITC at this point itself. You need not wait till the time the goods reach your actual premises. Why? Because it is a X works contract model where the sale will be deemed to have been completed at the factory gate only. It will be deemed to have been received on 25th of March itself. In the March month itself, whenever you are filing the return for the month of March, then only you can take the input tax credit, provided if all other conditions are satisfied. Understood? So that is what they have clarified. So this circular will become applicable in all kinds of X works contract models. Next. So let us come to the next condition. One more condition. Details of ITC in respect of the said supply communicated to the registered person under section 38 should not be restricted. Should not be restricted. So sometimes you will have a tax paying document and that amount will also be reflected in your GSTR 2B, and sometimes you will also have received the goods and services, but still ITC will be restricted. Sometimes a department will restrict you from taking ITC. In case if that ITC is restricted, then you can't enjoy the input tax credit. Sir, when ITC will be restricted, sir? Generally, ITC will be restricted in the following cases. In case if you are buying from a newly registered person, then for a short duration, department will restrict you from taking input tax credit. If that ITC has been kept under restricted category, you should not avail it. Or if you have defaulted, if the supplier has defaulted in the payment, the person from whom you have purchased that goods, if he has defaulted the payment of tax, then also they will restrict. Or if you have purchased it from such a supplier whose output tax liability as per GSTR 1 or IFF exceeds the tax payable under GSTR 3B, that means to whom Rule 88C intimation has been given. If you are buying from such a supplier to whom 88C intimation is given. Sir, what is 88C intimation? What is 88C intimation is, let us say you are filing your return. GSTR 1 you are filing, in which you have declared your outward supplies as 10 lakh rupees and 1.8 lakh rupees is your output tax liability. But when you are filing the GSTR 3B, what you are doing is you are declaring your outward supplies as 8 lakh rupees only and you are declaring your output tax liability as 1.6 lakh rupees only. Why people will do it? Why people will do it is, first they will file GSTR 1. If they file GSTR 1, then only they will be able to pass on the ITC. Otherwise, it will not get reflected in the recipient's GSTR 2B. So that's why what some suppliers have started doing is, they will declare all their outward supplies in GSTR 1 and they will pass on the credit to all the recipients. But when they are required to make the actual payment in GSTR 3B, they will underreport their sales. In your GSTR 1, you are declaring 10 lakh worth of sale and 1.8 lakh rupees of GST. But in your GSTR 3B, you are reducing that outward supply, reducing your output tax liability. To these people, one intimation will be given, 88C. One automatic system generated intimation will come. Boss, you have declared more outward supplies in your GSTR 1, but you have declared less outward supplies in your GSTR 3B. What is this difference? Please explain it or pay the difference. So like that, they will get one intimation. So if such kind of intimation was given to your supplier, you purchased goods from a person, your supplier has got Rule 88C intimation and he is not responding to it. Then also if you make the purchases from such a person, then ITC will be restricted for you. If you make purchases from a supplier to whom 88C intimation has been given and who is not responding back to it, from that supplier if you are making a purchase, then also ITC will be restricted. So like this, a few cases are there. In case if you are buying the goods from such registered suppliers who have committed some violations, even then also you can't avail input tax credit. So what are that cases where ITC will be restricted? So ITC will not be available for inward supplies furnished by registered supplier. That means if you are buying the goods or services from such a supplier who is a new registrant or who has defaulted in payment of tax, to whom Rule 88C intimation has been given, or to whom Rule 88D intimation. Next point is Rule 88D. Sir, what is Rule 88D? Rule 88D is also system generated information. Just now as I have told, in your GSTR 2B, ITC will be reflected. Whatever amount that has been reflected in your GSTR 2B, the same amount you have to claim it in your GSTR 3B. Yes or no? Let us say in your GSTR 2B, ITC reflected is 1 lakh. But in your GSTR 3B, you are claiming ITC as 1,50,000 rupees. Automatically system will generate a notice. You are eligible for only 1 lakh rupees of ITC, but why you are taking 1,50,000 rupees of ITC? So that we call it as Rule 88D intimation. So there is one supplier from whom you are making a purchase. To that supplier, Rule 88D intimation has been given, for which he is not responding. Even then also your ITC will be blocked because of your supplier's mistake. Sir, why they are punishing me for mistakes committed by my suppliers? Because the GST Act is saying whenever you are making a purchase, do your research, buy only from genuine people, don't buy from non-genuine people. Next, similarly, if your supplier has if supplier has defaulted in discharging his liability under 4912 read with Rule 86B, we'll see what is Rule 86B in this chapter itself after some time. But if your supplier has violated Rule 86B, then also the ITC will be restricted or other specified class of persons. So fourth condition which you need to check is whatever ITC which is reflected in your GSTR2B, it should not have been restricted. If it is restricted, you can't take ITC. If it is not restricted, then only you can take ITC. Okay, so four conditions I have told. Number one, as a recipient, you must be having a tax paying document. Number two, it should have been reflected in your GSTR2B. Number three, you should have actually received your goods and services. Number four, that amount should not have been restricted. Now, going forward, that a tax should have been actually paid to the government. So one more condition, 16 subsection 2 clause E says that you are eligible to take the, in order to become eligible to take the ITC, one more condition what is required to be filed is whatever ITC that you are claiming, that should have been paid to the government. Sir, what they are trying to say here, I will try to explain one simple concept once again, how this will practically work out. Let us say, for example, there is a supplier. From this supplier, you have purchased 1 lakh worth of goods, on which 18,000 rupees of GST to the recipient. You are the recipient there. Okay, he gave you tax invoice also. Now, without your mistake, you paid 1,18,000. You paid 1,18,000. So you have a tax invoice also. Let us say it is getting reflected in your GSTR2B also. He filed his GSTR1 and it is getting reflected in your GSTR2B. You received the goods also. ITC is not restricted. All the conditions you are fulfilling. But this supplier, what he has done. So what you should have done, this 1 lakh rupees he should have enjoyed. He should have filed his GSTR1. Okay, he is filing GSTR1. But he should also file his GSTR3B. Should also have filed his GSTR3B. In that GSTR3B, he will declare, okay, I have my output tax liability of 18,000. If I have input tax credit, that he will adjust it. Balance, if it is any, that cash payment he has to make. So, but what this useless fellow is doing is, he filed GSTR1. He is passing on the credit to you. But he is not filing his GSTR3B. He is not making that payment of tax to the government. So what do you mean by making the payment of tax to the government is not actual cash payment. Either by using his ITC, either by using his electronic credit ledger or cash ledger, he should have discharged his tax liability. That means he should have filed his GSTR3B. In case if your supplier is not filing the GSTR3B, then they are saying as a recipient, we will not let you take the input tax credit. You become ineligible to take the input tax credit. Sir, very pathetic situation. No, yes, very pathetic situation. Okay, so what does this rule say? One more condition, whatever amount of ITC that you want to claim, that amount should have been actually paid to the government. That means the supplier should have filed his GSTR3B, discharged his tax liability, then only you become eligible to take ITC. If your supplier is not filing GSTR3B, you become ineligible to take the input tax credit. But how this will practically work out is, the department has given one rule. What is that rule they have given is, let us say for example, this sale has happened in April. Okay. Now initially what will happen is, when your supplier has filed your GSTR1, it will get reflected in your April month's GSTR3B. First you take the ITC. First you take ITC, 18,000 rupees of ITC, you take it. But thereafter what will happen is, this person has not filed GSTR3B. Department will not ask you to immediately reverse it. Department will not ask you to immediately reverse it. The department will wait. Okay, April due date is over. Did he file? No, he did not file it. They will wait. At least in the month of May, did he file it? No. At least in the month of June, he filed it? No. At least in the month of July, he filed it? No. The department will wait. How long they will wait, sir? 30th of September following the end of the financial year. They will wait till 30th of September 2026. They will wait till 30th of September 2026 for this person to file his GSTR3B. If till 30th of September 2026 he did not file his GSTR3B, then the department will intimate you via common portal. You have taken ITC by making a purchase from a supplier in the month of April, but that person has till now not filed his GSTR3B. Please reverse that ITC whatever you have taken. Please reverse that ITC whatever you have taken. And that ITC you have to reverse it by 30th of November. So 2 months of time they will give you. By 30th of November 2026, you are required to reverse that 18,000 rupees of ITC, whatever you have taken. In case if you are not reversing it by 30th of November, thereafter what will happen is interest will become applicable. If you are reversing after 30th of November, then it will not be enough. Just if you reverse the ITC amount, you have to reverse it along with interest at the rate of 18% per annum. You have to reverse it along with interest at the rate of 18% per annum. You will be required to reverse. Able to understand? So this is something which you have to remember. This is how practically the things will work out. So whatever it is, the third condition, sorry, not third condition, I think it is fifth condition. So the fifth condition is the amount of GST, the amount of tax should have been actually paid to the government. That means supplier should have filed his GSTR 3B. So how this will practically work out? The department will wait for the supplier to file his GSTR 3B till 30th of September following the end of the financial year. If till that time also he is not filing his GSTR 3B, then by 30th of September they will intimate it to the recipient, boss, you have taken ITC from the supplier, but he has not filed his GSTR 3B. Please do reverse it. And they will give time till 30th of November to reverse it. If you are not if you are reversing within 30th of November, reverse only normal ITC whatever you have taken. If you are reversing it after 30th of November, you have to reverse that ITC along with interest. Understood? Clear? Right. So this is what the condition. Along with that, this point also I have explained. And one more thing here, sir, let us say for example, now little bit extension. Let us say by 30th of September he did not file it. Let us say, sir, by 30th of November I have reversed it, 18,000 rupees. I have reversed my ITC. Thereafter, the supplier realized his mistake. And somewhere he is filing it in the month of January 2017, sir. 2027, sir. Finally, this supplier has realized his mistake and he is filing that GSTR 1 for the month of April 2025. In the month of Jan 2027, he is filing his GSTR 3B. Now, can I re-avail that input tax credit which I have reversed it? Yes. Can you re-avail input tax credit? Yes, you can do the re-availment. So initially you have claimed, then you have reversed it, but now that supplier has realized his mistake and filed his GSTR 3B. Now whenever he is filing his GSTR 3B, you can re-avail that input tax credit once again. Whatever amount of ITC that you have reversed, that you can re-avail it. Understood? Right. So this is what regarding re-availment point. So everything here I have covered. Next, one more last condition which is required to be fulfilled. One more last condition which is required to be fulfilled is you have to even file your return. So after fulfilling all the conditions, just because the amount is reflected in your GSTR 2B, the amount will not be credited to your electronic credit ledger. If you want to claim that ITC, you have to file your return. Which return you have to file? GSTR 3B you have to file. Only when you file the GSTR 3B, then only the amount will get credited to your electronic credit ledger. Don't be of a wrong notion that since the amount is reflected in your GSTR 2B, you can take that, you have taken that ITC. No. GSTR 2B is an auto-populated statement which will only show this much amount you are eligible for. If you want to claim ITC, you have to file your GSTR 3B. Only when you file GSTR 3B, then only you become eligible to take the input tax credit. Understood? Clear everyone? Then there are a few provisions which we need to understand. Sir, what are that provisions which we need to understand? Number one, sir, if I am receiving the goods in lots and installments, let us say for example, once again Tata Motors example I will take. There is a dealer who placed an order for 100 cars. Now this 100 cars, for that he will give single invoice. But all that 100 cars will not come in single consignment. Let us say for example, they are coming in lots. 10 cars. If you take this containers which will bring these cars, they can't accommodate any number of vehicles. They can accommodate some 10 or 12 vehicles. So these 100 cars are coming in 10 lots. In 10 lots, this total 100 cars will come. The last lot will come here. Let us say, for example, first lot started on 15th of March. I got the last lot on 25th of April. Sir, when this dealer will become eligible to take the ITC? Because one of the conditions says that you must have received the goods or services to be eligible to take the ITC. Now you tell me when I should take ITC. On receiving the first lot, can I take full ITC? Or should I have to wait till I receive the last lot to take ITC? So the proviso here has clarified that you have to wait till you receive the last consignment. Till the time you receive the last consignment, you have to wait. Only when you have received the last lot, then only you can claim the input tax credit, not when you have received the first lot. This is one thing which they have given. So in case of goods received in lots or installments, you are eligible to take the ITC only when you receive the last lot or last installment. There is one more proviso also. Second proviso. This is very, very important. Second proviso to 16 subsection 2. This is the most important point. So what the second proviso says is, let us say for example, there is a supplier. This supplier has sold some goods, has made some supply to the recipient. Okay. Now he will give you tax invoice. Let us say 1 lakh worth of supply, 18,000 rupees of GST. Now this supplier will declare that invoice in his GSTR1 and he will pay that GST. As a recipient, on the basis of that invoice, you will take ITC. Let us say this sale has happened on a credit basis. Now, second proviso to 16 subsection 2 places a condition that the recipient should make the payment to the supplier within 180 days. The recipient should make the payment to the supplier within 180 days from the date of invoice. Within 180 days from the date of invoice, recipient should have made the payment to the supplier. In case if the recipient is not making the payment within 180 days from the date of invoice, then what will happen? Then what will happen is this amount is whatever ITC that you have taken, that is required to be reversed along with interest, direct interest. The government will not wait. So as a recipient, you are required to make the payment to the supplier within 180 days from the date of invoice. If you are not making the payment to the supplier within 180 days from the date of invoice, then you will be required to reverse the ITC whatever you have availed directly along with interest. From the date of utilization till the date of reversal, you have to reverse it along with 18% interest. So like this, I have put one condition, payment condition on the recipient within 180 days from the date of invoice, you have to make the payment. If you are not doing it, reverse the ITC along with interest. Okay, sir, I did not make the payment within 180 days. I have reversed the ITC. I have reversed the ITC along with interest. After 180 days, I am making the payment once again to him. After 180 days, I am doing the payment back to him. I am doing the payment back to him. So if you are doing the payment later, whatever ITC that you have reversed, that you can re-avail it. Whatever ITC that you have reversed, that you can re-avail it. Re-availment of reversed input tax credit is possible. Understood? So two cases I have told where you can do the re-availment. Number one, if your supplier has not made the payment of GST to the government. By 30th of September, it will be intimated. By 30th of November, you have to reverse it. Thereafter, if your supplier is making the payment of GST to the government, you can re-avail the reversed ITC. Second case, as a recipient, you are required to make the payment to your supplier within 180 days from the date of invoice. If you are not doing the payment within 180 days, you are required to reverse the ITC along with interest. Thereafter, if you are making the payment at a later point of time, you can re-avail the ITC. You can re-avail the re-avail the ITC. Interest is gone. Interest you can't re-avail. Interest is gone. You can re-avail the input tax credit. So two cases where re-availment will happen that we have covered. Right, now going forward. So this 180 days condition also we have seen. Now, few more points to understand it here. So what are the few, and one more thing here. However, this payment of 180 days condition will not become applicable in some circumstances. This payment of 180 days, you have to make the payment within 180 days. No, that making payment within 180 days condition will not become applicable. When, sir? In case of those supplies on which a tax is payable under RCM. If you are a recipient paying the GST under RCM, you can take that ITC. No, whatever GST that you have paid to the government under RCM, that you can take ITC. For those ITCs, for those RCM supplies, there is no condition that you are required to pay the GST within 180 days. Even if you don't pay to the supplier within 180 days also, still RCM related ITC, you need not reverse it. You can continue to avail it. Second condition, in case of deemed supplies without consideration, if you remember under section 7 subsection 1 clause C, I have told that there is schedule 1. 4 activities are there. If these 4 activities are performed even without consideration, it will be deemed as supply. In those cases, there is no consideration only. If there is no consideration, what is the necessity of putting the payment condition within 180 days? Understood. So that's why even this making the payment within 180 days will not become applicable in respect of those supplies which are deemed as supply even without consideration in schedule 1. One more case where you are not required to check the condition of 180 days payment is to that part which has been added to the value of supply on account of supplier's responsibility under 15 subsection 2 clause B. Sir, what is it? So what is it is, once again, this is related to value of supply chapter. Just now we have covered. So if you go to the value of supply chapter, I told you one case, 15 subsection 2 clause B. This event manager services I have told you, no? Event management services. See, you are required to pay 9,50,000 rupees. But 50,000 you have paid it to the ice cream person. Go back to the value of supply chapter. In the value of supply chapter, I have told supplier is required to make payment of 50,000 to the ice cream dealer. But instead of supplier, you are making the payment. How much? 50,000. But here supplier should give invoice for total 10 lakhs. Supplier will give invoice for total 10 lakhs on which he has given you 1,80,000 rupees of GST. Now you will take total 1,80,000 rupees of GST. Okay. Now you are required to make the payment within 180 days. You are required to make the payment within 180 days. But you are required to pay only how much? 9,50,000. Let us say you are not making that payment within 180 days. You are not making the payment within 180 days. Now you are required to reverse the ITC, no? Now you are required to reverse ITC, no? Will you reverse full ITC? No, I will not reverse full ITC. Why? Because I am required to pay only 9,50,000. But this ITC is related to total 10 lakhs, no? So you will reverse ITC, which is apportionable to only the amount which you are actually due, 9,50,000. So only on 9,50,000 you will calculate proportionate amount. On 10 lakh rupees total ITC is 1,80,000. I will calculate what is the value which is apportionable to 9,50,000. So this you will do 9,50,000 divided by 10 lakhs into 1,80,000. If I am not wrong, I will get somewhere around 1,71,000. 1,71,000, I guess. So 50,000 into 9,000 should be reduced. 50,000. This amount you need not reverse it. For this 50,000, whatever GST is attributable, that you need not reverse it. So if you do the calculation in another way, so this much ITC you have taken, 1,80,000 ITC you have taken. You are not making the payment within 180 days. If you are not making the payment within 180 days, you need not reverse the full ITC. Whatever amount that you have added to the value of supply because of 15 subsection 2 clause B, for that payment within 180 days condition will not become applicable. So if I calculate that 50,000 rupees related ITC attributable, 50,000 rupees into 18%, which will come to 9,000. So this 9,000 you need not reverse it. So 1,80,000 rupees minus 9,000, which will come to once again 1,71,000. This much amount of ITC only you are required to reverse. Okay, so payment within 180 days, that will not become applicable to that part of the value which has been added to the value of supply because of 15 subsection 2 clause B. Why? Because this amount is already paid to the third party. So that ITC, this portion related ITC, you are not required to reverse it. Understood? Clear? So actually, once again, if I do a recap, second proviso to 16 subsection 2 says that you are required to make the payment within 180 days, but that 180 days condition will not become applicable in 3 cases. In case of that ITC which you are availing it because you paid it under reverse charge mechanism, in respect of those deemed supplies even without consideration. Third one, to that part which has been added to the value of supply because of 15 subsection 2 clause B. That for that also payment within 180 days will not become applicable. Understood? Clear? So this is one illustration. So I have extended this example. So this much only you are required to reverse. 1,71,000, 9,000 you are not required to reverse it because this 9,000 is related to that 50,000 which has been added to 15 subsection 2 clause B. For this 180 days condition will not become applicable. Okay, clear? Shall I proceed further? Right. Next, one more point here. 16 subsection 3 we have. What 16 subsection 3 says is it is talking about capital goods. In case if you have purchased the capital goods, in case if you have purchased the capital goods and on which you have paid the GST, only one thing you can do. Either you can claim ITC. Let us say, for example, I purchased a plant and machinery amounting to 10 lakh rupees, on which I have paid a GST amounting to 1,80,000. So for the GST paid on your capital goods, only one option is available. If you want, either you capitalize this 1,80,000 rupees also in your books of accounts and claim the depreciation under Income Tax Act. Or if you want, don't capitalize that 1,80,000 and claim it as input tax credit. Any one option, not both. Any one option, you decide it accordingly. So as a business person, you decide it accordingly. In case if you are purchasing the capital assets on which if you have paid GST, either you can take the input tax credit or you can claim depreciation under Income Tax Act. Not both. You can't say this 1,80,000 rupees I will capitalize also and 1,80,000 I will claim ITC also. Not possible. It will be a violation of 16 subsection 3. So you have to do it. You have to claim either depreciation or claim ITC, but not both simultaneously. Then we have one more last aspect, 16 subsection 4 we have. So what is that 16 subsection 4? So 16 subsection 4 says that what is the maximum time limit for availing the input tax credit. So let us say, for example, I made a purchase in the month of April. April 25, I made a purchase. I have an invoice. It was reflected in my GST or 2B also, but I did not claim it. I did not claim my ITC for the month of April. I did not claim my ITC while filing the returns for the month of April. That's all, sir. If I did not claim it for the month of April, that's all. Will it be gone? Nowhere I can claim it? No. So whatever may be the reason, if you are not claiming it for the month of April, don't worry. What you can do is you can claim it in the next month. Sir, in May month, for May month filing returns also, I did not claim it. No issue. When you are filing the June related returns, then you can claim it. Sir, then also I did not claim it. No issue. You can claim it in the next month. Like that, how long, sir? Can I claim it after 5 years, 10 years also? No. They have put a time limit here. So what is the maximum time limit within which you can avail the input tax credit? So they say that ITC on invoices pertaining to or debit notes issued in the financial year can be availed any time till 30th of November of succeeding financial year or till the date of filing of relevant annual return, whichever is earlier. So what they have told, what is the maximum time limit? This is the time limit which will be there in most of the cases. At various places we will come across the same time limit. So they say that either 30th of November following the end of the financial year in which that debit note or invoice is given. If invoice is given, the year in which invoice is given, or debit note, if debit note is given, the year in which debit note is given. So 30th of November following the end of the financial year in which invoice or debit note is given. So this invoice was given in April 2025. So it forms part of the financial year 25-26. 30th of November following the end of the financial year means 30th of November 2026. Or date of filing of annual return. They did not say due date, actual date of filing of annual return. Whichever is earlier, till that point of time, you will have the time to take the input tax credit. If you forgot it for a month, you need not worry. This much time limit will be available for you to come and avail this input tax credit. However, this time limit is not becoming applicable in two cases. No, if I have to say, instead of saying it two cases, simply if I have to put it, this time limit will not become applicable in cases of re-availment of input tax credit. If you are re-availing the reversed input tax credit, then this time limit will not become applicable. That's why I stressed previously, there are two cases where you can do the re-availment of reversed ITC. So number one, if the supplier has not paid the tax amount to the government, thereafter first you will reverse it. Thereafter he's filing his GST or 3B, you can re-avail it. Similarly, if you did not make the payment within 180 days to the supplier, you have to reverse it along with interest. Thereafter, if you are paying it, you can re-avail it. So in case of re-availment of reversed ITC, if you are making a re-availment of reversed ITC, for that time limit will not become applicable. Even you can claim it after 10 years also, 5 years also. And I told you about two cases where there will be instances of re-availment of reversed ITC. So for that two cases, time limit will not become applicable. Understood? Clear and comfortable? Right. So this is what regarding time limit for availing the input tax credit. Understood? Shall I proceed further? Right. So with this, we have completed section number 16 fully. All the major discussion from section number 16 we have covered. 16 subsection 1 talking about eligibility. 16 subsection 2 talking about conditions which are required to be fulfilled. 16 subsection 3 talking in case of capital goods. 16 subsection 4 what is the time limit for availing the input tax credit. In addition to that, some two provisions also we have covered. I hope till here everybody comfortable. Fine. So let me proceed further. See, now I have to go to section number 17. I think, but before going to section number 17, I think one more thing I have missed out. Section number 16, subsection 6 I have missed out. From the section number 16, subsection 6 is also there. That thing I have missed out. Let me try to clarify it now. See, I told you that. So just let me come back here. One complicated point I would like to explain. So 16 subsection 6 will give you one more time limit. So what is that is? See, what is the usual time limit for availing ITC? 30th of November following the end of the financial year, or date of filing of annual return, whichever is earlier, right? So this is what the usual time limit. This is what the usual time limit for availing input tax credit. But there are one exception. There is one exception I have told. What is that exception? Re-availment. If there is a re-availment of reversed ITC. If there is a re-availment of reversed ITC, then time limit will not become applicable. This I told you, right? There is one more thing I will tell you. Let us say, for example, this I will try to explain with the help of example. Please follow the example carefully. With that concept will become very much clear. Let us say in April 2025, I made a purchase. On which I have paid a GST. Amounting to 18,000 rupees. But this GST, I did not claim it. ITC, I did not claim. Okay. Now, what is the maximum time limit till which I will be able to claim it? Let us say, for example, annual return was filed on 31st of December. So, maximum time within which I can claim that ITC is 30th of November. Ignore the date of filing of annual return for the time being now. Just imagine that annual return has been filed after 30th of November only. So, let us say maximum time limit. Maximum time limit is available for claiming ITC is 30th of November 2026. So this is the due date by which I have to take this ITC amounting to 18,000. I made a purchase in the month of April. If I did not take ITC here, what is the maximum time limit which I will have? Till 30th of November 2026, I will become eligible to take the ITC. Okay, but here what happened is, in between I committed some offense. Let us say, for example, I did not file my returns or something like that, or I have done some violation, because of which, let us say, my registration was cancelled. On 15th of October 2026, my registration was cancelled. my registration was cancelled. See, if my registration was cancelled, from the date of cancellation of registration, I will not be able to file any returns. From the date of cancellation of registration, I will not be able to file any returns. Little bit of complicated topic I am telling. This is having a linkage with the revocation chapter, registration chapter. Listen carefully. So I was not, registration has been cancelled. So from here, I will not be able to file any returns. But I told that in case of cancellation of registration, suo motu by the proper officer, you can make an application for revocation of cancellation within 90 days. So I made an application for revocation of cancellation. Thereafter, I got my revocation of cancellation. That means PO has considered it and he has given me cancellation back. So revocation of cancellation. Revocation of cancellation, let us say it happened on 25th of December. On 25th of December 2026, revocation has happened. But from 15th of December, from 15th of October till, that is from the date of cancellation till the effective date of revocation, from the effective date of cancellation till the date of revocation, I will not be able to file any returns. I will not be able to file any returns. Why? Because if my registration is cancelled, for that period for which my registration has been cancelled, I will not be able to file any returns. So my registration was cancelled on 15th of October. I got my registration back on 25th of December. But during that period, I was not able to file the returns. But now they have given my registration back. And they will give my registration back retrospectively. From here itself, they will give my registration retrospectively. But now going forward, after 25th of December, I will be able to file the returns. But by 25th of December, the time limit for availing the ITC is already over. I did not take ITC amounting to 18,000 rupees of GST, for which the time limit was 30th of November 2026. But at that point of time, my registration was under cancellation. I was not able to file the return. By the time I got my registration back, the time limit for availing the ITC is already over. By the time I got my registration back, the time limit for availing the ITC is over. In this case, the government is giving one more chance. What one more chance they are giving is, as per the registration chapter, see whatever pending returns are there from the effective date of cancellation till the date of revocation, for this duration, whatever pending returns are there, that returns you can file it within 30 days from the date of revocation of cancellation. All the pending returns, you have to file it within 30 days from the date of revocation of cancellation. So now within 30 days, you will file returns? No. In that returns also, you can claim the ITC. Whatever ITC 18,000 rupees, you did not claim it. In that returns, which you file it within 30 days from the date of revocation of cancellation, through that returns, you can claim that input tax credit. Able to understand? Clear and comfortable, everybody? So if the maximum time limit for which you can within which you can claim the ITC, if at that point of time, if your registration was under cancellation, thereafter you got your revocation back, then they have given one option. At the time of cancellation, if you are still eligible to claim the ITC, but during that time your registration was cancelled, that's why you are unable to claim it, then after revocation, within 30 days you will file the returns. In that returns, within 30 days from the date of revocation of cancellation, whatever returns you are filing, through that returns you can still continue to claim the input tax credit. Little bit advanced concept, having strong linkage with the registration chapter. If you have listened my regular class of registration in an excellent manner, I explained this concept in a beautiful manner in my session. If you have listened it, this point will strike. If you have not followed that discussion, or if you have not heard this discussion from anywhere others, or from other sources, then this point you will not be able to sink it. But in case if you have attended my classes, if you have followed this concept, even this interlinking, I have done it in my regular classes also, this will just like that, entire concept will flash just like that in a moment. Okay, but anyhow, this is an advanced concept. This much only I can revise. So I have revised at that point. This is what 16 subsection 6 says. But if you are unable to connect the dots, I would suggest you to go back and revisit that class once again, the detailed class once again. If you go back and revisit it, you will get the better clarity. Okay, so this is what regarding that 16 subsection 6. So with this successfully, I have completed section number 16. Now I will try to proceed further with section number 17. So in the section number 17, it is there are various things which are getting covered here. But the most important discussion here from section number 17 is 17 subsection 5, which is talking about the blocked credit. 17 subsection 5, which is talking about the blocked credit. That is going to be the most important discussion that we will try to understand. So I will come to the blocked credit later. But before that, we have 17 subsection 1 and 2, which are talking about apportionment of the credit. First, I will try to summarize it in a simple manner. This discussion I will try to summarize in simple manner. Then we will go to the blocked credit. So first of all, what is this 17.1 and 2, which is talking about apportionment? See, I told you one simple logic. 16 subsection 1, I told you one eligibility criteria. So when a person will become eligible to take ITC, he must be a registered person. Whatever inputs he is receiving, that he must be using it for business purposes. Let us say I am having some inward supplies, either goods or services. If all my inward supplies, if I am using it only for business purposes, can I take full ITC? Yes, you take full ITC. Let us say, for example, if I am receiving some inward supplies, if I am receiving from inward supplies exclusively for non-business purposes, exclusively for non-business purposes, will I become eligible to take ITC? No, zero ITC. You should not take any ITC. But let us say I am receiving some inward supplies. I am receiving some inward supplies, which I am using it for business purposes also, and which I am also using it for non-business purposes. Which I am using it for business purposes and also non-business purposes. Can I take full ITC here? No. What you should do? You should only calculate proportionate ITC. So you should calculate, you should apportion ITC that is attributable only for business purposes. Whatever ITC that is attributable only for business purposes, that much proportionate ITC only you can avail. Balance ITC you should not avail. Now you will get a doubt, sir, how to apportion it? Agreed, you have told that if I am having common inward supplies which I am using it for business purposes and also for non-business purposes, I have to take proportionate ITC. Okay, very good, agreed. But how to calculate that proportionate ITC? Not relevant for CA Inter. This we will discuss at the CA final level. But just you have to remember the logic that there is a concept called apportionment. On the same lines, if you see, if I am receiving inward supplies, if I am receiving inward supplies which I am going to use them exclusively for taxable supplies, exclusively for making taxable supplies, if I am receiving inward supplies, can I take full ITC? Yes, take it. If I am receiving inward supplies exclusively for exempt supplies, exclusively for exempt supplies, can I take ITC? No, don't take ITC. If you are taking inward supplies which are going to get used for taxable as well as exempt supplies collectively, there are common inputs which I'm going to use it for taxable as well as exempt supplies. Now what I should do? I have to calculate proportionate ITC. I have to calculate ITC that is apportionable to only to taxable supplies. That proportionate ITC I have to calculate, and only that proportionate ITC I can avail it. Balance ITC I should not avail it. Once again a doubt you will get, sir, how to calculate that proportionate ITC? That rules we will learn it at the CA final level, not at the CA Inter level. So just you have to remember that these are the two cases where apportionment of the ITC is going to be necessary. Understood? Now, after this, now we are going to the important part, 17 subsection 5, which is dealing about blocked credit. Which is dealing about what? Blocked credit. But what exactly is this concept of blocked credit? What exactly is the concept of blocked credit? First, I will try to simply summarize it. Thereafter, I will try to explain all the blocked credit related circumstances. Listen carefully. From here, a question will come. If you are writing the GST paper, if you are suppose if you are thinking that you are writing the GST paper, and if you have not written anywhere in your answer sheet 17 subsection 5, then you are not writing the GST paper. So if you are attempting the GST paper but it's nowhere in the answer sheet if you have written 17 subsection 5, that means you are not writing the GST paper. So what do I mean by this is, there will not be a question paper without containing a question from 17 subsection 5, blocked credit. Without a question from blocked credit, there will not be a question paper. So definitely there will be at least 1 mark which is going to be tested from the 17 subsection for at least 2 marks if I'm not wrong, even in MCQs. Okay, so such an important concept is blocked credit. Let us try to understand what exactly is the meaning of the blocked credit. Very important from the examination perspective. See, what do you mean by this blocked credit is, the government has identified, the GST Act has identified few supplies. The GST Act has identified few supplies. In respect of that supplies, you are eligible. Practically speaking, you are eligible. You are a registered person. You have acquired that supplies with the intention of using it for business purposes only. And even you are complying with all the conditions also. You are eligible. You have received some inward supplies and you are eligible. You are a registered person. You have procured that inward supplies either for using business or with the intention of using it in the course or furtherance of the business. And all the conditions you have fulfilled, 16 subsection 2 clause A, 16 subsection 2 clause B, 16 subsection 2 clause B, so like that, whatever conditions we have seen, all the conditions also you have complied with. All the conditions also you have complied with. But all the conditions you have complied, but still the government will say, we will not give you input tax credit. We will not give you certain, it will not let you take the input tax credit. So you have government has identified, government has notified few supplies under section 17 subsection 5, and they are saying that even if you are buying these inward supplies, if you are procuring these inward supplies, and even though you are eligible for taking ITC, even though you have complied with all the conditions given under section number 16, but still we will not let you take the input tax credit. That is what we call it as blocked credit. That is what we are going to call it as blocked credit. So what are that items, sir? What are that supplies on which ITC is blocked? We'll try to see one by one. Okay. First, I will try to talk about motor vehicles. Ineligible motor vehicles. I will try to explain everything from here. So first item on which ITC is blocked is motor vehicles for transportation of passengers. Motor vehicles for transportation of passengers with the seating capacity of less than or equal to 13, including the driver. This I call it as ineligible motor vehicle. So first item on which ITC is blocked is if you are buying a motor vehicle. Not all motor vehicle, those motor vehicles designed to carry passengers only. That means if I am buying a motor vehicle designed to carry the goods, will ITC become available? Yes. If I buy a truck which is used for transportation of goods, will I get ITC? Yes. When ITC is blocked, only when you are buying a motor vehicle which is designed to carry passengers. And not every motor vehicle designed to carry passengers. Only those motor vehicles are designed to carry passengers, that too which are having a seating capacity of less than or equal to 13. Let us say I am an IT company, I am buying a bus, a big bus I am buying, which is with a seating capacity of 35, designed to carry passengers. Will I be able to get ITC? Yes. ITC is blocked only when you are buying a motor vehicle designed to carry passengers, that too having a seating capacity of less than or equal to 13. If the seating capacity is more than 13, no restriction, you can get full ITC. So that is the first item. Ineligible motor vehicle. Sir, which vehicle is ineligible? Motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13. So on that ITC is blocked. But here, sir, what will be motor vehicle? Motor vehicle means it is something as defined under CGST Act, but they have specifically told certain things will not come under motor vehicle. Sir, what will not come under motor vehicle? Number one, vehicles running on fixed rails. That means railways. Railways are not considered as vehicles. That means if someone is buying railways, will it be eligible to take ITC? Yes, because they have excluded railways from motor vehicles. And it also includes a special purpose vehicles for being used in factory or any enclosed premises. If any motor vehicle has been purchased not for traveling on road or something, if it is used in a enclosed premises, like if you see in golf courts, there will be one special purpose vehicle will be there, where in movies often you watch, where if you want to go and play the golf, within that golf court there will be one special purpose white vehicle will be there. You go and sit there, they will take you to the place, from there you can play. So that is a special purpose vehicle which is used only in an enclosed premises. That will also not come under motor vehicle definition. If it is not coming under motor vehicle definition, you can take ITC. Similarly, vehicle with less than 4 wheels fitted with engine capacity of 25 cc, very important. If there is some motor vehicle which is having a seating which is having less than 4 wheels, like 3-wheeler or 2-wheeler, but which is having a driving capacity of only engine capacity of up to 25 cc, electric here, small electric cycles will be there. No, that will not come under motor vehicle. For that you can enjoy ITC. Able to understand? So this 3 will not come under motor vehicles. So that means on this 3 you can take full ITC. Next, one more thing they have told. They have given few exceptions. So first they have told that motor vehicle for transportation of passengers with seating capacity less than or equal to 13, you can't take ITC. But they are giving some exceptions. If you are buying a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13, but still you can take ITC. When, sir? If I am putting it for eligible purposes. If I am putting it for eligible purposes. That means, let us say, for example, if I buy a car, actually, car is a motor vehicle designed to carry passengers having seating capacity less than or equal to 13. I am ineligible for ITC. But if I am buying that car and if I am putting it for eligible purposes, they have given 3 eligible purposes. If I am using it for 3 eligible purposes, I can take ITC. What are that 3 eligible purposes? Number 1, if you are engaged in making a further taxable supply. I am buying a car, selling a car. I am a car dealer. I am buying a car, I am selling a car. Can I take ITC? Yes, you can take it. If you are making taxable supply of transportation of passengers, sir, I'm a travel operator. Using that car, I'm providing the outward services of transportation of passengers. Can I take ITC? Yes. Sir, I'm a cab driver. I purchased that car and using that car, I'm providing services of transportation of passengers. Can I avail ITC? Yes, you can take it. Similarly, if you are buying that motor vehicle for imparting training or driving motor vehicles, for example, I'm running a driving school. I purchased a motor car. And using that car, I'm imparting the driving skills. Can I take ITC? Yes, you can take ITC. Clear? So ineligible motor vehicle, but when you are putting it for 3 eligible purposes. Number one, if you are engaged in making further taxable supply, or if you are using it for making a taxable supply of transportation of passengers, you are making an outward supply of transportation of passengers. So you are a cab driver, you are a travel operator, you are buying a motor vehicle for providing outward transportation of passengers. Yes, ITC you can avail. Number three, if you are using it for imparting the driving skills, you can take input tax credit. Understood? So that is the first kind of blocked credit along with exceptions. Next, second kind of item on which there is a blocked credit, second category of item on which you can't avail the ITC is vessels and aircrafts. Sir, what is this concept of vessels and aircrafts? So they have told that even vessels and aircrafts, if you are buying a vessel means what? A ship or something like that. Aircraft, if you are buying a vessel or aircraft, on that also you will not be eligible to take ITC. But however, here also there are some exceptions. What are that exception? What do you mean by exception here? Generally, when you are buying a vessel and aircraft, you are not eligible for ITC. But Act has told that if you are buying a vessel or aircraft and if you are putting it to use for eligible purposes, then we will give you ITC. Sir, what are that eligible purposes? Same, whatever three we have seen above. Number one, if you are using it for making a further supply. Number two, if you are using it for providing the services of transportation of passengers. Number three, if you are using it for imparting navigating of a vessel. That means if you are buying a vessel and through that vessel, if you are providing the skills of how to navigate the vessel. Or if you are buying an aircraft and you are providing the services of teaching of flying a vessel, flying an aircraft, then you can enjoy the ITC. To that, one more thing is also added. If you are using it for transportation of goods. If you are using it for transportation of goods, even you might be transporting your own goods, you are not supplying it, you are transporting your own goods, then also you can enjoy the input tax credit. Okay, so vessel and aircraft, generally ITC is blocked, but if you are putting it for eligible purposes, you can take ITC. So what are eligible purposes? Number one, if you are making a further supply. Number two, if you are using it for making a taxable supply of transportation, passenger transportation. Number three, if you are using it for providing skills on navigating a vessel or flying an aircraft, or you are using it for transportation of passengers, transportation of goods, sorry. So let us say Indigo Airlines. Indigo Airlines has purchased an aircraft. Can they avail ITC? Yes. Why? Because when Indigo Airlines has purchased an aircraft, why they will be using it? They are using it for making a taxable supply of transportation of passengers. Can they avail ITC? Yes. Reliance Industries Limited has purchased a charter plane in which their CEO will travel. Can they claim ITC? No, they can't claim ITC. Why? Because they are not using it for any of the eligible purposes. Clear? Next. Then comes the next part. See, what is the next part is service of general insurance, servicing, repair and maintenance in so far as they relate to ineligible motor vehicle, vessel or aircraft. Sir, what is it? What they are trying to say? So what they are trying to say is, if there is a motor vehicle, if there is a vessel, if there is an aircraft, if you purchased motor vehicle, vessel or aircraft, and if you are not eligible for input tax credit, that means you are buying a motor vehicle, vessel or aircraft and you are not putting it for eligible purposes. On that, you can't take ITC. Not just on that, if you are incurring any expenses, like if you are paying general insurance, let us say you purchased a car. You are a normal, I'm a chartered accountant, I purchased a car. I'm not going to use it for any of the eligible purposes. Can I take ITC on that car? No. For that car, I am paying a general insurance. Can I take ITC on that general insurance? No. For that car, I am getting a service for which I have paid GST also. Can I take ITC of that service? No. For that car, I am undergoing some repairs for which I have paid the amount along with GST. Can I claim ITC? No. If you are ineligible to take the ITC on motor vehicles, vessel or aircraft, even you will be ineligible to take the ITC on its general insurance, services, repairs and maintenance also. Which means if I am eligible to take the ITC on motor vehicle, vessel or aircraft, I will also be eligible to take the ITC on general insurance, services, repairs and maintenance of that motor vehicle, vessel or aircraft. Like if you take the example of Indigo Airlines, if Indigo Airlines purchase an aircraft, can they be able to take ITC? Yes. If they are eligible to take ITC on that aircraft, even if they are taking general insurance on that aircraft, can they take ITC on that insurance? Yes. If they are undergoing service of that aircraft, on that they have paid GST, can they take ITC? Yes. For that aircraft they have undergone some repairs, on which they have paid some GST, can they take ITC? Yes. So simple logic, if you are able to take ITC on the motor vehicles, vessel or aircraft, you will also be eligible to take the ITC on general insurance, repairs and services. If you are ineligible to take the ITC on motor vehicles, vessels or aircraft, you will also be ineligible to take the ITC on general insurance, services, repairs and maintenance of that motor vehicle. Understood? Clear and comfortable, everybody? So that's what they try to say here. In addition to that, some extra things also. In case if these services of general insurance, servicing, repairs and maintenance, if they are received by manufacturer of ineligible motor vehicles, vessel or aircraft, then they can take ITC. Similarly, if the supplier of general insurance services in respect of ineligible motor vehicle, vessel or aircraft insured by him, even that general insurance company also can take ITC. Let us say, for example, Tata Motors is there. So Tata Motors is there. So Tata Motors is into the business of manufacturing of cars. Manufacturing of cars. Cars are an ineligible, cars are those assets on which ITC is blocked. So manufacturing of cars they are doing. Now this Tata Motors has taken an ITC on the cars whatever they are manufacturing. Can this manufacturer take ITC? Yes. Manufacturers of ineligible motor vehicles, vessels or aircrafts, they can take ITC. Similarly, I will tell you one more scenario here. Let us say uh, I'm the person who purchased a car. I'm the person who purchased a car. 1 lakh, sorry, in 1 lakh, who will get the car? No one will get the car. So I'm a person who purchased a car. I will give you one scenario to make you understand. I purchased this car for 10 lakhs. Now the rate of GST is 40%. Okay. 4 lakhs worth of GST I have paid. Total 14 lakhs I have paid for the purpose of buying this car. Can I take ITC? No. I'm a chartered accountant. I took the car. Can I take ITC? No. This 4 lakh rupees I can't take ITC. Now what I have done is I have taken insurance policy also. I went to some insurance company. So let us say some insurance company I have gone. From that insurance company, I paid some 1 lakh rupees of insurance premium. 1 lakh rupees of insurance premium plus 18,000 rupees of GST. Total 1 lakh 18,000 rupees of insurance premium I have paid. Can I take ITC of this 18,000? No. This also you can't take it as ITC, because if on car you can't take ITC, even on its insurance also you can't take ITC. Okay, now I am driving the car. I am very much relaxed because I have paid full insurance. Now what happened is, when I am driving that car, one fine day my car has met with an accident. For God's sake, this should not happen. Just for example. So this car has met with an accident. Okay, so this car is met with an accident, but I need not worry. When this car is met with an accident, I need not worry. So what happened is, I'm all good. So I have taken this car to the service center. Now this service center, what they will do? They will do the repairs and all. Now the repair cost has come to, let us say, some 2 lakh rupees of repair cost has come. On that repairs, they have also charged GST amounting to 36,000 rupees. But this bill will be given to insurance company. This bill will be given in the name of whom? Insurance company. Why? Because I took the insurance policy. No. So this repair cost who has to bear? Insurance company has to bear. So now this service center did the repair. Total bill they have given 2,36,000 in the name of insurance company. And insurance company has to compensate. Either there will be two models. Either they will do reimbursement or they will directly pay it. But whatever it is, this service center will give the invoice in the name of the insurance company with regard to this motor vehicle. Can this insurance company claim the ITC of this 36,000? Yes, they told yes. Even general insurance companies also can claim ITC on services, repairs and maintenance on cars or vehicles, whatever they have insured. This insurance company can take ITC of this 36,000. Okay, so this is the best example which I can give you to make you understand. Next. Thereafter, so next category, one more point also I will tell you where ITC is blocked. Now some people will think in a smart way. Now even some motor vehicle companies are also coming up with some model. What is that model? You know, instead of buying the car, you can lease the car from the showroom itself. Instead of buying the car, you can lease the car directly from the showroom. Now what many people have started thinking is, let me do one thing. If I buy the car, if I buy a car, if I buy a vessel, if I buy an aircraft, I will not get ITC. No, I will do one thing. Instead of buying, I will not buy a car. I will get a brand new car on lease. I will not purchase it. I will get a brand new car on lease where monthly I will pay rental or lease amount I will pay. Now people have started claiming ITC on that. Now what the department has told, they told one simple thing. If you are not eligible to take ITC, if you have purchased a motor vehicle, vessel or aircraft, if you are not eligible to take ITC, even when you are taking that vehicle, vessel or aircraft on rent or lease, even on that lease or rent also, you can't take ITC. Gone. You are blocked from everywhere. So that's what they say here. Leasing, renting, hiring of motor vehicles, vessels or aircraft on which ITC is not allowed. If on a vessel, aircraft or a motor vehicle, if you purchase it, if ITC is not available, even when you are leasing or renting or hiring it also, you will not be able to take the ITC. However, there are some exceptions are there. Sir, what are that exceptions? If you are a person receiving that leasing, renting or hiring services, and you are using it for making an outward supply of same category of services or as an element of taxable composite or mixed supply. So what they are trying to say here is, so they have told that if I am a person, if I am ineligible, if I am buying a motor vehicle, let us say for example, if I am buying a car, if I am buying a car, if I am ineligible for ITC, even when I take it on rent also, I will be ineligible for ITC. Now they have given some relaxations. What relaxations they have given? Let us say I am running a car rental company. I am running a car rental company. I took a car on rent. Let us say, for example, I paid 10,000 and took a car on rent. And after taking that car on rent, I am also making a same outward supply. That means I am taking the car on rent and I'm also into the outward business. I'm also into the business of giving cars on rent. Sir, can I take ITC in that case? Yes, you can take ITC because you are doing the leasing, renting or hiring of the car and you are using it for making the same category of outward supply. Or you are using it as one of the element of the mixed supply, composite or mixed supply. Let us say for example, I'm a tour operator, or let me not take it as a tour operator. Let me put it one way here. I'm running a resort. Now, this resort has taken a vehicle on rent. This resort has taken a car on rent. This 10,000 rupees they have paid and took the car on rent. Why this resort has taken this car on rent is because they are providing one adventure campsite they are providing, where this resort is located in the middle of the forest, where if you they are selling you one package, where in that package, let us say if you pay 50,000 rupees, in that 50,000 rupees they will give you one campsite. There in that forest where you can stay. Along with that, they will also give you one vehicle on rent, which you can use it for doing that safari and all. So that's why this resort has taken a vehicle on rent and they are using it not for making same category of outward supply, but they are using it as one of the element of the composite or mixed supply. So they are providing a composite or mixed supply in which one of the element is renting of motor vehicles. In that case also they can take ITC. So, leasing, renting or hiring of ineligible motor vehicle, vessel or aircraft on which ITC is not allowed. Even leasing and renting or hiring also ITC is not allowed. One exception they have given. If you are getting that service and if you are engaged in making the same category of outward supply, or if you are getting that service, you are not using it for making same category of outward supply, but you are using it as one of the element of the composite supply, then also you can enjoy the ITC. Able to understand? Not just that, one more exception is also there. Such a service when provided by the employer to its employees under a statutory obligation. Let us say some IT company is there. This IT company is taking some vehicles on hire. So vehicles on rent they are taking. Why they are taking the vehicles on rent? Because they are under a statutory obligation as per some law, as per some state related rules and regulations. They are under statutory obligation to compulsorily provide the vehicles for their staff. So there is a company, there is an entity, there is a person who is taking that leasing or hiring of motor vehicles, ineligible motor vehicles, vessel or aircraft in order to fulfill the statutory obligation. If they are having a mandatory obligation to provide the transportation facilities to their staff and all, that's why they are getting the hiring or leasing or renting of motor vehicles. Then also they can enjoy the input tax credit. Sir, what if they buy a car instead of renting it? Can they enjoy ITC? No. On purchase, there is no availability of ITC. But if they have taken that vehicles on rent in order to fulfill the statutory obligation by the employer to the employee, then they can take the ITC. Understood? Able to follow? So with this, we are done with the conveyance related blocked credit. We are done with one cluster where we spoke about conveyance related blocked credit. Now we will try to proceed further. Few more cases where ITC will be blocked. So we have food, beverages, outdoor catering, health services and other services. They have given a bunch of services which are more of personal in nature, and they told that on that services also we will not let you take the input tax credit. Sir, what are that services, sir? Number one, food and beverages, outdoor catering. If you are receiving outdoor catering services, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance. These services are completely blocked. If you are availing these supplies, ITC is blocked. So what are they? Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance. However, in a few cases you can avail ITC. Sir, when I can avail ITC? Same logic, whatever we have seen in leasing. If you are using it for making a same category of outward supply, or you are using it as one of the element of taxable composite or mixed supply. Let us say if for my office, I am a chartered accountant. For my office, if I am buying the food, For my office, if I'm buying the food, will I get ITC? No. But let us say I'm a restaurant. I'm buying the food and that food I will make a further supply. Can I take ITC? Yes. So like that, if you are procuring these goods or services for making same kind of supply, or if you are using it as one of the element of composite or mixed supply, then you can take ITC. I will give you example for that composite or element of mixed supply. Let us say I'm a outdoor cat, or let me put it this way, event management. I'm doing event management. In that event management services, I have to provide I have to do the decoration, I have to do the makeup, I have to do even catering also. So now as a event manager, I'm receiving catering services. Why I am receiving that catering services? Because I have to make it as a part of my outward composite supply, which is event management. In that event management, it is a composite supply where I have to do decoration also, where I have to do the makeups also, where I have to supply the food also. That's why I am receiving the catering services. So here as an event manager, I am receiving that food and beverages or any of the other services which I have specified is here. And if I am using it as one of the element of the composite or mixed supply, mixed outward supply, I can take the ITC. So either you are doing the same kind of outward supply, or you are using it as one of the element of the composite or mixed supply, you can take ITC. Membership of a health club and fitness center. If some company is taking, for example, if I'm a chartered accountant, I went to some club, I went to some fitness center, I took the subscription for that, paid monthly some amount. Can I take ITC of it? No. If a movie actor takes a subscription to a gym, health or fitness center, can he take ITC? No, nobody can take it. Similarly, travel benefits extended to employees on vacation, such as leave or home travel concession. So if some company is providing for their employees leave, travel, vacation, they are providing travel benefits. For example, they are identifying a few employees in their company and they're saying, you go on the vacation, we will bear the expenses. Can they take ITC on the travel benefits? No, they can't take it. But however, they say that for all these three items, one common point they say, for 1, 2 and 3, if these services are procured by an employer to provide these services to employee because of some statutory obligation, then ITC will be allowed. So these food and beverages, or this outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance and health insurance, membership of a club, health and fitness center, or providing travel benefits as vacations to employees and all, if these are getting procured by a company, because by an employer to provide the same to the employees under some statutory obligation, then they can take the ITC. If there is a statutory obligation on the employer to provide the same to the employee, then they can take the ITC. If they're doing it out of their own choice, no statutory obligation, no ITC. Next. So this is what regarding one block. Now the next category we have regarding immovable properties. This I will try to summarize in one single go. Let us say, for example, there is a piece of land. Okay. On that, I want to construct a building. So some person came forward and told, sir, I will provide works contract service. I will do this construction for you, sir. Where I will supply the material also, where I will supply the goods also, I will supply the services also. So he agreed to provide me works contract services. I have a piece of land. There is one company. So for this company, they want to construct their office building. They have a piece of land and one works contractor has approached and told, I will do that construction for you. So where he is making supply of goods also, supply of services also. So he is providing works contract services in relation to an immobile property for which he is charging 1 crore rupees of value, on which he is also charging 18 lakh rupees of GST. Total 1 crore 18 lakhs worth of invoice he has given. Sir, can this company claim input tax credit of that 18 lakh rupees? The answer is no. ITC is blocked. So works contract services in relation to an immobile property, ITC is blocked. You can't claim ITC on it. However, there are some exceptions. There are a few cases where works contract services in relation to an immobile property, you can take it as ITC. When, sir? Number 1, if it is of revenue nature, if the expense is not eligible for capitalization. If that works contract related expenditure, if it is not eligible for capitalization, if you have to treat it as revenue expenditure, where you will go and charge it to the statement of P&L, if for such an expenditure you are receiving the works contract service, then you can take the ITC. Number 2, if you are using it, if you are constructing immobile property, but that immobile property is falling under the definition of plant and machinery. If that immobile property is falling under the definition of plant and machinery, then you can take the ITC. Or if this service is received by another works contractor. If this works, if some other person is receiving that service who is into same line of business, let me put it into same line of business. Same line of business. Let us say, for example, one works contractor is receiving the services from another works contractor, then they can enjoy the ITC. Then that recipient works contractor can enjoy the ITC. As simple as this. So, works contract services in relation to an immobile property are not eligible for input tax credit. However, you can take ITC when you can take ITC. Number one, when that expenditure is not fulfilling the criteria of capitalization. If it is charged to revenue, if it is a revenue expenditure, you can take ITC. Number two, if it is immobile property only, it is capitalized only, but it is falling under the plant and machinery definition, then you can enjoy ITC. Or if the recipient is into same line of business, if the recipient is also a works contractor, then they can enjoy the ITC. As simple as that. Now the only point here for discussion is, sir, what do you mean by plant and machinery? You are saying that if the immobile property, even though if it is getting capitalized, but if it fulfills the criteria of plant and machinery, then they can enjoy ITC. But what is plant and machinery, sir? But what is plant and machinery? So here we have defined it. What is plant and machinery? It means apparatus, equipment, machinery fixed to earth by foundation or structural support used for making outward supply of goods or services. So any apparatus, any equipment, any machinery which is fixed to earth by foundation or structural support, so that all will fall under plant and machinery. So what it will include? Foundation or structural support. Let us say, for example, if you look at some plant and machineries, I will give you one simple example here. Somewhere I should have used it. Just give me 1 minute. I will show you. So I'll show it from here. What is plant and machinery? Come on. Okay, somehow I'm not able to find it. Right. So nothing but structural support. So foundation, like pillars and all that structural support, they will install the machineries. Like for example, if you take the generator, to keep the generator, they will build some foundational support. No, using cement and steel, cement and iron, they will build some structural support. That will also fall under plant and machinery definition. But what is most important here is what is excluded from plant and machinery definition. This is very important. Why? Because if it is getting excluded from plant and machinery definition, then you can't enjoy ITC on it. So what is going to be excluded from plant and machinery? Land, buildings or other civil structures, telecommunication towers and pipelines laid outside the factory premises. Pipeline laid outside the factory premises, they all will be excluded from the plant and machinery definition. That means if you are receiving works contract services in relation to these things, ITC will not be available. ITC will be blocked. Next one, coming to the next point. So now some people might think that, sir, I will do one thing. If I receive works contract service, then only ITC will be blocked. I will do one thing. I will not give it to a contractor. I will do the construction. I will do self-construction of immobile property. Sir, what do you mean by doing a self-construction? I will buy the goods separately. I will receive the services separately. See, what is works contract? In a single contract, if goods and services both are involved, that I call it as works contract. But here what I am doing, I am not receiving works contract. I am getting the goods separately. I am getting the services separately. I am doing the construction on my own account. So in that case, what will happen is, in that case also ITC will not be available. Not just if you are receiving works contract, even if you are buying the goods separately, if you are buying the services separately, and if you are doing self-construction of immobile property, then also ITC will not be available. Then also ITC will be restricted. Here also exceptions are there. So what are the exceptions? The exceptions are same. If it is not getting capitalized in the books of accounts, or if it is falling under plant and machinery definition, or if the recipient is not doing the construction on his own account. It is not a construction on his own account. That means the recipient is some builder who is getting the construction done for others. So like that, if the recipient, if the construction is not on own account, if the recipient is getting that services for constructing for others, let us say I'm a builder here. So I got a contract from one factory to construct a factory building from him, building for them. So I'm a builder. Now I am buying the goods, I am buying the services to construct the building for others. Can I take ITC? Yes, because you are not doing the construction on your own account. So if these three conditions are fulfilled, then even self-construction of immobile property ITC I can take. So what are the three exceptions? Number one, it should not be eligible for capitalization. Number two, it might fall under eligible plant and machinery. Number three, you might be doing the construction not on your own account. If you are doing the construction for others, you can take the ITC. Clear? So this is what relating to immobile property related blocked credits. So let me try to proceed further. Next, going forward. So this all we are done. Now let us come to few more cases. Now simple things are now simple clauses are there where ITC is blocked. Inward supplies charged to tax under composition scheme. This point I have already clarified. If you are a registered person, if you are buying the goods from composition dealer, if you are a registered person, if you are buying the goods from composition dealer, will you be able to take ITC? Definitely not. Why? Because as I have explained, composition dealer will not be eligible to take ITC. Composition dealer can't pass on the ITC. He can't even pass on the ITC. So that's why if you are buying the goods from composition dealer, then you can't enjoy the input tax credit. ITC is blocked. Similarly, inward supplies received by NRTP. If you are a NRTP, we have already seen who is NRTP in the registration chapter. If you are an NRTP, whatever inward supplies you are receiving, on that inward supplies you will not be able to avail ITC except tax paid on imported goods. If you are an NRTP, if you are buying, if you have paid any tax on imported goods, only IGST paid on imported goods, you can take ITC. Your imported services you can't take ITC, locally procured goods you can't take ITC, locally procured services also you can't take ITC. If you are a NRTP, only you can take ITC of tax paid on imported goods. Next. So inputs which are getting used or intended to be used for CSR related activities. If you are buying some inward supplies with the intention of using it for fulfilling your CSR obligations, ITC is blocked. You can't take ITC. And in case if you are buying any inward supplies for personal consumption, not for business purposes, this anyhow we have covered already. If you are using it for personal consumption, if you are procuring some goods, if you are receiving some services, not for business purposes, for personal consumption, then also ITC will be blocked. Similarly, free samples, gifts, goods lost or stolen. Very simple logic here. If there is output tax liability, there will be input tax credit. If you are giving something as gift, if there is no output tax liability, there is no input tax credit also. If you are distributing something as free sample, if you are giving it as a free sample, no output tax liability. If there is no output tax liability, no input tax credit. If you have purchased some goods, those goods are destroyed. If the goods are destroyed, ITC is also destroyed. If you have purchased some goods, those goods are stolen. If the goods are stolen, ITC is also gone. So only when there is output tax liability, then only there will be input tax credit, or else ITC will not be available. So that's what they say: free samples, gifts, goods lost or stolen. So that's all. This is what regarding the blocked credit. So we have few, and one more thing here: tax paid in fraud cases, detention cases, confiscation cases. In these cases also ITC is going to get blocked. Understood? So that's all. This is what regarding blocked credit. So we have understood what and all are the various circumstances where ITC will be blocked. Now I will talk about one more case here. We will see one more section number 18, which will be talking about credit in special circumstances. In some special circumstances, you will be able to take the credit. Okay. So what are that special circumstances where you will be able to take the credit? That I will tell you. So just I will do summarization to the extent possible. Just hold on. Okay. Fine. So going forward, I will try to wind up the discussion in one simple manner. Section number 8 is there, where it will talk about few special circumstances where you become eligible to take ITC. It will also talk about few circumstances where you are required to reverse the ITC. Okay, I'm not going into the technical details more because this is one rarely tested area in the examination. We'll try to wind up in one simple chart. So what they are trying to say here is, let us say if you are liable for registration, if you become liable for registration, within 30 days, you are submitting an application for registration. Within 30 days, you are submitting an application for registration. And you will get the registration certificate, no? You will get registration certificate thereafter. In that case, what they are telling is, one day before you become liable for registration, whatever inputs which are there in stock, whatever inputs which are held in semi-finished goods, whatever inputs which are held in finished goods, that you can claim ITC by submitting one form called GST ITC 01. GST ITC 01. This form you can submit and you can take the ITC. So one special circumstances, case number one, where you can take ITC is you become liable for registration and you are submitting an application within 30 days. Then only if you are submitting the application for registration within 30 days, thereafter you get the registration certificate. No, in that case, one day before you become liable for registration, whatever inputs are there, which are in the form of stock, which are in the form of semi-finished goods, which are in the form of finished goods, on that you can take ITC by submitting one statement called GST ITC 01. One special case. Second special case. Let us say you are not liable for registration, but you are making an application for voluntary registration. You are making an application for voluntary registration. So you made an application for voluntary registration. Thereafter, you got the registration certificate. In this case, your registration will be effective from this date only. In this case, you will not have any retrospective effectiveness. In case of voluntary submission of application for registration, the moment you get the registration certificate, from that date only your registration will become effective. Here also, one day before the effective date of registration, here also you can declare what inputs are there in the form of stock, what inputs are there in the form of semi-finished goods, what inputs are there in the form of finished goods. On that inputs which are held in stock, which are held in semi-finished goods, which are held in finished goods, that you become eligible to take the ITC. Now coming to one more case. So two cases I have covered. Now coming to the third case. So what is the third case is? Let us say, for example, you are already a registered person. So you are already a registered person. Till one point of time, you are under composition scheme. Now you are converting from composition scheme to regular scheme. See, if you are under composition scheme, till the time you are under composition scheme, you will not be able to take ITC. But now you are converting yourself to regular scheme. See, if you are converting to regular scheme, going forward, you can collect the GST from your recipients. You can also use your input tax credit. So in this case also, what they have told us, if you are converting from composition scheme to regular scheme, one day before that conversion, whatever inputs are there, which are in the form of stock, which are in the form of semi-finished goods, which are in the form of finished goods, on that you can take ITC. Not just that, even you can take the ITC on the capital goods also. Even you are eligible to take ITC on capital goods also, but not full ITC. You are eligible to take reduced ITC. Sir, how to calculate that reduced ITC? 5% per quarter or part thereof. You have to reduce 5% per quarter or part thereof from the date of invoice. From the date of invoice of the capital goods till that date, how many quarters have gone, you determine. Per quarter or part thereof 5%. 5% per quarter or part thereof, that much you have to reduce, and balance ITC, you can claim it. So one more special case where you can avail ITC is, so let us say you are supplying some goods, till now they are under exempted category. But from one date, these exempted goods are becoming taxable. Now also what will happen is, one day before that conversion, whatever inputs, so once again same point will come here. So same point, this I will duplicate it. So whatever inputs which are there in stock, on that inputs you can take ITC, and also on capital goods also you can take ITC, but for capital goods you can't take full ITC, you have to take reduced ITC. How to calculate that reduced ITC? 5% per quarter or part thereof. Understood? So these are the four special cases where you will be eligible to take the ITC. Number one, you are a person liable for registration. You submitted an application within 30 days. Number two, you have taken voluntary registration. Number three, you are converting from composition scheme to regular scheme. Number four, your exempted products are becoming taxable. These are the four special circumstances where you can take input tax credit. But for taking that input tax credit, you have to submit one statement. So if you come here, so what is the statement you are required to furnish? You will be required to furnish one statement called GST ITC 01 within 30 days. Within 30 days of that, within 30 days from the date he become eligible for ITC, within 30 days you have to submit one statement. And one more condition here, 1 year should not have passed. So whatever ITC you are eligible to take on the inputs, on the capital goods, whatever ITC you are eligible to take, no, from the date of invoice of that inputs or capital goods, 1 year should not have passed. So if the date of invoice of that inputs or capital goods is within 1 year from the date you become eligible for ITC, then only you can take ITC. If 1 year has passed, then you will not be eligible to take ITC. Okay, so I'm not going into the details. All that we have understood in our regular session in a detailed manner, just I am reminding you. And one more thing, so in any of these four cases, if you are claiming ITC more than 2 lakhs, if any of these cases, in any of these special cases, if you are claiming ITC of amounting to more than 2 lakh rupees, then you need one certificate from a chartered accountant or cost accountant. Then you need one certificate from chartered accountant or cost accountant. See, not just that, one more case also they say, in the last two cases, if you take the reverse, see, if you are converting from composition to regular, you are taking ITC, no? Similarly, if your exempted product is becoming taxable, then also you are taking ITC, no? If you take the reverse, if you take reverse of it, that means, let us say for example, you are converting from regular to composition, or your taxable product is becoming exempted. In those cases, you are required to reverse. In those cases, what you are required to do? You are required to reverse the input tax credit. Exactly opposite scenario. If you take this third case and fourth case, in third case, if you are converting from composition to regular, you are eligible to take ITC. Sir, what if I'm converting from regular to composition scheme? In that case, one day before that conversion, whatever inputs are there, whatever capital goods are there, on that ITC you have to calculate and you have to reverse that ITC. Similarly, if your exempted is becoming taxable, you are claiming ITC, no? Similarly, if your taxable is becoming exempted, one day before that, whatever inputs are there, whatever capital goods are there, on that you have to reverse your ITC. Able to understand? So I don't want to go further into the technical details. This much discussion you remember, it will be enough. This much discussion you remember, this much will be enough for CA inter level. No need to go beyond it. Then thereafter, one more thing I would like to say it here. In case of change in constitution of registered person, let us say for example, if sale of business is happening, if demerger is happening, if amalgamation is happening, if lease is happening, or change in ownership is happening, then whatever balance which is lying in your electronic credit ledger, that balance can be transferred to the transferee. Let us say for example, if two companies are getting amalgamated into single company, now the two old companies will no longer be there. The newly amalgamated company will take new registration, no? In that case, whatever unutilized ITC is there in the companies, that will be transferred to the newly amalgamated company. Similarly, if ownership is transferring, the business is getting transferred as a going concern, whatever ITC that is unutilized in the transferor's electronic credit ledger, that can be transferred to the transferee's electronic credit ledger. Let us say demerger is happening. If one company is getting split into two, so whatever ITC that is there unutilized in the demerged company, that can be transferred to resulting companies. Sir, if it is getting transferred to resulting companies, in what ratio, sir? In what ratio? See, if amalgamation, both the ITC are going to come to one company. If it is transfer, only one company is there. One company to another company. But in the case of demerger, one company is getting split into two, no? So now in the demerged company, let us say 1 crore worth of ITC is there. Now this demerged company is getting split into two resulting companies. Now this 1 crore rupees of ITC is required to be split among two companies, right? Two resulting companies. In which ratio they will transfer it? They will transfer it in the ratio of assets. They will transfer it in the ratio of assets. So this one point you have to remember. In case of demerger, ITC will be apportioned in the ratio of value of assets of the new units as specified in the demerger scheme. This one point you remember. And in case of this transfers, you have to submit one statement, GST ITC 02, along with a certificate from chartered accountant or cost accountant. Similarly, if you are having multiple places of business within a state or union territory, sir, now what is this? Let us say for example, I'm having my place of business in, just 1 minute. So I'm running my business in AP. Let us say in AP, at two places I have my office. I have principal place of business, I have additional place of business, but I'm running it under single registration. Both I'm operating under single registration. So under this single registration, I have an amount of ITC, unutilized ITC is there. Now for this additional place of business, what I thought is, let me get a separate registration. Let me get a separate registration for this additional place of business within the same state. Can I get a separate registration if I want? Yes. If you want separate registration, department will grant it. So now when you are getting a separate registration within the same state or union territory, now in the previous registration, you have consolidated ITC, no? So whatever that unutilized ITC balance is there, that you can transfer it to the new registration. You are taking new registration, no, for your one of the places of business, but previously you used to have single registration only. Now all your ITC is accumulated in single registration, but now you are taking a new registration. So now that ITC, you can transfer it to a newly taken registration. Sir, in what ratio I have to transfer? In the ratio of assets. So there will be asset ratio, no, in this, for this principal place of business and additional place of business, asset ratio will be there. Let us say asset ratio is working out to 40/60. So 60% of the assets are getting transferred to additional place of business. I have 1 crore amount of ITC. Calculate 60%. That will come to 60 lakh rupees. This 60 lakh rupees worth of ITC, I will transfer it to my newly registered entity. Understood? So this is also one more case where the transfer of ITC will happen. So that's all, my dear students. This is what regarding section number 18. So we have covered section number 12. Sorry, we have covered section number 16. We have covered section number 17. And also at the same time, we have covered section number 18. One more thing, one more last thing I will try to cover from this chapter, which is manner of utilization of ITC. With this, we will wind it up today's session. Manner of utilization of input tax credit. Very important. Without this, you will not be able to solve the first equation. Sir, what is the manner of utilization of input tax credit? I will tell you one simple logic here, just to follow these steps. First start with, or let me put it this way, in simple way I will try to put it. So what is the manner of utilization of ITC is, first you have to start with IGST. IGST credit should be first utilized for IGST payment. IGST credit, first it should be utilized for IGST payment. If any excess is left out, any excess of IGST is left out after using it for IGST payment, that you can use it either for CGST or you can use it for SGST in whatever ratio you want. In whatever ratio, in any ratio, let me put it this way, in any ratio. In any ratio. Okay, so first step of manner of utilization of ITC. See, regarding this, I have already done one video, how to present that question number 1, how to present the first equation like that. One video I have already uploaded in the channel where I have given detailed explanation of manner of utilization of ITC and all. So, but just I am revising here the steps. So manner of utilization of ITC, first you start with IGST ITC. First use it for discharging your IGST liability. Thereafter, if any excess is left out, that you can use it for CGST, that you can use it for SGST, or you can use in a proportionate manner in whatever ratio you want, in whatever manner you want, you use it either for CGST or SGST in whatever ratio you want. So whatever it is, first exhaust IGST fully. You have to exhaust IGST fully. That means you have to fully utilize the IGST input tax credit. Then once you have exhausted IGST input tax credit fully, then you come to CGST. CGST should be first utilized for CGST payment. CGST ITC should be first utilized for CGST payment. Any excess, use it for IGST. Any excess you have, you use it for IGST. If after that also any excess balance is left out, carry forward. If after that, so first I have a CGST credit, that I will use it for CGST payment. Thereafter, if any excess is left out, that I will use it for IGST. Even after adjusting with IGST also, still excess balance is left out. Then what I can do? I can carry forward it to the next month. Next. So after that CGST utilization, then come to SGST. SGST should be first utilized for payment of SGST. SGST should be first utilized for payment of SGST. Thereafter, any excess is left out, that you can use it for IGST. So thereafter also, if any excess is left out, carry forward it to the next month. Thereafter also, if any excess balance is there, you have to carry forward it to the next month. And one thumb rule which you have to remember is CGST can't be used for SGST, SGST can't be used for CGST. That's all here. Very simple steps. In material and all, you will be able to find so many lengthy steps and all. I tried to summarize it in a very simple form. So these thumb rules you have to remember. So what is the manner of utilization of ITC? Number 1, start with IGST credit. IGST must be first used for IGST payment. Thereafter, if any excess is left out, use it for CGST or SGST or in any combination, whatever you want to do, you do it. But this is where the decision factor. This is what going to have an impact on your answer. This is the step where you have to apply your mind. So what you should do is, once you have utilized IGST for payment of IGST, thereafter excess balance will be left out, no? So to decide whether you have to use it for IGST or you have to use it for SGST, first check what is the ITC balance available under all heads. If equal balance is available under CGST and SGST, try to proportionate it equally. And in case if SGST ITC is less, then first you try to utilize it for SGST. If you find that CGST ITC is less, then you try to first utilize it for CGST. So this is where you have to take the call. This is where you have to take the call. Okay, next. So whatever it is, first exhaust. That means first try to complete the IGST balance fully. Thereafter come to CGST. CGST should be first used for CGST payment. Thereafter, if any excess is left out, use it for IGST. If after that also excess is left out, carry forward. So come to SGST, first use it for SGST payment. If any excess is left out, use it for IGST. If anything excess is left out, carry forward. And one thumb rule, CGST should not be used for SGST. SGST should not be used for CGST. Clear? Clear till here? Next. So this is what regarding manner of utilization of input tax credit. And one more thing I will try to explain here. One more rule I will try to explain here. After that I will wind up. Sorry, I told I will wind it up after this, but I will use one more thing. Rule 86B. So there is something called Rule 86B. So what does this Rule 86B says is, it puts a restriction on amount of utilization of ITC. Sometimes you have an output tax liability to pay. To discharge that output tax liability, you might have full balance available in your electronic credit ledger. You are having an output tax liability to pay. But to discharge that output tax liability, you have full input tax credit. But Rule 86B says that don't use full ITC. Use only up to 99% of your output tax liability. Let us say you have 1 crore worth of GST liability, output tax liability. Let us say you have 1.2 crore rupees of ITC. Generally, you can adjust it completely with your ITC, no? But Rule 86B says, even though you have full ITC, discharge only 99% using your input tax credit. That means in 1 crore, 99% if I do it. So if 1 crore, if I do 99%, how much it will be? So 1 crore 99%, it will come to 0.99 lakhs. 99 lakhs only, yeah, 0.99 lakhs. So that means 99 lakhs only you discharge it using your electronic credit ledger. Sir, I have 1.2 crores, sir, but still use only 99 lakh rupees for discharging your output tax liability. The balance 1 lakh, that is 1% of output tax liability you have to compulsorily discharge in cash. 1 lakh you have to compulsorily pay it in cash, even though you have input tax credit. So this is what Rule 86B says. But first of all, when this Rule 86B will become applicable? Sir, will it become applicable for everybody? No. This Rule 86B will become applicable only for those people who are having a taxable supply other than exempt supply and zero rated supply. Don't include exempt supply. Don't include zero rated supply. Purely taxable supply. If they are having a value of taxable supply in a month exceeding 50 lakh rupees. How much? In a month, if they are having a value of taxable supply exceeding 50 lakh rupees, then what will happen? Then what will happen is Rule 86B will become applicable for you. If your value of taxable supply in a month is less than 50 lakh rupees, then no need to follow this Rule 86B. 100% of your output tax liability, you can discharge it using input tax credit provided if available. So when this Rule 86B will become applicable, only when your value of taxable supply in a month is exceeding 50 lakh rupees. Now, what is the nature of restriction under Rule 86B? As I have told, you can discharge only 99% of your output tax liability using ITC. Balance 1% you have to compulsorily discharge in cash. However, there are some exceptions are there. That means if you are a person, even though you are having a value of taxable supply more than 50 lakh rupees, still 86B will not become applicable. That means there is no restriction of making that payment of 1% only in cash. You can use 100% of the ITC, even though your value of taxable supply in a month has exceeded 50 lakh rupees. That means for a few category of persons, they have given relaxation. They told, we are identifying a few people. If you are falling under that category, discharge 100% of your ITC. You discharge 100% of your output tax liability using input tax credit only. Sir, who are that lucky fellows to whom this Rule 86B will not become applicable? Number one, if you have made a payment of income tax of more than 1 lakh rupees. If you are such a person who is paying an income tax, not GST. If you are paying an income tax of more than 1 lakh rupees, not just in 1 year, in each of the last 2 financial years. In each of the last 2 financial years, if you are such a person who has made a payment of more than 1 lakh rupees of income tax, that means you are a genuine person only. If you are paying 1 lakh worth of income tax, not just for 1 year, for 2 years, the department will treat you as a genuine person and they will say that, okay, you need not pay 1% in cash, use full ITC because we are treating you as a genuine person. Why? What is the logic behind it? Because you have already you are making 1 lakh worth of income tax payment to the income tax department in the last 2 years. We'll treat you as a genuine person, utilize full ITC. Then, sir, who should have paid it? If it is an individual registered person, that individual. No, sir. If they are some other than individual, like registered person, if it is a HUF, Karta should have paid it. Or if it is a sole proprietor should have paid 1 lakh rupees. If it is a company managing director, if it is a partnership firm, any of its 2 partners, any of its 2 whole-time directors, any of its managing committee or association in the case of trust or association of persons, or any of its 2 board of trustees. So any of them should have paid more than 1 lakh rupees of income tax in each of the last 2 financial years. Or sir, let us say I don't pay income tax. I did not pay income tax of 1 lakh rupees in each of the last 2 financial years. Is there any other way I can escape 86B? Yes. What is that other way? In case if you have received a refund from the GST department, refund of ITC from the GST department of more than 1 lakh. In case under rule 86B, rule 86B is not applicable if you have received a refund amount of more than 1 lakh on account of unutilized ITC in case of zero rated supplies, inverted duty structure. So all this we learned at the CA final level. So in some cases, GST department will grant us refund. In case if you have been granted a refund of more than 1 lakh, not in 2 years, in 1 year, in the last financial year, if they have given you refund of more than 1 lakh rupees, on in the preceding financial year, in one preceding financial year, if you have got more than refund of 1 lakh rupees from the GST department, then also will treat you as a genuine person. No need to pay that 1% in cash. Use 100% ITC. Okay, next. Then one more relaxation they have given. So one more relaxation, what they have told us, in case if you are making a payment of output tax liability through electronic cash ledger in excess of 1% of total tax liability in the current financial year till date. Sir, what is it? So what they try to say here is this. I will give you one example. Let us say April, financial year 24-25. There is April. In April month, my output tax liability is 10 lakh rupees. I have input tax credit of 8 lakh rupees. Balance 2 lakh rupees, I have paid it in cash. Here, there is no requirement of 86B only because I don't have full ITC. I paid 2 lakh rupees in cash. Then in the month of May, let us say my output tax liability is 5 lakh rupees. I have full ITC. Entire 5 lakh rupees I have utilized. Nothing I have paid. Let us say in the month of June, my taxable value of supply has exceeded 50 lakh rupees. That means rule 86B will become applicable. My output tax liability is, let me put it this way, 8 lakh rupees is my output tax liability. I have full input tax credit. I have 10 lakh rupees in my ITC. So that means I can use entire 8 lakh rupees, but rule 86B says discharge only 99% using credit ITC. Remaining 1% you have to pay it in cash. But there is one exception. What exception they are saying? No, till date, determine how much is your total output tax liability. Till date, how much is your output tax liability? How much is my output tax liability till date? 10 plus 5 plus 8. How much it is? It will come to 15 plus 8, 23, no? Yeah. So 23 lakhs is my till date output tax liability. Now you determine till date how much amount of GST has been paid in cash. Till date, how much amount of GST has been paid in cash? Till date, they have paid 2 lakh rupees of cash. Is it exceeding 1% of your total liability? Till date, what is your total liability? 23 lakhs. On that 1%, if I calculate, how much it will come to? 23,000. But till now, whatever amount that you have paid in cash, whatever amount that you have paid through electronic cash ledger, that has already exceeded 1% of the tax liability, paid 1% of my total tax liability till date. So till date, my tax liability is 23 lakhs. On that, if I calculate 1%, 23,000. But till now, I have already discharged using electronic cash ledger the amount of up to 2 lakh rupees. So this is far more than 1% of my total output tax liability till date. Then also they say, okay, rule 86B will not become applicable for you. You use your full ITC 8 lakh rupees fully. You can use it. No need to pay anything. Understood? So this is what the third rule, which has given relaxation from rule 86B. If you are making a payment of output tax liability, so let us see here. If the registered person has discharged his output tax liability through the electronic cash ledger for an amount in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year, restrictions in rule 86B shall not apply. That's what even the example I have clarified. Similarly, rule 86B also will not become applicable to a government department, public sector undertaking, local authority, or a statutory body. Basically, these are government bodies. For government bodies, it did not make rule 86B applicable. Understood? So with this, we have successfully completed the input tax credit chapter. Today, we are done with two important chapters. One is value of supply. Other one is input tax credit. Okay. So that's all for now. We will wind up this session for today. Remaining revision. Tomorrow also we'll have a live session. As usual, from 9 we will have tomorrow, not from 10. So from 9 to 1, we'll have a usual revision session tomorrow, and we'll try to revise the remaining chapters for tomorrow, right? So that's all for now. See you tomorrow. Bye. Take care. So now we will be proceeding further. So till now, in the last 3 days, we have done the marathon series in which we have covered a good chunk of chapters. Now let us see till now what and all we have covered. If you come to this index, a bunch of chapters we have actually covered, which are very important from the examination point of view. Like we have covered introduction to GST, then we have covered supply under GST. This also we have done. Charge of GST we have completed. Registration we are done. Composition levy we are done. Then we have thereafter we have completed value of supply chapter, and then we have completed input tax credit chapter. So altogether somewhere around some 7 chapters we have successfully revised till now. So now we will try to proceed further. Now we will take up the next bunch of important chapters and we'll try to revise them, from which there will be a compulsory question, but which will be actually small chapters that we'll try to pick up and we'll try to do the revision. So first what I will try to do is I will try to hit this 14th chapter, which is regarding place of supply. Thereafter TDS and TCS. First we will try to complete these two small chapters only. Place of supply is very important. Why? Because there also, as I have told, there are some chapters without which there will not be a question paper. So once a chapter is value of supply, once a chapter is input tax credit. So in on the same lines, one more important chapter without which there will not be a question paper, a question without a question from it. So one such a chapter is place of supply. And also these days very frequently they are asking TDS and TCS related questions also. These two are very small chapters, very important from the examination perspective. So that's why we will try to cover them. So first we'll start with place of supply. So let me go ahead and start the place of supply chapter. Hmm. Yeah, here we have it. So we'll try to do quickly place of supply chapter, but before that, little bit of intro, what exactly this chapter is going to talk about. So if you guys remember the discussion, whatever we had in the introduction to GST chapter, there I was saying that which GST you are going to collect, that depends on bifurcation of supply. So we have to divide supplies into two categories. Either it could be an intrastate supply or it could be an interstate supply. So whatever supplies are happening under GST, so that we can broadly divide into two categories. One is intrastate supply and the other one is interstate supply. So if you remember the definition, sir, what do you mean by intrastate supply? What do you mean by interstate supply? I told that if the location of the supplier and the place of supply both are falling within same state or both are falling within same union territory, that we are going to call it as intrastate supply. So on the other hand, if the location of the supplier and the place of supply, if they are falling in two different states or two different union territories or between one state and one union territory, that we are going to call it as interstate supplies. So once we establish whether it is an intrastate supply or it is an interstate supply, thereafter only we can decide what kind of GST we are required to impose. Are we required to impose CGST, SGST, or are we required to impose IGST? So that depends on this bifurcation. First, we have to classify the supply, whether it is interstate supply or it is an intrastate supply. So, and two important factors. If you see here, in deciding whether a supply is interstate supply or intrastate supply, only two factors are relevant for that decision. One is location of the supplier, and the other one is place of supply. So when it comes to location of the supplier, we can easily find it out. Location of the supplier, finding the location of the supplier is not that difficult. Location of the supplier can be easily found out. So where the difficulty actually lies is determining the place of supply. How to determine the place of supply? So if you could determine the place of supply, location of supplier we can anyhow easily find it out. So if we could know these two factors, what is the location of the supply and what is the place of supplier, what is the location of the supplier and what is the place of supply, automatically we can classify whether it is intrastate or interstate. So this is where the place of supply is going to play the very crucial role. Place of supply is very important in the entire GST system, because unless and until you establish the place of supply, you will not be in a position to decide whether it is an interstate supply or intrastate supply. You will not be able to proceed ahead and calculate the GST figure. So that's what this chapter is going to guide us. So where this place of supply related rules are there. So these place of supply related rules are given under IGST Act. See, in all the rest of the chapters, whenever we are discussing the provisions, we are actually discussing the sections of the CGST Act. Like I have told, Section 7 supply, Section 8 composite supply, mixed supply. Then we have covered Section number 9, which is talking about charge, 10 composition levy, 15 valuation. So like that, we have covered various sections till now, no? And at various instances, I have given reference to the section numbers, right? So all those sections, wherever I have given the section number references, all those are actually sections from the CGST Act. They are all sections from CGST Act. But in this chapter, when we are discussing the place of supply rules, place of supply related regulations are provided under IGST Act. Place of supply related rules and regulations are contained not in the CGST Act. Place of supply related rules and regulations are contained under IGST Act. So here, if you look at IGST Act, there are four sections which are actually talking about the place of supply. One is section number 10, section number 11, section number 12, and section number 13. So section number 10 will talk about how to determine place of supply in case of goods. How to determine place of supply in case of goods for other than imports and exports. Basically, for domestic transactions in supply of goods, how to determine the place of supply, that is contained in section number 10. Whereas we'll have section number 11. Section number 11 will be talking about once again how to determine place of supply regarding goods only, but it will talk about imports and exports. This we are not going to learn at the CA inter level. This we are going to learn it at the CA final level. This will learn it at CA final level. So how to determine place of supply in respect of goods involving import and export transactions, that we are not going to learn here. We'll learn it at the CA final level. Then we have section number 12. Section number 12 will talk about how to determine place of supply in case of services. Once again, section number 12 will become applicable. How to determine place of supply for services when the location of the supplier and the place of supply, if both are in India. When the location of the supplier and the place of supply both are in India, how to determine the place of supply for supply of services. That's what contained in section number 12. Whereas section number 13 will determine how to determine place of supply in case of services where either location of the supplier or location of the recipient. Sorry, I have told you something wrong here. So section number 12 will say how to determine place of supply in case of services when the location of the supplier and the location of the recipient. When the location of the supplier and the location of the recipient, if both are in India, then section number 12 will come into applicability. Whereas section number 13 will talk about how to determine place of supply in case of supply of services where either the location of the supplier or the location of the recipient is outside of India, or both are outside of India. In those cases, how to determine the place of supply, that is covered under section number 13. Section number 13 also we are not going to learn it at the CA inter level. We are only going to talk about section number 10 and 12. Basically regarding domestic transactions only we are concerned here. So how to determine the place of supply in case of domestic transactions, that's what we are going to learn it at the CA inter level, and which is discussed under two sections of the IGST Act. Section 10 of the IGST Act will talk about how to determine place of supply in case of goods involving the domestic transactions. Section number 12 will talk about how to determine the place of supply in respect of services where the location of the supplier and location of the recipient both are in India. Understood? So this is what the overall structure of the chapter. Now having said that, now we have to go to section number 10. We have to understand how to determine that place of supply in case of goods. We have to go to section number 12. There are various subsections involved in each section. Each subsection will be talking about different scenarios and what will be the place of supply in that scenario. So all that discussion we need to have it now. So I will start my discussion with section number 10. I'll start my discussion with section number 10. So let us try to have a quick look at it. So section number 10, as you could see, place of supply of goods other than goods imported into or exported from India. So for other than imports and exports, how to determine the place of supply. So as you could see here we will have various clauses. We have 10 subsection 1, and under 10 subsection 1 we have various clauses. Like clause A is there, it will talk about certain cases how to determine place of supply. Clause B is there, it will talk about certain cases how to determine place of supply. So like that, each clause is going to talk about different circumstances. Let us try to cover each clause. First one, supply involving movement of the goods. In case if you are making a supply of goods which involves movement, goods are required to be moved from one place to another place in order to effect that supply. That means, let us say for example, I'm a manufacturer. One day a dealer has come to me, a wholesaler has come to me. He ordered from me 10,000 quantity of the raw material. So now I have to deliver him. So these goods are required to be moved. This 10,000 quantity of goods are required to be moved from my factory to the recipient's factory in order for the sale to get completed. So in those cases, wherever the supply is involving the movement of the goods, sir, what will be considered as place of supply? They simply say that here in these cases, the place of supply is going to be the place wherever the movement of the goods terminates for delivery to the recipient. Simply, if I have to put it, wherever the movement is coming to an end, the location at which the movement is coming to an end, that will become the place of supply. So if I give you a simple scenario, let us say a manufacturer is there who is located in Delhi. He has got an order from a customer who is in Mumbai. So now these goods are required to be moved. This supplier is making a supply of the goods which involves movement. The goods are starting from here. The movement is starting from here. The movement will terminate. Where the movement will come to an end? The movement will come to an end at the Mumbai, at the recipient's place. So wherever the movement is terminating, wherever the movement is coming to an end, that will become place of supply. So where the movement is terminating, sir, at Mumbai the movement is terminating, sir. So the place of supply will become Mumbai, which is Maharashtra. Sir, what is location of the supplier? Location of the supplier is Delhi. Location of the supplier is in Delhi. Place of supply is in Maharashtra. Both are falling in two different states. So it will be considered as interstate supply. On this transaction, what GST will be collected, sir? IGST will be collected. Understood? Clear and comfortable, everybody? Right. Next one. Let us try to proceed ahead with the subsequent discussion. So this is what regarding section 10 subsection 1 clause A. Then now let us come to section 10 subsection 1 clause B. Sir, what does section 10 subsection 1 clause B talk about? Section 10 subsection 1 clause B says that it involves how to determine the place of supply in case of bill to ship to transaction. How to determine the place of supply in case of bill to ship to transaction. So if you remember in the previous session when I was discussing about the input tax credit chapter, I have already explained what is a bill to ship to transaction. Do you guys remember what is a bill to ship to transaction? In the previous session when we are discussing that input tax credit, at one case I have told bill to ship to transaction. So here also an issue has come. 10 subsection 1 clause B is there, which is saying how to determine place of supply in case of bill to ship to transaction. First of all, what is bill to ship to transaction? Once again, I will give you a quick example. Let us say B has actually placed an order with Mr. A to order for to supply 10,000 quantity of the goods. But in the meantime, Mr. C, let me give you some scenarios here. Supplier is in Delhi. This recipient is in Mumbai. So he initially placed an order with Mr. A, 1,000 quantity of the goods. But in the meantime, there is another customer who is from Delhi who placed an order with this person, Mr. B, to supply the same 1,000 quantity. Now, what Mr. B has done? What Mr. B has done is, dear Mr. A, you do one thing. Whatever goods I have ordered to you, you don't send it to me. You directly deliver it. You directly deliver it. You ship that goods. You ship the goods to Mr. C, who is at Delhi, and you bill to me. You give the bill to me. So you give the invoice in my name, whereas you ship the goods to Mr. C. So now the transaction between A and B, that I call it as bill to ship to transaction. What transaction it is? It is a bill to ship to transaction. So in case of bill to ship to transaction, here two transactions are involved. One transaction is between A and B, and another transaction is between B and C. B will also give the invoice. No. So B will give invoice to C, whereas he will get the delivery of the goods from Mr. A, whatever it is. So here two invoices are involved. A to B, one transaction, B to C, another transaction. Now I will come to A to B. A to B only will be considered as bill to ship to transaction because A is billing to B, but he is shipping to C. So the transaction between A to B is a bill to ship to transaction. Sir, what will be the place of supply here? So now you should not go to 10 subsection 1 clause B, clause A. You have to come to 10 subsection 1 clause B because this is a specific clause. So it is a specific clause. Specific clause says what? So we all are aware specific clause overrides the general clause. So 10 subsection 1 clause B is a bill to ship to transaction. It is a section only given for determining place of supply for bill to ship to. And it says, what does it say? It says that here the place of supply will be considered to be the place of business of this recipient only. He will not receive it. No. He will not receive the goods. No. But still for the transaction between A to B, what will be considered as place of supply? So if you read it here, when goods are delivered by supplier to the recipient at the instruction of a third person who is original buyer, place of supply is a principal place of business of the third person, which means here for the transaction between A and B, the place of supply will be considered as a principal place of business of Mr. B. Now, what is the principal place of business of Mr. B? Mumbai. So here the place of supply will become Mumbai. So for transaction between A and B, location of the supplier is in Delhi, place of supply is in Mumbai. It is an interstate supply. What will be levied? GST will be levied. Okay. So for bill to ship to transaction, it will always be deemed that as per 10 subsection 1 clause B, the principal place of business of the original buyer will be considered to be the place of supply. Now, sir, what about B and C, sir? There is a transaction is happening between B and C. No. Now it will be governed. In that case, how to determine place of supply? For transaction between B to C, you will be governed by the default rule 10 subsection 1 clause A. It is a supply involving the movement of the goods. So now as per 10 subsection 1 clause A, just now as we have covered, the place wherever the movement is terminating, the place wherever the movement is coming to an end, where the movement is coming to an end, Delhi. So for transaction between B and C, it will be governed by 10 subsection 1 clause A only, supply involving the movement of the goods. The movement is terminating where? At Delhi. So here the place of supply will become Delhi. So what is the location of the supplier? Here B is the supplier. B's location is Mumbai. So B is located in Mumbai. Location of the supplier is Mumbai, whereas place of supply is in Delhi. Both are falling in once again two different states. It will also be considered as interstate supply. On that also IGST will be imposed. Clear? Understood? So generally in the entire B2C, in the entire bill to ship to scenario, there will be two transactions involved. One transaction will be bill to ship to, which will be governed by 10 subsection 1 clause B. Another transaction will be a normal transaction, which will be governed by the 10 subsection 1 clause A. I hope you're all clear about it. So we have covered 10 subsection 1 clause A, 10 subsection 1 clause B. Now we will talk about 10 subsection 1 clause C. Sir, what is 10 subsection 1 clause C talking about? 10 subsection 1 clause C talks about how to determine the place of supply in case supply is not involving the movement. Sometimes we make supply of the goods without involving any movement of the goods. We are causing a supply of goods, but it does not require any movement. To effect that supply, movement of the goods is not required. In those cases, how to determine the place of supply is the act says it is a location of the goods at the time of delivery to the recipient, at the time when you are handing over, at the time when you are transferring the ownership to the recipient, wherever the goods are located, that will become the place of supply. Once again, for this also I will give you one small example. Let us say I'm a supplier. There is one supplier. I'm selling an immobile property along with furniture. There is a building. Along with that building, I'm also selling the furniture. Inside that building, there is a furniture. That furniture also I'm selling to a recipient. So let us say for this immobile property 1 CR, for this furniture 10 lakhs. See, sale of immobile property is not a supply. Sale of completed building, sale of land is not a supply. Why? Because it is getting covered under Schedule 3. You keep this aside. But I'm selling the furniture. No, furniture is a mobile property. No, so I am selling the furniture. Let us say this building is located. This supplier is in Delhi. Now, this recipient, the person whoever is selling this immobile property along with furniture, this recipient is in Chennai. Okay, this property is located in Hyderabad. So this property is located in Hyderabad. So this person is selling the immobile property along with furniture to a recipient who is in Chennai. So leave out immobile property, you take it out. That is not a supply. But furniture is goods. It is supply of goods happening. So I'm making a supply of furniture. But do you think in order to effect this supply, is the furniture required to be moved? No. There is no requirement of moving that furniture. Furniture will remain there at the building only. Just this person has to go and take the possession. So I'm making supply of furniture, but that furniture doesn't require any movement. Why? Because that furniture will remain there only at the building only. He has to go there and use it. That's all. So now this is what typically a scenario which is a supply of the goods without involving any movement. Here 10 subsection 1 clause C will come into picture, which says that the location wherever the goods are there at the time when the delivery has happened to the recipient, that will become the place of supply. So where the goods are located at the time of actual delivery, they are located at Hyderabad. So what will become place of supply? Place of supply will become Hyderabad. What is the location of the supplier? Delhi. Both are located in two different states. It will fall under interstate supply. IGST will become applicable. Understood? Clear everybody? So this is what regarding 10 subsection 1 clause C. So we have covered 10 subsection 1 clause A, clause B, clause C. So repeat, clause A will talk about how to determine place of supply in case of supply of the goods which involve movement. Clause B will talk about how to determine place of supply in case of bill to ship to transaction. Clause number C will talk about those circumstances which involve supply of the goods without involving any movement. Now we have one more clause, 10 subsection 1 clause CA. There is one more clause called 10 subsection 1 clause CA, which says that whenever you are making supply of the goods to a recipient who is an unregistered person, if you are making supply of the goods to a recipient who is an unregistered person, then you will be governed by 10 subsection 1 clause CA. Don't go to 10 subsection 1 clause A, clause B, clause C. Don't go there. Why? Because they have specifically given one clause for unregistered person. In case if you are making supply of goods where your recipient is an unregistered person, if the recipient is an unregistered person, if you are making supply of the goods, don't go to 10 subsection 1C etc. Whether it involves movement, whether it does not involve movement, don't go and look there. Why? Because once again, it is a specific clause. 10 subsection 1 clause C is a specific clause which is talking only about, which is specifically saying that when the recipient is unregistered, come to this section and determine the place of supply. So we'll come to this section only. We will not go to A, B and C. Okay. So when the recipient is unregistered, directly you have to come to 10 subsection 1 clause CA. So what does that 10 subsection 1 clause CA say? Let us see. So supply of goods to an unregistered person. So in that circumstances, place of supply shall be if the location of the recipient is available, is recorded on the invoice. Supplier will give invoice, no? On that invoice, if the location of the recipient is recorded, then the location of the recipient will become place of supply. In case if the address of the recipient is not recorded on the invoice, then the location of the supplier will become the place of supply. Simple rule, thumb rule, you have to remember it. So in case if the recipient is an unregistered person, how to determine the place of supply? So it simply says one thing, supplier will give the invoice, no? Check the invoice. On the invoice, is the address of the recipient recorded? Yes sir, address of the recipient is recorded on the invoice, location of the recipient. On the invoice, if I checked it, there is no address of the recipient available. Just name of the recipient has been mentioned. Address of the recipient is not mentioned. Then the location of the supplier itself will be considered as place of supply. Okay. Sir, what do you mean by recording of the address? Is a supplier required to record the door number, street area, everything? Is he required to record? Is he required to record? Not required. What do you mean by recording of address here is just recording the name of the state. If the name of the state of the recipient is recorded on the invoice, it will be deemed as if the address of the recipient has been recorded. That state will be considered as a place of supply. As simple as that. So if you see here, recording name of the state on the invoice is deemed to be the recording of address. Clear? Able to understand? So very simple, 10 subsection 1 clause CA. But here department gave one circular. Let us say sometimes what will happen is through the e-commerce operator, we place the orders, no? Let us say from Amazon, a person has placed an order. Now it is supply of goods. Let us say I ordered a mobile phone on Amazon. I am a recipient who is an unregistered person. I'm a recipient who is an unregistered person. So supply of the goods where the recipient is an unregistered person. So it should come to 10 subsection 1 clause CA. Sir, what will be the place of supply? If on the invoice, if they record my address, if on the invoice they record my address, that location of the recipient will become place of supply. And generally, you might have observed whenever you purchase a goods from the e-commerce operator, on the invoice your address will be compulsorily recorded. Your address will be compulsorily recorded. So since address will always get recorded in the e-commerce transaction, so that address, location of the recipient will become place of supply. But here there is a problem. Let us say this person is usually having his billing address in Hyderabad. This person is having a usual billing address in Hyderabad. So he mentioned the billing address as Hyderabad, but currently he is in another state. Let us say, for example, currently he is at Chennai for on some work or something. He has gone to Chennai. He kept the delivery address. He kept the delivery address as Chennai. He kept the delivery address as Chennai. See, now the problem is address of the recipient is available. Location of the recipient will be taken as place of supply. But the problem is on the invoice, the two addresses are available. One is bill to address, one is billing address, other one is shipping address or delivery address. Sir, which address I have to take it as place of supply? The problem is not non-availability of location of recipient. Here address of the recipient is available, but the problem is on the invoice two addresses are recorded. One is billing address, other one is delivery address. Sir, which location I have to consider as location of recipient, sir? Which I have to consider it as place of supply, sir? Now one circular has been given. You can consider the delivery address. You can consider delivery address, that we will consider it as place of supply. So since here the delivery address has been given as Chennai, so the place of supply will become Tamil Nadu. Clear? Able to understand? So this is very important circular from the examination perspective. Kindly do refer to it. So that's what I was saying here. Right. So for supply, I will read the conclusion. For supplies to an unregistered person, if billing and delivery addresses are differing, supplier may use a delivery address to determine the place of supply. Especially in the case of e-commerce transactions, on the invoice, address of the recipient is available, but two addresses are there. Billing address is there, shipping address is there. You consider delivery address, shipping or delivery address is there. You consider that delivery address. You use that delivery address for the purpose of determining place of supply. Understood? So 4 clauses we have covered. So what are they? Repeat quickly once. 10 subsection 1 clause A, which is talking about supply involving the movement of the goods. 10 subsection 1 clause B, bill to ship to transaction. 10 subsection 1 clause C, supply doesn't involve any movement. 10 subsection 1 clause CA, unregistered recipients. Next, let us come to the next clause. What are other clauses in section 10 subsection 1? Supply involving installation or assembly of goods at site. In case if you are making a supply of goods, but those goods are required to be installed or assembled at site, what will be the place of supply? Very simple, wherever they are installed or assembled. Let us say I am today buying an air conditioner. That air conditioner is requiring installation. Now what will be the place of supply for that air conditioner, sir? Wherever it is getting and coming installed, that will become the place of supply. Sir, I am buying a plant and machinery, sir. That plant and machinery is required to be installed at my factory. Factory is located in some different states, sir. What will be the place of supply? Location wherever that machinery is getting installed, that factory location. So like that, in case if you are making supply of goods which require installation or which require assembly of goods at site, then the place of supply will be location wherever that installation or assembly is occurring. Understood? Next one. Now coming to one more last clause under 10 subsection 1 clause E, which is goods supplied on board day conveyance. Goods supplied on board day conveyance. Sir, what do you mean by goods supplied on board day conveyance? See, sometimes you might be traveling in a conveyance. Let us say you are traveling on a train, or let us say you are traveling on an aircraft. So while you are traveling on an aircraft, let us say for example you wanted to purchase some food, not cooked food, that packaged food will be there, no? So that you want to purchase the food. So you have been given the food. You have been supplied the food. So they are supplying the food to you, supply of goods. But this supply is happening on board day conveyance. When you have boarded a conveyance, when you are mid journey, so during that board day conveyance, if goods are provided, what will be place of supply? So at that point of time, air hostess can't jump out of the window and see currently exactly at the bottom which state is there. That all will not happen. No, that is not practicable. So that's why in case of supply of goods on board day conveyance, let us say for example you are traveling on a train. Sometimes in the train what will happen is some people will come, people will come and send earphones. They will sell you charger, they will sell you that wide bluetooth wide earphones and all, they will sell you. So there also the person, let us say that suppliers will not be registered. If at all they are registered, what will be place of supply? Because that is a supply which is happening on board day conveyance. So when I say supply of goods on board day conveyance, either that conveyance operator might be supplying it, or some passengers might be supplying the goods on board day conveyance. So what will be considered as place of supply? Here guidance has been given under 10 subsection 1 clause E, and 10 subsection 1 clause E says that location where the goods were taken on board the conveyance. Wherever that goods are taken on board the conveyance, that will be considered as place of supply. Sir, what do you mean by this? I will give you one simple example to make you understand. Uh, yeah. Let us say, for example, you are boarding a train. You boarded the train at Chennai, and this train has to go until Delhi. This train has to go until Delhi. So you boarded the train here. You are traveling from Chennai. Now, in between, let us say somewhere at Mumbai location, a person entered this train with all this goods which he wants to sell. A person boarded the train at Mumbai to sell the goods. So somewhere in Pune, let us say for example in Pune and all, somewhere at this place. Now what happened is that person has approached your coach, and you wanted to buy the earphone. So let us say for example from that person you purchased the earphones somewhere when the train is around Pune. Now what will be considered as place of supply, sir? This is a typical case of supply of goods on board a conveyance. So now what they are saying, 10 subsection 1 clause E says wherever the goods are taken on board the conveyance. So where their goods are brought into that conveyance, these goods are brought into the conveyance. This person has brought these goods. The person whoever is selling the goods, that person has brought the goods into the conveyance at Mumbai. So here that place where the goods are taken on board the conveyance, what is that place here? Mumbai. So Mumbai is in Maharashtra. So what will be the place of supply? It is Maharashtra. Able to understand? Clear and comfortable, everybody? So this is what 10 subsection 1 clause E says. In case of supply of goods on board a conveyance, whether by that conveyance operator or by any passenger, the place of supply will be the location where the goods are taken on board the conveyance. Clear? That's all, my dear students. These are all the different circumstances in case of supply of the goods and how to determine the place of supply. I hope you guys are all able to understand. So total some 6 clauses they have told. 10 subsection 1 clause A, supply involving movement. 10 subsection 1 clause B, bill to ship to transaction. 10 subsection 1 clause C, supply of goods does not involve movement. 10 subsection 1 clause CA, if the recipient is unregistered person. 10 subsection 1 clause D, if the goods require assembly or installation at site. 10 subsection 1 clause E, where the goods are supplied on board a conveyance. So this is what regarding section number 10. Thereafter, we have section number 12. Sir, what is section number 12? Sir, in between section number 11 is there. What is happening to section number 11? I have already told you section number 11 is not relevant for CA Inter. That we'll learn it at the CA final. So then in between we have we are coming to section number 12. So what is section number 12? Talking about how to determine place of supply of services where location of the supplier of service and the location of recipient of service both are in India. When the location of the supplier and the location of the recipient, when both are in India, how to determine the place of supply, that guidance is contained under section number 12. So let us try to understand how to determine place of supply for supply of services where the location of the supplier and the location of the recipient both are in India. Right. So now here we have different subsections. So first let us try to understand the structure of section number 12. See, 12 subsection 1 talks about applicability. If you read 12 subsection 1, it will talk about applicability. What it simply says is, in case if you are making supply of services where the location of the recipient and the location of the supplier both are in India, follow section number 12. Apply section number 12. In the below subsections, we have given guidance. Apply that subsections and determine the place of supply. So 12 subsection 1 will talk about applicability. Then we have 12 subsection 2, which we call it as default. 12 subsection 2 is a default provision. Default provision means what? I will come to that later. So 12 subsection 2 something is default provision. Then we have starting from 12 subsection 3 till 12 subsection 14, we have various subsections. Each subsection will be talking about a specific kind of service and how to determine the place of supply. Like if you take 12 subsection 3, in case if you are offering services in relation to an immovable property, in case of supply of services in relation to immovable property, how to determine the place of supply, that is given guidance under 12 subsection 3. 12 subsection 4 will talk about some kind of services like personal grooming, beauty services, etc. Then we have 12 subsection 5, which is talking about training and performance appraisal services. We have something called 12 subsection 11, which will be talking about telecommunication services. We have something called 12 subsection 14, which is talking about advertisement services provided to government. So like that, starting from 12 subsection 3 till 12 subsection 14, each subsection will be talking about a specific kind of service, and for that service, how to determine the place of supply. Okay, so starting from 12 subsection 3 till 12 subsection 14, each subsection will be talking about a specific kind of service and how to determine the place of supply for that specific kind of service. Okay, so first what will happen is, actually what should happen is, in case if you are making supply of services, first you have to determine what service you are providing. Now you have to go and check whatever service you are offering, is that falling under any of that specific cases. Starting from 12 subsection 3 till 12 subsection 14, is your service getting covered anywhere under any of that subsections? If the answer is yes, you have to follow that subsection for the purpose of determining place of supply. Let us say I am providing telecommunication services. I will come and check whether from 12 subsection 3 till 12 subsection 14 where my service is falling. So it is falling under 12 subsection 11. Now 12 subsection 11 only will become applicable. You have to determine place of supply for your telecommunication services as per the guidance given under 12 subsection 11 only. Then let us say another service. I am a chartered accountant. I am providing audit services. Now I will check starting from 12 subsection 3 till 12 subsection 14 where audit service is falling. I will check. So I started checking the list: 12 subsection 3, 12 subsection 4, 12 subsection 5, 12 subsection 6, like that. Up to 12 subsection 14 I have seen. But my service is not getting covered anywhere. Audit services is not getting covered anywhere. Starting from 12 subsection 3 till 12 subsection 14, audit services is not getting covered anywhere. Now what I should do? Since your service is not getting covered anywhere, come to the default provision, and default provision will become applicable for you. Come to the default provision will become applicable for you. So this is what the structure of section number 12. So section number 12 will talk about how to determine place of supply in case of supply of services when the location of the supplier and the location of the recipient both are in India. And what is that structure? 12 subsection 2 is a default provision. So which means that whenever you are making a supply of service, first come to 12 subsection 3 to 12 subsection 14. Check whether any such a subsection is there which is covering your service. Apply the provisions of that subsection for determining place of supply. In case if your service is not getting covered anywhere starting from 12 subsection 3 to 12 subsection 14, then you have to come to the default provision 12 subsection 2. According to that, you have to determine the place of supply. Understood? Clear? Right. So let us try to proceed further now. So now what we will try to do is, we'll start from 12 subsection 3. Each subsection we will take, each kind of specific service we will see, and how to determine the place of supply we'll try to revise. Right. So first I will come to 12 subsection 3. So 12 subsection 3 is talking about services in relation to an immovable property. Regarding which services 12 subsection 3 is talking about? Services in relation to an immovable property. So services in relation to immovable property. Sir, what do you mean by services in relation to immovable property? Let us say, for example, architect services. Architect is providing a building plan. That is a service in relation to immovable property. Interior decorator. That is also a service in relation to immovable property. Construction services. It is also a service in relation to an immovable property. A real estate agent. It is also a service in relation to immovable property. So like this, bunch of services will come. Services which are in relation to an immovable property. Or lodging accommodation in a hotel, boat, or a vessel. Not just services in relation to immobile property. If you are providing the services, let us say if I am an hotel, if I am providing the services in relation to an accommodation in a hotel or boat, even houseboats and all will be there. If you go to the states like Kerala and all, in the inland waterways, there will be houseboat. So that is also getting covered here. Or accommodation in a vessel. So even if you go and travel in a vessel, like there's a cruise ships and all will be there, where you can go and enjoy the accommodation. So accommodation services and services in relation to immobile property will get covered under 12 subsection 3. What will get covered under 12 subsection 3? Accommodation services and all kind of services in relation to an immobile property. That will get covered under 12 subsection 3. How to determine the place of supply? So if you see here, applicability, it applies to all the services directly related to immobile property, like architect, interior decorator, surveyors, real estate agents, etc. And it also includes granting rights to use immobile property. When I say granting rights to use immobile property, renting of immobile property, leasing of immobile property also will get covered here. And it includes lodging services, hotels, inn, guest house, houseboats, campsites, vessels. It also includes accommodation services for organizing events. Let us say, for example, I have a convention hall. I'm giving that convention hall on rent so that people can come and celebrate their weddings and other functions. For that, I will get the money. So that also will fall under 12 subsection 3 because it is also an accommodation service in an immobile property. And any ancillary services, any supporting services to the above. So all of that will get covered under 12 subsection 3. Now, how to determine the place of supply? How to determine place of supply? So what 12 subsection 3 says is, generally for all these services in relation to immobile property or lodging or accommodation services, if immobile property is located in India, location or intended location of such immobile property will become place of supply. Wherever that immobile property is located or wherever that immobile property is intended to be located, that will become the place of supply. Let us say I'm an architect in Chennai. So there is a recipient who is in Hyderabad. So he asked me to provide a building plan for building which is supposed to be constructed in Bangalore. So what will be the place of supply? Location wherever that immobile property is intended to be located. What is it? Bangalore, which is Karnataka state. Place of supply will become Karnataka. So in case of all these services, if the immobile property located or intended to be located in India, the place of supply will become that location of immobile property. Sir, what if the property is supposed to be located outside of India? What if the immobile property is supposed to be located outside of India? Let us say, for example, I'm an architect in Chennai. There is a recipient who is in Bangalore. So both the location and both the recipient and supplier both are in India. So 12 will become applicable. So this recipient has came to me and asked me, sir, I want a building plan. I want you to draw a plan for the construction of my building. And where I want to construct that building is in US. I have a piece of land. There I want to construct the building. So you please give me a building plan. So I gave a building plan for the construction of a building which is going to be located at US. Sir, what if the immobile property is located outside of India? Then location of immobile property is not a place of supply. Location of recipient will become the place of supply. What will become the place of supply? Location of recipient will become the place of supply. So location of recipient is in Bangalore, Karnataka will become the place of supply. Sir, what if this immobile property is not in US? This immobile property is supposed to be constructed in Delhi. Then what will be the place of supply? Location of immobile property, which is Delhi here. The place of supply will become Delhi. Okay, so you have to remember this, my dear students. So how to determine place of supply in case of services related to immobile property? If the immobile property is located in India, the place of supply is in India. If the immobile property is located outside of India, location of recipient. Sorry, once again, if I repeat it, if the immobile property is located in India, location of the immobile property. If the immobile property is located or intended to be located outside of India, the location of the recipient will become the place of supply. Understood? Now there are few circumstances, there are few special cases which we need to learn here. See, sometimes what will happen is the place of supply can fall in multiple states. Let us say, for example, if I'm going to Taj Hotel, and with the Taj Hotel I'm booking an accommodation. So for that accommodation I'm paying some 50,000 rupees. For that 50,000 rupees, this Taj Hotel is going to provide me accommodation, and they are going to provide me accommodation. For this 50,000, I'm going for, let us say, for example, for North India trip, I'm going. So for this 50,000 rupees, they will give me accommodation at Jaipur also, at the Taj Hotel chain. And also at the same time, they will also give me, I will also go to, let us say, for example, I'm going to Delhi as well. In Delhi also, they will give me accommodation. So I'm paying them 50,000 rupees. For that, Taj Hotel will give me accommodation services. And for a few days, I'm going to stay in Jaipur. For a few days, I'm going to stay at Delhi. For a single price, I am doing it. So now what will be the place of supply? Generally, location wherever that hotel is located. But here the hotels are spread, the hotels wherever I am going to get the accommodation, that is spread across 2 states, sir. Now how to determine place of supply? Can I consider place of supply as only Jaipur, Rajasthan? Can I consider only place of supply as Delhi? No. Because the revenue has to go to both the state governments, no. So I have to apportion. This 50,000 I have to apportion. Sir, on what basis I have to apportion? First thing what you have to do is you have to go and check the contract or agreement. If in the contract or agreement there is already a bifurcation given, let us say, for example, in the contract it was written, sir, 50% is for Jaipur, 50% is for Delhi. We will follow whatever has been given in the contract or agreement. But in case if the contract or agreement does not provide any bifurcation, in the contract they have told that 50,000 rupees, for this we will give you accommodation at 2 places. Bifurcation they have not provided in the contract or agreement. Then how to determine place of supply? Then there is one rule. That rule says that you have to bifurcate the value on the basis of number of nights. So if you see here, on the basis of number of nights stayed in such property, on the basis of number of nights, you have to bifurcate the value. Let us say, for example, 2 nights I'm staying in Jaipur, 3 nights I'm staying in Delhi. So now I have to divide this ratio of divide this 50,000 in the ratio of 2:3. So I will get 20,000 for Jaipur, 30,000 for Delhi. So for 20,000 value of supply, the place of supply is Rajasthan. For another 30,000 value, the place of supply is going to be Delhi. Understood? Clear, everyone? Right. So like this, if the accommodation you are getting at multiple places, this is how you are required to divide it. See, sometimes what will happen is a single immobile property might be spread across multiple states. A single immobile property might be spread across multiple states. Let us say, for example, I'm a supplier, I'm owning a piece of land, a very big land is there, some 5-6 acres of land is there, which is a close to hill station. This I generally rent it out for marriage purposes. If someone wants to come into the destination wedding and all, this I will give it on rent. So one day, one recipient has come to me and he wanted to celebrate his destination wedding there. He asked me to rent out this property. Okay, I rented out this property for 2 lakh rupees. Now, what is the place of supply location of the immobile property? Sir, wherever this immobile property, wherever this land is located, that will become place of supply. But the problem is this land is spread across 2 states. This land is in the border where it is spread across 2 states. Some part of the land is there in Karnataka, some part of the land is there in Tamil Nadu. A single land is spread across multiple states. Possible or not? It is quite possible. A single land might be spread across multiple states. So now what will be the place of supply? Because this land is spread across multiple states. So if it is located in single state, I would have told that state. But this single land is spread across multiple states. What will be the place of supply? So here also you are required to bifurcate. Sir, how you have to bifurcate? If there is first here also you have to go and refer to the contract. If in the contract they have given some bifurcation, follow that. In the contract or agreement, if they have not provided for any explicit bifurcation, then what I am supposed to do? You have to divide it on the basis of area of that immobile property. You have to divide it on the basis of area of immobile property. Let us say entire area is 5 CR. Out of that, some 5 acres of land is there. Out of that, 3 acres is in Karnataka, 2 acres is in Tamil Nadu. So in the ratio of 3:2, you have to divide that value and accordingly you have to determine place of supply. So if you do that in the 3:2 ratio, so it will become something around 1,20,000 will be, for 1,20,000 the place of supply is Karnataka, for another 80,000 the place of supply is going to be Tamil Nadu. Understood. Next, one more case where there will be a trouble is houseboats. Let us say houseboats. If you are taking an accommodation in a houseboat, now this houseboat will not remain constant. This houseboat will travel across your duration. So for example, you are staying in that houseboat for 2 days. Now for that 2 days, that houseboat will not remain there itself. So in India, we have inland waterways, no? So in that inland waterways, it will travel in the inland waterways between Karnataka and Kerala. So now you have stayed in this houseboat, but this houseboat has not remained constant. It has traveled multiple states during your accommodation. Now, how to determine the place of supply, sir? Here also check for contract or agreement. In case if the contract or agreement is not there, then how I have to bifurcate? Then they say that in that cases, you have to check, you have to divide it on the basis of time spent by boat or vessel in each state or union territory on the basis of declaration made by the service provider. So that service provider will give a declaration, sir, for this accommodation, this much time I have spent it here, these many hours we have spent in this state, these many hours we have spent in state. Like that, he will give a declaration. According to that time spent, you have to bifurcate the value. Understood. So this is what regarding 12 subsection 3, which is talking about services in relation to an immobile property or lodging or accommodation services in hotel, boat, vessel, etc. Thereafter, so 12 subsection 3 we have completed. Now coming to 12 subsection 4. So 12 subsection 4 is a very straightforward provision which is covering the services like restaurant, catering service, personal grooming service, fitness, beauty, healthcare services, including cosmetic and plastic surgery. All will get covered here for all these services. So what and all are getting covered under 12 subsection 4? So these are basically performance based services on a person. You are performing some services on a person. So what will get covered here? Restaurant services, catering services, personal grooming services, fitness services, beauty, health services, including cosmetic and plastic surgery. What will be the place of supply? Place of supply will be location wherever such services are actually performed. Wherever that services are getting performed, that will become place of supply. Let us say, for example, I am a person from Chennai. I went to Mumbai. At the Mumbai, I have went to a restaurant. At that restaurant, I have had the services. So what will be the place of supply? The place wherever that service is performed. Where that service is performed, that restaurant service has been performed in Mumbai. So place of supply will become Mumbai. So let us say I traveled to some another location, got a haircut there. So what will be place of supply? Wherever that service is actually performed. So that hairstylist will do the performance of that service on me, no? So wherever that service is getting performed, that will become the place of supply. Same thing will become applicable for fitness, beauty, healthcare services. Everything will get covered here. Cosmetic or plastic surgery, etc. So this is what regarding 12 subsection 4. Then we have 12 subsection 5. 12 subsection 5 will talk about training and performance appraisal services. In case if you are providing any training, let us say for example, you are a motivational speaker, you are going and conducting a motivational session, motivational training you are doing, or you are doing performance appraisal. Some big corporates will recruit you for doing performance appraisal, whether their employees are performing as expected or not, whether they are eligible for increment or not. So like that, you are supposed to go into the performance appraisal. So in case if you are a supplier providing the services of training and performance appraisal services, sir, how to determine place of supply? Very simple. It depends on the location. It depends on what is your status of the recipient. If the recipient is a registered person, that means if it is a B2B supply, always and always location of recipient. Always and always location of recipient. In case if it is a B2C supply, in case if you are a motivational speaker and you are conducting one open seminar where everybody, where for example I'm conducting a motivational session for students. I have announced one city, let us say for example in Delhi I'm going to conduct one motivational session for all the students. Now students will purchase a ticket and come and students will pay me the fee and come and attend that motivation class. So here my location, my recipients are unregistered person. No, in case if it is a B2C supply, if the recipient is unregistered, the place of supply is wherever that service is actually performed. Wherever you are providing the training services, I am providing that training in Delhi, the place of supply will become Delhi. On the other hand, if the company, if some registered company is there, that company has approached me and asked me, sir, you please come and do the motivational training session for our employees. So there the recipient is registered person, recipient is company, it is a B2B supply. What will be the place of supply? Location of recipient. So let me give you one example here with the examples. This chapter, no, the more you try to refer to some common examples, you will get better clarity. Let us say I'm a motivational speaker, as I have told. I am located in Hyderabad. Okay, so I am providing. One day a company has approached me. That company is in Delhi. Now this company is celebrating a event. So they are celebrating some 25th anniversary. They have called all their employees to Goa. They have asked me to come to Goa and do 1 hour of deliveries, 1 hour delivery of motivational session. So recipient is registered. Location of the recipient is Delhi actually. I am going and performing the training at Goa. What will be place of supply? Since it is a B2B supply, where you are performing that service doesn't matter. Always location of recipient. Sir, what is location of recipient? Delhi. So place of supply will be Delhi. Location of the supplier, Hyderabad. Interstate supply, IGST. On the other hand, as you take the other example I have given, I'm a motivational speaker. I'm conducting one session for students and all. So where you are conducting that session? Let us say I'm at Hyderabad. So I'm calling at Hyderabad only. At Hyderabad, I'm going to conduct one motivational session where the students can come and participate in that. So now from the students, I'm collecting the fees. From the students, I'm collecting the fees and I'm conducting a motivational session, training service I'm providing. So you tell me what is the status of my recipients here? Recipients are unregistered. Let us say from each student, I'm collecting 10,000 rupees. What GST I have to charge? So since it is a B2C supply, training and performance appraisal services, location wherever that service is performed, where I am performing that training, Hyderabad. So what will be place of supply? Hyderabad. What is the location of supplier? Hyderabad. Both are falling in same state, which is intrastate. So on this 10,000, what will be levied? CGST, SGST will be levied. Clear? Able to understand? So this is what regarding 12 subsection 5. So we have covered 12 subsection 3, 12 subsection 4, 12 subsection 5. What does 12 subsection 3 will talk about? Services in relation to immovable property, lodging or accommodation services. 12 subsection 4, performance based services on person. 12 subsection 5, training and performance appraisal services. Then we have 12 subsection 6, which is talking about how to determine place of supply in case of services related to admission to event, amusement park or other places. Like you are going to the amusement park or you are conducting an event, music event, concerts or award function. So by way of, they will sell you tickets and they will allow you access to that event, or they will sell you tickets and they will give you admission to the amusement park. Sir, for that services, what will be place of supply? Very straightforward. Wherever that amusement park is located or wherever that event is held, that will become the place of supply. In case of admission to events or amusement parks or other places, what is the place of supply, sir? The place of supply will be wherever that event is held or wherever that amusement park is located. That will become the place of supply. Sir, what will get covered under here? The bunch of services will get covered here. It could be a sporting event, cultural event, educational event. So let me write it here. Sporting event, cultural event, educational event, scientific event, artistic event, entertainment event, or it could be admission to amusement parks or any other ancillary services to the above. Next. Sir, organization of events. Sir, what is this event organization? Nothing but event management services. So for event management services, in case if someone is providing the event management services, including sponsorship, even sponsorship also will get covered here. So in case if you are providing, if you are an event organizer, you are providing event organizing services to your recipients, including sponsorship, etc. What will be the place of supply? So here also they have told that it is depending on the status of your recipient. If your recipient is B2, if you are you making a B2B supply, are you making a B2C supply? So in case if you are providing event organizing services to a registered recipient, if your recipient is also registered, location of recipient. Wherever event is held doesn't matter. If it is a B2B supply, if you are organizing the event for a recipient, whether that event is held within India, outside of India, doesn't matter. Always location of recipient will become the place of supply. On the other hand, if your recipient is an unregistered person, if your recipient is an unregistered person, let us say for example, I'm an unregistered person. There is a person who is an unregistered person. He is celebrating his wedding. Okay, so now he approached one event organizer to do the event organizing of his wedding. Okay, so here the recipient is unregistered person, whereas supplier will be registered person. So now what will happen in this case? They say that, let us say this event is a destination wedding. This destination wedding is supposed to happen at Jaipur. This destination wedding is supposed to happen at Jaipur. So what will be place of supply? Since it is a B2C supply, they say that wherever the event is held, that means where the event is happening, at Jaipur event is happening. So place of supply will be what? Jaipur, that is Rajasthan. Sir, what if the event is held outside of India? Let us say for example, this boy is a very rich person. He wants to have his wedding performed at Paris. At Paris, he wants to have his wedding. For that, this event organizer is organizing the event. Sir, what will be place of supply, sir? Here, the place of supply is going to be the location of recipient. If the event is held outside of India, location of recipient. Let us say this recipient belongs to Hyderabad. So, place of supply will be Hyderabad. Able to understand? So, once again, if I have to summarize this entire discussion, in case if you are providing event organizing services to a recipient who is registered person, if you are making a B2B supply, if you are providing event organizing services to a registered recipient, it doesn't matter where the event is happening, always location of the recipient. Always location of the recipient. In case if the recipient is unregistered person, to such an unregistered person, if you are providing event organizing services, then we need to check where the event is getting performed. If the event is happening in India, location where the event is happening. If the event is supposed to happen outside of India, location of the recipient. But this thing we need not check whether the event is happening within India, outside of India. That we need not check in case if the recipient is registered. Why? Because always location of the recipient. Now, if you come to this case, let us say, sir, I am providing service to unregistered person and that event is happening in India. But what if the event is happening at multiple places? If I am providing services to a recipient who is an unregistered person and I am supposed to provide event organizing, let us say wedding services only you take, wedding event I am organizing. Now, as a part of that wedding, two events have to happen. One event has to happen at Jaipur, another event has to happen at, let us say, Ooty. One event, 2 days or two events are happening. One event is required to happen at Jaipur and another event will happen at Ooty. Okay, so now I am providing event organizing services. My recipient is unregistered person. So event is happening within India, wherever the event is taking place. But here the events are happening at two places, sir. Events are happening at two places, sir. How to determine place of supply? Both will fall under place of supply, but you have to bifurcate the value. Sir, how we will bifurcate the value? Once again, here also you refer to contract or agreement. If in the contract or agreement some form of bifurcation has been given, follow it. Sir, if in the contract or agreement nothing has been specified, sir, then if in the contract or agreement nothing has been specified, what I should do? Apply rule 5. And what rule 5 says is generally accepted accounting principle. You follow generally accepted accounting principle. According to some accepted accounting standards, you will bifurcate that. No. So follow some generally accepted accounting standards, and according to that generally accepted accounting principle, you bifurcate the value. Generally in the expense ratio, you will bifurcate. So what generally accepted accounting principle says is expense ratio. In the expense ratio, you will bifurcate it. You don't write all that expense ratio in the exam. Just to say that as per generally accepted accounting principles, we have to bifurcate the value. This much you are required to write it. Understood? So this is what regarding 12 subsection 7. So let us have a quick recap, guys. What and all we have covered? 12 subsection 3, services in relation to immobile property, lodging or accommodation. 12 subsection 4, performance based services. 12 subsection 5, training and performance appraisal services. 12 subsection 6, services by way of admission to events or amusement parks or other places. 12 subsection 7, organization of events. Now we are coming to 12 subsection 8. So 12 subsection 8, 12 subsection 9. Both are relating to transportation. 12 subsection 8 will talk about how to determine the place of supply in case of transportation of goods, whereas 12 subsection 9 will talk about how to determine place of supply in case of passenger transportation services. So 12 subsection 7, 12 subsection 8, 12 subsection 9, both are talking about transportation related services. 12 subsection 8 will talk about goods transportation services, how to determine place of supply, whereas 12 subsection 9 will talk about passenger transportation services and how to determine the place of supply. So first I will talk about transportation of goods under 12 subsection 8. Transportation of goods, how to determine the place of supply. Very simple. Here also it depends on status of the recipient. If the recipient is registered, location of the recipient always. In case of transportation of goods, services, if the recipient is registered person, always location of recipient. In case if the recipient is unregistered person, location where the goods are handed over for transportation. Location where the goods are handed over for transportation. Very simple. Let us say there is a DTDC, courier agency is there. You are a student. You are an unregistered person. So let us say you are staying at Hyderabad. Now you wanted to go to some other place. So you are having some books. Let us say you came to Hyderabad for preparation. After your preparation is over, you want to go back to your place. So now you want to transport your books from Hyderabad to, let us say, Vizag. Okay, so now you went to DTDC office, which is in Hyderabad, and you handed over the goods, you handed over your books for the purpose of transportation to DTDC Hyderabad office. Now DTDC is providing you the services of transportation of goods. So this is a service of transportation of goods. Recipient is unregistered person. So what is place of supply? Location wherever you are handing over the goods for transportation. Where you are going and handing over the goods for transportation at Hyderabad office. So you went to Hyderabad DTDC office and you gave them, you handed over your books for transportation. Where? At Hyderabad. So what will become place of supply? Hyderabad once again. What is location of supplier? Hyderabad. Both are falling within same state. So it is an intra-state. What will be levied on that? CGST, SGST will be levied on it. Understood? That's all. What if the recipient is registered person? In case if you are providing transportation of goods for a registered person, always location of the recipient. We will check where the goods are handed over for transportation only in the case if the recipient is unregistered person. Okay, clear? Next. Coming to the next point. Passenger transportation services. Sir, how to determine place of supply in case of passenger transportation services? Very simple only. So they say that here also it depends on location of recipient. What is the status of the recipient? If the recipient is a registered person, always location of the recipient. If the recipient is a registered person, always location of the recipient will become the place of supply. In case if the recipient is unregistered person, location where the passenger embarks on the conveyance. Location where the passenger embarks on the conveyance. Sir, what is it? Let us say, for example, I'm a business person. I'm a registered person. Okay, so I'm traveling. Let us say I'm traveling. There is an airline company, Indigo Airlines is there. Let us say at Mumbai. So I'm a registered person. I'm also registered at Mumbai. So I'm traveling from Mumbai to Delhi. I'm traveling from Mumbai to Delhi. So with that, I have booked a Indigo Airlines ticket. So Indigo Airlines is providing a services of passenger transportation. What is place of supply? Since the recipient is registered, always location of the recipient only. Where you are traveling, where you are boarding, where you are getting, where you are stopping your journey, all that doesn't matter. So in case if the recipient of passenger transportation services is a registered person, always location of recipient. So here location of recipient will become Mumbai. Place of supply is also Mumbai. Location of recipient is also Mumbai. So sorry, location of the supplier is also Mumbai. Place of supply is also Mumbai. It will be an intrastate supply. Sir, what if I'm an unregistered person? What if I'm an unregistered person? If I'm going to Indigo Airlines and if I'm booking a flight whereby I'm traveling from Mumbai to Delhi, what will be place of supply? Since the recipient is unregistered, the place where the passenger is embarking, where you are boarding onto that conveyance, where you are boarding onto the conveyance, you are boarding onto the conveyance at Mumbai. So Mumbai will become the place of supply. Understood? And one more small point I have to keep it here. You have to understand it here. So in case of passenger transportation services, even though you have booked a round trip, to journey, and from journey, both will be treated as two separate journeys. Let us say you booked a round trip where you will go from Mumbai to Delhi. You have some urgent work. By night, you will return from Delhi to Mumbai back. So generally, you book a round trip. So even though you have booked a round trip, two journeys will be treated as separate. So here also, let us say, for example, you have booked a round trip where you will go in the morning from Mumbai to Delhi and you will come back from Delhi to Mumbai at the evening. Round trip you have booked, but both journeys will be treated as separate journeys. Now, if you take this registered person, what will be the place of supply from Mumbai to Delhi trip? Mumbai only, location of the recipient. What will be the place of supply for a Delhi to Mumbai journey? Once again, Mumbai only. Why? Because here the recipient is registered person. Always location of the recipient will become place of supply. Where you are traveling, where you are boarding, where you are getting down, all that doesn't matter. But here, if you take Mumbai to Delhi trip, if the recipient is unregistered person, what is place of supply for here? For Mumbai to Delhi journey, place of supply will be Mumbai. For return journey, Delhi to Mumbai, what will be place of supply? Place of supply will be Delhi. Why? Because here recipient is unregistered person. The place where you are embarking on the conveyance, that will become the place of supply. So for recipient is, if recipient is unregistered, if recipient is registered person, where he is embarking doesn't matter only. Why? Because always location of the recipient will become the place of supply. Understood? Clear? And one more thing is also there. Sometimes the passenger transportation service will be in the form of right to passage for future use and point of boarding not known at the time of issue of passage. So yeah, let us try to have a look at it. Sometimes they will provide services where they will give you right to passage in the future. The passenger transportation service will be in the form of right of issuing the passage, which you can use it in the future where boarding time is not known. Sir, what is it? Let us say, for example, pass. Some railway companies and all, they will give you pass. So what they will do is they will issue one pass. That pass you can use it for traveling from anywhere to anywhere. That pass you can use it from traveling to anywhere. So like that, sometimes they will also sell you some special tickets and all, where 1 year validity will be given. Using that ticket you can travel from anywhere to anywhere. So they are not immediately providing passenger transportation services, they are issuing a right to passage for future use. And what will be the point of boarding, it will not be known at the time of issuing that passage, like for example issuance of the pass and all. So you can use it at a future date. From wherever you want you can board, wherever you want to get down you can get down. So like that, this is also a passenger transportation service. But here, instead of providing direct passenger transportation services, they are giving you right to passage in the future. So in those cases, how to determine place of supply? Actually, for issue of right to passage for future use, this will get governed under default rule. So it will not fall under 12 subsection 9. It will go to default rule. Issue of right of passage will fall under default rule. But anyhow, what is the default rule? Default rule also says if the location of the if the recipient is registered, location of the recipient. If the recipient is unregistered, if the location of recipient, if the address of recipient is available, location of the recipient. If the location of the recipient is not available, then the location of supplier. Anyhow, this I am going to explain in 12 subsection 2 default provision. Now what you remember is, if it is a direct passenger transportation services, 12 subsection 9. On the other hand, if it is a right to passage for future use where point of boarding is not known, then remember that it will go to default provision. Sir, what is default provision saying? That will come to that later. So anyhow, what I have done is the default provision also I have given it here itself. For your easy reference, I have given that default provision here itself. But what is that default provision? We will try to learn it once we complete all the specific cases. So till 12 subsection 9 we have covered. So 8 and 9. 8 is talking about transportation of goods. 9 is talking about passenger transportation services. Next, 12 subsection 10, which is talking about supply of services on board day conveyance. So guys, if you remember 10 subsection 1 clause E, we have seen how to determine place of supply in case of supply of goods on board day conveyance. If the goods are getting supplied on board day conveyance, how to determine place of supply? That's what we have covered under 10 subsection 1 clause E. But in case if the services are supplied on board day conveyance, then how to determine the place of supply? Sir, what do you mean by services being provided on board day conveyance? Let us say, for example, you have boarded a flight. You are getting bored. You wanted to watch a movie. Generally, this will be available in the business class flights and all. So you want to watch a movie. So now what they will do is, in front of you there will be one screen. So in that, if you want to watch a movie, they will ask you to pay some money, some 49 rupees, 99 rupees you are required to pay to watch a movie. So they are providing the services to you for watching a movie when you are boarding a conveyance, when you are traveling during your mid journey. They are providing you that services of access to movie. Sir, what will be place of supply? In case of goods, what I have told, in case of goods supplied on board day conveyance, I told that wherever that goods are taken on board day conveyance, that will become place of supply. Sir, what about services, sir? In case of services, they say that under 12 subsection 10, the place of supply is the first scheduled point of departure of that conveyance. So what they are saying, the place of supply will be first scheduled point of departure. Sir, what is first scheduled point of departure? Let us say there is a flight which is coming from, which is started at Chennai. It will go up to Delhi. It will go up to Delhi. In between, one stop is there at Mumbai. In between, one stop is there at Mumbai. At Mumbai, you are a passenger. You have boarded this flight. At Mumbai, you have boarded this flight. Now from Mumbai to Delhi, you are going. During that journey, you are getting bored. You wanted to watch a movie. So you have availed the services during this journey from Mumbai to Delhi, whatever journey is there, during that you have availed the services. So services are supplied on board day conveyance. Sir, what is place of supply? They say place of supply is a first scheduled point of departure. What is the first scheduled point of departure of this aircraft? So first scheduled point of departure is Chennai, not where you have boarded. They're not saying not where you have boarded. The first scheduled point of departure. Sir, what is the first scheduled point of departure? Chennai is the first scheduled point of departure. So that will become Tamil Nadu. Place of supply will become Tamil Nadu. Understood? Clear? Right. So this is what regarding 12 subsection 10. 12 subsection 11, I will come back to that later. because that requires some discussion. But before that, we have 12 subsection 12, 12 subsection 13, 12 subsection 14. Some simple provisions are there that will try to cover it. Thereafter, I will come to 12 subsection 11, telecommunication services. Right. So what does 12 subsection 12 talk about? 12 subsection 12 will cover financial and stockbroking services. How to determine the place of supply in case of financial and stockbroking services? Very simple. In case if the location of the recipient is available as per the supplier's records, location of the recipient. Sir, what if location of recipient is not available? Then the location of the supplier. Simple rule you have to remember. If the location of the recipient is available, location of the recipient. If the location of the recipient is not available, then the location of the supplier will become place of supply. Which section says that? 12 subsection 12 says that. So what is 12 subsection 12 talking about? Financial and stockbroking services. Next, 12 subsection 13, insurance services. So in case if you are providing insurance services, what will be place of supply? It is, I will say, it is very much similar to default rule only. It is similar to not similar, it is nothing but default rule only. So, but anyhow, if I have to say it, you can remember it that way. For insurance services, even though they have given separate clause, for insurance services, even though they have given a separate subsection, but it is not a separate provision. It is once again replication of default provision only. But in fact, what 12 subsection 13 says is, if the recipient is registered, location of the recipient. If the recipient is unregistered, location of the recipient. If address is available. If address is not available in the supplier's records, then the location of the supplier, which is very similar to default rule. Even default rule also says the same thing. So you just remember it as, for insurance services, it will be default provision only. If the recipient is registered, location of the recipient. If the recipient is unregistered, then we have to check whether recipient address is available. If the recipient's address is available, location of recipient. If that recipient's address is not available, then the location of the supplier. Clear? Next, we have 12 subsection 14. So what is 12 subsection 14 talking about? How to determine the place of supply in case of advertisement services provided to the government. So 12 subsection 14 will not talk about all advertisement services, my dear students. This is where one more common mistake which many students will think. The moment they find advertisement services, they will come to 12 subsection 14. No. 12 subsection 14 will not talk about all kinds of advertisement services. Then which kind of advertisement services 12 subsection 14 will cover? 12 subsection 14 will cover only advertisement services when they are provided to government. 12 subsection 14 only will talk about advertisement services when provided to government. If you are providing advertisement services to others, it will not fall under 12 subsection 14. It will go to default provision. If I'm an advertising agency, if I'm providing an advertising services to a corporate company, it will not fall anywhere starting from 12 subsection 3 to 12 subsection 14. It has to go to default provision. Okay, so 12 subsection 14 only will cover advertisement services when provided to the government. So what does this 12 subsection 14 say? When advertisement services are provided to central government, state government or statutory body, local authority meant for state or union territory identified in a contract or agreement. So you have to place of supply will be each of that state or union territory where the advertisement is run, displayed or broadcasted or disseminated. Let us say you are providing advertisement services to central government. When I am providing advertisement services to central government, that advertisement will not be displayed or distributed at one state. So that advertisement will be displayed. Let us say, for example, if the central government is doing television advertisement, that advertisement will be seen by people in all over the country. So what they are saying is, in that cases, the place of supply is not just one single state. Wherever that advertisement is getting disseminated, wherever that advertisement is getting displayed, wherever that advertisement is getting distributed. So place of supply will be in each of that state or union territory, wherever that advertisement is getting disseminated. So the value of such supply is specific. Sir, how to determine value? Okay, sir. Let us say one advertising agency is providing 10 lakhs worth of services to central government. Now that advertisement will be displayed in multiple states and union territory. So you told that the place of supply will be in each state or union territory wherever that advertisement is getting disseminated. But how to bifurcate the value, sir? How to bifurcate the value, sir? It will be bifurcated in terms of the contract or agreement. You have to refer to contract or agreement. If in the contract or agreement, if they have identified, sir, for this state this much, for this state this much, for this state this much, then according to that bifurcation, you have to determine the place of supply. Sir, in case if the contract or agreement is missing, in case if the contract or agreement bifurcation is not given, for each state or union territory, how much is the amount? That bifurcation is not given. Only they have mentioned 10 lakhs total amount. Then how to bifurcate? There are different rules here. There are rules here. According to that rules, you have to divide. But that rules you are not required to learn it at the CA inter level. That rules we will learn it at the CA final level. So just for 12 subsection 14 at the CA inter level, I want you to remember only one thing. In case if the advertisement services are provided to government where it is getting disseminated in more than one state or union territory, the place of supply will be in each that state or union territory. How to bifurcate the value, sir? If first you have to refer to contract or agreement. If the contract or agreement has clearly mentioned it, in that according to that contract or agreement, you will bifurcate. What if the contract or agreement is silent on the bifurcation? There are some rules. According to that rules, you have to apportion it. Sir, what are that rules? No need to learn it at the CA inter level. That we will learn it at the CA final level. Okay, so that's what regarding 12 subsection 12, 12 subsection 13, 12 subsection 14. Now we have 12 subsection 11, which is talking about telecommunication services. We have 12 subsection 11, which is talking about telecommunication services. Sir, how to determine the place of supply in case of telecommunication services? How to determine the place of supply in case of telecommunication services? So when I say telecommunication services, so many number of services will get covered here. When we say telecommunication services, there are so many kind of services will come into your picture. It will take into its perspective this landline is a telecommunication service. Wi-Fi is a telecommunication service. The mobile prepaid services, postpaid services, that is also telecommunication service. And also there will be something called circuits, leased circuits, like that. There will be some services which corporates will get, leased circuits, that is also a kind of telecommunication service. TV, cable TV services, antenna services, TV channels related subscription, that is also a telecommunication service. So when I say telecommunication service, it is a very broader term. It includes various kind of services which we use it as a part of our day-to-day life. So now they have determined how to determine place of supply in case of telecommunication services. Let us try to understand it. First one, in case of fixed telecommunication line, nothing but landline, or leased circuits, or internet leased circuits, or cable or dish antenna. For these kind of telecommunication services, what will be place of supply? So for these kind of telecommunication service which require a physical installation, actually all this will require physical installation. Like let us say, for example, you want a landline connection in your home. What will happen? The person will come and install the landline phone, no landline connection and all, he will install it, right? So like this, these are a bunch of services which require physical installation. So in case of fixed telecommunication line, or leased circuits, or internet leased circuits, cable or dish antenna, in all those cases, what will be place of supply? They have simply told that location wherever the telecommunication line, or wherever that leased circuit or cable connection or dish antenna is installed. Wherever that is installed, the place of installation will become the place of supply. But here, in case of leased circuit, sometimes what will happen is this leased circuit will be spread across multiple states. Let us say there is one company which is getting a leased circuit. Leased circuit means a closed telecommunication line. So they are having an head office at Delhi and they have a branch office in Pune. Now all these offices are required to be connected. They need one common server and all. So they install leased circuit. They will have one point here. They will have a leased circuit point in Delhi and they will have a leased circuit point in Pune. They will have a leased circuit point in Pune. So like the 2 points are there. These 2 points will be connected by way of a circuit. So now what is place of supply? I told that wherever that things are installed. But here it is getting installed in 2 states. So one point is there in Delhi, one point is there in Pune. Sir, what is place of supply? Place of supply will be both. Place of supply will come in Delhi also. Place of supply will come in Maharashtra also. On what ratio I have to decide, sir? On the basis of number of points in each state or union territory. So in Delhi, I have 1 point. In Maharashtra, I have 1 point. Let us say total consideration I am getting for this is 10 lakh rupees. So in which ratio I have to divide? In 1:1 ratio. Why? Because on the basis of number of points, I have 1 point in Delhi, 1 point in Maharashtra. So in the 1:1 ratio. So 5 lakhs place of supply will be Delhi, 5 lakhs place of supply will be Maharashtra. Now let me change the facts here. In between, I have one more office in Mumbai also. Mumbai also I have one office. Pune also I have one office. For Mumbai also, Mumbai office also I want to get it connected. So I have established one more point here, one more circuit point here. So I have one circuit point in Delhi, one circuit point in Mumbai, one circuit point in Pune. For this, let us say I am collecting total of 10 lakh rupees. Now, what is place of supply? So here we have points in Delhi also. We have points in Maharashtra also. But here in Maharashtra, I have 2 points. In Maharashtra, I have 2 points. So I will divide it in the, why? Because Mumbai, Pune both are belonging to Maharashtra. So in Delhi, I have 1 point. In Maharashtra, I have 2 points. This entire 10 lakh rupees, I have to divide it in the ratio of 1:2. Clear? Able to understand? Comfortable? Right. So this is what you will be able to find it at the bottom. In case if it is installed in more than one state or union territory, how you are supposed to determine the place of supply. So this is what regarding fixed telecommunication line, leased circuits, internet leased circuits, cable or dish antenna. Then comes next postpaid services. Sir, if I am getting postpaid mobile connection, if I'm getting postpaid mobile connection and internet services, what will be place of supply? Very simply, what they say is location of the billing address of the recipient. Recipient will give you billing address. No, whenever he gets that postpaid connection from you, he will give you his billing address. So whatever that billing address of the recipient is available in the supplier's records, that will become the place of supply. Sir, what if address is not available? In case of postpaid connection, if the recipient has not given his address, what will be place of supply? Location of the supplier will become the place of supply. Location of supplier is going to become the place of supply. So in case of postpaid mobile connection, location of billing address of the recipient available in the supplier's records. In case if the billing address is not available in the supplier's records, then the location of the supplier will become place of supply. Sir, what if it is a prepaid mobile connection, internet service and DTH services? What if it is a prepaid mobile connection service, prepaid internet services or prepaid DTH services? So now these prepaid services can be provided by way of multiple mechanisms. So traditionally what used to happen is this telecommunication company will will provide that services to an agent, to a selling agent, reseller, distributor of SIM cards. Like for example, you used to find traditionally there used to be one shop in your street where they will have that recharge coupons or devices they will have. So first telecommunication company will supply that to agents. For that transaction, what is place of supply? Address of the selling agent, reseller, distributor at the time of supply. So whatever is the address of the selling agent, whatever is the reseller, or whatever is the address of the reseller, or whatever is the address of the distributor, that will become the place of supply. Now that agents will provide the services to final subscriber. No, if you are a final subscriber, let us say for example you want a recharge coupon. Traditionally we used to do, now it is not happening. What is now happening, that I will come back to this point. Here it is there. But traditionally when you used to be a kid, your mom or dad, they will ask you to go to some local shop and they will ask you to get some voucher, recharge coupon you have to bring. So you have to bring that recharge coupon, you have to scratch it on that code will be there, you have to enter that code, you will get the recharge. So that is a service provided to a final consumer. So in case of service provided by any person to the final subscriber, what is the place of supply for that transaction? Location where such a prepayment is received. You will go and get that you will go and make the prepayment and get the coupon. No, so wherever you are going and doing that prepayment, wherever such prepayment is received or such vouchers are sold, that will become the place of supply. Now these are all not here, these are all not existing today. The most common thing what we are doing, we are getting the prepaid services. The payment for that we are making it through internet banking, through electronic payment. So we are getting a prepaid connection and we are doing the recharge ourselves, right, through internet banking and all. So for that transactions, what is place of supply? Location of the recipient of the service. Location of the recipient of the service. Your address will be available with the supplier. No, that itself. Sir, what if it is not available? It will not be a case. In case of telecommunication services, there will not be a case where the recipient address is not available. Why? Because today if you have to get your mobile connection, you have to give your Aadhaar card. So address is definitely available in the supplier's records. So since address will be definitely available, location of the recipient of services in the records of the suppliers of the services, that will become the place of supply. Understood? If any other telecommunication services are there, in all other cases, if address of the recipient is available, then location of the recipient. If address of the recipient is not available, then the location of the supplier. In all other cases, if any other telecommunication services are there which are not getting specifically covered under any of this above things here, if the address of the recipient is available, location of the recipient. If the address of the recipient is not available, then the location of the supplier will become the place of supply. That's all here. These are the list of all the services which are covered from 12 subsection 3 to 12 subsection 14. Each subsection will be talking about specific service and how to determine the place of supply. So that's what I was saying. If you are a service provider, if you want to determine place of supply, first thing what you should do is you should go and check whether your service is falling under any of that specified subsections starting from 12 subsection 3 till 12 subsection 14 where it is falling. In case if you are providing such a service which is not falling under anywhere starting from 12 subsection 3 to 12 subsection 14, now you have to come to the default provision. Let us say audit services. Let me take an example of audit services. You tell me, if I'm a chartered accountant, if I'm providing audit services, has it been covered anywhere starting from 12 subsection 3 to 12 subsection 14? No. Definitely not, right? So it is not a immobile property related service. It is not a performance based service. It is not a training and performance appraisal. I'm not organizing event. I'm not providing telecommunication. I'm not doing advertising to government. So like that, if you take audit services, it will not get covered anywhere starting from 12 subsection 3 till 12 subsection 14. It will not get covered anywhere. Then how to determine the place of supply in case of my audit services, sir? How to determine the place of supply? In between, don't overload this chat box here, because see, I wanted to pay attention to the doubts also if at all you are asking. But in case if you are loading my chat box with irrelevant messages here, that will be little bit troublesome. Okay. So whatever is relevant for this marathon, that you please ask me. Right. That you please ask me. If I find time, I will have it definitely look at it. See, whenever something comes in my chat box, no, I will pay attention. See, if I ignore it, that means I'm not paying attention. I don't like it. If student is saying something, if really he's having a trouble, I wanted to address it. That's why I will keep the chat box open. So don't overload with unnecessary messages. Whatever is relevant here, that only you please ask me, because it is getting my attention there. So generally when a message comes in the chat box, I will pay attention, because I want to know what student is asking for and all. So that's why I pay attention to that. Don't do it. Please, whatever is relevant for this marathon, if you have any doubt on the concepts I am explaining and all, that you keep it on the chat box. I will be trying to help you out. Okay, don't unnecessarily overload it. Right. So if I come back to the discussion, sorry for the trouble. So in case of that audit services, it is not getting covered anywhere starting from 12 subsection 3 to 12 subsection 14. So you have to come to the default provision 12 subsection 2. So audit services comes under default provision. So now what does the default provision say? This I have already explained you as a part of some other place. So very simple if I have to put it. So what is the default provision is if the recipient is registered. If the recipient is registered, location of the recipient. If you are providing, let us say for example, I am providing audit services. If my recipient is registered, if I am making a B2B supply, location of the recipient. If I am making a B2C supply, if my client is unregistered person, if recipient is unregistered, what is supply? What is place of supply? I need to check whether in my records, location of the recipient is available. Let us say I'm a chartered accountant. I have a habit. I maintain one database. I record the address of the recipients also. So in case if my recipient is registered, no need to worry. Why? Because if the recipient is registered, he will have a GSTIN. I can go to the Google, I can check the GSTIN number. I will get to know what is his address, location of the recipient. I can find out if the recipient is registered. No headache at all. If you have GSTIN number, you can go to the GSTIN portal. You can go and search the GSTIN number. You will get to know address of the recipient. So that's why if the recipient is registered person, the recipient is registered person, always location of the recipient, because with the help of GSTN number we can easily find it out. Sir, what if recipient is unregistered person? Then I have to check. Then as a supplier, am I maintaining my recipient's address? If the location of the recipient is available, location of the recipient. Sir, I don't have such habit. I am not maintaining any address of the recipients. In that case, location of the supplier. In that case, location of the supplier. That's all. This much you have to remember. So if the recipient is registered, location of the recipient. If the recipient is unregistered, if address is available in the records of the supplier, location of the recipient. If the address is not available, then the location of the supplier. Understood? Clear everyone? So this is what regarding default provision. So this default provision, once again, location of the if the recipient is registered, location of recipient. If the recipient is unregistered, you have to check whether the location, if location of recipient is available in your records, location of recipient. If not available, location of supplier. That's all here. This is what regarding default provision. So with this we have completed the entire section number 12 as well. So we are done with section number 10. We are done with section number 12. And one more small point will be there. Section 8 of GST Act will be there, which will talk about territorial waters. What if the place of supply is falling in territorial waters? What if place of supply is falling in territorial waters? Do you guys remember what is territorial waters? Up to 12 nautical miles I have told you, no? Up to 12 nautical miles from the baseline, that I call it as territorial waters. Now, let us say if there is a casino. There is a casino, let us say for example, Big Daddy Casino is there, which is in this territorial waters. Now, in that casino, in that cruise ship, they are providing restaurant services. In that cruise ship, they will provide restaurant services. So what will be place of supply for restaurant services? Just now as we have covered, wherever that services are performed. Where that services are getting performed? In that territorial waters. That cruise ship, that casino related entity is located in the territorial waters. In that ship, they are providing restaurant services. As per 12 subsection 4, wherever that service is actually performed. Wherever that service is actually performed. So that service is actually getting performed in territorial waters. So place of supply should become territorial waters? No. But what is territorial waters, sir? In case if the place of supply is falling under territorial waters, section 9 of the IGST Act says that, then the place of supply will be considered in that state or union territory which is nearest to the coastal line. That state or union territory which is nearest to the coastal line, that will be considered as place of supply. So let us say this casino is located in the territorial waters of Goa. So place of supply is falling in that territorial waters, but place of supply will be considered as closest state or union territory to the baseline. So to this casino, the closest state is Goa. So place of supply will become Goa. Able to understand? So in case if the place of supply is falling under territorial waters, in case if the place of supply is falling under territorial waters, the place of supply will be considered to be the state or union territory which is nearest to the baseline. So this is what section 9 has told. And even in the registration chapter I have told, in case if you are a person in the territorial waters, you have to submit your application for registration also with the nearest state or coastal line, nearest state or union territory to the coastal line. So even registration application, you have to submit it to the nearest state or union territory. Even if the place of supply is falling there, even place of supply also will be considered to be the nearest state or union territory to the coastal line. Understood? That's all here. This is what the major discussion and important discussion from the examination perspective regarding the place of supply. Very important. Compulsorily there will be a question from this chapter. 100% there will be a question from this chapter, and that place of supply related discussion we are done with. Okay, so place of supply we have completed. Now what we will